Across the benchmark, we're looking at a very strong session then, called higher by 1.4% on the European stocks 50.
Go, because yesterday we thought we were going to be quite negative, but US futures were higher, so actually we ended up with the
lower oil price. 88.55 is where we are on Brent, and Ryanair is up by 4.6%. So that's a sector that we're certainly not surprised to see on the move. And you were talking about the energy space as well, Tom. Banks doing pretty well, up by 2.4% there. We've got SocGen up by more than 4%. Bank Santander up by 3.6%. The bond story is interesting. We're down 5-6 basis points on the 10-year yields on some of these parts of the European government bond space. So that's something that's in focus. And basic resources you've mentioned, I think, but that is also doing pretty well this morning as a sector.
energy's lower. Total, Shell, BP, Eni, Equinor. Points losses, that's the top five. So basically it's the energy sector that is adding as a drag, but you've got 454 stocks, 455 stocks up, 90 are down.
Yep.
So there's a definite bias to the upside.
That tells you about the bias this morning. Let's talk to Max Kettner, Chief Multi-Asset Strategist over at HSBC. And a pleasure to speak to you this Friday, Max. So last time we spoke to you, you were extremely positive about stocks. Are you still? Are you even more positive about stocks?
Well, I can't be more bullish because I've already was maximum bullish. So, obviously, days like the last 5-6 trading sessions, I'm sort of itching to put out a note that says buy the dip, but I have no money left to buy the dip. So it's a bit... But I think we are probably in an environment again in the last 2 weeks where the narrative has shifted a little bit, where particularly sentiment has taken a hit. We see that in survey-based sentiment, right? Survey-based sentiment hasn't got really stretched in the last 3-4 weeks, but it's gone a little bit above average. Just the last week of setback was enough to just make that pop down again, right? So we see across most of the big surveys, particularly also among retail, that actually, survey-based sentiment has deteriorated quite a lot once again. That's pretty good. And I genuinely think, we've got all the macro guys now being worried about IPOs. So we have loads of IPO experts now. I suspect we're going to be experts on something else this time next week. And then we're all worried about Kevin Walsh being super hawkish next week. I suspect that the Fed is going to be super boring compared to what we've priced and how much the pricing has shifted over the last 5.5 weeks. If you get a sort of boring-ish Fed next week, plus the IPO today actually going well, I think, honestly, I'm going to invite myself back to this time next week, because that's what I do. And sadly, then we'll probably be a couple % higher and be like, shoot, that was the dip that I should have bought.
Seems to be max long leveraged. 2 times max. That's the way we go.
Is there an ETF for that? Is what I wonder. You know, we need to maybe somebody wants to channel you into an ETF, Max. I think that would be to somebody's advantage. What about so do you think the market then on the other side of digesting SpaceX, will it look more positive? Is that part of what
I don't think it's
about?
actually about digesting. So we talk so much about, oh, what's this equity supply going to do? And, you know, it's totally different from the 2010s and it's going to bring the share count up and all this. I think we forget about a couple of things. Number one, when you look at, oh, who's going to buy all this? Look at just ETFs. Just look at the passive space in the US. And just in the US, we've raked in almost already $400 billion of inflows, right? So when we say, oh, how is that going to be absorbed? I mean, we're talking about 75 billion supply today, and we have 80 billion inflows into passive per month, right? That's already something where I'm like, look,
it's digesting.
why are we talking about
Is that inflows from cash? Or
okay. I think it's mostly from cash. I think it's also a lot of times we are underestimating, I think, particularly in the US, the wealth effect, right? We talk so much about, I'm sure you guys were talking about it at some point in the last couple of weeks, about how the savings rate has gone down. That's entirely wrong. That's a flow variable, right? That's how much they're saving from income. The US, being so K-shaped, is no longer that susceptible actually to changes in income. It is much more driven by the higher end of the K, right? We know these things, like Moody's had that paper, which I get it, the methodology was maybe a little bit off, but you know, it is, they said the top 10% are driving 50% of consumption. It's probably a bit much, but at least you can say the lower 20%, you're driving something like 5-6% of consumption. It just doesn't really matter that much, whereas the wealth effect matters. Look at last year, the household wealth effect, the change in US household wealth was $1.6 trillion. That's almost the entire fiscal deficit this year.
So what happens if you get a 10% drawdown, a 20% drawdown?
I think it depends. Obviously, I'm going to say it depends, because that's what strategists do. It depends whether you get a 20% drawdown and you stick there, right? So if you, let's say, if you get a 20% drawdown because of tech and AI and suddenly, no V, right? Nothing like we had this year or with Liberation Day, I think then you have an issue. And to be honest, I think there's no coincidence that in 2022, when we did have that, and the buy the dips were shallower than the previous highs, you know, we did have negative wealth effects, and that did lead to lower consumption quite quickly, right? The issue is, are we going to have that? Are we really going to have, 20% down in equities? We're sticking down there, and the Fed says, oh, by the way, no Fed put. Let's say next week, what's the incentive for Kevin Walsh to say, I am even more hawkish than my predecessor because, you know what, until there's a 2.0 on CPI, I am not going to yield. Why? You look at this, I'm like, you know what, 6 weeks ago, front end, if you look 1 year ahead, was pricing -20. We've come off now a bit, right, with what's happened on oil, but you've moved from -20 to +30. Yeah, sure, right? That's probably enough. I don't need to fuel that fire.
All the chips feel like they're in the middle of the table right now. Everybody's gone max long.
Really?
So, okay,
do we think that? I mean,
okay, that's the question I'm asking. Really, is what juice is the next bit? What kind of where does this?
I don't think, but guys, I don't think positioning is that long. You look at least our stuff: systematic, CTA, risk parity, vol target, momentum signals. All of that is like 50th percentile. Again, survey-based sentiment. It took a tiny bit of a drop. I mean, we're 2.5% off the all-time highs in the S&P. And if you look at things like AAII, maybe you guys can show it afterwards. Like AAII, if you look at the bull-bear spread. It's almost as low as it was in the doldrums of 2022, right? So it's not like everyone's super long, right? We've seen that even in our sort of aggregate, systematic, and discretionary indicators. It's neither really here.
Let me ask that question in a slightly different way then. What is the catalyst to get the market going higher from here?
I don't think there needs to be a catalyst because we're in an environment where inflation structurally, particularly in the US, is higher. What that means is your revenues, and I'm talking more structural now, right? Not the next 3 months. What that means is you're in a structurally higher nominal growth world. You're in a structurally higher revenue growth world. If your margins don't change, your earnings are perpetually growing faster. You're on a, you know what I mean? Like you're
perpetually.
Yeah, slightly dangerous there. So I'm putting myself in slightly dangerous territory. But, you know, at least for now, should we say it like that? You know, that means you're in a structurally higher growth trend. What that means to me is if you want to go neutral equities, right, or neutral risk assets overall, it probably is not if you're between 1 and 10, it's not a 5. it's a 6. You have to be always slightly overweight because it costs you so much to shift into cash, right?
Yep.
So I think it needs to have a catalyst to be properly bearish. But to be bullish, honestly, just an absence of bearish catalyst is probably enough.
Max, what's your bullish sentiment around Europe? A high rate environment, low growth environment. Where does Europe sit in your thesis right now?
Tough, really tough. I mean, when I say I'm max long, I'm really long the wings, right? I'm long the US and Asia, and I'm sort of ignoring Europe at the moment because the problem is in Europe is we need Iran to go away, right?
Don't you want to
need
position
the
for that
Middle East
now?
to go away.
Why not position for that now? Get the upside on travel. Travel and leisure's soaring today.
I think those are the sorts of things you can do.
That rally.
Yeah, no, I think those are the sorts of things that you can do, right? But again, the problem is you're making, if you buy European travel and leisure, you're basically making a call on one thing, right? On one thing around geopolitics. If I buy Asia, if I buy Japan, I still have sensitivity to the Middle East conflict, hopefully receding in the next couple of weeks or months, right? But I have the domestic fiscal story. I have the AI story, right? More AI exposure. I've got the defense names in there, right? I've got the currency story there. I've got loads of other drivers as well. If I buy things like Taiwan and Korea, I've got the AI story, the tech story. I also have a potential beta a little bit from, hey, Hormuz is reopening, Middle East conflict hopefully is receding soon. Yeah. But it's not just a call on this one factor like you have in Europe right now.
For strategists, cross-asset strategists, Max, it certainly dawned on me this morning that we have to start watching SpaceX launches from a different perspective. It's not just sort of new science. This is now market-relevant information. Do these launches, we're going to see, many by the end of the year, I'm sure. But does that start to become a new thing that the markets have to keep an eye on?
I don't know. I think the
because
single
without
launches,
them, we don't necessarily get all the energy we need for this AI build out.
Yeah, I think the single launches. No, I think what we'll be probably more interested, particularly around the space economics, is how much do the costs really come down? Month after month or quarter after quarter, how much do the costs come down? Because that can then really justify some of those valuations, which now do seem lofty, right? What if you're saying price to sales, if you take those measures at current sales, it doesn't really make sense, right? If you say, hey, you know what, my costs are coming down so dramatically over the next couple of years. So I don't think it's the single launches. It's probably more is that cost or the efficiency gains there, do they really come true? It's what we're seeing also in AI and the chip usage, right? That is maybe a downside risk. Google wrote a paper called Turbo Quant about 2.5 months ago, where they're saying we found a new method that could reduce chip usage by 6 times, that could increase efficiency by 8 times. If you do if you do have that, that may at some point call the memory trade a bit in question, right? But it's more the aggregate things that we need to take into account, and particularly the aggregate efficiency gains.
Max Kettner, 2 times leveraged. HSBC's Chief Multi-Asset Strategist. Thank you very much indeed. Core 6 looks like this. Let me show you some numbers, give you an idea of what is going on. As you can see, there's only one stock in negative territory. Defense names are under a little bit of pressure this morning. Chips are up. We are seeing energy names coming a little softer this morning, but we are in a very buoyant mood this morning here in Europe. Let's get more. Actually, let's start with the negativity and then we'll get back to the positivity. Alex wants to start with oil majors.
I mean, wonderful introduction there. Yeah, I'll start with the negativity. When we're coming to what's on the move this morning, in the red, the oil majors. Now, of course, we had that slump in the oil price. Brent trimming some of those losses now, but that was after Donald Trump talking up the possibility of a peace deal with Iran and calling off those strikes. We can see here, Total down around 3%. You've got BP as well, down around 3%. So red across there for some of the oil majors this morning. Turning that board over, though, to look at where that's putting things into the green. We're looking at airlines and travel. They are very much in the green this morning, off the back of that slight dip in the price of oil. We're seeing Ryanair up there around 6% as well. You've got TUI at the bottom there, 2%. IAG, of course, operator of British Airways, up around 4%. Let's turn then to Infineon. Of course, we're talking about their single biggest investment, this $5 billion power chip fabrication plant they're extending in Dresden. They're up around 1% this morning. Of course, AI very much in the news, dominating the news today. And given we've been talking about how important it is to have more yachts on the programme, let's look at Siemens first very quickly there. They were in the news this morning talking up the gas turbine demand. European customers are very much wanting those, up around 3% this morning. Now let's bring in the yachts, getting excited by the yachts. Here we go. Looking at Ferretti, they, of course, were eyeing a potential part or entire takeover of the troubled rival, the Italian C Group. We can see Ferretti up around 2% this morning, Italian C Group down around 3%. Now, we talked about the global headwinds facing the yachting industry. Going to be interesting to see where that goes. And finally, there's been, we're talking to French miners, the French miner Emirates. Now, they are in the green this morning. There's news that a consortium is approaching them, the potential view to take over a share there. So they're up around 6% this morning. So from AI to yachts to mining, a bit of a mix for you there. Those are on the move out of the gate this morning.
Okay, Alex Morgan on some of the stocks on the move this Friday. Thank you. Coming up, Switzerland faces a knife-edge vote on whether to cap its population. Alexander Koch from Raiffeisen Group joins us next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. This is the opening trade. Looking back to Wall Street yesterday, we saw green on the screen. Stocks were higher. That on the back of a weaker oil price because of what President Trump had been saying about the Middle East. So we see that replicated here in Europe with travel and leisure stocks going higher, energy stocks on the downside. But Guy, US futures actually worsening. NASDAQ futures down by 0.6% right now.
How long does this last is the question. OK, let's talk about what's happening this weekend in Switzerland. The country is going to vote on a proposal to cap the Swiss population at 10 million. We're not at 10 million yet, but we're getting there. The Swiss People's Party argue it's a solution to housing affordability and so many other issues that the country feels like it's facing right now. Critics say the move would threaten investment and growth. To discuss what is at stake, let's bring in Alexander Koch, macro and fixed income research head at Raiffeisen Group. Good morning, Alexander. How important is this weekend for the future of the Swiss economy?
Yeah, good morning. So, of course, it's a unique and important vote. You know, Switzerland is a direct democracy, and popular votes, they are not really special. We have 4 times a year usually votes on different topics, and we had votes on immigration on a regular basis in the past, but the unique thing about the upcoming vote is that they want to cap the size of the population with a binding cap of 10 million, and this, of course, can affect the economy negatively in various ways in the long term.
The Swiss economy is not growing that quickly. Like, it's growing, but it's not growing that quickly. If you were to limit immigration, is it possible to quantify what that growth rate would be if you were to remove that driver that we've seen pushing the number incrementally a little bit higher over the last few years?
Yeah, so you can do an approximation. We had population or immigration growth, driven population growth over the last years of about 0.8% per year. And this, of course, pushes incomes and consumption and growth overall, also employment. Therefore, if you have a absolute standstill of population and immigration growth, you can translate it maybe even one-to-one in the impact on growth. So we would have much lower growth, much more close to the already ailing economies, neighboring economies, because if you compare actual productivity growth, you don't have such a big advantage in Switzerland.
Alexander, not a lot of countries have the direct democracy in action that we see in Switzerland, but a lot of countries have seen immigration drift to the top of their domestic agendas, or at least somewhere near it. And I wonder where this goes next in the Swiss case. Does technology feature as part of this conversation? Might we see an interesting experiment, if this is approved, this change, in asking what AI can do in place of more headcounts? Is that part of the narrative in Switzerland?
Yeah, indirectly that's the case, because if the initiative is approved, so directly, immediately there will happen nothing. But the government is then asked to think about measures to dampen the need for immigration and also immigration directly over the coming years in order to prevent the size of the population to reach the cap. And therefore, of course, like in the past, they should at first concentrate on soft measures like increasing the retirement age and also trying to bring more women into the workspace, so higher participation of women, which is, however, already high in Switzerland. And of course, also productivity enhancing measures with more capital investment, and also the use of AI can in certain sectors definitely in the coming years and decades help to reduce the need for more employment.
Okay, Alexander, so those are some of the measures that you might advocate instead of necessarily a population cap. There are some real issues here that the population have been debating around housing and around infrastructure. What specifically would you advocate to address the pressures on housing, the pressures on infrastructure?
Yeah, we have similar pressures as in many other countries, and it's very high on the top of the list in household service. So the initiative really hits a nerve here. And we have already some action plans in order to increase the production of new homes. But it's also similar to other countries that you have the sense of not in my backyard. You have very high increasing regulation, ever higher building costs. So it's a long and difficult way in order to increase the production and the supply of housing here.
If the population cap was to come into force, what would that mean, do you think, for Switzerland's relationship with Europe, particularly when it comes to free movement of people? How much of that is a concern amongst the business community there?
Yeah, it's in the long term, it's a big concern. So as I said before, so immediately nothing will change, and they have time to prepare, implement measures. You know, currently the population size is 9.1 million, so we have still a long way to go. At the current rate of net immigration, it will take until the end of the next decade until we reach at the earliest point in time the cap, and therefore we have much time. But if we reach it, they are required to terminate international agreements, maybe also the agreement with the EU of free movement of persons. And this is very a big integral part of the treaties with the EU, and it could put further strain on relations already in the shorter term, because currently a new framework of treaties is discussed, and with this topic in the spotlight, it gets more difficult to reach conclusions.
Alexander, thanks for the update. It's going to be fascinating to watch. We'll work this one out again on Monday. Alexander Koch, Raiffeisen Group, Head of Macro and Fixed Income Research. That's it. We're done. Breakfast?
Yes, excellent idea. Tom has another half hour because of the tech show. But we have time to think about the weekend ahead of that.
What's the match? So Brazil are playing.
Yes, Brazil-Morocco.
So Brazil-Morocco, that should be good. That's tomorrow.
It's
late.
Brazil is a sea of yellow at the moment, as everybody gets ready for the World Cup.
You were there a couple of days ago.
Yeah, definitely.
Yes, of course.
Harry Styles?
Right, yes, that's Wembley, yes.
Anna's desperately pretending she hasn't logged this one and she's not going.
Yes, that's at Wembley. I was trying to make the football connection, but I was too slow. But yes, that's happening. There's a Grand Prix, there's Le Mans, there's an NBA Finals. There's
Game 5, that's Sunday, isn't it?
There's a lot of sport.
So, yeah. Spurs are going to make a comeback?
Yeah.
I don't know. Could be a massive weekend for New York. Like Monday morning, New York.
Isn't there some fighting going on in the US? Is that what's happening on Sunday? Is that UFC?
You're talking about regulated fights, right?
Regulated, yes.
People arguing with each other.
Yeah. Regulated fights. Before we get to that, there's a battle going on, talking of fights, around AI. London is quite well placed, and we have a show on that coming up on Bloomberg Tech just in the next couple of minutes. London Tech is on a tear. Britain leading the AI wave in Europe. Yes, that is demonstrably true.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank, There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
You are watching Bloomberg Tech Europe. Coming up, while the world is watching Beijing and Washington slug it out for AI dominance, London has been quietly asserting itself as Europe's tech champion. With investment in artificial intelligence surging, is the UK's tech sector benefiting, now valued at £1.2 trillion. We speak to the founder of the UK's most valuable AI startup, who says London's AI moment is real.
I feel like the energy in the ecosystem has never been greater. I'm now had the pleasure of being part of London Tech Week, of being during this energy that is building out in London.
We speak to Matti Staniszewski of 11 Labs, Evantic Capital's Matt Miller, James Wise, chair of the UK's Sovereign AI Unit, and Liz Kendall, UK Secretary of State of Science, Innovation and Technology. So, welcome to Bloomberg Tech Europe. London Tech is on a tear, with Britain leading the AI wave in Europe. So what is behind the explosive growth, and how did the UK capital become a global centre for artificial intelligence? At the core of this boom is a world-class human infrastructure. In the centre of London, around King's Cross train station, the Knowledge Quarter, as it's been come to known, is a one-mile cluster of universities, labs and tech firms.
For decades, King's Cross meant one thing: somewhere you passed through, not somewhere you stayed. Centred around a railway station, it was grimy, crime-ridden and derelict. A multi-year £3 billion redevelopment changed that, transforming a huge area of decaying rail yards into a global model for urban regeneration. Its success helped the tech industry to notice what the UK has to offer.
UK has one of the richest AI communities anywhere on the planet. The deepest thinkers, the best universities, Oxford, Cambridge, Imperial College, amazing startups.
Today, this area, dubbed the Knowledge Quarter, is fast becoming one of Europe's most important hubs for artificial intelligence. Google's billion-pound headquarters is here. OpenAI is setting up its largest research base outside San Francisco. And Anthropic is expanding to house up to 800 staff, all within walking distance of each other and of the Alan Turing Institute, the UK's national centre for AI research. The attraction isn't just geography. The UK government has launched a £500 million sovereign AI fund, along with a national strategy and lighter regulation than the European Union. And the early signs suggest that bet is paying off. In total, the UK's tech sector now has a combined market valuation of $1.6 trillion, with AI companies accounting for a third of that, according to a recent report by Tech Nation. Globally, the UK ranks third for AI talent, boasting an AI workforce of 56,000. By 2033, AI firms are expected to take up 4 million square feet of office space in London, roughly the equivalent of 8 Gherkin towers.
Meanwhile, across the UK this month, a packed calendar of buzzing tech events is and has been drawing founders, investors, government and engineers. It's a sign really of just how much momentum the sector has right now. London Mayor Sadiq Khan says the UK's capital city can turn this confidence and the energy into lasting global leadership.
In the first quarter of this year, London-based startups are off to a flying start, pulling in over a third of European equity and over half of all funding for AI. This just goes to show that here in London, we're not waiting for the future to arrive, we're busy writing it.
London's return to the top spot is driven then by record AI investment, rising from less than $4 billion in 2024 to $7 billion last year. And overall, London tech companies raised close to $18 billion. That's up by 45% from 2024. The city is now home to 138 unicorns, including Wave, Granola, Olix, and 11 Labs. And founded in 2022, 11 Labs uses AI to create a variety of realistic voices. The company is valued at $11 billion, north of $11 billion in its most recent funding deal. The company is the UK's most valuable AI startup. I caught up with co-founder Matti Staniszewski at London Tech Week. He says a growing number of founders believe they can build global companies from Britain.
It is the moment. I feel like the energy in the ecosystem has never been greater. I've now had the pleasure of being part of London Tech Week, of being during this energy that is building out in London and across Europe. And I feel now people realize the incredible talent we have, that you can really build a global company from here, from the start, and people want to do it. People want to work on ambitious projects, want to show what's possible, and the number of startups, the number of individuals and talent that is going after that couldn't be more real. And we feel that at 11 Labs, but we also see this across the wider ecosystem.
Do you feel like you've catalyzed that message to some extent? You've demonstrated with 11 Labs, valued north of $11 billion, that you can actually build a globally scalable AI company out of the UK.
We are proud that we could start here. Both my co-founder and I studied in UK. Most of our early team was here in London. And we, from the start, thought that you can build here, and you want to build globally. You want to compete with the biggest companies out there and show that you are leading on benchmarks, leading with customers, leading on outcomes, and that was always the ambition. And I hope that a number of people, of course, after that followed, seen that effect as well. We are seeing now more happily, more of the ecosystem building, where some of the people that were early joiners will leave to start new companies. Some of our people will join companies here in UK to grow with them. But one thing that's very interesting that we are also seeing is a lot of people around the world want to come back here, whether that's senior talent joining 11 Labs, whether that's talent joining other companies, and build from here. And of course, we saw the Isomorphic Labs recently, the announcement. Also an incredible story, so I feel this will just get more momentum.
That talent flow back to the UK, that's material, that's significant, and you're seeing that impact, and that's changed. Is that a this year story?
I think this last 12 months definitely a big effect. Another piece is, so like as I think about ecosystem, the talent part is changing, the risk approach is changing. More people are keen to start companies from here and just take that big swing, big bet. Third thing, I think in the US, one of the big appeals of Silicon Valley is that the big companies buy from small companies. If you're an early company, you know the risk that you need to take. You are still going to take that risk. You'll give them the chance to prove the value, prove the outcome. And recently, we've seen that in UK and in Europe too. Of course, now we are a big company, but over last year, whether it was Revolut, Trainline, Deliveroo, all of those companies are taking those risks, are working with some of the frontier AI companies to elevate, and of course, together with us to bring that experience. And we too now give a lot more chances to young upcoming UK companies and European companies to give them ability to scale.
Have you ever come under pressure from your US investors to move to San Francisco?
Luckily, they are aligned that there's a huge advantage in us being in Europe as well. And that's one of this is talent. That the people we have in the team are some of the hardest working people across the company. We have majority of us across Europe. We have now almost 100 people here in UK, scaling to 200 over the next few months. And we think this is our big advantage to some of the companies from US, where people in Europe want to work for ambitious companies, frontier companies, and here they have the chance. They know that whether it's London, whether that's some of the other cities, you are part of the core team building for the world. And investors realize that too. Of course, we spend a lot of time in the US working with our customers there. We have some of the biggest customers like Meta in US, but we found a way to balance it out.
Matti Staniszewski, co-founder of 11 Labs, speaking to me at London Tech Week. So founders like Matti, of course, are optimistic. The figures show investors are also paying attention, and we've seen that global AI firms are expanding their presence here in London. But can government policy keep pace with the industry's ambitions? I caught up with the UK's Technology Secretary, Liz Kendall, about Britain's plan to become an AI powerhouse.
We're in a race for this AI future, and I want Britain to win. You know, I'm not naive. You know, I would count myself as an optimistic realist. I'm not running the same race as America or China, but I believe there are races that Britain will win on, which is why we've made this huge announcement this week about backing British AI hardware companies. Someone said today, you know, whoever wins on compute wins the race. You know, it's the absolute power engine of AI, and you're not going to get better biology or financial services or logistics services unless you have the very best chips. And we know that although some people think the market's sewn up, it's not. It's diversifying, and we have incredible potential there with our great British talent and great British innovators. And this government is going to bet on Britain because we believe in Britain and because we believe that we can win this race in these new chips, and that's why we've put this £1.1 billion investment into AI hardware during London Tech Week.
I spoke to an investor yesterday and she said we need the most ambitious political agenda since the Second World War to ensure that we have a seat at the table when it comes to AI.
I think she's absolutely right. I mean, we're going to see the equivalent of the Industrial Revolution, but in a decade, and we are in this race for the future, and we're determined to win for Britain. And that point about having a seat at the table, I would go even further. You know, if you want to have greater sovereign control over this increasingly powerful technology, that's not about isolationism or pulling up the drawbridge and attempting to go it alone. It's about becoming a kind of keystone in the global tech architecture. So you become an indispensable partner. I don't just want a seat at the table. I want Britain to be an indispensable partner. And I think this race on compute and the AI hardware of the future is absolutely critical to do that, which is why we've put such a focus on it.
What's the biggest impediment? Is it energy costs? Is it unpicking the regulatory network? Or
well, it's also just about turbocharging planning decisions, which is why we've put data centers further up the priority list. Because look, you know, data is the engine of the economy now. We've got to treat it as much a part of the infrastructure as the roads and the railways. So we're making those planning decisions, driving that forward more quickly. We're combining it with the clean energy and big developments like nuclear. That is how we secure our position, because we need to build those data centers and quickly.
How do we ensure that the value of some of the startups that are starting to grow at rapid pace here in the UK accrue to the UK public? I think the companies like Revolut, most of that upside is going to go to their US investors, not to the UK public.
So that is why We have said we want a decisive shift to backing more British AI companies. It's why we've launched Sovereign AI, £500 million to back British AI companies, combined with action to unlock wider support from the state, whether that's super priority visa decisions, free R&D, free access to our supercomputers, or critically, unlocking access to government procurement. Don't forget the billions of pound government spends in the NHS, in defence, that we want to see invested in British companies. We want them not just to start up, but to scale up and stay in the UK, which is why our announcement on SovAI, on procuring the first large usable quantum computer, we've got a £1 billion quantum big bet on that, and our AI plan, all about investing in those companies, saying the government backs you, we'll unlock the talent, we'll unlock the wider support, because we want you to start up and scale up and stay in Britain.
UK Secretary of State for Science, Innovation and Technology, Liz Kendall. Coming up, how has London emerged as an AI innovation and frontier tech champion then? We're going to discuss with Matt Miller, founder and managing partner of Avantic Capital. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Tech Europe. Now, it is clear then that London is on a winning streak when it comes to AI. But how does it sustain that momentum and, crucially, nurture companies to scale? I spoke to James Wise, general partner at Balderson Capital and chair of the UK government's Sovereign AI Fund. He says policymakers must work with investors to help firms here grow.
Over £6 billion was invested into the UK alone in the last quarter. That's more than the whole of continental Europe combined. It's many magnitudes where we were 5 years ago. And if you look at the scale that companies are getting to, people often criticize the UK for having companies which sold out too early. They went to the US too early. But actually, if you look at the scale now, we have companies raising at £1 billion valuations, £10 billion valuations. There may even be a £100 billion private company announced soon. So overall, it's really robust. The challenge, of course, with everything is keeping that momentum going in the right direction. And obviously, that's what we're doing at Balderson and what I've been doing with government as well.
What does the UK AI Sovereign Fund role in that? What is the role that that fund plays in that £500 million? How significant is that really, given the huge amount of capital that we're seeing invested, particularly in the US?
Yeah, so I was brought in as chair to set up the Sovereign AI Fund over the last 6 months, and we've launched, and we've had incredible interest from industry. It's been really reassuring to see technologists, entrepreneurs, and investors give us huge amounts of support. Our goal is to help more UK AI successes scale globally, right? As mentioned, we're great at starting these companies. We're great at getting them going. We've struggled historically to scale them. That is starting to change, but there's two big levers we want to get right with sovereign AI, because we believe AI is a different industry compared to many other areas of technology. It's so significant and so general. One of those areas is making sure government is a supporter. And I think many entrepreneurs will say historically, government's provided more challenges than it has support. We're trying to change that. Partly we're trying to change that with capital. But to be honest with you, it isn't really about the capital. The capital is there to make sure the taxpayer has a stake and gets rewarded when these companies go well. It's really about the other things government can do to make companies a success. That's procurement, that's providing data, that's providing lots of different expertise of navigating the very large infrastructure that the government has here in the UK. And look, it is an ambitious project. It's taking risks, and that's something else we want to bring in to the heart of government. And I think, one of the things I have noticed is we get criticism. Anything you do in government rightly gets criticism. But we're here talking in a week where SpaceX is likely to go public. SpaceX's first contract was about 20 years ago from the US government. It was about $300 million contract, and that's resulted in huge capabilities. The US now has more launch capabilities than any other country in the world, and it was done by a great entrepreneur and a great team, but it was a government procurement contract that got that company going. At Sovereign AI, we hope we can replicate just a small part of the success that other countries have had in this kind of way.
Okay, James Wise there, general partner at Balderson Capital and chair of the UK government's Sovereign AI Fund. So how do you scale on this side of the Atlantic? We have the perfect voice to bring in at this point. Matt Miller is a former partner at Sequoia Capital who last year founded the $400 million UK-based venture capital fund, Avantic Capital. The fund is an investor in London-based AI, including 11 Labs and Synthesia, with a global focus as well. But certainly you have exposure to the UK AI system and ecosystem, Matt. Fantastic to get you in the studio. Is the government doing the right thing by putting money to play around hardware and its sovereign fund? Is that the solution to getting companies that can scale?
Yes, so I think it's a wonderful effort, and I'm thrilled that they are doing it. But I think it's ignoring some of the bigger problems that we have that would allow a bigger unlock for us. And James just was on talking about SpaceX. I think SpaceX has had access to incredibly affordable energy, incredibly attractive policy in building its facilities in Texas in particular to do its launches, to operate its data centers, especially with XAI in Texas and in the southeast of the United States, that we just don't have here in the United Kingdom. And if we really want to bolster London's role as a global AI tech player and as the second best city in the world to build an AI company, we need to have access to cheaper power so that we can have many companies that are building data centers. And it's not just the government that's the only ones going and building it, but industry is able to come in here. And we don't want to have OpenAI announce plans to go build data centers in the UK and then pull out because they find that the regulatory is too complicated, that the cost of energy is too expensive. The dollars, I think, are better spent on providing more attractive energy for all of the citizens of the UK, for all of the businesses that want to conduct here, rather than targeting it at a few specific companies that already have lots of capital coming their way and British taxpayers do get to participate in them because the British Business Bank is an investor in many of the best investors who are here in London. So it already is benefiting in the upside of the AI wave. But I think if there's more money to be put into the problem, it should be putting into making data centers and infrastructure more affordable.
So if that's the key roadblock, the most important roadblock is energy and regulation.
Yeah.
Then this money towards chips and supercomputers is a misallocation of resources.
It's positive, but I think that we're missing the bigger issue, which is the bigger issue is energy is so expensive in this company for people looking to pay for their power as individual consumers, then let alone these big supercompute farms that we hope to create here in the UK to have sovereign AI. And I think this is the challenge that we should be addressing, is taking a step back and how can we have cheaper energy, more reliable and more available energy to the people and to the companies and to the AI boom in the United Kingdom.
What do you think the solution is on energy?
I think that we need to be investing more in building affordable power plants.
Yeah.
I don't hear all announcements about new power plants, new power initiatives we should be addressing. Should we be bringing nuclear back? Nuclear is a very efficient source of power in the United States and France and other countries. Can we not be using some of these great technologies here? I know we're investing in the future and fusion and things like that, but we should be investing in the things that can help us reduce the cost now.
And the kind of companies, we've got a graphic that shows the kind of companies that have raised significant amounts in the UK, and you've got exposure and you've invested in 11 Labs, which is one of the standouts, of course, but you've also got Isomorphic Labs, Nscale, Wave AI, Multiverse, Ineffable coming through with, I think, one of the biggest seed round raises in Europe in history, more than 1 billion. These are the kind of numbers we're talking about, but what we're really talking about now with you, Matt, is how to drive that momentum and the physical unlock that has to come through. Yeah. I want to talk about incentives for employees as well. What do they need to do on tax and options?
Yeah, so I think that there's a tax question of making London, continuing to make London the most attractive place to come and to build and to live and to thrive. And so there's a tax component of, there's considerations of raising the capital gains tax. And I understand the need to address rent seekers and other issues who may be taking advantage of the capital gains tax regime here in the UK. But capital gains is the engine through which people get compensated to take the risk to go work for earlier stage companies and invest in the future. And they want to be able to participate in that upside. And by taxing that at higher and higher levels, it makes London a less attractive place to go and build relative to other places that you could be in Europe or in the United States. And so we need to think about ourselves as, from a tax policy, we need to be globally competitive in what we're asking people to contribute. Yes, this is an incredible place to live, be, and build, but we need to be competitive with the other places that are great to be and build as well. And we need to think about that. Go ahead.
No, I was going to say, let's see if the government is listening to that bit. I also want to get your take on what you're investing in right now. You've got this portfolio building out. You've got capital to put to play. What are you most excited about? Where are you seeing opportunities?
Look, over half of the dollars we've invested so far at Avantic are in the United Kingdom in companies like 11 Labs, Synthesia, and Ineffable. And these companies are thriving and growing. But I'd say, as I work with these companies, their biggest challenge is actually not electricity, because they've got data centers that they use all over the world to grow their businesses. Their biggest challenge is actually not yet the tax policy, but it's labor. It's being able to hire people quickly enough. If you think about these new AI neo labs, and Ineffable being one of them, that are being funded and built here in the UK, and you talk to them, the biggest challenge they face is that when they want to go hire somebody great, they've got to wait 6 months until they can start, because the UK enforces notice periods and non-competes. In California, we wiped out the enforceability of notice periods and non-competes, so you can have a job at OpenAI and you can quit and you can go work at Anthropic the next week. That's better for workers because it causes them to treat their people better, and it's better for if we had that here, it would be a more fluid labor market for our companies.
Visas, tax, and energy. Matt Miller, thank you very much.
Thank you.
Indeed, founder and managing partner of Avantic Capital. That is it for Bloomberg Tech Europe today. We're going to look in the next episode towards the stars as SpaceX readies, of course, for that IPO. Europe's ambitions in space. That's the next episode, July the 10th, here on Bloomberg TV. Stay with us. The Pulse is next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
SpaceX makes history with the biggest ever IPO, raising $75 billion and putting Elon Musk on the verge of becoming the world's first trillionaire. In a moment, we'll speak to the Goldman Sachs president, John Waldron, about the mega IPO, M&A, and much, much more. Also this morning, President Trump sees an end to the Iran war, saying a deal could be signed as soon as this weekend. Plus, the Bundesbank president says the ECB is ready to hike again next month if necessary, after it raised rates for the first time in almost 3 years. We'll have a good conversation also on inflation, of course, what happens next with Europe, with the Czech central bank governor, also live on the program. Now, look, if I look at the markets, look, we had a rally in stocks, and that seems to be stalling a little bit. The rally in stock, but also bonds, paused. Traders waiting for confirmation of a deal between the U.S. and Iran. Now, overall, the mood is maybe one of wariness, some expecting equity markets to muddle through for a while due to lingering anxieties and the upcoming Fed meeting. S&P futures pretty flat. So you can see Eurodollar 115.66 and Brent at 87.57. But also quite a lot of excitement about SpaceX later this afternoon. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Friday, and welcome to The Pulse. I'm Francine Lacqua here in London. So the world's most anticipated IPO is finally upon us. In just a few hours, SpaceX will go public in what will be the biggest listing ever. Goldman Sachs has a leading role in the initial public offering, and there's nothing quite like a bit of healthy competition. This week, President Trump praised Citi for its position as a top advisor on M&A, and that would have come as a surprise to Goldman Sachs, whose executives have been touting their major lead in M&A rankings. Now, just recently, the Goldman president said, "We have our largest lead ever at this point in the year." Hope I did not just jinx that. Now, welcome. Of course, I'm delighted to be joined exclusively by John Waldron, President and Chief Operating Officer of Goldman Sachs. John, it was a funny comment that we picked up on also because you were adjacent to the news because of that Citi comment. It's an exciting day. M&A is thriving. Like, how are you doing in M&A overall?
Thanks for having me, Francine. It's always nice to be with you. We're doing exceptionally well in M&A, and the M&A market is doing exceptionally well. We're going to see a marketplace this year that I think will likely be a record year. The record year was 2021 with $4.6 trillion of volume. We're now at $2.5 trillion of volume for the marketplace as a whole. Goldman Sachs is approaching $1 trillion of volume in terms of the deals that we've been working on, so we're doing quite well in the overall scheme of the marketplace. We have a little over a $300 billion lead in the league tables, kind of any way you look at it. So we're the #1 ranked M&A advisor in the world. That's a position we've held now for over 20 years in a row. Very important business for Goldman Sachs, and we feel terrific about our position, but also about the broader marketplace.
Okay, and we'll get back to that in a second, but the SpaceX roadshow has wrapped up. Shares, of course, priced last night in New York. What are you focused on today on the first trading day? Well,
it's a momentous transaction, and I want to start by congratulating SpaceX, a company, Elon Musk, his management team, his employees, and it's an extraordinary day for the company. We were privileged to be the lead left book runner on the transaction. As you said at the outset, it's a $75 billion IPO, the largest in history. I think it presages the beginning of a pretty sizable wave of IPOs, which we're excited about. And I also think it shows you the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space, which is quite exciting.
Can the markets absorb 2 other big IPOs from here until the end of the year?
Well, a couple things to say about the IPO market. The IPO market historically has been a couple $100 billion of volume for the last 10 or so years. We had 1 year in 2021 where it spiked to $600 billion of volume, led by SPACs and other activities kind of in that COVID era that were not sustainable. But really, it's a marketplace that's been $150 to $250 billion for most of the last 10 or 15 years. Year to date, prior to today, the marketplace would be about $95 billion of global IPO volume. So we're now, with this IPO, moving towards $200 billion of volume. And my guess is if you think about what happens for the second half of the year, we could see global IPO volume approaching $300 billion, $250 to $300 billion, which is large, but it's not in the scheme of the historical precedents that large. And most importantly, because global market cap has grown so dramatically in the last 5 or so years, as a percentage of global market cap and global float, it's only 14 or 15 basis points of total global market cap, which actually in historical terms is not that large. So we've not been particularly concerned about the overall dynamics. Obviously, investors make their decisions on individual companies, but the overall dynamics, it feels, it should be very well supported.
I mean, I think in the last 2 weeks, you've helped SpaceX, but also Alphabet put together plans to raise nearly $200 billion.
We did.
That's really quite incredible.
Last week, we raised quite a lot of capital for Alphabet. This week, we raised quite a lot of capital for SpaceX. Our position in that marketplace continues to be very strong. But most importantly, the capital markets are demonstrating a willingness to finance these extraordinary companies as we build out this AI infrastructure. And I should call out our team. It's extraordinarily proud of our team, across our technology franchise, our equity capital markets franchise, our debt capital markets franchise. We're really executing well, and we're very proud of our team.
John, because today is such a big day, right, for SpaceX in New York, a lot of people, of course, kind of remember the Facebook IPO back in 2012, where there was just concerns about it working on the right day. Do you know of conversations with NASDAQ having happened so that today goes smoothly?
Well, I would say that many of us have been preparing for this for a long time. So I think you should assume that whether it's Goldman Sachs, NASDAQ, other underwriters, the broader marketplace, a lot of preparation has been put in place for what we expect and hope to be a very good day today.
How do you make sure that there are options for retail, investors on SpaceX?
Well, there are plenty of options being put in place for retail, and I think that I'm not overly worried about whether those options will be in place. I think you'll see plenty of opportunity for retail to invest.
Do you see exuberance in equity markets? And is that a concern going forward, given all the forces? It could be AI, but it's also everything that we're seeing in the Middle East with inflation creeping up.
Yeah, I think if you look at the global equity marketplace, we've obviously seen an explosion of valuations. The global equity capitalization is about $150 trillion now. Over half of that is in the United States. So the U.S. has been the preponderance of that growth. Valuations, if you look at S&P multiples, are around 21, 22 times, depending on how you look. Obviously, they're higher for the more tech-centric part of the economy. On an equal cap-weighted basis, it's like 17 times, which is really historically a little on the high end, but not an extraordinary or demanding valuation. So yes, they're high. On a price-earnings basis, they're also high, but not totally out of bounds. And so I think the fundamental premise is right now earnings growth is extraordinarily strong. Q1 earnings growth for the S&P 500, 28%, well above any historical norms. So it's not as if the market is actually driving valuations materially higher right now. They're according similar valuations on a much stronger base of earnings. We'll see if that continues. But right now, it looks as if the marketplace is reasonably rational about the earnings growth. And I think the bigger question is, how do the returns on capital invested in this AI infrastructure build transpire, and how do they transpire across the enterprise landscape?
When you look at these mega IPOs, does it make it more difficult for smaller IPOs to get in?
I think there's a risk that we have a crowding out effect. I think there's a risk across the capital markets, not just in the IPO market, that those things that are more in the slipstream of AI and AI infrastructure and compute are going to aggregate more capital, and that those that are not in that slipstream have a little bit tougher time. I think we're still in the infrastructure build. I'm expecting at some point we get into the deployment phase and the application phase where you start to see it filter through a broader part of the economy. And the companies that do a really good job with that, I think, will attract enormous amounts of capital as they're proving the theory of the case that they're actually getting good returns on their own deployment of tokens and compute, and that probably will level things out.
I mean, speaking of tokens, as Goldman embraces AI, one thing that we're hearing from a lot of the banks is actually tokens are just getting more and more expensive. I think in some cases, employees, token costs are bigger than their annual salaries. Like, how do you think about that?
Well, I think that most enterprises right now are preferencing adoption, literacy, innovation, experimentation. So we're all trying to find ways to have our employees better understand how these tools can be valuable for them. And that's a more expensive mechanism because you're not really micromanaging, the ROIC on every token that you're using at this phase of the development cycle. I think that will start to change over time as people get a little bit more rational about where they want to spend tokens and where they don't, and what kinds of models they want to use for what purposes. So I definitely think we're in the phase now where it's a little bit of roll it all out there and let it run a bit, which I think is rational. We have a lot of learning to do. Over time, there'll be a little bit more discerning behavior, I expect, on how you deploy those tokens and what returns you expect.
What does discerning look like? Is it possible caps on the amount spent, or is it?
I think every company will have its own approach to doing it, but I think fundamentally you look at use cases and you try to determine how much compute do I need to generate to have this use case go to what I expect it to go to, and what kind of returns on invested capital do I want to see, whether it's productivity unlock, more efficiency, more revenue growth because I build tools for clients. I mean, at Goldman Sachs, we're focused on probably 4 major vectors. One is literacy and adoption. One is software development life cycle. Use cases around process re-engineering in the firm in terms of things we do that are less automated that become more automated. And the 4th vector, which ultimately is probably the biggest and most exciting vector, is tooling that we can build for our clients to make our relationship with our clients stronger and our value proposition more significant. And if we can do that effectively, we will differentiate our firm. And I think that that all costs tokens. We will develop an ROIC metric across all vectors over time. Right now, we're not going to be myopically focused on every microeconomic of that.
I mean, does the rollout or implementation of AI actually, kill or affect jobs?
I think we don't know, is the honest answer. We've said publicly, and David Solomon wrote an op-ed that I think was a very effective op-ed, that the labor market is much more dynamic than is commonly understood. There's a lot of job creation and job loss in any given year, and certainly in the United States, and I'd say, across the globe, although the U.S. tends to be a bit more dynamic in that regard. So I think when you look at the broad labor market, it's unclear to us that we're going to see significant job losses. This may be like every other innovation where you have a lot of new jobs created and you have some disruption along the way, but you actually end up with more employment over time and more productivity in the economy. And my guess is this probably moves in that direction. We're going to learn a lot in the next handful of years.
What's your take on Europe?
So I've been here now a couple days. I was actually at the Founders Forum yesterday. You and I were just talking about that off stage, which is a venture, forum for entrepreneurial companies in Europe, extraordinary companies. I think that there's too much pessimism, in my view, about Europe. The default setting seems to be pessimism as opposed to optimism. There's a lot of great innovation happening here. There's an enormous intellect in this, part of the world, just like there is in other parts of the world. There's no difference in the intellect here. I think risk capital is the single biggest, question. Back to your questions on SpaceX and Alphabet, the amount of risk capital that permeates the American capital markets is extraordinary and really one of the secret sauces of America. And I think that Europe needs to find a way to generate more of that risk capital. And then I would say, from a competitive standpoint, operate more as a single market. You know, the promise of Europe was always this great single market that would be equivalent in size to America and China. And it hasn't really come to fruition, largely because I don't think it's really operated in a way to allow it to be a single market.
Europe is changing, right, the margins because of the extra spend from Germany. I mean, again, it's a complicated region, like many regions at the moment. When you speak to CEOs, what do they need?
Less regulation, less bureaucracy, more of an ability to tap into all these markets on a more unified fashion, and more risk capital.
When you look at, so we're talking about M&A, I mean, do you still have appetite at Goldman Sachs to do, are you on the prowl for some big M&A?
Well, if you look at what we've done over the last year, I would call out 3 transactions, 2 of which were acquisitions. One was a partnership. We bought a business called Innovator, which was an ETF platform. We bought a business called Industry Ventures, which is a venture capital private asset company. And we partnered with T. Rowe Price to build multi-asset solutions primarily geared towards U.S. retirement and U.S. wealth. All 3 of those transactions, not extraordinarily big in their own right, add to our product and solutions capabilities across our asset and wealth management business, add to our distribution capabilities. We want to do more of those. If we can find more situations that look like what you've seen us do thus far, we would like to find more of those.
I mean, is it fair to say they were capped at like $5 billion?
Well, I'd say the acquisitions were, kind of plus minus $1 to $2 billion.
Okay.
So in total, between that and however you want to value the partnership, these are not in the scheme of a $325 or $30 billion market cap. These are not large transactions, but they add to our capability set. They add to our growth. They make our value proposition with our clients stronger, and we'd like to find more opportunities to do more of the same.
When you look at the U.S. economy, I mean, you sit just on so much data. Is there anything that looks unhealthy? Or is the consumer worried? Do you see any defaults? Is there something that, the Fed should be looking at?
I see employment, maybe surprising to some, continuing to be pretty strong and fairly tight. I see a lot of nominal growth. Obviously, the AI infrastructure build is a significant stimulus to that. I see U.S. consumers continuing to behave in the traditional U.S. consumer way, which is to spend, a reasonable bit of their household income. I see an enormous amount of household wealth that's been created, $180 trillion of household wealth in the United States, which is a little over 8 times the household income. That's at an all-time high. So you're seeing a significant amount of wealth created in the stock market and other financial assets. And I see a fairly healthy amount of inflation. So I think you're going to see more nominal growth and probably more inflation for some time to come, but the consumer continues to be pretty strong, and I think that's fundamentally important to the U.S. economy.
Okay, John Waldron, thank you so much for joining us. Don't be a stranger. Every time you're in London, we're expecting you now on the set. John Waldron, President and Chief Operating Officer of Goldman Sachs. Now, let's also go back to one of our top stories and bring you more on the SpaceX IPO, as the initial share price of the rocket and AI firm could jump 35% higher from shadow markets. Now, I'm joined by Matt Bloxham, intelligence analyst at Bloomberg. So, Matt, what can we actually expect today, the first day of trading?
Yeah, I mean, I think a lot of excitement, and I think certainly the talk that there was over $100 billion of retail demand for this IPO suggests that we are going to see upside in the share price. And the prediction markets and the futures markets and the crypto markets all pointing to that kind of 30-35% upside. So it's going to be interesting to watch for sure. And obviously, Elon Musk, if that happens, on paper at least, becoming the first ever trillionaire. So quite an incredible day, really.
It is quite an incredible day. What's the path ahead then for Elon Musk and SpaceX?
Yeah, so I think very near term, what I'm really focused on is the SpaceX Starship next launch. So that's due late June, early July. Starship is incredibly important to so many of SpaceX plans. So that's the next test launch where people will be looking to see if that goes well and it takes on more commercial and fundamental significance. Beyond that, there's a lot of focus on what's going to happen with Tesla and the relationship with SpaceX, with a lot of people now thinking it's a question of when, not if, Elon Musk moves to merge those two businesses. Right now, they're kind of quite tied by Terafab, which is the new chip joint venture, and people expecting that there's going to be some kind of tie-up between SpaceX and Tesla, maybe within the next 12 months.
Matt, thank you so much. Matt Bloxham, tech analyst at Bloomberg Intelligence. Now, coming up, the European Central Bank delivers its first rate hike in 3 years. We'll discuss the path ahead as policymakers across the world grapple with inflation pressures. That's coming up next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back, everyone. Now, we are getting a little bit of breaking news out of the U.S. and Iran. Now, earlier this morning, President Trump was insisting that the Iran deal was close after scrapping some of the new strikes that he had said. And now we're just getting a little bit, I guess, of a readout from the semi-national news agency of Iran, MER. And they're basically saying that the U.S. and Iran Memorandum of Understanding stipulates that the Strait of Hormuz will reopen within 30 days. They're also saying that the U.S. will withdraw forces from the area surrounding Iran under this new Memorandum of Understanding. Now, again, we've seen this in the past. It's almost a little bit of a pattern. Things quieten down, it gets a little bit better, and then they flare up again. I'm not suggesting they flare up this time, but just wait and see what happens over the next couple of days. The MER agency, again, this is a semi-official news agency of Iran, actually citing sources close to the negotiation team. Now, Bundesbank President Joachim Nagel says the ECB is ready to raise rates for a second straight meeting if the shock from the war in Iran requires it. We also understand that other policymakers are also open to a move higher as soon as July. Now, we're joined by Konstantin Veit, European Rates Portfolio Manager at PIMCO. Konstantin, thank you for joining us. I mean, there's a little bit of a pattern that if you hike once, maybe it just makes sense to go a little bit more cautiously, but instead of doing one and done. What's your take?
In our baseline, we have 2 rate hikes. I think whether it's 1 or 3 or 2, the important message is this is not 2022, right? The backdrop is very, very different. The negative supply shock is not matched by a positive demand shock. So in pretty much most of the scenarios, there's not that much for the ECB to do. And it's also important to highlight the different starting conditions of the central bank. So if you look at where they are versus their neutral posture in terms of policy rates, then with the Fed and Bank of England being above, the BOJ being below, the ECB roughly at neutral. So, you know, for the ECB to do something now means hiking rates, while for the Fed and the Bank of England, for example, doing something now means probably staying on hold.
Yeah, but Konstantin, I mean, overall, again, does it mean if there is another hike or another 2 hikes, would that be a policy mistake? Because they have one mandate is inflation. If you're a small, medium-sized company in Europe, maybe you're really feeling some of the pain.
Yes, I agree. I was a bit surprised that there was not much discussion around the growth outlook yesterday. So I think the growth outlook that the ECB portrays is a bit too optimistic. But if you look at their neutral range, they've updated their neutral range, which is 175, 250. So if you hike twice, you would be at the upper end of the neutral range. And also keep in mind that core inflation or domestic services inflation hasn't really normalized even before the conflict and was still above target. So I think the ECB called it a robust decision, and I think 1 or 2 hikes should indeed be robust across a range of scenarios. And I think that's also not something that you then would have potentially to reverse quickly.
Do you worry about GDP? The first quarter was a bit softer than expected. What does second quarter look like?
Yeah, first quarter was soft. The second quarter doesn't look great either. So if you look at the PMIs, they point to marginally negative growth. So you could technically get a recession in the euro area in the first half of the year. So it's quite interesting that the ECB still projects 0.8 in terms of GDP for this year. That's probably a bit on the optimistic side. So we probably see more like 0.5% or even lower.
Konstantin, what are you buying right now? So you're a PIMCO. What's the one thing that you'd be buying right now? Shopping up.
I think the focus for us is on quality, simply speaking, because this is an environment where you don't have to take much risk, which is beautiful for us here in Europe. We have been 8 years in a negative yield environment where you had to stretch a lot. You had to take a lot of interest rate risk, a lot of credit risk to earn a decent return on your investment. And that's not the case anymore. You can stay short in interest rate risk. You can stay up in quality when it comes to credit risk and earn a pretty good return on your investment. So that's our focus right now. So we're more careful on the economically sensitive parts of the market, lower quality credit, and these type of areas.
I mean, there seems to be a difference, for example, between German bonds and Italian BTPs. Do you load up on one of them?
We remain constructive on the so-called periphery. The spread is around 77 right now. We have been around 60 before the crisis, and we think over time there is room for spreads to compress. Also, given that obviously there has been a change in the fiscal stance in Germany, so you could see over time a conversion in the fundamental positions there, which would argue for more spread compression. So overall, we remain constructive on the periphery.
Konstantin, I mean, the bond market has always been just incredible to watch, but now is really the time where there's such a big difference between what we're seeing in equities and what the bond market, especially the Treasury market, is telling the Fed to do. I mean, does this kind of also play out in the Bank of England and ECB?
Yeah, I think the bond markets are doing their job right now, and you see that across jurisdiction, actually, that the bond markets are now, given that central banks retreat and not involved anymore in the bond markets, that the fundamentals come into sharper relief again. And you see occasionally repricing and a reassessment of the fundamental positions. We have seen this in France, we've seen this in Germany, where the debt brake was basically abolished, and you had a 50 basis points repricing on the 10-year bond in 2 days. So, and yields are very attractive right now. So policy rates are reasonable levels. The 10-year rates are at reasonable levels pretty much around the globe. And if you compare that compared to where equity market valuations are, then to us fixed income looks very attractive.
Okay, Konstantin, thank you so much for joining us on the day after, of course, the ECB with a lot going on the markets. Konstantin Veit, their European rates portfolio manager at PIMCO. Now, let's look at the markets. Traders do remain very wary of a potential deal with Iran, between the U.S. and Iran. Some expecting equity markets maybe to muddle through a little bit due to lingering anxieties and, of course, the upcoming Fed meeting. If you look at markets elsewhere, they're also trying to catch up with Wall Street's chip maker fueled gains from Thursday. Now, what do they really want to see? Look, traders want to see the end of more than a 100-day war that has caused the biggest oil supply shock in history and roiled global markets. Coming up, we'll look to how the Czech Republic is handling the economic pressures Europe is facing with Alice Michel, the governor of the Czech Central Bank. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. SpaceX makes history with the biggest ever IPO, raising $75 billion and putting Elon Musk on the verge of becoming the world's first trillionaire. Iran's semi-official Mehr news agency releases details of a memorandum of understanding to end the war with the U.S. President Trump says a deal could be signed as soon as this weekend. Plus, the Bundesbank president says the ECB is ready to hike again next month, if necessary, after it raised rates for the first time in almost 3 years. So more on, one of our top stories in a few minutes. In the last few minutes, reports have emerged of details of this memorandum of understanding to end the war with the U.S. That's after President Trump said a deal to end the war could be signed as soon as this weekend. Well, Abir Abu Omar joins us in Dubai. So, Abir, what more do we know about what this semi-official Iranian news agency is telling us?
Good morning, Francine. So yes, over the past few minutes, these are some of the headlines that have emerged from the semi-official Iranian state media Mehr, suggesting that the document, essentially, or the MOU is under consideration. These are some of the headlines. It will stipulate the reopening of the Strait of Hormuz within 30 days. It will unfreeze those $24 billion of frozen assets and lift oil sanctions. Now, just a very important caveat here. Mehr is saying that this MOU or these concessions are pending the approval by Iranian authorities. They cite a source that is close to the negotiating team. It is still unclear whether the text matches the text by Tehran or that was cited by this semi-official media matches the one that President Trump was referencing and was saying that it will be signed in Europe by this weekend. So still some murky details there for us to watch out for, but this time around feels a little bit different because we're getting from this back and forth some positive responses from the Iranian side. Again, if we were to go with what Mehr is saying, but we still await an official response from the Iranian government. Until now, we cannot definitively say that those are the same concessions that will be met by President Trump. Lebanon, a very sticking point in all of this. Iran says that the cessation of the war is including Lebanon through this Mehr news that we're getting. Israel has said earlier that it wasn't part of this MOU. So again, some conflict that we're still seeing in those back and forth statements. We will definitely be monitoring the situation and filling in. Oil prices dropping around $86 a barrel. So that is something that markets are taking very positively this morning, Francine.
Abir, thank you so much. It always is, I think, encouraging when you have a little bit of detail, but then you're absolutely right. We just need to check whether both sides agree on what detail was put out. Abir Abu Omar in Dubai. Now, the chief of the Czech Central Bank, Aleš Michel, has said that he sees a strong argument to raise interest rates to contain inflation. Now, a potential rate increase could put the central bank on a collision course with the Czech prime minister, who's urged policymakers to lower borrowing costs. Well, the governor, Aleš Michel, joins us now for an exclusive conversation. Governor, thank you so much for joining us. Now, first, this is a big week because the ECB yesterday raised interest rates. Now, what kind of impact does that have on your country?
So good morning, Francine, and thank you very much for having me. So our next decision, which will be next week, will be based on our own risk assessment. So the ECB decision will not affect our next step. Our key rate has been 3.50 for more than a year. So we have not cut rates below inflation in this cycle, which is really important. So for us, all is not the problem. The real problem is that there is too much money in the economy. It was created by years of zero rates and negative real rates before COVID. And it was supported by fiscal deficits. So this is still pushing core inflation higher. So we have to stay hawkish forever.
So talk to me a little bit about, we're trying to analyze what's happening in the Middle East. And frankly, it's unclear because every couple of days there's negotiations. We're not sure where it ends. Sometimes it changes. How much real inflationary pressure do you see from the price of oil?
So wars tend to increase inflation, definitely. So they bring more spending, bigger deficits, and more pressures on prices.
Is that, could that be short-lived? Again, there's many questions on whether, if Iran gets resolved, which, we don't know at this point, but if it gets resolved quite quickly, does it really help with inflation on the short side?
With the cost inflation, yes, but when I became governor of the Czech National Bank, it was in mid-2022, the inflation was close to 20%. 20%. So we reduced it to around 2%, and for more than 2 years from now, inflation has been close to our target.
Yeah.
So we restored price stability, and we will protect it. But current inflation right now in the Czech Republic is 2.1 year on year. Rates 3.5. Yeah. So which is our big advantage. So our policy is already tight.
Yeah.
But we have to decide, or right now it's about to decide whether to switch to a tight policy.
Yeah.
And core inflation is 2.9%, and we are fighting with this core inflation right now.
But so, Governor, are you ready to support a rate increase as soon as next week when you meet?
I think June move is now a real possibility. The case for a rate hike has strengthened, and forever hawkish, I would say.
Governor, one of the other things I want to talk about was Bitcoin, because in November 2025, of course, the Czech National Bank made its first ever purchase of crypto assets, mainly Bitcoin. Yeah. What have you learned so far from running this test fund?
Okay. So a central bank and Bitcoin, it's a strange combination, isn't it? Yeah. So most people do not put these two things together. Yeah. I do. So my logic or my philosophy is that in monetary policy, a central bank must be conservative. For me, that means hawkish forever, higher rates for longer, no quantitative easing, no currency devaluation. That's conservative monetary policy. But a central bank must also think ahead. And in operation, we must innovate. We must try to understand the future. That's why we created a test portfolio.
Yeah.
It's a test portfolio, not a revolution, not a political statement, a test. It's a $1 million test. Our FX reserves are 180 billion of US dollar. So we will run this test for 2 years, and experience, as you ask, I see only 2 possible outcomes for Bitcoin: very high value or zero.
Yes, but I mean, is this a surprise? Do you think that you're holding? I understand it's a test and it's only for 2 years, but what portion of the reserve could you imagine holding in Bitcoin in the future?
We will decide it after the test, after 2 years. Yeah. Right now, hey, I would like to say that I'm not a crypto governor, definitely, because I expect hard shakeout in crypto, definitely. There may be a wave of failures, but on the other hand, there will be strong companies and strong technologies which survive, definitely. So there will be some process of creative destruction in this part of economy, but let's understand the future. Let's create the future. I'm there for the future.
Governor, you're quite innovative. I mean, what you've done is very innovative. Also, on the change in reserve management, it is a shift to basically increase a portion of equities and gold.
Yes.
Right? And that's happened. What results is this new approach delivering?
So our investment horizon is infinite.
Okay.
So that's why we provide 2 long-term moves, increase equity allocation from 8 to 26% of our FX reserve, and we increase our gold from almost 0 to 6.5%, I would say, of our reserves. And results last year, return was 10%. Same as Warren Buffett result. So far, so good, I would say, but 1 year is not enough, I would say, to judge a portfolio. Warren Buffett built his reputation, I would say, over more than 50 years. So ask me again in 50 years.
Yeah, I mean, I hope to ask you next year. I hope this is not in 50 years. But the portion of stocks, as I understand it, will also increase to about 30% of the total reserves by 2029. And a lot of that chunk is U.S. stock market. So what is, I guess, your strategy for U.S. equities, especially at a time where everything's changing because of SpaceX today?
So with the investment horizon, which is infinite, so we do not focus on short-term bubbles. So we stay with our strategy. So we have built the portfolio for the long-term future. We have a high expected return because of the stocks and because of the U.S. stocks. So the portfolio is maybe for the next 50 years. So that's it.
Okay. I mean, do you worry about valuations in AI and tech in the U.S.?
No, I'm not focusing on short-term bubbles.
Okay.
Right now, it's a long-term portfolio for our kids.
Governor, really great to speak to you. Very refreshing view. Thank you so much for joining us here in London, in our studio. That was Alex Michel, the governor of the Czech Central Bank. Now, coming up, we'll speak to the chief executive of the AI drug discovery firm, of course, working to use artificial intelligence to extend human life. We'll speak to the chief executive of In Silico Medicine. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. Welcome back, everyone. Now, AI drug discovery firm In Silico Medicine is stepping up the quest to harness artificial intelligence to extend human life. Now, the company is really working with partners to develop what they expect to be among the first AI foundation models dedicated to human longevity science. Well, In Silico went public in Hong Kong last December amid an investor frenzy over China's biotech and AI boom. Well, I'm delighted to be joined by Alex Zavaronkov, the founder and chief executive of In Silico Medicine. Alex, thank you so much for joining us. I mean, this is a booming space that people are really trying to figure out, understand, and possibly invest in. How does your approach, for example, differ from the likes of Isomorphic Labs and Xaira?
Sure. So In Silico has been around for a number of years, and it took us a while to build an AI platform that constantly delivers ultra-high quality therapeutic assets that have dual purpose. So we usually go after what we call pipeline in a product. So imagine a drug that can be purposed towards multiple indications, not just one. Then we try to get it approved for the indication with the highest probability of success, where we are more likely to outperform the standard of care. And then we try to take it as far as possible into the clinic or license it out and try to repurpose the drug into aging. Right. Because the core of our discovery engine is human aging. That's the problem that every one of us has, and everybody who is listening has. It's my biggest problem in my life. And if you can target aging at its core, get a drug approved for the indication, and then repurpose it towards more indications, and get the maximum longevity benefit and even preventative therapeutic benefit, that would be the ultimate goal. Like, think about GLP-1s. GLP-1 as a target has been discovered more than 40 years ago. It became a drug very recently and became $1 trillion opportunity. So I am on it right now. I love it. So I want to develop the next one.
It's so interesting. So when you look at, AI, we often talk about AI and productivity in your space, in your world. But this could touch, of course, drug discovery, preclinical drug development, clinical drug development, regulatory filing, marketing, or finding the right patients. What do you think the first, number 1, 2, and 3 benefits are?
So the number one benefit of AI is, of course, speed. So at the preclinical level, we now can beat the traditional approaches at least by 4 times. And it's not only AI, it's also the infrastructure that we usually use around the world. That's why deglobalization is very bad for us, because we need to use the labs around the world, distribute the workload, get the data back, and see if AI was right or wrong. So now I managed to get the time from 0 to developmental candidate, 1 step before clinical trials, to 12 to 18 months. My record was 9. Typical traditional approaches is 4.5 years. So it's faster, cheaper, higher probability of success, higher novelty, and then again, our unique property is aging. We have the performance metrics here on the
How
on
convenient.
the label.
This is a great marketing
So you can
tool.
see that, well, not marketing, productivity tool. So usually companies that you've named, they don't have a single one. Here I've got 30 developmental candidates, 3 are in phase 2. 1 phase 2 complete, planning to go phase 3, and everybody in the company wears one.
I mean, you should do that actually also, you know, the World Cup should do it when they add a star if you win the World Cup. It'd be easier than having to buy a new football shirt every time. I mean, when you talk about a particular area of human health, I guess, that you want to focus on, and you say aging, I mean, is this to combat diseases? It's like, it's so wide, I wonder whether you have to approach it from a more kind of targeted clinical level.
Well, I have my personal philosophy and the company philosophy, and very rarely they properly convolute into a strategy that aligns with my vision, because my vision is to keep people productive as long as possible at their peak, so extending peak span. So imagine that you get to your ultimate performance level in a lifetime, and then you do not decline. You actually are either flat or even advancing.
Is that an age? Is that an age, or does it really depend on biometrics?
So currently it is your chronological age, which pretty much defines how long you're going to function. And there are stats for that. In the ideal world, you should be able to reverse some of the age-associated damage, or most of it, and continue at your peak. Continuous improvement. Otherwise, life is very unfair. And but the therapeutic process, the development of drugs, is very different from our ideal world. So you have to target a disease first to get the drug approved. And the drug that is targeting aging must be powerful enough to modulate the disease so that you outperform the standard of care. That is incredibly difficult, because you are not trying to fix something that is dramatically broken at like hitting it directly. But this indirect benefit must be outperforming standard of care. And that is very difficult. And then to be able to repurpose the drug after it gets approved into aging. So that's kind of one of my dreams, to be able to take my own drugs regularly to reverse some of the aging.
Alex, I mean, this is so interesting, and I wonder how you think about, you're basically talking about longevity and healthy aging, but I don't know whether there's a contradiction with also job availability and the fact that if you stay in your job for too long, then the youth can't come up the ladder.
Well, right now, people are actually not reproducing as they used to. So the population of developed nations is collapsing. If you can extend the life and productive life of as many people as possible, you're going to have very productive labor. Also, with AI, you have massive opportunities for enabling people who are retiring or even retired to go back into the labor force. So their skills, their intent, their work ethic, their values may be contributing to the society in a much more profound way than people who may come into the labor force later.
Do you think we'll really have some kind of big breakthrough on what your hope and dream is in our lifetime?
I think in our lifetime, we're gonna have many breakthroughs. On the immediate horizon, I don't see a single drug that can extend your life by more than 5 years as a healthy individual who is already optimizing, sleeping, not overeating. However, I think that within the next 10, 15 years, we have the chance for massive breakthroughs. I run a conference in this area. Everybody is coming there every year from all over the world to discuss the recent advances. We usually look at the horizon of 10, 15 years for drug discovery and development. And many of the discoveries that have been made last 10 years may actually get you more than 10 years. So it might be at the longevity escape velocity right now. We just need to execute.
Alex, thank you so much. What a great conversation. I'm also a little bit jealous. I might do the same for the Pulse team with a number of newsmakers and update that every couple of months.
Stats are good.
Stats are good, and Bloomberg's a big believer in data. Alex, thank you so much for joining us. Alex Zavaronkov, founder and chief executive of Insilico Medicine. Now, Switzerland is set for a nail-biter referendum on Sunday on a proposal to cap the population at 10 million. It's an unprecedented proposal which has never been tried by a modern economy. Rudolf Minch, chief economist at Économie Suisse, which represents the interests of thousands of Swiss companies, joins me. So, Rudolf, first of all, how do you see it? I mean, this is tight. It's a tight referendum, but it could really change the composition of the Swiss economy for a lifetime, for years and years to come. How are people thinking about this?
The initiative wants to cap the population at the size of 10 millions, but this threshold will be reached only in the early of the 40s or in the late 30s. So it takes quite a long time until the threshold is reached. So for that, we do not expect initial consequences, merely planning uncertainty, what happens in the future, but no initial consequences, because the population size at the moment is around 9.1 million, so it takes quite a long time until the Swiss population will reach this 10 million threshold.
I mean, Économie Suisse is Switzerland's largest business lobby. So what are the contingency plans for your organization if voters back the 10 million cap?
So obviously, it's not a good idea to cap the population at the 10 million threshold. We need flexibility, and the Swiss economy depends heavily on foreign workforce, say in the labor-intensive sectors like restaurants, construction, or the whole healthcare system, but also on innovation. Switzerland is an innovative country, so we need to have foreign talents, and up to now we have the privilege to be attractive for foreign talents coming from all over the world to Switzerland to join the workforce here, to create new patents, to doing some research and developing new products and services. And this openness is under threat.
Swiss companies have been quite vocal that the cap would severely restrict their ability to recruit the talent they need. Which companies, or will companies, leave Switzerland if voters back this cap?
As I said before, we have these labor-intensive sectors. They fear they do not be able to hire enough foreigners to maintain the level of services or producing products in Switzerland. So that, to add a word, it's the main issue about the initiative is planning and certainty. We have time in Switzerland to develop proper measures, to implement proper measures, but there's some planning uncertainty also. What will be the reaction of the European Union if there would be a yes? So we have to explain that initially nothing will happen, and we continue with the bilateral agreement with the European Union.
I mean, nothing will happen initially, but do you see, I mean, if companies were to leave, what sectors would leave first?
Probably it's not that easy, because we live with such initiatives over decades. And in Switzerland, we have a saying that the soup is not eaten that hot that it is cooked. And therefore, the enterprises do expect that Swiss policymakers do not going to implement this initiative in a really strict way, as it is written in the text. So there will be some in the future, some pragmatic solution and finding some ways that the openness of the Swiss economy maintain and the ability to attract foreign workers will remain.
Rudolf Minch, thank you so much for joining us. That was, of course, Rudolf, the chief economist at Économie Suisse. Up next, it's Bloomberg Brief, and this is Bloomberg.
for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Deal hopes. Iran's semi-official news agency MER reports details of a draft agreement being discussed with the United States. Stocks extending their gains, oil sliding on optimism over that potential deal. And the Wall Street debut of the biggest ever IPO, SpaceX, is set to begin trading after raising $75 billion. So let's get a check on these markets now around the world. We'll start in Asia with Winnie Su. Winnie.
Good morning, Bonnie. A very happy Friday from our region. Now, you can see that the risk sentiment is very strong, especially after the U.S. signaled the end to the Iran war. And also with these headlines coming through around the details of that potential deal. Now, that is really supporting the MSCI Asia here up almost 3%, with gains also supported by the lower oil prices and that optimism ahead of SpaceX listing later today. Now, you flip the board and take a look at the South Korea market. We have Kospi here leading gains again, but we did see these gains pairing a bit in the afternoon after our report that global banks are curbing the hedge funds leverage bets on SK Hynix and Samsung on the concerns around the potential pullback after such a blistering rally. However, the Korean won here also leading gains among its Asian peers as investors, foreign investors, finally turned into net buyers of Korean stocks today.
All right, Winnie, thank you so much. Now let's get over to London for a check on markets with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a day of hopes and dreams all across markets, even though we don't have that SpaceX IPO. We're seeing the Stocks Europe 600 up 1.7% and a rally all across short-end bonds here in Europe, thanks to hopes for that U.S.-Iran peace deal and potentially a lower energy price. Now, what I find really interesting is, yesterday we got that ECB decision, and actually officials have been projecting potentially another rate hike coming in July. But we flip the board here. we can see that actually expectations for another rate hike have been falling precipitously over the past few days. And now actually traders are just seeing one more rate hike this year. And that explains that bond rally too, Bonnie.
Justina, thank you so much. Justina Lee in London. Okay, so just a few moments ago, we got details from the semi-official Mayor News Agency of this 14-point plan. It includes things like lifting some sanctioned money for reconstruction. The US would end the blockade within 30 days. Iran would reopen the Strait of Hormuz under Iranian arrangements within 30 days. And then there would be a period of further discussion. So around the details that we had been hearing coming out, but it seems a lot more concrete now. Bear in mind, this does need to be reviewed by Iranian authorities and agreed to, according to Mayor. But we have seen a reaction this morning in oil markets and across the board, which already started yesterday when the president said very firmly that there was an agreement in the works. Mind you, we had heard that several dozen times before, but this time it seemed a lot more for real, if you like. So we're seeing New York crude trading below $84 a barrel, Brent crude 86 and change. The December contract is actually trading at $82. It's also down more than 4%. We're seeing gas future is down more than 7% in Europe. If you look at stocks, we already had that rally towards the close. In particular, yesterday, semis up 12% as a group. Well, that looks to continue today, potentially with the NASDAQ 100 pointing to more gains, as is the S&P 500 futures complex and Russell 2000. We're also seeing a massive move lower in yields today. We'll have a look at treasuries in just a moment. Let's get to some individual market movers now with Chloe Melly.
Good morning, Bonnie. Of course, space stocks are in focus today ahead of this much-anticipated SpaceX IPO, and the market is expecting a blockbuster debut from SpaceX, and so this enthusiasm is feeding through into that broader sector, with all of those names up here on the board in the green, and Rocket Lab in particular up about 7% in pre-market trading. Moving on to Adobe, which is feeling a little bit of management uncertainty and is down on the back of that today. There's an announcement that the CFO will be leaving later this month, and this comes just a few months after the company also announced the CEO would be leaving soon, and so this overshadowed actually what has been strong results and a strong outlook for the company, and we're down about 4% there. And finally, let's go over to Europe, where European airlines are reacting to this potential peace deal with Iran. Of course, even if we do get a deal over the weekend, fuel costs will not come down overnight, but we are still seeing a lot of optimism around that travel industry, that travel sector, and we're seeing Ryanair, Lufthansa and IAG, which owns British Airways, all in the green in Europe this morning.
Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, Laura Cooper of Nuveen and Rebecca Walser, president of Walser Wealth Management. Turning back now to this Mayor report, Iranian media reporting that a deal with the U.S., including lifting oil sanctions, reopening the Strait of Hormuz, and U.S. forces withdrawing from Iran's borders, is in the works and very close to getting signed. Let's get the latest with Bloomberg's Abir Abu Omar in Dubai. Abir, can you give us the latest that we've heard from Iranian media now?
Yeah, good morning, Vonnie. So over the past 30 minutes or so, we're getting these reports from state-affiliated media. Semi-official Mayor is reporting this statement, a 14-provision statement that includes some of the demands that Iran has in this MOU. Now, two caveats that are important here. One, we do not know if this 14-provision statement matches the one that President Trump has touted yesterday when he said that a deal is imminent and will be signed as soon as this weekend in Europe with the attendance of Vice President J.D. Vance. The second thing that is caveated is even with those 14 provisions that Iran has put through reportedly, it still needs to go through to the negotiating team and the government to finally be approved. So it's still subject to those final approvals. Some of the things that are mentioned in this statement include unblocking $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, and the removal of the U.S. blockade or the naval blockade in the Strait of Hormuz, along with some other things that we have talked about multiple times over the past couple of months. But the final stage of this deal would include discussing the highly enriched uranium in Iran, as well as what Iran has put through, again, reportedly, is the sanctions relief and the economic reconstruction program of Iran due to the damage that it has suffered because of the US and Israel attacks. One other thing that has emerged as a sticking point over the past couple of weeks, Fani, is Lebanon and Iran in this MOU that it says, that Mayor says has put through, the government has put through. It says that the cessation of hostilities by the US would include Lebanon. Now, Israel came out earlier today and said that it was not privy to the MOU that President Trump had mentioned. So we still have to wait and see. Murky details still in the picture, but what it looks like is that markets are reacting positively across the board. We're seeing Brent crude prices at around $83 a barrel. Those are levels that we haven't seen recently, and so the market is behaving quite positively when it comes to this news, but the important caveats still persist. We have to await final confirmation through the official channels that we have monitored in the past, Fani.
Exactly, and there will still need to be more discussed as well, Abir, but I do want to point out the VIX also trading lower today, below 19 now. That's Bloomberg's Abir Abu Omar. SpaceX making history with a record-breaking $75 billion IPO, valuing it at almost $1.8 trillion. As shares debut today, Elon Musk is on the verge of becoming the world's first trillionaire. For more, we're joined by Matt Bloxham of Bloomberg Intelligence. So Matt, I mean, we're looking at something that is trading at more than 90 times revenue, and in fact, it was loss-making in the last years that we have information for. Will that matter to traders?
Not at all. I mean, I think it's going to be loss-making and incrementally loss-making for quite a few years to come. I think clearly, the market's pricing this on the future opportunity, but as you said, on a 90 times trailing sales multiple, it has a lot of valuation to grow into, and so there's going to be a lot of focus going forward here on the execution. A number of kind of key catalysts coming up. For example, the next Starship rocket launch, perhaps in late June, early July, takes on incremental significance because that's a really critical platform for a lot of the plans that they have for the future of the business.
We also have with us JP Barnard, Bloomberg senior strategist. JP, what signals are pre-IPO trading in Europe and also on the crypto platform Hyperliquid telling us?
Well, it's amazing, and it looks like that the stock is going to be up there between like 30 and 50%. And I mean, like it's open to debate how reliable those prices are on gray market that is notoriously thin in volume and mostly driven by retail traders. So just a couple of millions can move the price a big deal there. But still, like the sentiment towards that stock seems to be extremely bullish. People want to have it in the portfolio. Space is an exciting technology. It could be the future connecting point between data centers and AI on Earth. And people seem to anticipate that, and so valuations and all the talk doesn't really matter. It's the story that matters and the idea going forward.
Matt, the company says it can pull in $28.5 trillion in the future, the vast majority of that from AI and some from Starlink satellites. It seems a huge number, but then again, as the FT pointed out today, no one thought people would buy clothes online at one point, and look at Amazon now.
Yeah, it is a huge number. We just saw some of those kind of broker forecasts actually, and there were more optimistic broker forecasts out there, even on top of the Morgan Stanley ones. I think that there's a massive amount of an execution challenge here. They've got to execute incredibly well across a whole range of sectors. They've got to displace the likes of Anthropic, Claude, OpenAI, ChatGPT to be a genuine market leader in the enterprise AI space. And they're coming from a long way back with the kind of Grok platform, which has stumbled a bit in the recent past. So definitely there's a massive opportunity there for all these companies to kind of take hold of. But it's really down to execution now, and there are a lot of challenges ahead.
JP, when it comes to IPOs, the calendar often plays a role. Is that the case at all this time, though, given that it's Elon Musk and everything about Elon Musk seems to be unique?
That's a tough question. You're absolutely right. I mean, like the name itself, it like pulls in a lot of fan base and a lot of people that have a lot of faith in his ability to make even the most outrageous calls happening. And I guess Tesla is proof to that sentiment. I mean, still, like we are now in a very long bull run, and not just like in terms of length, but also like in terms of strength. And we have seen some really abnormal moves in the AI trade going upward, and SpaceX could just prove to be the latest one doing so. So in the short term, I guess like the bullish sentiment will prevail. The question, however, is like that whole AI trade is embedded in a bit of a shaky economic environment. I mean, like we have the geopolitical issue. We have a new debate about like if rates are potentially going up when inflation goes higher or proves sticky. So it remains to be seen if the timing, maybe looking backwards, was like misplaced in a market that it was like at the top. Or at the other hand, I wouldn't be surprised if AI proves to go even higher, and if this is just like if we are just in the middle or even the beginning of the whole trade.
JP, just briefly, what are the implications for market liquidity? There's been speculation that some of the Bitcoin selling, for example, was in order to get into this IPO. What are you hearing?
Well, that's a debate that some people are making room for that IPO, and so cryptocurrencies, the Magnificent Seven weakness there could be something that is being sold to make room. Like overall, the AI trade has proven over again that it's a winner-takes-all market, and that money is very happy to move very fast into the things that works, and is very happy to punish those things that don't work. So I'm not surprised if we see more of that brutal rotation.
All right, Jan-Patrick Barnard and Matt Bloxham, thank you both indeed. Coming up, we're going to be speaking with Laura Cooper of Nuveen. She says mega IPOs have minimal return potential in the first year. She joins us next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Futures pointed higher, oil lower now on US-Iran hopes. Of course, traders also bracing for the impact of SpaceX's IPO and what it might have on AI sentiment. Joining us now is Laura Cooper, Global Investment Strategist, Head of Macro Credit at Nuveen. Now, she says mega IPOs have minimal return potential for the first 12 months. Laura, before we get into the details, do macro traders care about the SpaceX IPO today? Is there a frisson of excitement? Will it make a difference to outlooks, for example?
Well, I think we're seeing a combination of FOMO and this embedded dip buying behavior that is really driving this robust retail demand. And it does matter, I would say, for macro watchers in the sense that these mega IPOs will be seen as a good barometer more broadly for risk sentiment.
You point out that the S&P 500, with all of these additions this year, potentially is likely to be more than 50% technology by the end of 2027. I mean, it's one thing if you're invested in the NASDAQ, but if you're in the S&P 500, would you hope to be a little bit less concentrated in tech than that?
I think it's just the nature of what we're seeing because AI is the dominant theme, and we are going to see this tech concentration increase even further. And I think the challenge for broader equity exposures is that even if we start to see, okay, this diversification, this broadening away from those tech sectors over time, then that's going to still leave the broader headline index, fairly sideways. Lots of churn under the surface, but these small cap companies, as they increase, won't necessarily have the same impact in terms of driving those headline gains to record highs that we have seen.
All right, Laura, as I navigate you through the alarm that we are testing here in the U.S., can I also point to some headlines just crossing now that the U.S. and Iran are nearing a peace deal around the G7 meeting next week. Now, this is according to senior officials. The U.S. and Iran edging closer to signing an agreement to reopen the Strait of Hormuz, and it would be a memorandum of understanding. We already heard from Mayor this morning some details of the proposal, which include 14 points that would need to be agreed upon before all of the sides are in agreement. Laura, what would an actual memorandum of understanding mean with the potential reopening of the strait within 30 days? Not immediately, but within 30 days.
I feel like we've been here before in terms of these headlines, but I think from a market's perspective, probably a limited relief rally on the back of this. We would need to see clear confirmation that a deal is coming through, but as well, we would need to see a normalization of flows through the Strait of Hormuz. We would need to see signs that supply chain disruptions are going to be, alleviated over time. But if we look at the oil futures curve, it's already about $85, $90 a barrel through the end of the year. I struggle to see that coming off quite materially, particularly given this 30-day time frame. And so that suggests we are still going to live with this persistent oil pressures through the end of the year.
I want to ask you one question about the Fed and the economic environment as well, Laura. You say that the next move from the Fed is more likely to be a cut than a hike in spite of the inflation overshoot that we continued to see yesterday with the PPI.
And it is a bit of a controversial call, certainly given the rates repricing that we have seen with markets tilting more towards hikes. But I think at this juncture, yes, we are seeing those upward inflation pressures. That is being driven in part by the oil persistence, this tech inflation with software price pressures really coming in more materially. And as well, we are seeing signs of labor market resilience, which does leave wage pressures to the upside. But we think if this oil shock starts to fade, we will see that come off headline price pressures. And as well, we expect tariff effects to come off as well. So given that policy rates are already in restrictive territory, we think that we are going to see the Fed on an extended policy pause through the end of the year. We would really need to see a material de-anchoring of inflation expectations or some signs of wage inflation coming in more strongly, which is not our base case, really for us to have the view that the Fed will tighten into this energy shock.
All right, Laura, we have to leave it there, but thank you so much for joining us today. That is Laura Cooper of Nuveen. This is Bloomberg.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The World Cup is underway with Mexico beating South Africa 2-0 in the opening match. But as Wall Street Week found out, this year's tournament is raising questions whether the commercialization of sports has gone too far.
Manchester local Andy Milne arrived in Miami ready to cheer on England.
I can't wait for that first match. When the national anthem strikes up, and I know that kickoff is 2 minutes away, and it's England against Croatia, and our World Cup is going to start, there's nothing like that feeling in the world.
This World Cup, it feels a little different, to say the least, because I don't think it's accessible. This is the world's game. This should be a platform for everybody that loves the game all around the world to be able to come, to afford to come, as they've done in all of the previous World Cups, and I've been fortunate to attend 6 World Cups. But we've got the issues of dynamic pricing, the secondary market, and basically, I think FIFA has decided that this World Cup is where they're going to make a stated $11 billion and make this a very exclusive World Cup rather than what it should be, which is an incredibly inclusive World Cup.
You know, we're a capitalist economy, and you know, we subscribe to the adage of supply and demand. I do believe that we will see many kids and many families that will still be able to go. I think it'll be through different routes. But by the same token, you know, there is a market in this country for events. There's a market in this country to buy premium, and I'd say we're seeing what the actual ceiling on that might be as a result of this World Cup.
For more, we're joined now by Bloomberg's Simon Hampton. Simon, you know, you can go to a soccer match, your local club in England, you know, all of the major matches that happen relatively cheaply, right? I mean, Champions League even. Why is it so expensive to go to these World Cup games?
Well, I think FIFA's taken one look at the American market and said we can make as much money as we can over here. And they've stated they're going to make, or try and make, around $11 billion, which would dwarf what they've made in any other World Cup. And you look at the American market, you look at the Knicks tickets for the NBA finals at the moment, and they're astronomical as well. You look at Super Bowl tickets, they're astronomical. And I think FIFA looks at that and think we can have a slice of that pie.
Is it resellers or is it FIFA?
Well, it's a bit of both. So FIFA did price the tickets far higher than they usually do. Around, I think the group stages, the cheapest tickets are still double what they were at previous World Cups. But then they've also brought in their own resale market, and the tickets are going far higher on that as well, and FIFA takes a cut.
Is there any regulator, because it feels like you'd almost want to boycott the games for this reason, and yet if you've been waiting all your life to go to a World Cup game, you can't do that, can you?
Not in America. So if you've got the money, you can go, but if not, you've got to pay a princely sum to get there.
All right, Bloomberg's Simon Hampton, thank you. Tune into Wall Street Week with David Weston tonight at 6 p.m. New York time.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Deal hopes the U.S. and Iran edge closer to signing an agreement to reopen the Strait of Hormuz as G7 leaders meet next week. Stocks extending gains, oil sliding on optimism over that deal. And the Wall Street debut of the biggest ever IPO, SpaceX, set to begin trading after raising $75 billion. Let's get straight to these markets then, though, because this morning we got word from MER, the semi-official news agency of Iran, that there is a negotiation underway and it does still need to be reviewed and finalized by authorities in Tehran, but the draft has 14 provisions, including things like a permanent and immediate ceasefire of hostilities, full lifting of the naval blockade within 30 days, a reopening of the strait within 30 days. Now, again, we have heard much of this before, but it does seem to be taking shape in a more concrete way right now, particularly with the president coming out yesterday full of hope towards the end of the market session that this was going to happen. We're also getting word from officials that it all might get signed next week at the G7 meeting, which we know the president is attending. So you see this market reaction. Down more than 4.5% on Brent and WTI. Also down for the December contract, trading around now $82 a barrel in December. You have gas futures also much lower in Europe. Futures pointed higher this after a nice gain yesterday, particularly towards the end of the session. And adding to those gains now, we had semiconductor stocks up 12% by the end of the session yesterday. Space stocks also were clambering up the ladder before the IPO of SpaceX today. And if you look at bonds, we saw those yields drop pretty precipitously, trading now at 4.94 on the 30-year yield. That's an 8 basis point drop from yesterday, and 4.0232 on the 2-year yield. So pricing out about half that interest rate hike. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Vonnie. Today is, of course, SpaceX IPO day, and so we are looking at all of those space stocks that are very much in focus today. We are seeing the likes of Rocket Lab, Redwire, and AST Space Mobile moving much higher, and of course, it's because SpaceX is expected to be this blockbuster debut, and so we are seeing all of this enthusiasm around that industry feeding through into those companies. Moving on to Adobe, which is seeing some changes at the top. So the CFO is set to be leaving later this month, and this comes a few months after an announcement that the CEO would also be soon stepping down. And so we are seeing some weakness in the stock this morning and overshadowing what were otherwise actually strong results and a raised outlook actually from Adobe. And finally, let's go over to Europe, where European airlines are very much in the green this morning because of this potential peace deal with Iran. Of course, even if the Strait of Hormuz reopens soon, it will take quite a while for those fuel costs to normalize. But we are still seeing all of that optimism around around the travel industry feeding through into the stocks, with Ryanair, Lufthansa and IAG all in the green this morning in Europe.
Sighs of relief in airline executive boardrooms today, I'm sure. Chloe, thank you so much. SpaceX set to trade on the Nasdaq later today. Grey markets predict the stock will pop at the open. Pre-IPO trading in derivatives linked to SpaceX, for example, indicates a gain of anything between 30% and 50%. For more, Bloomberg senior market strategist Neil Campling joins us now. Well, that would follow the pattern that we see, right, Neil? So as soon as retail can get in, there's a pop, but it doesn't always mean that that pop holds. Is it a 50-50 chance that the stock ends up holding its first print price today?
Yeah, so it's a great point, Vonnie. I mean, I think if we look back, we did some analysis of 66 of the biggest US tech IPOs since 2012. And we found that on day one, 86% of those listings finished up on the day. So the first day pop is pretty well set for most tech IPOs. How they fare thereafter, of course, is a different thing. Dispersion comes into effect. And about 1/3 of the IPOs have actually ended up lower than their IPO price a year later. So the first day pop isn't necessarily indicative of where the path of travel will take, but clearly the encouraging signs are that in those grey markets, as you mentioned, it's looking higher. And given this is such a massive deal, that in itself is certainly an encouraging sign of this venture.
Jim Chanos calling this a hope and a dream IPO. Obviously, the company has no tangible profits, he says. Will he be proven right eventually? I mean, the loss last year was $4.9 billion, and we had almost that in the first 3 months of this year alone, but that hasn't stopped people before.
Very true. I mean, Elon Musk has a history of very, very big plans. So clearly, if you look at the infrastructure that's in place, clearly they've done a great job in terms of the space side of things. But to build out data centers in space, which is one of the main tenets of this, is going to be extremely expensive. So it's going to take a long time for this to come to fruition in terms of profitability. That is for sure. But the path to get there is going to require probably more of these deals like the one they've signed with some of the other frontier AI markets. You've got at the moment, you've got OpenAI and Anthropic that are leading that race. But really to build out infrastructure, XAI as the key part of their total addressable market is going to probably likely need to raise more capital because, yes, they have said they are going to burn through a lot of cash to try and bring this to fruition over the course of the next decade.
Neil, Elon is obviously going to become a trillionaire today, but he's not the only one who benefits, right? Peter Thiel's Founders Fund has a roughly 3% stake. Sequoia Capital are going to reap billions. Google has a $6 billion stake and also is renting in an arrangement with the company. So it's going to mint a lot of capital that will presumably cycle back into the market somewhere. Where do people think that'll go?
Yeah, it's an interesting point, actually. We've just been looking at some data that's come out this morning from Bank of America and from EPFR. That's actually saying that we've got record tech inflows into the cash market. We've got record equity issuance and record equity inflows at the same time. So the liquidity is still in the market, which is a really encouraging sign. And it probably will help fund those other massive IPOs we've discussed before that are coming down the pipe. And with people expecting Anthropic to be one of the next ones. And don't forget, back in the day, Google actually bought 10% of Anthropic for just $300 million. So they've had a good capability of spotting the new tech trends for sure.
Neil, thank you so much. Bloomberg's Neil Campling there. Sticking with SpaceX then, Walser Wealth CIO Rebecca Walser says, we're participating come hell or high water, but our view is common sense. IPOs are often 85% emotion and hype, and SpaceX is all of that times 100. We suggest waiting roughly 6 months for insider lockups to expire and for the raw emotion to settle. Joining us at the desk now is Rebecca Walser, president of Walser Wealth Management. Did you have to fight your clients on this one, Rebecca?
Yes, obviously. I mean, I said, listen, token amount, great, participate all day today, but please let's just wait because I think that this is so much emotion, so much hype. Space, are you kidding? Elon Musk, are you kidding? 555.5 million shares at a set price. I mean, it's just unbelievable.
Do you own Tesla? Or what do you think of the sort of the Musk empire generally?
I think that the man is a modern day Nikola Tesla. He's a genius. He is, his ability. I mean, let's be honest, Bonnie, when you are pricing in bonuses, if you can get a sustainable 1 million inhabitants on Mars, and that's priced into your pay package for SpaceX, I think that we're talking about an innovator who's charting uncharted territory.
So would you be concerned about Tesla? Does it thrive or strive if Elon Musk is further divided?
That's a great question, and I obviously do be concerned about any CEO who's got that much going on that's so disparate. I mean, Tesla is a data company. I mean, yes, it's robotics, but it really is a data company, all of the things that it's gathering. So there's going to continue to be a need for what Tesla does, separate and apart from SpaceX, but this is a new frontier, and I think that Elon Musk is a pioneer in it, frankly.
So what about the rest of the AI stack then? If you're interested in SpaceX, you're going to get in, but not for a while. Do you continue to invest in, memory chip makers and, other chip makers until then?
It's really interesting. It's almost like cannibalization if you think about it. So what we saw last year is the hyperscalers that are typically writing a little less than 30 billion in bonds actually wrote 121 billion in bonds last year because they saw, oh my gosh, this investment, this CapEx need is so high. We can't do traditional routes. It's something that we have to think outside the box we're going to have to do. So you saw that last year in the hyperscalers. Then you saw Google front run, new basically stocks shares, which has some dilution effects, but it was oversubscribed. It was supposed to be 80 billion. It ended up almost being 85 billion. So they're trying to front run all of this liquidity evaporation that's going to happen today with SpaceX and then Anthropic and OpenAI. So I think on the one hand, we need the CapEx from the hyperscalers to continue. You're seeing Micron, you're seeing the traditional legacy, memory, storage, all of these things that are being affected, swept up because they still are required on the infrastructure, on the compute, on all of the things that require to run data centers. So those, legacies are coming back into play, but they are demanding the CapEx to keep that valuation high.
Well, there you go. So then when you see a day where, a Broadcom just takes a tumble, or, a day where Korea is lower, does that start getting you a little nervous, or are you very, very confident in your thesis?
I'm extremely confident that we are at the very beginning stages of monetization, and that when we look back in even 60 months, we'll be like, wow, we were probably overall undervalued for the actual implications. This is going to change everything about everything about everything, and that is not hyperbolic. That is the absolute truth, but it is going to take time to transition. So I am concerned that people don't have the wherewithal and the grit to withstand the volatility that happens when you're monetizing a new frontier that you don't really know a true valuation.
Do you have clients that come to you and say, I want to be short this, all of it? I don't want any part of it. In fact, I want to be betting the other way.
Yeah, of course. I mean, we deal with a lot of clients that are looking for cash flow guarantees because they're close to retirement and they're saying, hey, I don't need all this volatility. But then the problem is, Bonnie, as much as someone says, I don't need to be, I can be on the sidelines. I just need to, have my planning done. They see these outsized returns. They see the fourth industrial revolution, this frontier, and they just feel FOMO. Like, I can't live in this day and age and miss out. So what the solution is to the amount of risk you can tolerate, participate. Otherwise, stay on the sidelines and just let's wait for the transition and monetization valuation to be more solidified.
And what do you do for those who want to hedge just a little bit? Hedging has become so much more complicated in this environment.
Yeah, so the fact is that we are tokenization of everything is the new wave, as we know. We are literally moving to digital crypto blockchain-based currencies, whether it's stablecoin, whether it's a mixture of all these things. That's the future. So what I would say is we must tether to hard assets. And so we will always be a believer in some kind of gold and silver position to hedge the risk that we're taking with the monetization, and we don't know where that value is going to come in.
Which is funny because gold, of all things, was staring at $44,000, just $4,300 just a couple of days ago. So, yep. And I know you worry as well about the resurgence of inflation.
Absolutely.
So what do you do if you don't want inflation to eat away all your gold holdings?
So interestingly enough, gold is actually long-term a great inflation hedge. Obviously, if you go back in the history of time, anytime we've had any kind of Middle East war around energy, it has acted as a risk-on asset because central banks use it for liquidity raise. So they literally will, even as they're buying, central bank policy is to buy, they will literally go and liquidate because they need liquidity to deal with the energy crisis and how they're going to deal with all of these other supply chain issues that they have. So it is usually a risk-on asset in the middle of war that deals with energy. strategy. But beyond that, if you look over time, obviously we got up to a high of 5,400. It's obviously retrenched back, but we're way off the 2,500, the 3,000, where it didn't go anywhere for decades. And it's really keeping up with the fact that the world is tokenizing and derivatizing all financial assets.
All right, Rebecca, good luck today. I know you'll be watching it, even if you're not participating until things settle down a bit. That is Rebecca Walser, President of Walser Wealth Management. Now to other top stories trending on the terminal this morning. European Central Bank Governing Council member Joachim Nagel says that the central bank is ready to hike again when it meets in July, if necessary. He says the fallout from the Iran war is proving too strong to ignore. High energy costs are having repercussions for other prices and are affecting core inflation. Global banks are curbing hedge funds' leveraged bets on Asia's top chip makers after a blistering rally this year, raising concerns of a pullback. Citi, JP Morgan and Goldman Sachs have raised the financing cost to take bullish wagers on SK Hynix and Samsung Electronics shares via swaps. Société Générale expanding into cash prime brokerage for the first time. The French bank has added around 20 people to its prime brokerage unit, mainly in New York. SocGen is likely to add more traders and salespeople as it seeks to widen the push across other geographies. Coming up, the US and Iran appear much closer to signing an agreement that would end up reopening the Strait of Hormuz. Details next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Iran local media is reporting that the U.S. will lift oil sanctions and the Strait of Hormuz will reopen this part of a memorandum of understanding. Officials tell Bloomberg that a deal could be signed during the G7 summit as soon as this Sunday. Bloomberg's Abir Abu Omar joins me from Dubai. All right, take us back, Abir. We got word from MER, the semi-official Iran news agency. What did it say?
Yeah, good morning, Vonnie. So look, a whirlwind over the past hour or so, but what we're getting out of this semi-state-related agency in Iran is this 14-provision statement. They're citing a person that is close to the negotiating team, and essentially parts of those provisions include what we've been discussing over the past couple of months or so. That includes the unblocking of the $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, the removal of the naval blockade within 30 days, and ending all hostilities. That includes also on Lebanon. And remember, Lebanon has emerged in recent weeks as a main sticking part for Iran, where Iran said it refuses to go back to the negotiating table unless hostilities by Israel on the southern part of Lebanon, where it's where the backed militia by Iran, Hezbollah, is present. So Iran has refused to go back to the table unless those hostilities cease. And then Iran goes ahead and says, through, again, reportedly, this is not confirmed yet, it goes through and it says that the final agreement would include negotiations about the highly enriched uranium and a program to reconstruct Iran economically after the damages that it had suffered due to this war. So a few caveats to bear in mind here. One, this is not confirmed by official sources that we would have normally resorted to, like the foreign minister, the Speaker of the Parliament, or the president. And then the second caveat is that the MOU that is presented by Mayor is not, we don't know essentially if it is the same one that President Trump has touted yesterday when he said that a deal is imminent as soon as this weekend in Europe.
Right, because a few of those provisions had been red lines for the United States, for example, Abir. I mean, the permanent cessation of hostilities, which is something that Iran wanted, was never something that the U.S. was really willing to agree to. I also wonder about this $300 billion in reconstruction, not just from the United States, but also its allies. Will everybody agree? Perhaps that's why we're hearing about a potential signing at the G7. Do you think there's room for maneuver here still, that Iran would agree to something maybe a little less than this?
That is a very good question. And look, the other question is whether the U.S. would agree to this, because this 14-provision statement that Iran reportedly has put through includes a lot of concessions that would be in the favor of Iran. Now, a lot of the points that are addressed there go against what President Trump has said are his red lines. So he has been playing the highly enriched uranium being sent out and the halting of Iran's nuclear program very heavily over the past couple of weeks. And that is something he addressed that Iran is willing to accept. But some of the other things mentioned in these 14 provisions, for example, the unblocking of the $24 billion of frozen assets, that is something that President Trump and the Iran hawks in Washington have disagreed to settle to. But we also have the scoop that you have mentioned as well about the possible deal being signed on Sunday. Now, we know that the G7 meeting is happening in Evian later next week from the 15th to the 17th. Our sources tell us that a deal could actually happen. Those are European sources that have spoken to people on the Iranian negotiating team. But, Vonnie, just something that is very important to keep in mind here that markets are not factoring in as of now is that this is heavily caveated, because the official Iranian stance as of now is that the deal has not come through yet. So we'll have to see into the weekend and into what our Bloomberg Scoop tells us next week's G7 meeting. Switzerland was also played as a possible place where this deal could take place. So at least that factors into what President Trump had suggested about the signing taking place in Europe. So the puzzle pieces are falling into place a little bit, but we have to wait and see over the next 24, 48 hours.
Yeah, the market started to turn yesterday when the president said he had called off what would have been a third night of strikes against Iran. And then with this Mayor draft today, it does appear that things are at least gaining steam. Bloomberg's Abir Abu Omar, thank you so much. Coming up, we're going to get you set up for your trading day. It's going to be a big one. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Apart from the obvious, we have University of Michigan sentiment data out at 10 a.m. Eastern, a view on what the consumer is expecting and whether inflation expectations are staying anchored. Plus, we also get Energy Secretary Chris Wright speaking at the Bloomberg Energy Security Executive Briefing today. And the world's biggest ever IPO, SpaceX, starts trading at some point today, probably around lunchtime. We'll have full coverage here on Bloomberg. And we saw some of those space stocks rocket higher yesterday as we approached it. Now, they had been selling off earlier in the week, but for example, Rocket Lab was up 7%. It was just one of the space-related stocks that moved higher. Many of them were up double digits, Satellogic and so on. Adobe came out with earnings, and even though it beat and raised, it fell after the CFO is departing the company June 15th. The CEO also announced he would resign earlier this year, and just generally, investors have been punishing beat and raise companies quite often in this market. And ExxonMobil, well, you can imagine it's falling after reports of a draft deal under discussion with the US. Let's take a look at the macro picture, because in fact, energy was really the only sector lower yesterday, consumer staples to a certain extent as well. But you can imagine that'll be the same story today with oil, not just the prompt month contract, but also out as far as December and beyond, down more than 4%. Gas futures down more than 7%. And this is your picture for futures, higher after we had that massive rally, particularly towards the end of the day yesterday. The Nasdaq 100 was up 3.3% by the end of the session. Semis as a group were up 12%. You can see that looks like it might continue today, particularly if we get more details around this Mayer report and whether it jives with what the US thinks is going to be that memorandum of understanding. We have the 2-year yield well down from this time yesterday, a good 8 basis points lower, in fact, pricing out a little bit of that rate hike. And the VIX, while not calm, is trading with an 18 handle. All right, good luck, everybody, today. That's it for Bloomberg Brief. Surveillance is next.
you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech. Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, preparing for launch.
3, 2, 1, ignition. And liftoff.
We're going to get the IPO, SpaceX IPO going pretty soon, I think.
Feels like a milestone moment.
This is a war for capital.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The SpaceX IPO raising a record-breaking $75 billion. Shares indicated higher by more than 35% in shadow trading, putting Elon Musk on the brink of becoming the world's first trillionaire. The stock begins trading later on today.
By any measure, this was an incredible success, and it sets the stage for the other IPOs that are coming down the pike with Anthropic, OpenAI, and others. A lot of questions still swirling. A lot of people are going to be skeptical, wondering if people are buying to get ahead of index inclusion, which is going to be rapid. The idea of retail investor participation, which was far beyond what people expected, whether that's a positive sign or just a sign of the cult of Elon Musk. Once again, people will have different opinions about this, but what it highlights is people believe that the idea of missing out on this type of opportunity is more punitive than potentially getting in.
This is such a polarizing stock, and it will be for a long, long time. And through the next 3 hours, there will be two opinions that dominate the conversation, the polar opposite of each other. One opinion will sound like this: it's a bullish bet on the future, led by a CEO that you should never bet against. And the other opinion will sound like this: it's an unprofitable company, trading at 90 times sales plus, the promise of tech that doesn't exist yet, and maybe never will. And they're the two opinions that will dominate the next 3 hours.
And when you look under the hood, what actually is the moneymaker, right? What is this company? Is it selling space or is it selling connectivity? Is this Starlink with a space wrapper? And essentially, if you take a look at where the revenues come from, it is entirely from Starlink. I mean, you're looking at the actual $4.42 billion of profit coming from there. Everything else is a loss leader. The AI hopes and dreams, the CapEx is $12.7 billion versus a loss of $6.4 billion. I mean, you start looking at these numbers, and you can see the skepticism. But is there an alternative? At a time that is inflationary, where cash is not an alternative, that is part of the reason why people are saying maybe it's worth it. Maybe it's worth it. to potentially go into this.
You're worth it, Bramo.
Thank you.
The IPO getting an assist this morning from the White House in a major way. Check out futures this morning, much, much higher. Check out crude, much, much lower. The president saying this yesterday, we've just made a great settlement of the war with Iran, and we're going to be subject to finalization of the documents, which we should get over the next few days. Probably have a signing maybe in Europe. The latest headlines coming out of the team in Europe and beyond is that US and Iran are nearing a peace deal around the G7 meeting next week. Look at crude this morning, WTI and Brent declining off the back of this.
What's fascinating is when there were initially headlines saying that the U.S. is going to strike even harder in Iran, the move was infinitesimal. And we said around this table, the market doesn't believe this. They don't believe that this is potentially going to be the re-escalation everybody was worried about. And sure enough, they were right. And frankly, the downside was nothing compared to the upside in markets on the announcement of some sort of ceasefire, even though we've been here before. So the idea, to me, the takeaway is the market action represents that people are more leverage to the upside of this, are more looking for the upside of this, and are ignoring some of the negative news that potentially could prolong this conflict.
Back in the 80s on Brent, I've been scarred. Keep going back to April 17th. Strait's going to reopen. Strait didn't reopen. At this point, I'll believe it when I see it, but I'm told we're getting closer, and we're getting closer.
Well, when you take a look at the state-linked media agency coming out of Iran, they were talking about the 16 points that Iran was agreeing on. One of them was an immediate reopening of the strait under Iranian guidelines. I mean, there are so many questions. If you want to look at the details, just don't. You know, the less you know. Chris Verone, I am channeling you this morning. But if you look at the details, you think, what have we actually accomplished? Because ultimately, these are the same sticking points that we had maybe 2 months ago.
Stocks up by 0.5%, call it 0.6% higher on the S&P. Crude down by 4%. Coming up this hour, Steve Orth of Federated with SpaceX set for its record-breaking debut. Pierre Fadiga of New Street Research, the first analyst call on the stock, and Justice Palmer of Fortuna Investments as we test the so-called Elon Premium. We begin this hour with stocks holding steady as SpaceX prepares to make the biggest market debut of all time. Bloomberg's Ed Ludlow is breaking down the numbers for us. Good morning, Ed.
Yeah, good morning, John. So steady, $135 a share, 555.6 million shares, the valuation 1.8 trillion. And this was atypical, this was unusual, right? There's still a lot that will come out in the wash and needs to be worked out on the allocations, but generally speaking, Elon Musk and the rest of the SpaceX C-suite controlled this. The bankers will get paid, but it's not clear to me how much work they did on it. Like, there was a lot of company control. And the idea on the retail allocation is that they believe, and the audience of Bloomberg Surveillance may not like this, but the retail investor understands the story much better than Wall Street does. It was really interesting to hear you and Lisa talk about this idea about the bull case and the bear case, or whether you believe the Elon Musk part of the story is a referendum on him, or you focus on the numbers, the lack of profit, and how distant this is. You know, SpaceX has been pretty clear. Behind closed doors, yes, but that if you are investing in this IPO and participating, you are doing it on a very distant future and timeline. There's this idea that it presages other IPOs, Anthropic and OpenAI, but what I found very interesting in the last 7 days, and constantly being on the phone with everyone around the table, is that they see SpaceX as an asset one of one. Right, a much more diversified company than people give it credit for, but very different to Anthropic and OpenAI. And the idea that capital markets will support all three, that there'll be some IPO window, actually, I don't think that that is as widely a held view as perhaps we previously believed.
So, Ed, it's a record-breaking IPO, without a doubt, but it's the second biggest equity capital raise of the month.
Exactly.
Alphabet with an upsized $85 billion in the last couple of weeks. And I just wonder how quickly Elon Musk and SpaceX will come back to the equity market to tap it once again.
Quickly, right? And one indication of that was the reporting we did that even prior to trading today, they'd already got IG status from the three main agencies, credit rating agencies. This is not a race to IPO, it's a race for capital. And everyone is very clear and very sort of comfortable with that idea that you have to make a decision. There's not infinite liquidity in the world. People, and in part, that's why, you know, when we were talking endlessly about the indices or indexes fast-tracking SpaceX inclusion, and the idea there'll be this massive passive rebalancing, like that is a factor, but also they'll come back to the capital markets very quickly in conjunction with Alphabet that's already gone, but probably also, like, you know, the reporting about Meta, Amazon, across debt and equity. It's a really interesting time. But again, I was listening to what Lisa was saying. Every 8 days, somebody phones me, somebody already on the cap table at SpaceX, and says, I actually don't put too much on the software part of the prospectus and the 26.5 trillion TAM on enterprise AI. This is a much more diversified business currently. They've played a blinder, becoming a neo cloud by renting the capacity to Anthropic and Google, but they are putting themselves in the same capital race as those hyperscalers are. You know, raise money, deploy CapEx.
Ed, it's good to see you. Looking forward to your coverage throughout this morning. Ed Ludlow in New York. It's kind of nuts, isn't it? Biggest IPO we've ever seen, almost 3x the previous biggest, and it's only the second biggest capital raise, equity capital raise of the month so far.
As Ed and many others have said, this is a race to capital, and you got bigger ones in line that want to get in first. Congratulations, Alphabet. You managed to just run absolutely everyone, and let's see if you can do it again.
Here's the view on Wall Street this morning. Steve Orth, the Federated, writing, a flood of supply is coming, starting with SpaceX today, but the gap between equity returns and their public market alternatives remains large and should continue to expand. Steve, welcome to the program. Great to cover this record-breaking story with you. What does this market mean? What does this IPO mean to this bull market, Steve? Can you frame that for us this morning?
Well, we're at the beginning of a new frontier here, and it's very exciting. And it's quite likely real in our view. I mean, our guys have been down there, you know, Starbase. This is a real company. It's got hard assets, which is something we think is coming back into favor now. And it's opening up a whole new world. It's hard to evaluate it entirely, but on a price to sales basis, it's actually not as crazy as some of the deals and some of the evaluations of things like the SaaS companies 5 or 6 years ago. So yeah, it's we think this is very real and is likely to be a pretty successful IPO.
Steve, what are you buying when you buy SpaceX? Are you buying the space shuttles that are going to take us to Mars? Are you buying data centers in space? Or are you buying Starlink and the promise of XAI?
Well, Starlink gives you a kind of base, Lisa, for sure. You know, kind of the cash cow. I mean, it's hard to call a business growing that quickly as a cash cow, but the rest of the business is potentially going to be revolutionary. I mean, if you can, and they have already just demonstrated, they can bring stuff back and forth to space. The cargo space that they've got there is pretty large, and it lowers the cost by, you know, thousands of multiple points to bring things back and forth to space. And we think data centers, I mean, okay, Elon is a little bit, you know, optimistic, but data centers in space are not that far off. I mean, the biggest problem they've got to solve is the water, you know, the cooling problem. But they've got to, you know, they've got ideas of how to do that. The cost of data centers is enormous right now, the energy flow, et cetera. If you can eliminate that, you change everything. So that's just one application, but could be pretty significant here. I'm not Elon Musk. I don't have the creativity to come up with this stuff. But I'm sure people thought Thomas Edison was nuts in his day as well.
Yeah, I'm looking up spacesuits, actually, that can take me to Mars. And they cost a ton of money, but they also weigh about 300 pounds. But extravehicular mobility unit, maybe I should invest in one. Steve, I wonder what this says, though, about the broader moment. Not just investing in SpaceX and some of these other IPOs during a race to capital, but the alternative, which is cash, in an inflationary environment. Is there a feeling that it is better to potentially jump on a train that could end up being a bit speculative, the remaining in cash that'll get blown out from inflation?
We think that one of the things that's happening here, Lisa, when people complain about the amount of capital raises going on in the U.S. right now, first of all, they're dwarfed in terms of the size of the U.S. equity market. So SpaceX, $75 billion. The U.S. equity market is $75 trillion. That's about 1,000 times higher. Cash, you mentioned, $7 trillion. Fixed income markets, $150 trillion. You've got $150 billion, sorry. And then you've got, you know, foreign equity markets are about $55 trillion. So there's a lot of money outside the U.S. and outside of the U.S. equity market. And we wrote a piece a few weeks ago about this. You know, maybe equities don't have a bond problem. Maybe bonds have an equity problem. I mean, if you look at the returns on fixed income or cash relative to equities over the last 5 years, it's been really, really low. I mean, in fact, fixed income is flat over the last 5 years. And that included a big downdraft in 22, which are actually worse than the downdraft in equities. So we think what's happening here is the markets are starting to figure out that the U.S. equity market, the way it's structured, the kind of companies that we've got here, the productivity gains that are going on, the unprecedented margin expansion. As you know, we just raised our out-year earnings estimates again to 450. We think it's really quite realistic going out 2 or 3 years here. So, yeah, the equity market looks pretty good to us. We're not going to be shaken out. We've been telling our clients, look, there could be a pullback here. There's all these different reasons. You guys, are covering them really well, including the Fed chair new and the midterm elections and the Iran war is up, it's down, it's in between. And there could be a near-term correction, but we don't want to sell rallies here. We want to buy dips, and that's what you do in secular bull markets. And sometimes it's hard to recognize you're in a secular bull until you were in a secular bull, but we're in one right now.
Steve, can we wrap it up with a 12-month bet? No money involved. If you had to take a bet right now, your best guess, what's going to outperform in the next 12 months? The NASDAQ with those OPOs included, or the S&P 500 without them?
S&P 500, we're expecting a broadening out here. In fact, we've already had a broadening out. Year-to-date, small caps are way ahead of the S&P 500. And we anticipate, that the broadening out is going to happen. The companies feeding SpaceX are going to do well. The whole infrastructure is growing out right now, and we think that's probably good for the broader market.
Okay. Steve, good to see you. It's great to catch up, buddy, as always. Thank you. Steve Orth there, Federated, on this record-breaking SpaceX IPO.
I'm really getting into this NASA Z2 spacesuit. I'm thinking about investing in it for my sons because I think it could actually be really helpful when they're fixing the data centers in space.
This is the conversation we'll have throughout this morning. How do you value a company like this? If you took Elon Musk out of it, would it be worth $1.8 trillion?
Not this conversation. You're just going to ignore that, move on.
I'm going to try and make it a little bit more sophisticated.
Good, okay, carry on.
Are we valuing this on Starlink? Is it a comms company? Or is it XAI? Is it orbital data centers, etc.? Is it an AI infrastructure company? What is it? What will it be? What is it now and what will it be? And how do you value it with that in mind?
It seems like the overlay of the promise of space, which, as Steve was talking about, there are some really real prospects. And frankly, the reason why Elon Musk's SpaceX has done so well is because they can take satellites up to space for other countries and entities to create connectivity. If you can leverage that, that could be, a moonshot.
A moonshot? Going to get plenty of puns this morning, aren't we? Futures this morning positive by 0.5% on the S&P with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. President Donald Trump saying, quote, "We ended the war with Iran." The president saying a deal will be signed imminently. Iran semi-official news agency MER saying the U.S. and Tehran are still negotiating a potential agreement. And it's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. At that price, Elon Musk's company has a market value of about $1.8 trillion. And of course, this historic IPO is set to make Elon Musk the world's first trillionaire. When combining his stake in SpaceX with his Tesla holdings and other investments and properties, his net worth tops $1 trillion, John. That's your Bloomberg brief. John?
Crazy. Absolutely crazy. Isabel, thank you. Appreciate it. Up next on the program, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
I think there's plenty of money for these iconic IPOs.
This feels like a milestone moment.
Up next, we'll catch up with Pierre Ferragu of New Street Research, live from New York City this morning. Good morning.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
A record-breaking IPO, an unbelievable amount of money, $75 billion raised. The previous record was about 29. That was Aramco. We have dwarfed that, absolutely dwarfed that with this one from Elon Musk and SpaceX. For the broader equity market, better than good this morning. We're up by about 0.5% on the S&P, on the Nasdaq up by a similar amount. Crude with a helping hand, an assist from the White House. Crude down by close to 4%. We're back in the 80s on Brent as we drift closer and closer to a signing ceremony, we're told, between Iran, the US and others.
Yeah, it's going to happen next week at the G7 meeting because now everything is fine after the momentary threat to potentially escalate quite significantly. The idea that we're seeing the lowest oil prices going back 4 months gives you a sense of just how much people have moved on. And ultimately, you can tell by the fact that the market didn't bid up prices of oil significantly yesterday and the threat of escalation. Yep. You can see where the bias is.
They moved on a long time ago. They've moved on even more. Under surveillance this morning, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The majority of the opportunity here is really in the AI compute space.
Feels like a milestone moment.
I think this cycle is so powerful that you have to be involved in these. It's just a matter of how much and what the timing is.
I think there's plenty of money for these iconic IPOs.
This is a war for capital.
SpaceX making a historic public debut, raising a record-breaking $75 billion, the biggest IPO of all time, pushing Elon Musk closer to trillionaire status. Pierre Ferragu of New Street Research becoming the first analyst to initiate coverage of the stock with a buy rating and 165 price target, writing the space opportunity is large and diversified. Our $2.3 trillion valuation assumes they win 75% of this market. Pierre joins us for more. Pierre, good morning, sir. It's good to see you.
Morning, John.
We've got comms, launch, AI infrastructure. What's driving the valuation of this company?
It's an excellent question. When we looked at that, we figured out about half the valuation of SpaceX today comes actually from combining artificial intelligence and space. Because space today is a lot of cash flow. It's very cash generative. The telecom business is generating a lot of cash. And if you have access to your own cash flow in AI, you can buy your own infrastructure. That makes it much cheaper for you. You don't have to pay a margin to a cloud provider providing you your infrastructure. You have to imagine Anthropic and OpenAI are raising money in the market to pay the bill, but they can't buy their own data centers. And xAI is by building their own data center, massive competitive advantage. And then you look at that further down the line, in 5 years from now, SpaceX will be in a position to really put to orbit gigawatts of data centers.
Well, let's sit on that story, because that forms the valuation in a major way.
Yes.
Does the technology exist that forms the basis of that story? Or is this another full self-driving over a Tesla? That's what the critics will ask this morning. How do you address that question?
So you look at the technology roadmap of the industry today, which is about stuffing more and more compute power into bigger and bigger integrated packages. This is really what space needs in terms of compute. And this is in the roadmaps today, and it's like, it was in the roadmap before we looked really seriously at space. So I think there is no significant technology roadmap.
At this point, how much more money do they need to raise for CapEx? Because I'm looking at some of the CapEx expectations for the different units, whether it's AI, space, or connectivity. You're talking more than $20 billion. I mean, how much more are they going to tap the market for?
Yeah, it's a good question. So we have our own forecast. We are not in this syndicate. We are not like in in the game of like pushing up the forecast as much as we have. To give you an idea, we think the company tops like $200 billion of revenues in 2030. At that level of growth, which is less than what the syndicate is pitching, we think the company can sustain itself without raising more money. If they want to grow faster, if they can grow faster, they could go back to the market to raise more capital. And it's mostly going to be about building out the data centers.
How much is SpaceX paving the way for OpenAI and Anthropic versus a completely different story that is hinged to the hopes and dreams of Elon Musk and the cult factor among retail investors?
It's a good question. I guess it's a very, very unique story, equity story. You see like 4 times oversubscribed. It's $250 billion interested in investing in SpaceX. Investors we speak to are more interested in understanding like the broader space opportunity than the specifics of the AI story. But they come to realize and understand that actually it's combining space and AI that really creates the opportunity.
What is the Musk premium here? If you took him out of this story, what's the company worth?
Well, I guess that you wouldn't have rockets flying without him, right? So the Musk premium is extremely significant. It's critical simply because the timeline, only Musk can put up the timeline and say, oh, I'll have all these data centers in orbit in 3 years.
And people believe it too.
I don't know. I think people accept the idea that if Musk says, I'm going to do it in 3 years, people are like, there is a very high probability it's going to happen in 7 or 8 years. And then, it's a whole discounting game where the Musk faster is you accept a discounting on a much longer period of time, but that's because it's Musk. That's the way Tesla is trading today.
What happens if he leaves?
Is he going to leave? No.
No.
Well, it's like...
Thank you. I appreciate it.
It's a good question. He never left, so we don't have a precedent for that.
No.
So the answer is just no.
Musk's talent is to attract talent. So like the density of talent at X, at SpaceX, at Tesla is incredible. So the days he leaves, he's not driving anymore. I mean, like we were wondering the same about Apple a decade ago with Steve Jobs, and so we will have to see.
I've only got 45 seconds left, so this is a few words if you can. How quickly before we combine Tesla and SpaceX? We're talking months, years?
That's a good question. I think right now is not ideal because Tesla is spending anyway a lot of money on their own and on the Terafab. So some of that will help Tesla. And then once they do that, it's very interesting to have access to the free cash flow of Tesla. And then there is an element which is politics, which is like it's probably easier to do it before the end of 2028 than later.
Yeah, it's good to see you. Thank you, buddy. Pierre Ferragut there of New Street. What an achievement by Elon Musk from New York City. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Futures positive this morning, up 1/3 of 1% on the S&P, back on track on the Nasdaq, up by 0.2%. The equity market rally fading just a little bit in the last 15 minutes. We'll get to the Iran factor in just a moment. Yes, we have to talk about it. I know that some of you don't want to talk about it, some of you being Bramo, but we'll spend some time talking about it.
It's totally important. It's just an absolutely frustrating, it's a maddening story.
I agree with you. I totally agree with you.
Yeah, I think the
You
market
won't get
does.
pushback from me. I think everyone's absolutely exhausted by all of this. The equity market back on track and heading towards a 10th week of gains out of the last 11, which is crazy. Let's turn to the bond market. 2s, 10s and 30s. Yields looking like this morning. Things are quiet, unchanged. 2s at around 4%, 10s around 4.45, 30s a dip below 5%, 4.95. Helped out by this move in crude, which has been declining in the last 24 hours or so. Crude down about 3% to 87 on Brent, back in the 80s, which is crazy. 85 on WTI. Bear in mind that we were $10 higher Monday morning on Brent crude. Getting closer to a deal, I'm told. The contours of that deal, though, a bit of pushback from Iran about what will and won't happen in the next few weeks.
The idea of the Strait of Hormuz going back to the way it was before the war, where there was free passageway, is not in their cards. They would like to have some control over the Strait of Hormuz, which makes sense given the fact that is a huge point of leverage. Again, we go back to how much has actually been settled with these negotiations. There has been, though, a change in the understanding of the supply-demand dynamic, and Dan Stroyven over at Goldman Sachs put out a note saying he's actually downgrading his expectation for the price in 2027 because you have some of the countries in the region increasing their output, and you have a structural decline in demand coming from places like China.
For now, at least.
For now.
They can change. You know, but I'm with you. The electrification of China, etc. We've seen demands drop. They've pulled back a lot.
Which is part of the reason why you haven't seen perhaps a bit of a spike upward in the face of some negative news.
Brent crude this morning down by about 3%. We'll spend some time on that in a moment. On our radar this morning, our top story, the SpaceX IPO raising $75 billion in the biggest market debut of all time. The record offering at $135 per share, putting Elon Musk on the verge of becoming the world's first trillionaire. BlackRock seeking to buy at least $5 billion worth of SpaceX shares. Sources telling us here at Bloomberg the firm joins Middle Eastern investment funds offering to place orders of $1 billion or more. Shares experiencing a surge in shadow trading and pre-listing markets. Derivatives from brokerages like IG indicated an expected opening price of $180 to $184, a 35% premium above the $135 IPO price.
Yes, this is going to be really important to watch because A, it sets the tone for the other IPOs that are coming to market. B, it raises questions about the way this was done. A price set before even the roadshow, which is notable. And C, it really highlights just how much demand was left on the table. You talked about skepticism about how far oversubscribed this deal was. That is always what people say because you put in a greater ask for the allocation because you know you're not going to get it. If you do see a rally like that, you might be able to conclude that that was actually real demand ahead of the inclusion in indexes and ahead of what a lot of people are expecting is a sea change in our understanding of our place in the universe.
In some ways, this is the Elon Musk IPO. In some ways, in fact, in many ways. We were just talking to Pierre Ferragut. Without that individual, this company isn't where it is this morning. This stock isn't where it would be this morning. There is only one man that could have really pulled this off. So it's difficult for me to look at this story and say, this is what it means for the broader market. I don't really know. This is what it means for everything that Elon Musk owns, because there are so many people that follow him and are willing to bet on him.
The idea, though, that they're willing to bet on him right now, given how much money he's raised in all of his companies, gives you a sense that people want dreamers right now. And I don't want to get too philosophical, but there is $8 trillion in money market funds right now. I was just looking at this. That's up from $3 trillion back in 2018. It has been a huge climb. If people want to put that money to work at a time that everyone is saying is an industrial revolution, well, why wouldn't they bet on feasible propositions that could potentially be game-changing? I mean, it's an infinite universe, literally, in terms of the market share if you do monopolize space.
It's a massive bet on the future. Elsewhere, we've got to talk about this story. The president insisting a deal with Iran is very close after reversing his threat of more military strikes.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents. We should get done over the next few days. We'll probably have a signing maybe in Europe.
Iran state media reporting Tehran and Washington are negotiating a potential deal. The details still not yet finalized. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, new this morning, senior G7 officials tell Bloomberg News that a senior Iranian official did indicate that a deal could be likely and signed as soon as this weekend in Geneva. Yesterday, President Trump indicated that Vice President J.D. Vance could take part in any such ceremony. The president himself isn't expected to land in Europe for the G7 summit until Monday. But our reporting does caution that at this point, Iran has not indicated that it is ready to sign and that previous diplomatic progress hasn't materialized. We're trying to figure out exactly what could be in this memorandum of understanding amid a flurry of reports from Iranian state media this morning that the two sides are working on apparently a 14-point agreement, but some headlines crossing that could risk derailing this progress, including this one from just moments ago, that Iran says that it will not restore the status in the Hormuz Strait to what it was to pre-war levels. Other contingencies that Iran has demanded in this agreement include seeing the U.S. unfreeze at least half of its frozen assets, and oil sanctions need to be lifted. Other than that, we also are learning that Iran is still demanding that a ceasefire needs to extend to Israel's front against the Iranian-backed militant group Hezbollah. These are all risks here that could stall the progress going forward, though at this point, the White House says that diplomacy is still viable.
Tyler, stay close. I have a feeling we'll have more headlines between now and the end of this program. Tyler Kendall down in Washington, D.C. To build on the conversation, the former Deputy National Security Advisor Victoria Coates writes the following. President Trump has demonstrated that he can bomb what he wants, when he wants in Iran, and there's little or nothing the regime can do about it. Victoria joins us now for more. Victoria, welcome back to the program. The U.S. has demonstrated repeatedly that it has military superiority over Iran, both in the skies and intelligence and so on and so forth. How do they ensure, the U.S., that they translate that superiority into a superior deal that benefits the U.S.?
Well, good morning, John. Yeah, I think we've actually seen that play out in real time over the last couple of days, and I admit I am a little nervous that Tyler's going to pop back up with another changing headline in this current news cycle. A lot of things are shifting, so take all this with a grain of salt. But it looks like what happened to my eye is that everybody thought the president was done with kinetic action. He wasn't going to go back in. The Iranians were, as he says, tapping the Americans along, and he decided, you know what, we can go back in. We can go and bomb a bunch of these sites, and I've heard them described as blinding targets. So you're getting rid of their radars, their ability to see things, their ability to launch missiles. Did it for 2 nights and then threatened Karg Island. And I think the Iranians thought, wow, maybe this isn't what we've been dealing with for the last 45 years, and that we need to make a deal or else we're going to sustain damage that we can't recover from. So I do think that military superiority is a fact. We are the ones who are stopping ships in the Strait right now. They are threatening ships, but we're shooting down their drones. We're the ones who are actually disabling the tankers. So that's the reality the Iranians face. Hopefully it means they're going to start making some better decisions.
Victoria, with all due respect, I'm looking at what the market reaction was yesterday, and that was not the interpretation of the market. When the initial headlines came out in the Truth Social post from President Trump, The reaction in markets was, we don't believe you. You've talked about a potential escalation before. Why should this be any different? And essentially, if you take a look at what Maris is reporting, the semi-official news agency out of Iran, it's a 16-point deal or 14-point deal that includes some that are still very controversial and similar to what they were a couple of months ago. What gives you confidence that anything was accomplished?
Well, I mean, I don't actually get my news from there. They haven't proven terribly reliable in the past. What they tend to be is a messaging device actually to the Iranian people from the regime. They're trying to signal to the Iranians what they want to have in this deal. And so this is, and to my eye, a lot of wishful thinking out of the Iranian regime. I'm going to wait and see what's actually in the deal before I just make up my mind about it. But obviously, Lisa, we're dealing with the Iranians. They have been obstreperous before. That is that's their brand, if you will. They're going to try to continue the sort of stalemate we're in as long as we can. But I think the fact that the president has both been willing to do hugely more than any other American president to degrade that regime, to degrade their nuclear program, to demand his red lines, and then was willing this week, when in a situation where there is significant political pressure on him to, wrap this up, get to a deal, any deal, but he hasn't been doing that. He's been sticking to his red lines. So, as I said, I'm going to wait and see what's actually in the deal rather than believe Mayor. And, as for market reaction, I mean, the stock market went up 1,000 points yesterday. That's not a bad thing.
Well, Victoria, what gives you confidence that this time something has changed in the negotiating position from Iran?
Well, it looks to me like they are shifting, that they are realizing that the situation for them is one of diminishing returns. And so, they can demand to have control over the strait going forward. But the fact of the matter is that the rest of the region that they've so completely alienated is busily building infrastructure to make that completely irrelevant. So you have the Saudi Petroline pipeline that we've discussed. We've got UAE building the Fujairah pipeline around the strait, and talk of a natural gas pipeline that Qatar would have access to across the Arabian Peninsula. So the Iranians are in a position where they have fewer and fewer cards, even if they are if they are obstinate at the negotiating table, and eventually, they're just not going to have that much regional leverage.
Thank goodness these Saudis built the East-West pipeline, Bramo. Thank goodness they'd done that. We'd been in a very different position over the last 3 months.
Yeah, and everybody is saying that more pipelines like that will be built, but it's going to take a while, potentially years, especially as they're all trying to do it at the same time and materials are limited.
Victoria, always good to catch up. We'll keep tracking this. We'll get you back on if things change. Things will probably change. The former Deputy National Security Advisor, Victoria Coates there. The latest on energy a little bit later, the Bloomberg Energy Security Executive Briefing with Anne-Marie. That's where she is. She's on the road now.
Yeah,
I know. Houston, Texas, I believe.
Yeah, just want to make a quick note. Houston, I believe, is a short jump over to San Antonio.
Are you suggesting she's not there to catch up with the Energy Secretary and Mike Wirth of Chevron?
I think it's a very convenient kind of meeting, and Saturday night. I mean, that's her break to get refreshed before she goes to San Antonio for Saturday night's game.
To watch the basketball.
Exactly.
That's what this is all about. Dow Points. Did we just have Dow Points quoted on the program a little bit ago, about a few minutes ago? Victoria Coates.
Yeah, I think so.
Dow Points.
Yeah,
all right.
That was good.
Get a memo to the Heritage Foundation. We don't do Dow Points over here. All right.
Please, you can go do that.
To the control room. Let's fix that. Okay. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Here's Isabel.
Hi, John. The SpaceX IPO drawing demand for more than 4 times the available shares. Retail traders placing more than $100 billion in orders for the stock. The company is expected to allocate 20% of the available shares to retail investors, which means most orders won't be filled. And shares of Adobe trading lower in pre-market. The company announcing record second quarter results and announcing its CFO is leaving next week. Adobe's CEO said in March he would be stepping down once a successor has been appointed. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0, and South Africa beating the Czech Republic 2-1. The United States is playing its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you for the update. What was that game about, the first game? The officiating of that game?
Well, yeah.
3 red cards?
Red cards, yes.
What
instead of yellow cards. Although, you can't just go and sock someone. You can't just go, if you don't like them, you can't just go punch them.
I didn't think it was that violent. I didn't. It's like reaching across. And
So you think that's acceptable?
I think it used to be.
Okay, but it's not anymore. Now we have rules.
Yeah, I get that.
Yeah,
We've got video replays.
We've got video replays. Some of them, though, I mean, I think were a little bit.
Just be able to leave an elbow in, Bremer.
With like brass knuckles. Yeah, you played a different kind of
I certainly did not.
different kind of football.
I certainly did not play like that. Up next on the program, a big test for capital markets.
It's a momentous transaction. It shows you the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Up next, we'll catch up with Justice Palmer of Fortunate Investments from New York City this morning. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
From New York City. Welcome to the program. Equity futures this morning positive by 0.4% on the Nasdaq, up by a third. I call it the supply monster. We have had so much equity supply, debt supply too, in the last few months. When we caught up with Ed Ludlow earlier on this morning, we were talking about the fact that this is the biggest IPO we've ever seen, almost by a factor of 3, more than 2 times the size of Aramco, and yet it's only the second biggest equity raise we've seen in just the last few weeks.
Alphabet came out earlier and dwarfed this before. It starts to raise a question. We've seen all of these debt raises that have been huge, right? We see Oracle with more than $100 billion of debt that they've raised in the past couple of years. And people just were talking about how that's big debt issuance, but now equity is getting into the game at actually a lesser value point. So how much does this distort valuations in equity markets, or equity markets expanding to include the opportunities in space and beyond?
Accommodating a record-breaking IPO. Under surveillance this morning, a big test for capital markets.
It's a momentous transaction. It presages the beginning of a pretty sizable wave of IPOs. It shows you the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Here's the latest this morning. SpaceX, a record IPO testing the Elon premium and igniting debate over the $1.8 trillion valuation. Fortuna Investment CEO and SpaceX shareholder Justice Palmer thinks the price is right, writing IPOs priced too high tend to pop briefly and then trade underwater. A valuation that leaves room for the stock to run is far better than one that sets it up to disappoint. Justice joins us now for more. Justice, welcome to the program. I've talked about the blind spot that I have. A blind spot that I have to imagine what these companies could be. And if this was not 2026 and it was 1997, I'd ask the following question. How is a bookseller priced at 28 times sales? How can this company do anything other than sell books? What will it be? I've got no idea. But people asking similar questions about this company, and are they the right questions?
Yeah, good morning, John. Great to see you. And I absolutely unequivocally think that those are the right questions, right? Because, the valuation in any kind of conservative approach or pragmatic right now numbers probably don't line up the way that most fundamental and certainly most value investors see things, right? But to your point, you're always able to grow into something if you are a one of one, a very generational type of company. And so keep in mind, I just want to flag two things on what you said there, John. One, you were talking about, the Amazon IPO in the late 90s. So keep in mind, Amazon actually went out at about a $400 million valuation for whatever it's worth. Yes, the metrics were, kind of aggressive, but the value of that company is only around $400 million. You think of that, right? And I only flag that because what the retail and institutional investors were able to do in that situation was they were actually able to ride the stock over 20 years in the public markets. And so I just want to deviate that from what we're seeing this morning with SpaceX coming out at, let's say, $2 trillion. A lot of that growth has actually happened in the private markets versus the public markets for whatever it's worth.
So that's the question I want to ask about this particular IPO. So here we are at 90 times trading sales, and this time we're raising $75 billion. And in many ways, we're talking about a future that doesn't exist yet by definition, and we don't necessarily have the technology to fulfill it. Why do you have the faith that we will in the not too distant future?
Well, I think if you look at the background of human civilization or American business, we're always doing things that are impossible. What seems very plausible and plausible today wasn't the case 10 or 20 years ago. So we've got great, world-class, one-of-one generational entrepreneurs, folks like Elon Musk, folks like Jeff Bezos, who you mentioned before. And so these people are always going up to the plate to try and do the impossible. And that is, I think, the story, right? There was no reusable rockets before Elon Musk showed up. There's none of, there certainly wasn't the cadence of satellites going into outer space before Elon Musk showed up. And so I think that is the story. And so, obviously the bear case is 90 times sales doesn't make any sense. But the other side of that is if these entrepreneurs can continue to keep innovating, the capital markets can keep funding their dreams, magical stuff really happens. And I think what you probably will see, and again, the not too distant future is a relative term for a lot of different folks. So what I would say is the next 5 to 10 years, I think what's plausible is the company starts to double sales year over year. Let's say they're doing $20 billion this year. I think they can get to 40 next year. I think they can get to 80 the year behind that and start to really get that flywheel moving. And then from that perspective, I think the valuation backwards looking will tend to make a lot more sense.
Justice, magical things are happening in space, and magical things are happening in your bank account, because if you got in early, you are one of the lucky ones that we're all thinking about this morning and being incredibly envious of. What do you do with the new billions that you have? I mean, this is a real question as a stage agnostic investor as you are. Do you keep it in SpaceX, or do you liquidate it and get in early on others that could be the next SpaceX?
Well, I mean, that's a great question, and thanks for kind of flagging that. And so, I mean, what I'll say, and I can only speak for myself, is, we at Fortuna, we're very long-term fundamental shareholders, and we wouldn't have had a chance or opportunity to let the market compound or SpaceX compound if we had just maybe purchased it today. We've owned this SpaceX for many, many, many years. We bought more of the IPO. And so the idea isn't to flip it. I know we're in an age of instant gratification and quick trading and trading strategies and things like that. But the most fundamental rule of investing is letting compounding work for you. And statistically speaking, when you have these great winners, you have to let them run. You really want to let them run and let compounding work itself out. And it's very difficult because there will be pullbacks, there'll be overvaluation, there'll be all sorts of stuff. But generally speaking, when you've got a winner, and I'm talking about world-class companies, I would unequivocally put SpaceX in that bucket. You want to let these things run.
Do you think that Anthropic and OpenAI will have a similar type of welcoming to the public world?
I think it's going to be an interesting, experiment of sorts. I think, look, you guys know this. It's never been done before. What I will say is you want to be out early. I think Elon's done a great job of really pushing his team and his crew to get this stock out early, because you're cleaning a lot of money out of the market. And so as the IPOs continue to stack on, you start to inherently develop risk, because if one of them starts to trade underwater, it's going to have a follow-over effect on the one preceding that one. And then obviously you've got market factors, you've got presidential cycles and geopolitics and things like that. So I think it's too early to say that, we'll have to have that conversation hopefully once they're at bat. But what I can say, all else equal, is being first is being pretty good.
You mentioned you participated, Justice. Did you get the equity that you wanted? Did you ask for more than actually you wanted? What did you get?
I didn't. I mean, look, you never get enough of the things that you want, right? So we didn't get what we wanted. That said, there was there's a couple different banks that were on the file, so we were trying to get it from kind of a few different banks. But I can attest it was very heavily oversubscribed. So we look forward to the trading in the coming hours this morning.
Justice, appreciate your time. Thanks for being here. Thank you,
Pleasure,
sir.
John.
Justice Palmer there of Fortuna Investments on the future and the bet on Elon and this company.
Justice is having a great day today. I mean,
without a doubt.
What do you think he's going to do for dinner tonight?
He looked pretty happy, didn't he?
I think that he
steak in a very expensive bottle.
At least, right? I mean, this is something that people have talked about. All of a sudden, there's an entire rank and file of SpaceX billionaires now coming to the fore. All these people, including a lot of the employees who own shares. And what are they going to do with all of that money? Are they going to take it to Mars with them? Are they going to spend it on mansions? But this actually goes to a point that you and I have talked about a lot, which is inflation. And I'm sorry, this is
We're turning to bonds again.
We have to kind of give a sense. There's a lot of money going into a lot of things, and you just have to wonder how much of that's going to trickle into the real economy.
I think on days like these, it's really easy to sit here and be the skeptical, smug journalist. I can do it.
We're not in it.
I can do it with ease. It's a company that's losing money. The tech doesn't exist yet. We're trading at 90 times plus trailing sales. What are we doing here? It doesn't make any sense. That's the easy thing to do on a morning like this morning. You could have done that repeatedly in the 90s. As you sit here this morning, the harder thing to do is to try and imagine this working out. Imagine it working out in a positive way.
You can already see it. If you really want to be bullish on this, it's not that hard given how many rockets he's already gotten up there and satellites circling. And the promise of actually data centers in space and sort of the solar energy that could potentially power that, I mean, that's pretty ambitious.
You should clip these programs this morning on all these different networks, play them out in 5 to 10 years. We'll see how accurate the truth was, how close we got to that moment.
Whether we're in bunkers.
Yeah, from New York City. You're watching Bloomberg TV.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
as an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The point where the stuff you generally see ahead of market peaks has happened.
The big companies that are already public are going to the capital markets and draining them.
AI policy is probably the biggest market event.
There's a lot of other things going on in this market.
This is going to be a marathon, not a sprint. That's a kind of multi-year phenomenon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equities up by 0.4% on the S&P 500, up a third on the NASDAQ, off the back of this. As widely expected, widely anticipated, a record-breaking IPO from SpaceX, a $1.8 trillion market cap. We've raised $75 billion.
Yeah, and a lot of people are pointing to what the shadow pricing has for the pop that this will get on the first day of actual trading, which is indicated around 35%. This is interesting for a couple of reasons, most notably because the price was set before this IPO happened. Normally, it's a price discovery process, not this time. So if these shares do pop by 35% in the initial trading, it will indicate just how much demand there is to get a slice of Elon Musk.
From what we've heard so far, tremendous demand in that order book, particularly from retail. We'll spend some time on that in the next hour or so. We've already framed up the 2 arguments this morning, haven't we? The more skeptical view, it's 90 times trailing sales, it's unprofitable, the tech doesn't exist. And then just this idea that you should never bet against Elon Musk, because the same arguments made up against this company have been made against Tesla, and Tesla, for a lot of the time, has proven the doubters wrong. The stock price has proven the doubters wrong.
Yeah, and frankly, there's a lot of actual technology behind this that supports that even more than some of the previous arguments, including the fact that he already has rockets that have proven themselves. And that's no small feat, considering how many rockets people have to send up that explode, that have problems before they realize exactly how to do something. The fact that he has a head start on that at a time when the satellites in space are dictating dictating a lot of our connectivity, are dictating our GPS systems, are dictating national security, is a reason why people see the profitability in certain slices of this business, see the diversified business, and are getting to say, look, as someone who grew up on science fiction, it wasn't my own desire, but sort of imposed on the family, I could just say, like, this is actually...
It's not therapy, Bramo.
This is actually kind of incredible. It's coming to... You know, it's like the Daleks coming out. You know, it's you wonder what Mars will be like.
Yeah, that wasn't what I was thinking. I was thinking about a conversation we're about to have with Ed Ludlow about raising capital.
Please do.
We can have the sci-fi conversation at the break if you want. When we asked him about how quickly they'd come back, and he almost immediately just said, really quickly. We'll catch up with Ed in a moment. That's what this is about. And I thought of that moment between Jamie Dimon and Elon Musk. And the JP Morgan boss asked Elon, the first question, why do you want to go public? And he just went, to raise capital. To raise capital. It's a capital event. It's about raising capital. And we're going to see more of that in the not-too-distant future.
It's a race for capital, as many people have said, but when you take a look at the different sections of the business, Starlink has an expected CapEx for last year of just $4.2 billion. It will probably increase. AI, the XAI and X, had a CapEx of about $12.7 billion. And you can see the CapEx for the space aspect had almost $4 billion of CapEx. You can probably multiply that given their ambitions for growth. Where is that money going to come from?
Do you want to talk about oil? Crude down this morning.
Desperately.
Brent, WTI. Lisa's favourite story. We're getting closer to a deal. Trading in the 80s on Brent this morning.
Yeah, well, the market believes we're closer to a deal. And ultimately, it seems like President Trump really wants to get a deal, which possibly is the key aspect here that markets are welcoming, because they didn't believe him when he said he was going to escalate based on the price action. They do believe that the idea of wanting a destination that's an easier one is a positive. Whether it comes to fruition, when you get into the details, just keep channeling Chris Verone. The less you know.
The less you know.
The less you know.
87 on Brent, 84 on WTI. Coming up this hour, Stuart Kaiser of Citi, as Wall Street gears up for the SpaceX trading debut. Brian Hamilton of Abrigo on why the stock is, in his words, extraordinarily overvalued. And Zach Griffiths of Credit Sites on the unprecedented credit landscape for the company. We begin this hour with stocks higher, heading into a record-breaking trading debut for SpaceX. Bloomberg's Ed Ludlow is back with us. Ed, what are you looking for throughout this morning?
Yeah, I still think it's really interesting where the allocations go. You know, we talk about this idea that the retail investors know better than Wall Street does on the story, but like a lot of the decision to make this unprecedented retail allocation was the belief that the retail core will just hold the stock for much longer. So yes, there'll be some crazy trading today when we get kick things off, and you know, there is only the float that can be traded, but I think that's going to be very interesting because a lot of these guys, you know, on the institutional side, they are kind of already on the cap table. My world's very different, John, like right now than it was, say, even 5 years ago, where we wrote the story of how big the windfall for the venture capitalists will be. But if you look at the private rounds, and this is definitely relevant to the idea of Anthropic and OpenAI following suit, the mutual funds and some of those long-only asset managers are already there in the private markets. So I think it's just so fascinating to see who ends up being holders, you know, when we go to the bar this evening.
A couple of headlines just crossing, just to share them with our audience. So according to NASDAQ, the IPO of SpaceX will be released for quotation at 9:50 Eastern Time, eligible for trading at 10 a.m. Eastern Time. Ed, just give us the time frame here, the play-by-play over the next several hours.
Yeah, I mean, basically those institutional investors and the retail investors will be waking up to find out their allocations right now and in the coming hours. That 10 a.m. Eastern Time, you get an indication, you know, more solid than the gray or shadow markets would give you on opening price. When is trading going to start? You know, you can't say for certain, but 1 p.m. Eastern is possible, 2 p.m. Eastern. And what's so interesting is, like, that leaves you 3 hours left in the trading day on Friday for the biggest IPO in history. It'd be very interesting to see literally what happens minute by minute, because for lots of people, it's their first opportunity to get in if they didn't get an allocation. You know what I mean? So you buy very high and then sell even higher or sell lower. That's the fun of the markets, right?
Looking forward to it. Ed, thank you. Looking forward to your coverage, buddy, as always. Here's the view on Wall Street this morning. Stuart Kaiser of Citi writing, there hasn't been much market breadth lately on both sell-offs and rallies. The market has been mixed as people rotate instead of broad changes in risk. Stuart joins us now for more. Stu, good morning.
Hey, good morning. How are you?
I know you can't talk much about this IPO specifically, but the amount of IPOs that are coming to the market at the moment, do you see them as a red flag for the bull market or a green flag to deploy more capital?
I mean, ultimately, we'll have to see how they perform. And I think it's not just IPOs, right? You have secondary offerings from Meta, from Google, from Amazon. You have tremendous amount of convertible bond issuance, IG bond issuance. So this is a sort of broad-based demand for capital. And I think a lot of investors are looking at this as one of the largest construction and industrial production cycles the world has ever seen, right? And that needs to be financed. And what we're seeing, I think, the last couple of weeks is a little bit of a friction in the market as people digest just the enormous amount of capital that's going to need to be raised to get this done.
Pushback, Stu, that we've talked about Meta, Oracle, maybe spending too much, thinking about raising more capital, stock markets pushback. Are all companies going to be treated the same, or are we just isolating the weak points?
I mean, I don't think all companies will be treated the same. You know, the winners are the winners and the big free cash flow companies like we see from the Mag 7 the last couple of years are going to be able to raise that capital, and companies that are maybe the tier 2 or the tier below that are going to see credit spreads rise and going to see some more pressure. I think what's gotten people's attention recently is last year was all about debt financing, right? This year it's been about equity financing. So that's gotten equity investors' attention. Like, wait, this applies to us as well? Like, this doesn't seem very fair. And much like Lisa, I was forced to watch Star Trek against my will. So, you know, I have some scar tissue that I'm working through as well related to this.
We can talk about that later. You know, this is actually something I think a lot of people on Wall Street probably are working through this morning. There is a sense, though, and you talked about this, John was talking about the rotating pool of capital and how it's going from different names and different pockets, and the breadth has been really bad. How much are people selling some of the previous winners to get in on the new hot and shiny thing?
You know, it's a tough situation right now because the winners is still where people want to be. And this year has been really defined by estimate revisions. Earnings going higher, and that's driving stock returns. And frankly, that's been in a relatively narrow part of the market. So as much as people might want to rotate, when you say, okay, when you rotate, you have to sell this guy and buy that guy, the guy they have to buy is not something they want to own, right? So in some sense, it's like you're being forced to rotate against your will a little bit, and it's been a little bit tricky. So I think, look, some of the stuff is up so much. If you look at NASDAQ earnings are up 10% since the end of March. Semiconductors earnings have been revised up 17% since the end of March. So you kind of fade that at your own risk, right? Is that done? And I think a lot of investors do not think those revisions are done. They still want access to those positive earnings revisions. So I think people are playing a little bit of hopscotch amongst the AI winners. Oh, this looks a little overdone, let me move here. But it's not, you know, I want to move down, you know, the quality spectrum or be really too far away from that AI trade.
Something you mentioned, that the debt markets have gotten used to being tapped again and again to build out the Industrial Revolution, and they certainly have been over the past 2 years. Now it's equity markets' turn. At the same time, is this being driven by the fact that equities look like a better risk-reward proposition at a time of earnings growth like the kind we've seen, given that inflation is going to be higher, that yes, bond yields are higher than they have been historically, but in some ways aren't necessarily even going to keep pace with inflation over the next couple of years.
And you also have the situation where the credit markets are going to start to look a lot more like the equity markets, right? Because large cap tech and the Mag 7 are issuing debt. All that debt's going to go into the credit indices. So this sort of sector concentration you have within equity actually is going to exist within credit. So you're not getting all the upside reward, but you're actually getting a lot of the risk and the concentration. So, you know, we'll see ultimately how that plays out. I mean, I'm an equity guy. I'm going to tell you, equity's not bonds.
But is there usually bond allocated money going into the equity space because of exactly this dynamic?
You know, I mean, money's been coming into the equity space, you know, kind of from all directions. You know, the beauty of the bond market, though, is you're constantly recycling coupon payments and stuff like that. I mean, the bond market's healthy. Look where credit spreads are. You know, there's not like an issue on the credit side. But to your point, you're making a decision there of, you know, do you want your fixed payout or do you want access to that sort of upside earnings revision? And the revisions have been just like goofy powerful this year. So it's kind of hard to step away from that, I think, for most people.
So you're describing the changing characteristics of the US credit market. Can we talk about the changing characteristics of the index, the NASDAQ? What that's going to look like as we introduce some loss-making companies with massive market caps, and we do so really quickly. How's the character of the NASDAQ going to change?
Well, I think what's interesting is the size of some of these IPOs is just so big historically because they IPO'd late, I guess would be a way to look at that. Yep. And the other interesting thing with the indices is a lot of these things are going to be in NASDAQ pretty quick and not in the S&P for a while. So you kind of get a little bit of a divergence, you know, between how the two things look. You know, for NASDAQ specifically, we'll have to see how it all plays out, but it's not unusual to have sort of higher volatility, you know, stocks with a lot of earnings.
Follow-up question, does that just amplify the existing difference that already exists between the two indexes?
You know, like, look, the concentration in S&P has gotten pretty high as well, but yes, it will. I mean, you could be in a situation later this year where there are 2 or 3, you know, new IPOs that people really want access to that are in one index or the not, and not the other. And you will get a divergence there. Yeah, it will. I mean, just by definition, I think it'll kind of widen out the gap between the two.
Do you buy the argument that with increased supply, the dynamics of the equity market are changing enough to dilute some of the demand, that just the technicals alone should take away some of the heat that's been underpinning the equity markets?
You mean just like too much supply, not enough demand? You know, that's what we've seen, I think, the last couple of weeks, right, is people are, you know, looking at it a little more critically in terms of how much equity supply am I going to need to absorb over the next 6 to 9 months, and what does that mean for performance? From my perspective, as you know, I'm a good news is good news guy, and if those earnings numbers are getting revised up in the way they are, there's only so long you can keep yourself away from that, right? I mean, you revised up NASDAQ earnings 1% in the last week. I mean, that's just like a stunning, you know, rate of change. So, yeah, yes, perhaps, you know, there's a little bit of indigestion going on right now, and it's almost perspective indigestion because people are looking at the next 6 to 9 months and what is the total amount that gets issued. If you're jamming earnings as high as they are, there's only so long you can ignore it, in my opinion.
Let's ask it another way and down the technicals. You've had buybacks like up here, sky high, really reducing the amount of float, the amount of stock that's available for people to buy, the shrinkage that everybody's been talking about. As the spread starts to close, and I know it's still wide, but as it starts to close, does that dynamic matter? That's really what Lisa's asking.
Yeah, I mean, it can matter. I mean, there was some discussion that some of this CapEx spending was going to eat into buybacks and stuff like that, and now you're actually getting equity issuance. So to your point, you're kind of going other way. What's interesting, too, is a lot of these companies started issuing dividends less than 18 months ago and are now kind of committed to that. So, yeah, and look, there is a little bit of a supply-demand dynamic, you know, going on. But to your point, this has been a multi-decade issue of you know, shrinking number of publicly traded companies, et cetera. So it's not something you're going to fix or reverse in 6 months, right? It would take longer than that, I think.
I remember the bull case being a scarcity of assets. Do you remember that?
I do.
Particularly coming out of the pandemic, and I think people are doing their best to change that.
Yeah, well, I wonder if we still have a scarcity of bonds. You know, I remember Bob Michael talking about a scarcity of bonds, and I wonder if we have a scarcity of bonds and a scarcity of equity, or if we've maybe tipped the scales a little.
Based on the amount of demand, maybe not yet.
Yeah.
Right.
Take a look at the cash and money markets, $8 trillion, pretty wild.
Stuart's good to see you.
Yeah, good to see you.
Thank you, sir. Thank you very much. Stuart Kaiser there of Citi. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Isabel Lee has more. Hey, Isabel.
Hi, John. It's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. The Nasdaq announcing moments ago SpaceX will be eligible for trading at 10 a.m. Eastern. And the ECB may raise rates for a second straight month in July. Governing Council member Joaquim Nagel saying that the fallout from the war is proving too strong to ignore, and high energy costs are affecting inflation. The ECB meets again on July 23. And oil extending its slide on optimism over a U.S.-Iran peace deal. The draft deal included a possible reopening of the Strait of Hormuz within 30 days. Coming up later today at the Bloomberg Energy Security Executive Briefing in Houston, Anne-Marie will be speaking with Energy Secretary Chris Wright and Chevron CEO Mike Wirth. That's your Bloomberg Brief. John?
Isabel, thank you. And if you watch TV on Saturday evening and look really carefully at the crowd, you might spot Anne-Marie somewhere.
I think she was looking for tickets here. San Antonio.
We need the mug bag just to sit there, right?
I mean, in lieu of her, because she goes to Houston for work.
The mug there for the bump outs.
Yeah, exactly.
We'll make it work. Up next on our program, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space, because space today is a lot of cash flow.
In just a moment, we'll catch up with Brian Hamilton of Abrigo, live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
You've heard the numbers 10 times over already this morning, maybe in just the last 30 minutes or so, raising $75 billion, a $1.8 trillion market cap, instantly a top 10 public company on the planet. Crazy numbers.
Well, we're talking about something beyond the planet, and the addressable market is potentially infinitive, especially as people look increasingly to space for very practical things, not only satellite connectivity, but also for data centers. And people might smile and say, well, that is pie in the sky. At the same time, a lot of people are saying we're that much closer to reality, and frankly, Elon Musk has done this before.
Futures positive this morning, higher by 0.4% on the S&P, and the Nasdaq higher by 0.44. Under surveillance this morning, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space. Because space today is a lot of cash flow. And if you have access to your own cash flow in AI, you can buy your own infrastructure. That makes it much cheaper for you. You don't have to pay a margin to a cloud provider.
So here's the latest this morning. SpaceX boss Elon Musk is on the verge of becoming the world's first trillionaire, with Musk's retail trading fan base placing more than $100 billion in stock orders. Brian Hamilton, chair of software firm LiveSwitch, writing, people want to get wealthy with Elon Musk. SpaceX may be an extraordinary company, but it's also an extraordinarily overvalued stock. Brian joins us now for more. Brian, welcome to the program, sir. 90 times plus trading sales. Clearly that is a massive number. People are willing to pay up for growth. But I haven't heard people really talk about the growth of this company, Brian. Can you put some numbers on it? What is the growth of this company?
Well, first of all, we should go to Pluto, not Mars. This valuation, for perspective, if we build a company, I've been an entrepreneur my whole life. You know, you work hard, get customers, get profitable, hopefully. A lot of them don't. But basically, if you go out now, there's an average multiple of sales to price of about 10. So if you make, for every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen. A 2,000% premium for Elon Musk. Just unbelievable. So people need to know going in. And guys, look, I'm mostly concerned with the retail people. The professional people, they can do what they want. They're usually, leveraged the right way. They have balanced portfolios. But the average retail investor is massively overpaying it. Your last guest, I get a kick out of that because remember, their business model is also all over the board as well. They're doing a lot of different things. And it's not just a matter of having satellites out there. They're all over the board. So, they're totally overvalued, and it's so obvious. I mean, way out. I've never seen anything like it.
What do you think will be the reality check that people will need to see before it is appropriately valued in markets?
That's a hard question. I don't know with Elon Musk. I mean, generally, as you guys know, he gets a premium because he's done some great things, and I don't want to take that away from him. And as an entrepreneur, I love that he invested in his own companies. But this premium is crazy. So for perspective, when a small company called Tesla went out public, they were about 20 times sales. This company is going to be about 100 times sales. Very, very high valuation. By the way, small footnote, they lost $5 billion last year. Look at companies out there now, NVIDIA, Microsoft, about a $3 trillion valuation. As soon as these guys go out, IPOs are supposed to be initial. It's supposed to be initially what you're worth. They're going out, as you guys mentioned in your break, as one of the top 10 largest companies in the world right off the get-go, as really a small company right now. So one thing, If you're a retail investor, look at the numbers. Interesting dude. By the way, I don't know why he's going to Mars. I've driven out to Wyoming and South Dakota. There's a lot of land out there. There's plenty of room. But on a serious note, it's unbelievably overvalued. My concern is the retail guy.
Well, my question to you, Brian, is SpaceX alone, or are OpenAI and Anthropic proposing similar sort of stratospheric valuations at a time when people are banking on a myth?
Yep, true. Great point. However, look at their multiples. They're going to be at about 30 times revenue, not 99 times revenue. And remember, SpaceX is not a direct competitor to those other companies. It's not. They've got Grok. That's a very small part of their revenue. So this is a really nice thing you got up here. But this is for all IPOs. These are businesses in different industries. And by the way, SpaceX only grew about 40% last year. They're not doubling and doubling and doubling. So I've been doing this, guys, for 20 years. I've been an entrepreneur. I ran a financial company. They're totally overvalued. Now, will it just keep going up because of the Elon factor? Who knows? But if you buy, you're buying high, period.
I think, Brian, that's the point. Didn't we say the same things about Tesla? What did we learn from that experience?
Yeah, what we learned is that he can defy gravity. He should be going out in space, you know? But remember, Tesla, again, their relative value was much lower when they went out public. Here's my beef. When you go out public, and I've been on both sides, I've been in finance, I've been an entrepreneur my whole life. When you go out, this is my problem. They're getting all their value at the IPO level. What we want a company to do is to prove something, and Tesla did. But Tesla's relative value was much lower at IPO.
Brian, it's good to see you, sir. We appreciate the skeptical view this morning. Thank you. Brian Hamilton of LiveSwitch with some pushback this morning to the valuation of this company at 90 times plus trailing sales.
Based on the valuation alone and based on what he was talking about, he makes a really valid point. And a lot of people are saying, essentially, yes, we are buying into the myth of Elon Musk, and we want to do that because we have seen what he's been able to do in the past. You just have to wonder how much these high valuations could remain longer than some of the skeptics can remain skeptical. And ultimately, you know, it isn't about numbers, because how do you predict numbers that are increasing at the pace that they've seen? I mean, how many analysts have we seen upgrade their forecasts for tech companies that have come out with earnings?
Yeah.
They haven't been able to keep up. In a technological revolution, how do you value something? And ultimately, a lot of people are saying you can't. You have to just sort of close your eyes and buy. And that makes a lot of people deeply uncomfortable who have been through financial cycles. Nonetheless, you raise a good point about Amazon.
This is not a normal IPO. At all. This company is more than 20 years old. I mentioned Amazon earlier. Let's think about the Amazon IPO. They were raising 400 to 500, something like that, 400 to 500 million dollars. We were talking about those kind of numbers at the time. 28 times trailing sales. Sounds super expensive, right? Compared to this, we're talking about $75 billion, right? The market cap of this company, $1.8 trillion. We're dwarfing anything we were talking about in the late 90s. Dwarfing it with massive, massive numbers.
And in the late 90s, we were talking about the more even distribution of goods and services, the more effective kind of marketplace pricing dynamic. Here we're talking about whatever is out there. I mean, you talk about some of the discussions around sci-fi. It's essentially building into that and saying, you know, we're going to go to Mars.
I think to Brian's point, so much value has already been created in private markets.
But that's
we're coming to this so late.
But that's with everybody. I mean, that's the thing.
Yeah.
It's sort of a change in the dynamic market.
It's changed a lot. Coming up, Gregory Allen of Decision Tree Research on the first market test for SpaceX.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We are making financial market history in real time. Just look at the numbers. $75 billion, market cap $1.8 trillion. Lisa and I were talking about Amazon. I mentioned the number 400 to 500 million. That was the market cap back in the IPO of 97. They raised a tenth of that. The numbers are just nowhere near comparable to the numbers we're talking about with this IPO.
Yeah, although our previous guest, and you picked up on this, was making a really good point, which is the structure of the market has fundamentally shifted, where more of the value is created in private markets before these companies go public. So it's hard to compare the moment we're in today to the late 1990s when it comes to either the technology or when it comes to exactly how capital is being raised.
Like we've said repeatedly through this morning so far in the last 90 minutes, easy to sit here and be super skeptical and say, how is this trading at 90 plus trading earnings? That seems absolutely crazy. That's not the bet with this IPO. The bet's the forward look. The bet is that the revenue number is going to change dramatically in the forward years. Now, that's the debate we've got to have. How quickly can the revenue story change without the technology necessary to achieve the kind of dreams, the hopes that are priced into that market cap?
The idea that people are looking for dreams right now gives you a sense of the dynamic in equity markets. And not to sound overly philosophical, but people want to see and have been had their belief suspended in terms of what's possible just based on the pace of earnings growth that we've seen, which has been absolutely bonkers so far this year. When you see what's being delivered at places like Google, at places like Amazon's AWS, people start thinking, wait a second, there is an entire world of new technology that can be capitalized on. Elon Musk would have a near monopoly on the space marketplace, which already has been really fruitful when it comes to connectivity and already has been really fruitful when it comes to national defense. So you put all of these things together and people are willing to give a lot of assumptions and give a lot of credibility to what he's putting out there.
You've got to understand how you're wired. I know how I'm wired. I know how you're wired. You're a bond person. I'm a bond person. You look at the numbers. Am I going to get paid? How much risk is here? I'm not a dreamer. I don't have the imagination to really think through what this could be. I know we've said this repeatedly. I've said it again this morning. I would have totally failed at imagining what Amazon would have been in the next 25, 30 years after the IPO in 97. I would have said exactly the same thing I said this morning. How is a bookseller worth 28 times trading sales? They just sell books. How big can this company be?
The difference this time around, as somebody who is wired to be a bond person, is that the bond market concerns me, and particularly the sovereign bond market at a time where there is so much investment going into an economy that is not used to actually investing in the physical world. And suddenly the physical assets are becoming bid up. And you have to imagine it's going to be a stickier inflation moment with greater growth. And in that moment, bonds don't look so great. So maybe this is not a moment where bonds can really offer that offset to the risk that you're taking with taking a chance. And I'm not saying, I'm not making a call here, but that's kind of...
Sounds like a call, right?
But it's not. I don't know the answer to this. I don't think anybody does, but that is how the calculation has changed.
Your point on spending and experience, I think, is really important and very valid. That the hundreds of billions of dollars that are being raised in capital markets right now are being spent by companies that don't have much experience of spending that kind of money on physical things. Think of the hyperscalers and those kind of things. This is very new to them too.
Which is also why you see them partnering with a lot of private equity firms and a lot of the big private asset managers, but essentially they're becoming the world's biggest portfolio managers. And you have to imagine that some of the people in those seats don't have a lot of experience in that space.
Chip players are becoming hedge funds with all the investments we're seeing at certain names.
I mean,
right?
yes. And the idea that Bitcoin traders are becoming energy providers for hyperscalers. I mean, the world is in flux.
Massive changes. Huge changes. Equity futures right now in the S&P up by a fifth, or call it 0.5%. On the Nasdaq 100 up by 0.5 also. On the Russell up nicely by 0.1%. 1.7. That's the price action this morning. On our radar, our top story, SpaceX drawing more than $100 billion in orders from retail investors, a sharp rise from the previous figure of 70. The company expected to allocate 20% of available shares to retail demand. Elsewhere, top AI leaders are slated to attend the upcoming G7 summit in France. Executives from OpenAI, Anthropic and Google will all be gathering in a rare joint appearance. And finally, Iran, confirming talks are underway for a final peace deal with the US. State media claiming provisions include reopening the Strait of Hormuz within 30 days and affirming Tehran's commitment to not develop nuclear weapons in return for lifting sanctions.
Yeah, and coming out and saying that the framework text is nearly finalized. There's a lot of daylight, though, between what are the state-linked media outlets are putting out there and what the U.S. is demanding, and there still are a lot of sticking points in there. The key point for markets is get the Strait of Hormuz open, whatever form it's going to be, get oil moving once more, and then we can move on and you guys can hammer out the details. Hammering out the details is going to be difficult, and how many concessions are going to be made to get to the place where the Strait of Hormuz truly is operating even close to the way it was before this.
The headlines are always confusing. Some of it's for domestic consumption, to tell your people that this is what we're really trying to achieve, even though you're probably falling short of that. Some of the headlines are active negotiations in real time because we're not quite there yet. I think the market's decided we were getting closer a long time ago and is comfortable with the state of play.
To me, it's a huge tell that President Trump came out and said, oh, now we have a deal, after threatening an escalation. The market didn't believe it, and the market was right. And essentially, what we have seen is that this president, under a lot of political duress, with the midterms coming up, with oil prices already kind of eating into the budgets of so many different families, does not want to see this continue. The market is understanding that story, and so they're seeing the path of travel that can get us there, and they're not even focusing that much on the details right now.
Crude in the 80s, Brent 87 this morning, WTI around 84. The main event is on the NASDAQ a little bit later. The SpaceX trading debut following a record $75 billion IPO. Yahara on the floor, and she joins us now for more. Yahara, walk us through the play-by-play for the next few hours, how this one's going to play out.
Exactly, John. So it is relatively calm here at the NASDAQ. We just got our first headline from here that SpaceX will be eligible for trading at 10 a.m. Eastern. And at that time, this area will become the center of attention for investors, bankers, and traders watching what will be the biggest IPO Wall Street has ever seen. And what's striking about this IPO is that for years, Elon Musk argued SpaceX didn't need public markets, that the company had access to private capital and could fund its ambitions without the scrutiny that comes with being public. But SpaceX is entering a very different phase here. What was once a rockets and satellite story is increasingly becoming an AI infrastructure play. So, it has lofty goals, data centers in space, supplying AI computing power, already striking deals with the likes of Google and Anthropic. And what Elon Musk says is that will require dramatically more capital. So that is what's changed. SpaceX is now a fundamentally different company, and they are taking advantage of a moment when there is voracious appetite for AI in the market. So it will have huge repercussions for the broader market, and that's something we'll be seeing play out here today.
Yahara, looking forward to your coverage throughout this morning. Yahara Anand on the floor over the NASDAQ. Today's trading for SpaceX offering a critical test for a near $2 trillion valuation. Gregory Allen of Decision Tree Research writing, this is not a rocket IPO. It's a venture capital style bet at index fund scale. Gregory joins us now for more. Gregory, welcome to the program. Let's get into it. Do you see the growth that justifies the hype?
Simply put, no. I think SpaceX is a collection of multiple businesses. You have the Starlink communications business, which is very profitable and growing very rapidly. You have the new AI infrastructure bet, in which SpaceX is actually selling to one of their competitors, Anthropic, which develops a competing model against Grok. And that's a run rate of $1.25 billion per month, a pretty nice business. The thing is, it reveals the fact that SpaceX is actually building AI infrastructure faster than their own AI models can actually consume it, and their AI models are falling out of the leaderboard. We'll have to see what the performance of Grok 5 looks like when it actually comes out. But if you look at that total addressable market that SpaceX is overwhelmingly hyping, it really rests upon the ability of, number one, SpaceX to develop not a temporary advantage in AI infrastructure, but an enduring advantage based on superior access to orbital infrastructure, and all of that feeding superior AI models. Both of those things are possible, but they're by no means guaranteed, and this valuation basically takes them as guaranteed.
Gregory, you went through the details of the company: launch services, Starlink, reusable starships, internet services. The hopes and dreams seem to be around the orbital compute, the data centers that we don't yet have in space. Gregory, do we have the technology, and how close are we to achieving that technological development that can deliver something that looks like that?
So there's a difference between what is possible in prototypes and testing, and SpaceX is validating GPUs in orbit. SpaceX is going to have some prototype satellites in orbit probably in 2028, looking into this sort of thing. But that's very different from thousands or tens of thousands of satellites being ready to go and being a better bet than what exists on the ground. The types of cooling infrastructure that you need for these data centers, NVIDIA GPUs, they routinely catch on fire. That's why cooling is such a huge part of the electricity bill of these hundreds of megawatts and gigawatt scale data centers. When you're out in space, there's no air and there's no water to cool, so you have to do it all by radiative cooling, which is in principle possible, but in practice extremely tricky from an engineering perspective. The other thing is these GPUs fail consistently, and once those satellites are in orbit, you're not going to repair them. You're not going to go up there and try and fix them the way you do when it's on the ground. When GPUs break, you swap them out with ones that work. So the issue here is this is in principle possible, but it's not technologically mature, and it's not industrial scale mature. I think a helpful analogy here is Elon Musk's earlier idea of the Hyperloop, a rapid transit vacuum tube-based transition mechanism on maglev rails. That was in principle possible. You know, it doesn't break the laws of physics when Elon Musk put it out in a white paper. But nobody's pension plan lost any money on Hyperloop. And SpaceX orbital AI infrastructure is going to go into people's index funds. It is a venture capital style bet that's being treated as index fund mature and certain.
One thing that you pointed out, Gregory, is how intertwined some of these companies are that are coming to market in the next couple of months as well. Anthropic being the biggest customer of SpaceX when it comes to XAI, the artificial intelligence aspect of it. How concerned are you about some of the circular financing that you're seeing under the hood? How closely connected all of these bets truly are?
So I think the circular financing is not an especially large risk here in the case of SpaceX. It's not like their valuation is being massively propped up by, for example, NVIDIA as a key supplier of GPUs, for example, which is some of the concern about companies like Anthropic or OpenAI. And the Anthropic deal is not so much interesting as a circular financing story as a who overbuilt and underbuilt AI computing infrastructure relative to how much people want to use their AI models. SpaceX and XAI, its subsidiary, has demonstrated that it is very fast at building ground infrastructure for AI computation. They're legitimately world-class at that. Anthropic is renting from them because Anthropic models are superior, and so people want to use them compared to Grok. And so this is a case of where the company with the better model needs more infrastructure, the company with the worse model needs less infrastructure. But keep in mind, even though this is a 5-year deal, either company can cancel the agreement with 90 days notice. So if Grok 5 is amazing, you can imagine a scenario in which they say, actually, Anthropic, we want to keep that infrastructure for ourselves. And by the same token, Anthropic underbuilt for the year 2026, but that's why they're going public, because they want to start getting into the massive construction business too. So how much of this is an enduring, available partnership versus a marriage of convenience at the current moment?
Gregory, what would you have to see that would change your mind and make you think this valuation was justified?
Well, as I said, this is based on a lot of plans coming true. And I said specifically that they're coming true being almost a certainty. What do I mean by that? You know, you mentioned that a lot of your experience is in the bond market. If you were to take SpaceX's valuation of $1.75 trillion and convert it into an annuity bond at the current risk-free treasury rate of 4.5%, that is the equivalent of an annuity that pays out $80 billion a year guaranteed forever. SpaceX, by contrast, lost $5 billion last year and is talking about having to write checks in the hundreds of billions or potentially trillions of dollars in future down payments on capital expenditures before a lot of these dreams come true. So again, this is being valued as the equivalent of certainty, $80 billion a year guaranteed in profit forever, and that's just not what this looks like right now. Now, there are going to be some near-term technical milestones that will tell us what this looks like. Elon Musk's plans for orbital AI infrastructure involve Starship launches going up by more than 100x per year. So where those Starship launches previously were about getting to Mars, now it really is about validating the possibility of building this orbital AI infrastructure.
Gregory, appreciate your time. As always, Gregory Allen there of Decision Tree Research. A range of views already this morning. And at the very start of the program, we said it would be dominated by two particular views. One, don't bet against this guy, Elon Musk, hopes and dreams, all that stuff. He's been successful with Tesla, he's proven that. And the other one was exactly this, 90 times plus trailing estimates, trailing sales rather, and a very skeptical view of a company that's losing money and a promise of technology that doesn't exist yet and might not in the not too distant future.
Objectively, a lot of people have pointed to a lot of the scenarios that Elon Musk has painted and said that he is pricing in the absolute best case scenario, kind of like what we were just hearing from Gregory. A lot of people are saying, yes, but he's actually fulfilled that when it comes to Tesla. And there are so many different levers that he could pull to get there that could potentially be huge gainers. So ultimately, this is a story of faith, and finance does not do well with faith in many different pockets.
Certainly not here to advocate for one view versus the other.
No.
It's up to you at home, and that's how you allocate capital in this equity market right now.
I don't have a
That's
sense.
A total judgment call for you.
Do you have a sense of which it is? I have absolutely no idea.
No
Genuinely.
idea. I'm sort of happy that I'm sitting on the sidelines, just sort of, you know, navigating the current conversation.
I have to say I'm not, because I see people who actually were in on it initially, and they look very happy.
No, I'm
they
jealous
look a
of
lot
that.
happier.
Of course I'm jealous of that.
Yeah, exactly.
All the upside.
Yeah, that's so happy on the
Without a
sidelines.
doubt, being a journalist can't do that, unfortunately. Equity futures right now in the S&P up by 0.6%. With an update on stories worldwide with your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. We have the U.S. and Iran may be nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian Foreign Ministry spokeswoman saying, quote, we have not yet reached conclusion on this matter. President Donald Trump tapping former SEC Chief Jay Clayton as the next Director of National Intelligence. The announcement follows backlash over his selection of housing regulator Bill Pulte to serve in the role on an acting basis. And in sports, the Carolina Hurricanes are one win away from the first Stanley Cup in 20 years. The Canes beating the Golden Knights 4-2 in Game 5. They look to close things out in Vegas on Sunday night. That's your Bloomberg brief. John?
Thank you, Isabel. I'm going to sound like a total foreigner. Forgive me. I know I've lived here a decade plus, but ice hockey in the summer, I just can't get my head around.
I mean,
just doesn't make sense.
Hopes and dreams, John. You can play hockey even if you're in Florida. Miami, let's go.
Vegas.
June, Vegas.
Yes, right.
I mean, yeah,
In the
why
summer.
not? In the summer.
Yeah,
It's a big place.
Up next on the program, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion, in fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
Up next, we'll catch up with Zach Griffiths of Credit Sites.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Stocks positive, going into the opening bell. A few hours away, we're up by 0.6% on the S&P, on the Nasdaq up by 0.6 also, and heading towards another week of gains. Under surveillance this morning, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
So here's the latest this morning. Some on Wall Street expecting SpaceX to tap the debt market shortly after a record-breaking IPO. Sources telling us here at Bloomberg the company has lined up investment-grade ratings from 3 major bond graders. Zach Griffiths, a CreditSights rating. I don't think there's any precedent to draw for a company like SpaceX to understand what their rating should be. Zach joins us now for more. Zach, welcome. You heard the words of our previous guest. It's clearly an IG-rated company. Do you see it differently?
No, we don't. And in terms of what drives that IG rating, John, you have the new or relatively recent Google and Anthropic deals. Those aren't captured in the LTM metrics. And when you think about the loan to value consideration that I think you were just highlighting from Bruce Richards there, it's 1% to 2% of the overall enterprise value. And so there's obviously a ton of equity valuation ahead of that credit. And so while that's not something that the ratings agencies tend to look at, we do think it plays a factor here. And so we are expecting an IG rating on SpaceX when they come to the market, and we think that'll be relatively quickly after the IPO today.
It's incredibly difficult to value a company like this. We've heard a lot of different opinions so far this morning, and to evaluate whether it's investment grade or high yield. But does the bulk of equity being raised give you as a bond analyst comfort that the equity markets are sharing in some of this and are actually sharing the first loss piece, and give you confidence that they can raise more debt at a better value?
Yeah, a lot of comfort, Lisa, when you think about what we were just going through. And if you think about the metrics from a last 12 months EBITDA perspective, looking at around 5 times leverage. And so that's more historically consistent with a high yield rating. Again, that doesn't capture some of the recent deals. And of course, having all of that equity ahead of the credit makes us very comfortable with that IG rating. And when you think about how much debt they're likely to come to market with in the near term, call it around $20 billion, that kind of pales in comparison in terms of what the market has been digesting with ease so far this year, with the big 5 hyperscalers coming with almost $175 billion split across US dollar and various other currencies. So we do think there is going to be demand for that debt out there without much of an issue, even after this huge equity raise.
That said, Zach, how much does it concern you, the just absolute consolidation of all risk in one bet right now, whether it's on the debt side or on the equity side?
Yeah, I think concentration risk is a fair concern to have. And I think the circular financing consideration that you were just discussing with the prior guest is something we're concerned about. When we think about where the rubber meets the road from that perspective and where there might really be risk in terms of some of these big players coming to market with IPOs, OpenAI seems to be the one that really needs the funding. And so if for some reason markets become less risk-taking over the next couple of months when Anthropic and OpenAI need to come to market, that's a time frame that we think there could be a little bit more consternation. For now, we're certainly comfortable with the environment we're in. And when we talk to our clients from a fixed income perspective, they're very happy with all-in yield levels despite tight credit spreads really across the credit markets.
Zach, just finish up on SpaceX. So I understand they've got this massive ability right now to tap into the equity market and raise equity capital quite easily, and we've seen that. But how much that should be a factor in your credit rating when the company is losing money, and they're going to spend that money really quickly too? You mentioned some of the hyperscalers and debt issuance elsewhere. Let's take Alphabet. Alphabet made profit more than $100 billion last year, Zach. This company loses money. Why should that company have an IG rating?
Well, again, it comes down to companies rating, or the ratings companies rating through the cycle. When you think about some of the deals recently inked, that certainly improves the position, and the net cash position after the IPO certainly looks very attractive. Now we're expecting cash burn to be around 20 to 30 billion per year as they lean in to that AI infrastructure business. And so there's a lot of metrics to consider, John, but we do think with the recent deals and projecting forward through the cycle and considering some of the upside scenario, that an IG rating will be justified, and that's kind of what we're hearing out there as well.
Interesting, Zach. Appreciate it, sir. As always, Zach Griffiths there of CreditSight. The race for capital, and they're clearly going to tap that debt market pretty quickly based on what we've heard so far this morning.
It's a structured investment, and if the equity piece is big enough and that tranche has the first loss, then essentially if you're taking off the top, then potentially you could have a AAA, just like some other structured vehicles.
Yeah. You sound skeptical.
It's essentially the argument for the top-tier rating without understanding how to analyze the actual valuation.
Again, you sound skeptical. Coming up, Sarah Hunt of Alpine Saxon Woods, Nick Owens of Morningstar, Matt Kennedy of Renaissance Capital, Dan Niles of Niles Investment Management.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry. Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech. Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Here's the bounce, up by 0.6% on the S&P. Enthusiasm this morning for a deal between Iran and the US, taking crude lower, pushing equities higher. On the Nasdaq, up by 0.5%. Enthusiasm for a record-breaking IPO. Check out the numbers, $75 billion raised. Almost 3x what we got with Aramco, which was the previous record. A monster issue from Elon Musk and SpaceX.
Yeah, and it's being received really well, at least according to some of the shadow pricing that indicates about a 35% pop upside. We will see higher on and down at the NASDAQ, and we'll be tracking that when it does start pricing, I believe around 9:50, 10 a.m. Eastern time. Key question is, how does this set up OpenAI and Anthropic's IPOs? How does this set up the path of travel? Is there any early indication at a time when people are pointing to the fact that SpaceX doesn't make money, that they've lost a lot of money, that they are banking on a lot of more speculative promises? At the same time, Elon Musk has delivered and is a man of promise, and a lot of people, including a lot of retail investors, are getting behind him.
The lesson with Tesla, don't bet against Elon, right? And that might be the lesson with this. I would say for the others, for Anthropic, for OpenAI, so far, the window's still open. And we've put a lot of equity down the throats of equity markets in the last few weeks, not just with this, but with Alphabet as well. And a question we've asked repeatedly over the last few weeks, through June, is the window going to close? Going to get pushback? We've seen pushback, I would say, at the Oracle level, around Meta, that rumor they might be raising equity capital too, but minor, margin pushback relative to the size of the overall market. And it feels like the window's still open for Anthropic to follow and OpenAI to come soon after.
Yeah, there's a feeling almost of smugness by bond investors saying, great, you guys could take some, because we've been taking it all down. And let me tell you, we have seen our index absolutely ballooned and concentrated with all of this AI-related assets. And now it's your turn. Over to you, equity folks. Concern, though, as we do this, is the structure of the market. Yes, we are expanding the pool of assets that people are buying into, but also the correlations are going up, and significantly so. We're suddenly, what you're buying with bonds is what you're buying with stocks when it comes to the corporate credit and the AI bet. And at what point does that get people nervous? How do you diversify? How do you find safety at a time of higher inflation, higher growth, and higher concentration of AI-related bets?
You made 2 points there. I want to pick up on the first one, and we can get to the second one later this hour. The first one, the debt issuance that we've seen has been astronomical on the sovereign side, on the credit side, and they're clearly looking for options here. And that's the word I want to stress, options. Alphabet was going into different currencies here, there, and everywhere. We've seen it from other companies too.
Or we've.
Right? Going over to Europe.
Yeah.
Demand for that high yield debt, by the way, pretty decent from what I heard.
They're looking for a piece of the action.
Right? So you've seen a lot of this, and I want to keep going back to the word options. This is about really exploring the entire capital structure and having tremendous flexibility and having lots and lots of options. Not every company is going to get that. Only the bigger companies have got that right now, which is why they're in prime position to win this, because they can raise the most capital. It's about having options, raising capital, and spending capital really, really quickly, which goes to the inflation question I think you were getting at a little bit earlier on this morning. That's a lot of money being raised, pushed into an economy that is supply constrained.
For decades, this was a market where financialization was on the front burner. People wanted to invest in the market, make money, and then sit there and have a 401k that expands. Now people are taking that money and putting it into the real world, and suddenly they're building out infrastructure and metals and all of the physical assets. At a certain point, it's why people are expecting, particularly PIMCO, we have moved out of secular stagnation officially into a higher growth, higher inflation environment, and a lot of people are expecting a lot of different results from different assets.
PIMCO just published their outlook, and there's lots of headlines coming from it. Dan Iverson making some comments too. I think Dan said recently, someone I have tremendous respect for, we all do, in fixed income. He talked about the creative stage of finance and how we've entered the more creative stage of finance, and I think he's getting up something that you're following closely.
Well, the idea that SpaceX has IG-rated debt because essentially the equity pool is so big that it takes the first loss, that you're essentially at the top tier of the capital structure. It sounds a lot like structured finance, like mortgage-backed securities, like CDOs. The idea that as long as you have a bigger loss pool underneath you, you're safe at a time when there's a lot of big figures being thrown around.
Futures positive this morning by 0.6%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods on the groundbreaking SpaceX market debut. Nick Owens of Morningstar warning the company is significantly overvalued. On the other side, Matt Kennedy of Renaissance Capital on why the $1.7 trillion valuation is justified. We begin this hour with stocks pushing higher as Wall Street gears up for a historic day of trading. Bloomberg's Ed Ludlow joins us now for more. Ed, what a win for Elon Musk and everyone involved in this company.
Yeah, $135 per share IPO price, but it just needs to go higher, 2.2% to 138, and Elon Musk hits trillionaire's status per Bloomberg Billionaires Index in our calculations. Eyes on Gwynne Shotwell, president and COO, and Brett Johnson, the CFO at the NASDAQ. They're in New York City for this moment. And, you know, I've really enjoyed listening to the debate, the discussion, right, between you and Lisa and through your guests. This idea of, well, does it matter, the current finances of SpaceX? One idea that a lot of the market had time to digest from the prospectus is that even though there's no cash flow number or current CapEx number, the connectivity business did hit almost $5 billion of operating income in 2025 and $7.2 billion of adjusted EBITDA. And a lot of people can extrapolate out from that Starlink business, the business of having satellites in constellation for internet, and because it's highly analogous with the proposed orbital data center business. So that final guest that you mentioned who says the $1.7 trillion valuation is justified, a lot of the math that is being done on the sell side and the buy side today is based on those numbers on Starlink. People believe it, John. How it trades is completely separate and academic, isn't it?
Ed, appreciate it. As I say, looking forward to the program later. Bloomberg Technology, Ed Ludlow alongside Caroline Hyde. You get paid to hope and dream in the equity market. I think the point you're making, drawing the distinction between credit and equity, is that you don't get paid to hope and dream in the credit market. You just get paid what you're owed, and you hope you do further down the line.
Well, I was speaking with Howard Marks earlier this year, and he made this point. He said ultimately he believes AI is real. He absolutely does think that there are huge technological advancements that will come with it. But how do you want to get the upside to that? Probably through stocks, not necessarily through credit, where you're paid to worry. And if you really want to worry, there's plenty to worry about.
Well, for a moment, it was debt investors funding equity dreams, right? And now it's equity investors funding debt guys getting paid.
Yeah, potentially.
From what we heard a little bit earlier.
Also, debt investors still funding hopes and dreams. So
that too.
Funding everything.
A lot of money being raised. Here's the view on Wall Street this morning. Sarah Hunt of Alpine Saxon Woods writing, a weak open would be a real problem for the AI companies lined up behind SpaceX, waiting for their IPO moment. A strong one keeps the party going. Either way, it might be a volatile summer. Sarah joins us now for more. Sarah, good morning.
Good morning.
It's good to see you. This company waited more than 20 years to float. Why is now a good time to buy it?
Well, I mean, I think that there was an IPO window that we all knew way back in the day. We've had years where there was almost no IPO window at all. You've got equity markets at highs. You've got the technology enthusiasm at its highest level. I think this, if you're going to pick a time, this is not a bad time to do it, right? When else would you? And if you go back and look at how much public company stock has been taken off the market between buybacks and mergers, maybe there's room for all this issuance. Maybe not all in one go, but I think that there's more room than we think there might be.
It's one of those mornings where you can sound smart or make money. That's what it feels like. Is it one of those mornings for you? Do you want to sound smart or make money?
Well, I mean, I think you always want to make money, right? In the end, you always want to make money. And I think that it's so hard to game out something like this because it has all of the things. What? It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. There's so many levers to pull. It's hard to figure out exactly where that is, but there's an enormous scarcity factor because this is the one that has all of that. So, you know, this is one of those companies where ultimately, they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Neither do any of us, which is the difficulty right now. How do you even start to value a company like this? It goes to a question that we keep asking, where are we in this capital raising cycle? Right? Are we at the beginning stages? Are we at the middle stages? Are we at the later stages? As people start to get a little bit more prudent in terms of where they deploy their cash, do you have a sense of how close we are to maybe people pulling in their purse strings?
Well, I think that one of the big stories for the last couple of years has always been the CapEx can't possibly go higher next year. It can't possibly go higher next year. And every year we're looking at it and it's going higher. And I don't know what the answer is. I do know that the technology, there has to be changes because energy usage, cooling, all of those things are actual real stumbling blocks to getting further and further capacity. So at some point the technology will change. This is the problem with trying to figure out exactly where you are is because you don't know what's coming down the pike in terms of what's changing, but everybody's racing to get a whole lot of capacity together at one time. And I think that is hard to stop that juggernaut. And if the market's willing to do it, first it was just out of cash flow, then it was cash flow and debt, and now we're going to raise equity too. There's an enthusiasm for it though, that if you believe that this is another industrial revolution or that this has got this much of a change factor, you're still going to have winners and losers. It's hard to pick who those are, so the enthusiasm is hard to overlook right now.
This morning when I came in, it was a positive story all around. You had potential de-escalation with Iran and the U.S. You had the potential for ongoing open arms in the capital markets, and correlations go to one, right? We see gold prices up, not down. You see treasury yields down, not up. All around, people are feeling enthusiasm and everything rallies. Do correlations start to worry you when everything feels like one trade?
Well, I think that we've seen this before in the last couple of big drawdowns and also some of the last huge risk-on moments. I think that the old correlation handbook that most of us grew up with has not been acting the normal way as much as we used to think it is. And so this goes down and this goes up. There is much more of an ongoing, like it's all this or it's all that. It's all good, it's all bad. And I don't know that doesn't get better. It doesn't get any better right now. There is a little bit of a swap sometimes when technology is weak. You do see other things. Energy had been that. Now energy's down because we may get a deal, and we should hope for a deal. We absolutely want that to be done, right? Because that is something that's been overshadowing a lot. So yes, it concerns me that the correlations go there, but we can't control where they're going. We just have to watch.
You brought up Iran. We didn't bring up Iran, just for the record.
Just for the record, it is a big reason why everything is up. Did you see with the first announcement, did you see the Kospi?
Yes.
Kospi going crazy because there might be a deal.
Just, it wasn't me.
I know, it was me. I own it. It actually is important.
I know how much you don't like the story.
I think that we can speak for all of us. It is a very frustrating story.
Let's finish on diversification and the difference between the NASDAQ and the S&P 500. Let's make this really simple. From your perspective for the next 12 months, do you want to be in the NASDAQ that has all these IPOs or the S&P 500 that doesn't? Because that's a decision that will confront a lot of passive investors this morning.
It is a decision that will confront a lot of passive investors. I think because the NDX is willing to take them sooner, you can do it both. You don't have to do an or. And I think that I think it's hard to say, I only want to do this or I only want to do that, given the fact that there is, in fact, a choice here. If none of them were going in there, it would be if they weren't going into any indices, I think it would be different on the passive side, because then you have to rethink that. But because you're given a vehicle to express both views, I think that you can do that to the extent that your risk tolerance is willing to take that hit.
Sarah, it's good to see you. It's great to catch up. Sarah Hunt there of Alpine Saxon words on this record-breaking day for Elon Musk and the team over at SpaceX. Equities this morning up by 0.5%. With an update on stories worldwide with your Bloomberg Brief, Isabel Lee has more. Hey, Isabel.
Hi, John. Elon Musk is poised to become the world's first trillionaire when SpaceX begins trading today. That's 13 digits. So his company selling $75 billion of shares in an IPO that will value Musk's stake at around $690 billion. So when combined with his Tesla holdings and other investments in properties, his net worth tops $1 trillion. And teachers in one Louisiana school district will be receiving massive bonuses. The Wall Street Journal reporting that teachers will receive more than $50,000 this year thanks to increased tax revenue linked to a Meta data center. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0, and South Africa beating the Czech Republic 2-1. The United States plays its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you. There's plenty of space for rants over the next month about FIFA and this World Cup.
I think this is space right here.
Some of the empty seats yesterday evening, I've seen the pictures of it. It's such a miss to come out and try and make as much money as you can from wealthy Americans from selling seats to this World Cup without having a long-term strategy about the sport in this country. In fact, I just think it's really bad business of FIFA, and I'd love to speak to them about it because, to me, for me at least, living here, I thought it was a perfect opportunity to grow the sport, to get more people engaged in the game. And then if you do that, guess what happens? You can sell your TV rights for more, right? More people start to play the game, there's more interest, you can leverage that. This at the moment, I hope it changes and I hope it picks up in a massive way. I want this to be very successful in this country, but what a miss. What a miss.
FIFA is the inverse of what we're seeing with SpaceX, which is essentially cash flow incredibly rich, promise poor in terms of just how much it's expanding its total potential revenue pool, versus SpaceX, which is cash poor, but potentially, you know, the sky's the limit, literally.
Compared to 94, where this country really wasn't ready to host the World Cup and didn't have much.
Now people want it.
Precisely. They wanted it. They wanted to engage.
Oh, yeah.
And it just felt like FIFA just told you can't afford it.
Well, yeah, and to all the cities.
It's not meant to be a rich person's sport at all.
Well, did you see the stadiums filled in Los Angeles and Mexico City with people in sort of other sites, off-site, just cheering, absolutely tearing the place down? That's the kind of energy that you want inside the stadium. But, you know, FIFA, ka-ching.
Yeah, big time. Short-sighted. Anyway, up next on the program, the Morning Calls Plus, Nick Owens of Morningstar, warning of the risks behind the SpaceX sky-high valuation. From New York City this morning, good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It
snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
There's an average multiple of sales to price of about 10. For every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen, a 2,000% premium for Elon Musk. The average retail investor is massively overpaying. They're totally overvalued, and it's so obvious.
That was a skeptical view. That was from the LiveSwitch founder and chairman, Brian Hamilton, a little bit earlier on this morning. Very, very vocal about what he thinks of this IPO.
He was the way that he put it into just what it would be in terms of an annuity, $80 billion or something guaranteed every single year, gives you a sense, speaking from sort of bond space,
yes,
of why there is some skepticism. And people coming from the equity space who are really enthusiastic are saying, really, the market share is potentially astronomical, literally, and potentially you're seeing the monetization already when it comes to Starlink, when it comes to even XAI to some degree.
That's the hope and dream story.
That's the dream.
Behind the order book, which is astronomical in and of itself for this IPO. Equity futures right now positive by 0.5% on the S&P, on the Nasdaq up by 0.4. That's the price action. Here are your morning calls. First up, Citi upgrading AMD to buy, saying its GPU upside is not fully priced into shares. Your second call from Evercore, downgrading Adobe to inline from Outperform, saying investor sentiment is unlikely to turn positive until it makes changes to its C-suite. And finally, Wells Fargo raising its price target on Qualcomm to 230 from 160. Wells keeping an equal weight rating on the shares ahead of Qualcomm's Investor Day. The stock is up by 0.7%. Let's turn back to SpaceX. Nick Owens of Morningstar noting concerns on the outlook for the stock. He writes, we value SpaceX at $63 per share, a 53% discount to the upcoming IPO's offer price. Nick joins us now for more. Nick, welcome to the program. Market cap's at 1.8 trillion. You're at a fraction of that, Nick. What goes into your calculation as you think about what this company's worth?
Thanks for having me. Thanks for asking. That $63 number is a blend of a handful of scenarios, one in which XAI may not work out, but in 57% of our scenarios, we believe that Starship is highly reusable, and we believe that the data centers in space will be competitive and increase, take a meaningful market share. The issue is that in only 7% of the scenarios that we ran, do you get kind of this let's say, dominant business outcome in XAI. That actually results in a $1.9 trillion valuation in our model. It's just, we won't know for another year or two how reusable is Starship and how commercially competitive are data centers in space.
Nick, difficult question, because I know it's almost impossible to answer, but how much is the Elon Musk factor worth here to this company?
Certainly, as you guys were talking about before, in terms of enthusiasm and appetite for the shares, I think there's a big Elon Musk factor or premium there. I don't have a line item for that in my model, but the way I think about it is in terms of these probabilities of the engineering working out, them being able to do these things, and even being able to make them commercially competitive because they have such a cost advantage in their rocket and satellite business. They could potentially extend that into the data center business. And so I would argue that these probabilities that I was telling you would be much lower for any other company.
Nick, do you get a sense that people are conditioned to the prior experience of recent earnings at other tech companies, which have been astronomical and have been growing at a much faster clip than people had expected, to sort of suspend belief and say, look, this is somebody who knows what they're doing. They are increasing their revenues in certain pockets at very steady clips. Maybe they see something that we don't in terms of the promise, and frankly, they've delivered in other aspects before.
I think, you were talking, I would say Starlink is an example there where they might outpace expectations because adoption is very fast. We have a very robust forecast for Starlink. We don't think that their addressable market is quite as big as what the company claims, but a very strong business, that will drive operating profit and cash flow for the company. In terms of I think folks will be very much looking forward to the Q2 earnings here in July, just to see what those kind of rates of growth are going to look like.
Do you get the sense it's just getting harder to value things right now at a time where there's essentially an industrial revolution underway and a lot of companies are coming to market, are going public after already being private for a much longer period of time?
It's an interesting point. In the case of SpaceX, I would argue the rocket and Starlink business are way more mature than your average IPO or what we think of when we think of an IPO, whereas I would say XAI is perhaps a bit more in startup mode. So you're kind of getting a blended mix of what's normal for an IPO. As people have noted, this company was founded over 20 years ago, and so it's a bit unusual. harder to value. Morningstar does it in a consistent way. We look at the free cash flow to the firm, and I find that very reassuring.
Nick, can I just ask you a basic question? Forgive me, but what is worth more? If this company just decided to focus on, say, AI infrastructure, if it focused on being a neo-cloud company, whatever it was, if it just focused on doing that and got away from the model business, which seems to be really capital intensive too and it costs lots of money, and stopped competing with Anthropic and the likes of OpenAI, what's worth more?
I'll be honest with you, the model, the scenario we ran is essentially that this is an infrastructure play. Put another way, whether they're renting their capacity to third parties, as you've heard they are doing with their Colossus data center, or using it themselves and then getting, let's say, subscription or enterprise revenue from the LLM. For the moment, I'm kind of agnostic as to that. It's really just what is the payoff for building out all this infrastructure. And I think of, in the very long term, this is almost like Elon Musk, building the railroads to space. It's beyond data centers, talking about Moon and Mars and so forth. So I thought of it really more as a long-term infrastructure build-out, if you will.
Interesting. Nick, appreciate it. Thank you, sir. Really thoughtful conversation. Nick Owens there of Morningstar going through a range of scenarios on how to value this company.
It's a really interesting point, especially because a lot of the revenues coming from AI are tied to Anthropic's renting of their infrastructure to try to deploy as quickly as they're in demand versus, say, the XAI AI template that they're building out in terms of models. So if this is an infrastructure play, it's a more cohesive bet in terms of putting data centers in space, in terms of the satellite connectivity, and in terms of the neo-cloud business. That said, that's not what they're promising. They're promising something else, and they're putting a lot of money into the modeling to compete directly with the likes of Anthropic and OpenAI.
We'll get the more constructive view in just a moment. We'll catch up with Matt Kennedy of Renaissance Capital on why the SpaceX valuation isn't just hype. Equity futures this morning, positive by 0.4%, with the opening bell about an hour and 5 minutes away, with your equity market on course for another week of gains, up by 0.25% on the Nasdaq 100, encouraged by this move in crude. Oil lower, Brent down by close to 3%, WTI as well, Brent crude 87, WTI 85. The president telling us we're getting closer and closer and closer to a deal.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The opening bell about 60 minutes away. Equities up here by 0.4%. Up on the week through Thursday at the close, adding some weight to the rally. Higher by 0.2% on the Nasdaq. The move fading just a touch, going into this record-breaking IPO from SpaceX. We'll spend some more time on that in just a moment. I actually want to spend some more time on the bond market, which has really stabilized in the past few sessions. Held down by crude. Yields at the front end of the curve up by just a basis point this morning. 2's around 4.07%. 10's around 4.47, up a single basis point. Of course, this morning is all about a big equity offering. The IPO is still to come from Anthropic, from OpenAI. Next week's all about the Federal Reserve. Kevin Warsh, a man who we really don't know much about in terms of what he stands for, what he believes right now for monetary policy.
If there is some sort of conclusion to the Iran-U.S. fighting, does that give him a bit of a breather in terms of how rapidly they have to at least tighten verbally some of the policy? The expectation is that there will be a dropping in the easing bias, which a lot of people can't believe is still there. At the same time, notable how wide the gap is, the delta between what we just saw from the ECB, which was not only hiking rates for the first time since 2023, but indicating that further hikes are likely. And this morning, it is interesting that even though you are seeing somewhat of a relief sense in the U.S. bond market, it's barely a relief at all. And in the German bond market, you could see an absolute rip-roaring rally as people say, okay, at least this might take the pressure off the ECB to have to do so much. So let's see what Fed Chair Jay Warsh stands for. Jay Warsh, because, you know, Kevin Warsh, excuse me. Jay Powell will be governor.
Jay Warsh works.
I think that that's kind of what we're going to be dealing with. Jay is still there, and he might give a speech as well. But I'm curious to see.
Federal Reserve.
You know, and then we get commentary from them, which I think will be really great.
Yeah, I agree with you. Crude looks like this: 88 on Brent. We're pulling back to 85 on WTI, down by 2 to 3% off the back of the imminent deal. We're told repeatedly is close, very close, I'm told, in the last 24 hours. That would be my conversation, I think, for next week around the Federal Reserve, at least my question. How narrow is the inflation conversation at the institution right now? Is it all about energy and the potential for energy to spill out and become embedded in other prices? Or does it go beyond energy? They're seeing price pressure elsewhere that they are becoming increasingly concerned about.
The discussion on Wall Street very much is the latter, not the former. It's, yes, energy is definitely an input, but at the same time, people are able to absorb those higher costs, and you're also seeing it from some of the data center build-out. So at what point are you looking at just an underlying resilient economy that doesn't require at least no more accommodation and potentially a rate hike?
It's got to set expectations for communication as well. So the headline crossed. There will be a news conference, like that was news, right? There will be a news conference next week.
There is a question.
How long will these news conferences be? How many questions will they take? Is he open to having news conferences at every single meeting? Is that something he's rethinking? The speeches, how often will we hear from him? How often would he like other governors on the board to speak? And how much control does he have over regional Fed presidents, which at the moment is not much?
To me, that's a key question also. How much is he going to clamp down on the idea of this being a multitude of voices versus really driving from the top, right? How far can he go with some of his decisions about changes, given the fact that he's just one person among 12?
That quote, inflation is a choice. Someone in the news conference is going to bring that up. Inflation is a choice. Yeah, precisely. What's your choice?
Yeah,
what's your index?
Yeah, exactly. Is it an index choice, or is it a choice when it comes to how far you crack down on it?
That's the story for next week. Let's turn back to our top story for this morning. Counting down to the SpaceX trading debut, Wall Street gearing up for a historic trading day. Yahara joins us now from the NASDAQ for more. Yahara, welcome back to the program. It's a big few hours coming up where you are. What do you see now?
Exactly, John. So just to give you a sense of the anticipation here at the NASDAQ, we've already seen some key SpaceX figures arrive. I just spotted President Gwynne Shotwell downstairs sharing some laughs with CFO Brent Johnson as they chatted with other folks here at the NASDAQ. Elon Musk's mother, May Musk, also just walked in ahead of them. So the anticipation is building here ahead of the first trade. We have heard from the NASDAQ in the last hour that SpaceX will be eligible for trading at 10 a.m. Eastern, but we probably won't see the first trade until hours from then, as underwriters will still be working to match buy and sell orders in that price discovery process. And one of the biggest questions this morning is how much demand is still sitting on the sidelines. As we reported, the deal was more than 4 times oversubscribed. Retail investors alone are said to have placed more than $100 billion worth of orders, but only a fraction of those requests will actually be filled, which means there could be a large pool of investors looking to buy shares once trading begins later today.
Yahara, appreciate it. Thanks for the update. Yahara at the NASDAQ ahead of the pricing of this IPO, the trading of this IPO later this morning. The company's sky-high valuation raising major questions from investors. Matt Kennedy, the senior IPO market strategist at Renaissance Capital, writing, this valuation isn't just pure hype. A fundamental case can be made to justify it. Matt joins us now for more. Matt, welcome to the program. Been looking forward to this conversation. We've heard from a lot of skeptics already this morning. Let's get to the constructive view. How do you justify this valuation?
Right. Well, it'll be an expensive stock in the near term, but our numbers have it looking pretty decent on 2029, 2030 EV multiples. So, you know, it's going to be a tough ride, a rocky ride to get there, and it can be uncomfortable to value a company so far into the future, especially in this space. But if it hits those numbers, I mean, this stock could even look cheap.
Well, Matt, let's focus on revenue, how much money they're making at the moment, what growth has looked like over the last few years, and the numbers you're thinking about in the forward years, next year, the year after that. How much growth are we going to see in revenue?
Right. I mean, we only saw, 15% revenue growth in the first quarter, but this is not going public off of its most recent quarter. It's going public off of what it can do in the next few years. And we're expecting it to more than triple revenue in the next 2 years. That would give us more confidence in this valuation. And how can it do that? Well, a lot of it's already underway with that Google and Anthropic deal. And then, you know, if they can get Starship underway, if they can continue growing in the connectivity Starlink space, I think they can get there.
Key question, Matt, where exactly is the revenue going to be coming from, and does it matter? Does it matter if it's mostly a NeoCloud story or if it's mostly a Starlink story that does propel the earnings higher?
Most of the revenue is going to come from the AI side, likely. At the same time, Starship V4 is really going to be that keystone to the company's plans, with connectivity drawing the most EBITDA in the near term as well. So on the top line, I think AI, but you really can't discount the other 2 pillars here too.
How much more different is it to try to value some of the companies that are IPOing right now versus, say, 5 years ago?
Yeah, I mean, it used to be easy. You could just look at any software company and then the 10 closest comps. This feels like new territory. Like I said, we're not comfortable. We're not usually going out to 2029, 2030 numbers, but you kind of have to. This feels almost more like a $1 trillion venture investment. And I expect the same will be true of Anthropic and OpenAI.
Matt, what do you do when it comes to total addressable market? The TAM of this company, when you start thinking about going to outer space and there's not much competition, just sounds insane. Some of the numbers I've heard over the last few weeks just sound almost made up, Matt. Where did the numbers come from?
I'll be honest, we always discount the TAM pretty heavily. We see very inflated TAMs in prospectuses. So we kind of take that 20 plus trillion TAM, we kind of set it aside and look at what the company's been able to do and where we think it can go. We kind of disregarded that 20 trillion plus enterprise AI. But, you know, I think there's no question AI infrastructure is huge and growing. The potential for the Starlink is already very established and growing very fast.
Matt, can I ask you, we were talking about growth, and clearly the IPO is not priced off the trailing years, obviously. We're talking about the hope of the future. But Matt, I am interested in the growth levels coming into this listing. Why aren't we seeing aggressive growth? And why is it going to change quickly in just the next 2 years?
Yeah, I mean, I think the launch business has really been focused on bringing those satellites into space, helping the connectivity, the Starlink business out. And then on the AI side, that's mostly been plowing money into CapEx, and now it's finally at that inflection point. And, you know, those deals with Google and Anthropic have given us confidence. The fact that Google is also raising billions of dollars to build out its own data centers and other companies, I think they're in the right space. I think a case could be made that, you know, it's a bit risky to build out all of this infrastructure. You know, what happens if there's overcapacity? But for now, you know, pedal to the metal, it looks like the smart play.
Matt, you agree with some of the skeptics, and at one particular point, you said that this looks a lot like a $1 trillion venture capital bet. Do you think it's appropriate that this go into a lot of the indexes and be available widely to retail customers at a time when essentially it has a characteristic more of venture capital than, say, traditional equity?
Well, you know, I mean, you could take a look at Tesla. That took a long time before it got into the S&P 500. There's all sorts of, you know, growth companies, mature companies. So I would say that there's a spectrum of what's appropriate for what goes in an index. And this company kind of feels like a growth company on steroids. So I believe it can justify its $1.75 trillion valuation. I wouldn't say it's, you know, inappropriate to be going into indexes whose, you know, goal is to track the market. If people don't want to own those index funds, they can certainly sell.
Matt Kennedy, appreciate it, Matt. Thank you. That's a choice people will have to make. Matt Kennedy of Renaissance Capital, a growth company on steroids without the major growth just yet. And perhaps that's going to change in the next few years.
You're betting that it will change in the next few years. People keep pointing to the index composition, and you were alluding to that with Sarah Hunt earlier, the idea that the NASDAQ is going to be including this and that the S&P isn't, and that it will include the divergence between those two indexes, with the NASDAQ much more leveraged, the AI bet, than, say, the S&P. How much investor education is going to have to go into this, though, too, so that people truly do have a sense of this? Because when you think about the U.S. index, equity indexes, they've gotten further and further away from the underlying economy as time has gone on. And do people really fully understand that?
Well, right now, we're getting closer to the underlying economy because this economy is just AI and CapEx right now, isn't it?
That's a great point. In terms of the strength points, yes. In terms of going to the grocery store, well, maybe. I mean, it depends. Maybe AI is picking my blueberries.
Yeah. Hopefully those blueberries get cheaper for you, Bramo. I know how personal that feels.
It does. Those big blueberries, they're fantastic. But
if they're really big, they're not organic, are they? You know, like those monsters you get sometimes.
Is that, do you care? Yeah, you care.
Oh, yeah, of course.
No, I'm just like, they're delicious.
Oh, you like the bigger ones?
You know, it depends. The really small ones that are like
organic,
I mean, if they don't taste good, they don't taste good.
Let's get back on track. Future's fading just a touch. Equities right now up a third of 1%. Let's get you an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Here's Isabel.
Hi, John. The U.S. and Iran may be nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian Foreign Ministry spokesperson saying, quote, "We have not reached conclusion on this matter yet." And OpenAI's ChatGPT reaching 1 billion monthly users in May. According to Sensor Tower, the app became the fastest ever to reach the milestone despite growing AI opposition. Other apps like Anthropic's Claude made triple-digit year-over-year gains. And in sports news, the Knicks are heading back to San Antonio as they look to close out their series against the Spurs. They're one win away from their NBA title since 1973. And teams up 3-1 in the finals are 37-1 all-time in league history. Game 5 tips off Saturday night. That's your Bloomberg brief. John?
Isabel, thank you. Thank you for the update. Up next on the program, setting you up for the day ahead. Plus, we'll catch up with Dan Niles of Niles Investment Management, saying things could get dicey down the road for this big company.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. This is one of those companies where ultimately they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Place your bets accordingly. That was Sarah Hunt of Alpine Saxon Woods on the major IPO that's set to start trading a little bit later this morning. Equity futures shaping up as follows. Positive by 0.2%. The rally's fading as we get closer and closer to the cash open. The Nasdaq just about unchanged. Going into the opening bell, what a week we've got lined up for you. A little bit later this morning, this trading debut for SpaceX. Should expect that around 10 a.m., perhaps, possibly, even later. And then, a little bit later, 9 p.m. Eastern Time, Team USA playing its first World Cup match. We'll give you an update on that, no doubt, over the next few weeks. World Cup mania taking over Mexico, America and Canada. Then next week, too, G7 finance ministers and leaders, of course, all getting together. G7 leaders meeting in France. Wednesday, FOMC rate decision. Kevin Warsh news conference, the main event, about a week out.
Yeah, and it sort of sets it up perfectly with the G7 meetings, given the fact that not only potentially could we see some sort of deal signed between the U.S. and Iran, as some people were talking about this morning, but also a lot of the big tech leaders are going to be at that G7 meeting, which highlights sort of the 2 big components that are at play for the new Federal Reserve Chair, Kevin Warsh, coming in and having to figure out exactly what's causing the inflation. Is it the energy side of the picture? Is it the tech build-out kind of the picture? And how do you view monetary policy at a time of incredible technological change?
Regulation conversation about taking stakes in some of these companies. Very different attitudes in Europe compared to, say, the US about what's going to happen here.
I think it was very important for these guys to get on the plane, which is the reason why they're all showing up. You can imagine some of the conversations. I want to know their calendars. Who are they meeting with? Exactly what the tenor of those conversations are. I'm guessing it's more on the regulation side than it is with these leaders than, say, on the buying a stake.
I would suggest also that some of these executives believe they are the masters of the universe as well, and think that that's the group they should be running it.
Right now, the market is treating them
like
as masters of the universe, because their total market cap right now exceed by multiples most GDPs on this globe.
Let's talk about the massive success of SpaceX and Elon Musk. What a turnaround in fortunes for this company that's gone through some difficult times at times over the past few years. Bloomberg's Ed Ludlow joins us now for more. Ed, we'll see the first trade a little bit later this morning, but let's spend some time on that. How much work Elon Musk and the team is dedicated to this company to get it to where it is today?
Yeah, in 2002, when it was kind of seeded, I think it was at a $27 million valuation. And, you know, it was very close
for quite a long period of time to bankruptcy and failure, and they had just enough cash and gear to get one rocket together and it blew up. And fast forward to present day, the valuation that we're all debating, the trajectory of the valuation in the context of price to sales, however you want to measure it, is not predicated on that rocket at all. It is predicated on a story they've pitched investors, on them becoming an enterprise AI company, like completely different. Really interesting though, like this is such a big moment in time because it's literally the biggest IPO in history on dollar raised and valuation. This isn't the end of the capital markets story for SpaceX, it's just the beginning, right? And so that's such an interesting psychological consideration. They're pitching a business that doesn't yet exist. No one's talking about the success of the current business, which is Starlink, cash flow positive, and basically being a neo cloud where they rent computer capacity to Anthropic and Google. And at the same time, why are they raising $75 billion? John, they need capital. And part of that's to pay down existing debt. NASDAQ is saying quotation 950, eligible for trading at 10 a.m. Eastern. One thing I would note is that's completely standard for tech IPOs on the NASDAQ. This isn't a standard IPO. And so, yeah, buckle up. Interesting few hours. Certainly not standard, that's for sure. And thank you, buddy, and thanks for the coverage. Dan Niles of Niles Investment Management has this to say. It would not surprise me to see the stock trade well initially. After that, however, I think it gets a lot more dicey. I'm pleased to say that Dan joins us now for more. Dan, welcome back to the program. Why do you believe this gets dicey from here?
Well, I mean, if you look at it over the first 15 trading days, you've got additions to all the different indexes coming up. The earliest one you can add it in is 5 days. The NASDAQ 100, you can add it in to that index in 15 days. And so that's going to force a lot of index buyers in and then closet indexers within the mutual fund community. I think after that, valuation matters. So, I mean, if you can pull up a chart of the ARK Innovation ETF, ARKK, over the last 10 years. If you go back to 2021 and you look at that, it is down 50% from its peak in February of 2021. Tesla over that same time is up about 50%. But if you put it into the S&P 500, you would have doubled your money, including dividends, since that peak in February of 2021. So that shows you the dangers of buying stocks at valuations that are astronomical, because they will get corrected, but it takes some time. And so that's the way I'm looking at the SpaceX IPO. I mean, don't get me wrong. I think Elon Musk is the Thomas Edison of our generation. But at 90 times revenues, which is where the IPO price is, it looks like on Hyperliquid, it's at 180 or so. So that'd be 120 times revenues. This is like buying the ARK Innovation ETF, in my mind, at its peak in February of 2021.
Yeah, Dan, it's the revenue piece of it that I want to spend some time on with you. Clearly, trading revenue, this number is a monster, more than 90 at IPO. And as you indicate, after the rally, it's going to be higher than that. But the hopes and dreams are about the forward years, of course, just by definition, Dan. Dan, the growth numbers coming into this, that's the piece of it that gets my attention. We will pay up for growth stocks if they're generating lots of growth, but you don't see that right now with this company. And Dan, what I've been told this morning is that in the next 2 years, that's going to change really quickly because they can leverage the investments they've made. Dan, what are your thoughts on that?
Well, and that's true, but you're leaving out one important piece, Jonathan, which is they've said they're going to need to spend hundreds of billions of dollars to make that happen, to be able to get to that 28.5 trillion in TAM that they believe is the largest in human history. But look at what's happened with companies we already know very well that are trying to do that. So Google went out and did a capital raise. The stock's down 6% just in the month of May. Amazon also selling the largest corporate bond offering ever in Canada. That stock's down 11% just in the month of May. And go to yesterday, right? Oracle results came in, those were fine. But the CapEx came in a lot higher than what people thought in terms of their guidance. That stock was down 9% yesterday. It's down just 18% just in the month of May. So you already, and then Meta, obviously, since April 29th, when they put out their results, they again cranked up their CapEx relative to expectations. Expenses went up. That stock's down, I think, 15% since they reported results. The S&P's up 4%. So you can make the assumption that once you get out of this first 15 days of trading, when there's forced buying due to these index inclusions, the stock keeps working. But I look at investing as risk versus reward. At 90 times revenues at its IPO price, over 100 based on what it looks like it's trading in some of these other markets, it's just not there. You can buy other companies, to your point, Jonathan, that are growing a lot faster, that you can get at very reasonable valuations that, have positive cash flow.
Just real quick, Dan, I'm curious if this is sort of an indication of how things are going to be valued for OpenAI and Anthropic, whether this sort of indicates the peak in the sense that all these companies want to raise as much money when the window is as wide open as it possibly can be.
Yes, you hit on the exact point, because money right now looks infinite right up until the point it isn't. So is the fact that Google, Amazon, Oracle, Meta are all having pretty rough periods of time as they're raising capital. And these companies actually, on an operating basis, generate lots of cash flow. Don't forget, SpaceX, on a net income basis, is losing a lot of money. They lost more in the first quarter than they did in all of last year, and that's just net income losses. I'm not even layering in CapEx. So to your point, which I think is a really good one, now you've got 3 of the biggest IPOs in history lining up. And is capital infinite? I think based on how things have traded in May off the capital raises of, established, very profitable companies, I think you're kind of figuring out maybe capital isn't infinite.
Dan, appreciate your time and really valid points. Thank you, sir. Dan Niles there of Niles Investment Management. Dan is absolutely right. We've been tracking the same story, the pushback. Just the report that Meta might raise equity capital last Friday, equity sold off. Saw it with Oracle on spending, saw it with other names through the week as well. It's the stress that's starting to emerge. Not broad-based, but signs that you're getting some pushback in capital markets.
We got it at the end of last year when they announced the CapEx plans, and then Meta in particular sold off really dramatically. And then it resurged when people started to look at some of the profitability and how it was coming out. This is a tough story to get your hand around, which is a reason why it's been really wonderful to listen to all these different points of view this morning.
A record-breaking IPO from Elon Musk and a team over at SpaceX. Trading should begin in the next few hours. Equity futures fading just a touch on the S&P 500. From New York City this morning, good morning. Have a wonderful weekend. This was Bloomberg Surveillance.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust. And then public companies are trusted more compared to private companies. So that's the reason.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Well, here we are 30 minutes until the start of trading, awaiting the debut of SpaceX on the NASDAQ. I'm David Gura.
It's been a while coming, David. I'm Bonnie Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Coming up, the countdown is underway. SpaceX trades today after raising $75 billion in what is the largest IPO ever.
Shadow market signaling a blockbuster debut, putting Elon Musk on the brink of becoming the world's first trillionaire.
And hopes for peace are also helping boost sentiment across markets today as the U.S. and Iran edge closer to a deal.
A nice alignment there. The market seems to be primed for some kind of a bounce today. Stocks to watch. Well, we're looking at the AI trade ahead of that SpaceX debut. Shares popped earlier on the prospect of a US-Iran deal, which seemed more likely than ever after the president said yesterday he was going to put off a third round of strikes last night, and a deal was close. Well, here are some shares. Alphabet, of course, has a big stake in SpaceX. Alphabet, no doubt, will move on the prospects for SpaceX today.
Our focus, of course, on SpaceX, the company and its prospects, but so many businesses in the broader space industry paying attention to how this goes, looking at sort of what this means for their fortunes going forward, taking a look here at stocks in that broader space industry. A volatile day, I think, like a lot of folks, wondering sort of what's going to happen here as all of this plays out as we await trading on the NASDAQ. But you see shares mixed in EchoStar, Rocket Lab, and AST Space.
In history, it's a landmark moment for both Wall Street and the space industry.
I think this feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors.
SpaceX is the biggest rising star of all time. They have no net debt. Right. So it's clearly an IG-rated company as we stand today.
I'm actually quite bullish and optimistic for its impact on the industry. I think there's going to be a lot of capital that flows back into other space names as well.
SpaceX is one of the most important infrastructure projects of our time and really a very big cash generator.
What SpaceX is doing is actually integrating not just across its space technologies, but it's creating infrastructure on Earth and in space to basically do a lot of AI compute.
Joining us at the desk now for this hour is Bloomberg Tech co-host Ed Ludlow. He's been reporting on SpaceX and Tesla, of course, for years. Ed, of course it's investment grade. It's going public today. Does it stay investment grade? And how many times does it go back to the market?
I think that the significance of the reporting there is that we're very fixated on the biggest IPO in history, and they'll raise $75 billion, and that's astonishing what they'll use the proceeds for, pay down some debt, but capital expenditure, right? It's highly analogous with what we see in the hyperscaler space. And the expectation on that IG rating significance is they'll come back to the markets in some form, right? Equity or debt. This year was about a race to IPO. SpaceX, Anthropic, OpenAI. Actually, the way that lots of investors who have exposure to all three companies, they've got a bit of a headache on their hands, is that it's a race for capital, with Alphabet coming in strong into the equity market and everyone else probably coming quickly to follow suit.
I picked up the prospectus from Rocket Road there in Starbase, Texas, 200-plus pages. I know you've read them all, Ed.
I'm so sorry.
I myself didn't read all of them, but I was drawn to this kind of caveat emptor in the document. Our growth strategy may take longer to execute than anticipated. Right. You may not realize a return on your investment within the time frame you anticipate, or at all. That clause there is stuck with me.
Yeah, SpaceX management has been clear that the timelines and horizons for the story they're telling, the vision of being an AI company where the total addressable market is $26.5 trillion, it will take time to get there. What's interesting about that is, like, right now, however we trade today, right, it's a moment in time. There's not as much emphasis being put on the, well, what is it that they currently do? And what they currently do is have the Starlink business, which in 25 was profitable in isolation, cash flow positive, although there isn't a cash flow number in their prospectus. And they've become a neo cloud. They rent data center capacity to Google, which happens to be one of their biggest investors, and Anthropic, on paper one of their biggest rivals. And you know, what's so interesting is behind closed doors, a lot of these venture and growth mutual funds that are already on the cap table tell me, you know, we actually not paying too much attention to that long distant future business model. We're pretty stoked about the current business and how they've hedged with this data center plan.
Doesn't it remind you of when Amazon suddenly realized it had a cloud business and that's what paid for everything else for a moment in time there?
Yeah, it's highly analogous to that. The cash cow in the interim period will be SpaceX through XAI is very good at building data centers and running them on the best dollar per token basis. And they can't work out how to use all of the capacity themselves to train their own or run their own models. So they're saying, well, someone else can use it in isolation and we'll make money from that.
And you're going to stick with us, not just for this block, but for the entirety of the hour as SpaceX makes its market debut today. A huge question is whether markets can absorb another mega cap AI play as concerns continue to grow about AI spending and returns. I want to discuss those market implications now with Bloomberg macro strategist Michael Ball, who joins us here on set in New York as well. Let's pull back here. I mentioned at the top a lot of space industry participants watching this unfold. More broadly than that, there were a lot of gigantic companies poised to go public who are waiting to see how this goes as well.
Yeah, I mean, a couple things. One, the market narrative right now is clearly either Iran. It's clearly this kind of rethinking of the AI trade, winners and losers, where capacity is constrained, where it's not, who has the pricing power, and then obviously the SpaceX. And the SpaceX feeds back into your question here, buybacks versus new issuance. And this is the first year where we're seeing that actually look a little flattish. And we don't know yet where Anthropic obviously is going to be and where OpenAI is going to be, so that will add to the pile. But as it stands right now, it's more balanced. So that like tailwind that's been around for several years, it's always been this passive flow, constantly being kind of leaned into as there's going to be buyers coming in from the corporate side, is no longer as assured.
Why set the price pre-IPO $135? Is there precedent for this?
Well, there is usually some setting of the price, but to your point, why at that level? I think that's probably where they thought they could get the best deal. And again, we'll find out today when it opens how much it goes up. And I get your point because the shadow markets are showing a little bit of a higher premium to that. And that, you know, the murmur among traders is it could fly, given how much it's been subscribed. But I don't really have a great answer for exactly why that level. I think they all got together in a room and decided that was where it should be.
What I jump in and say is, like, you know, our reporting is that unusually, even though the bankers will make a lot of money from this transaction, Elon Musk and the rest of the SpaceX management team had very firm control behind setting 135 early. What's so interesting, right, is that it's way oversubscribed on the institutional side and on the retail side. All you can trade today in the session is whatever was put into the market on the float. Like, how does that work?
Yeah. I mean, again, this is my worry, that there's going to be a spike. You're going to see some beneficiaries with it, especially like the Googles who have a stake in it, especially some of the other tangent plays, especially the neo clouds, because it's showing, again, that's where the capacity constraints are. And we're going to have maybe a gamma squeeze as well, because we have the froth has come out in the last 2 weeks. We've all seen that. We've seen a more volatile tape. We've seen it in the semis. We've seen it in the NASDAQ. That's been especially the area that was overbought and the option markets were showing us. So now we've kind of had a chance to reload. Things aren't as long, so there's a chance now for everyone to pile back in. And for the last 2 or 3 weeks, retail and institutional trading have been in lockstep. And back to Ed's point, they're in lockstep again going into this IPO, which again gives us dry powder that can really ramp things up and make for an interesting show. Then again, of course, how long do we stay at these levels and what's the implications further out for volatility?
But also the size of oversubscription is relative, right? So 4 times oversubscribed is not normally a huge amount oversubscribed. It's just that this is a massive IPO, and so therefore maybe it's a little more than usual. Yeah, it's
big part of it. I think we've never seen anything like it. I've been pushing back on the traders and PMs I'm talking to who are getting experts telling them things. I think we don't really have anything to really look at in the past to gauge this as. And also, again, it is a certified neo-cloud thing we understand, but then there's this dream further out that's obviously Elon's done in other ways with Tesla and stuff as well. So If anyone says they think they know where this is going right now, I would just say, let's wait and see.
Michael, we will be chatting to you throughout the morning. That is Bloomberg macro strategist Michael Ball, and Ed Ludlow is sticking with us. And don't miss a special edition of Bloomberg Tech at 11 a.m. Eastern, then an exclusive conversation with Jim Chanos, who said this is an IPO that's built on hope. That conversation on Bloomberg Money at noon. The US and Iran are edging closer to signing an agreement to reopen the Strait of Hormuz, according to senior officials. The deal could be signed next week during the G7 summit near Geneva. Bloomberg Washington correspondent Tyler Kendall has the details. What changed right before the market closed yesterday, Tyler? It suddenly seemed that the president was a lot more enthusiastic, and then Mayor came out this morning and gave somewhat of support to what the president had said.
Right, Vonnie, we're tracking a few different developments today, but the overarching theme here is that G7 officials tell Bloomberg News that a senior Iranian official last night did indicate that a deal is likely. There seems to be this renewed hope that they are getting towards a diplomatic solution, though our reporting does caution that Iran has not said that it is ready to sign just yet, and that any agreement still needs Iran's supreme leader's approval. Now, we've been tracking that the two sides are working towards a memorandum of understanding that would first seek to extend the ceasefire by 60 days. Then we would see a reopening of the Strait of Hormuz prioritized within the first 30 days, and the U.S. lift its naval blockade. Once those components are in place, then we could expect those longer-term discussions around what potential curbs to Iran's nuclear program would look like. But we got a flurry of reports out from Iranian state media today about some of the provisions and what is reportedly the 14 points in this agreement that could prove problematic, including that Iran is saying that they will not restore the Strait of Hormuz to pre-war levels, seeming to indicate that they want to retain some sort of grip over the waterway, even if a deal is reached. Keep in mind, about 140 ships used to transit through the strait before the conflict began. But then there were some of these other provisions included too, including that the U.S. would have to withdraw assets from the region, unfreeze half of Iran's frozen assets, and suspend oil sanctions. At this point, Vonnie, will have to see what the U.S. actually agrees to in any sort of final agreement. But the White House at this point is still pointing towards that they are pushing for this deal and that they have conferred with regional allies.
Could happen as soon as Sunday, according to Bloomberg's reporting. A lot to get to before that, including the president's birthday, Flag Day, of course, and that cage match on the south lawn of the White House. Bloomberg's Tyler Kendall from Washington, thank you very much for that update. And let's do a quick check of the markets here as we await trading to begin. In SpaceX, we see S&P futures up here about 0.5%. NASDAQ and NASDAQ is down slightly this morning. Again, a lot of volatility ahead of this, looking at the 10-year coming in some as well. And Brent crude below $90 a barrel, I should say. That's significant because we haven't seen it there below that 90 threshold since the first week of the war that we were just talking about, Vonnie.
Well, David, let's get a look at some other movers on our radar. Adobe down after the CFO announced he's leaving the company. In March, the CEO of Adobe said he would resign later this year. AMD shares, though, are popping on a city upgrade to buy. Demand for its GPUs there. And these stocks are all set to join the NASDAQ 100. You have a little bit of everything here. You have the Neo Clouds, CoreWeave, and Nebius. You have Astera Labs. And, of course, a space play, Rocket Lab.
Well, coming up here, Elon Musk poised to become the world's first trillionaire. Musk's worth would be more than the GDP of Taiwan. Dig into his prospects here going forward. This is Bloomberg Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Now to high interest, to look at what's making headlines around the world. Some New York City brides are choosing bing bongs over wedding bells as the Knicks NBA Finals run collides with weekend nuptials. Couples who booked venues years ago are adding big screen TVs, score updates, and team decor to keep their guests from watching the game on their phones. Some receptions are becoming full-fledged Knicks watch parties as the team chases its first title since the year 1973. Vanguard has unseated BlackRock as the largest U.S. ETF issuer for the first time in over 20 years. Vanguard now manages about $4.39 trillion in ETF assets, driven by nearly $291 billion in inflows this year and surging demand for VOO, its low-cost S&P 500 fund, which recently topped $1 trillion in assets. And Goldman Sachs President John Waldron says a record-breaking SpaceX IPO has investors racing to fund the future. He spoke exclusively to Bloomberg TV's Francine Lacqua earlier today.
It's a $75 billion IPO, the largest in history. I think it presages the beginning of a pretty sizable wave of IPOs, which we're excited about. And I also think it shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space, which is quite exciting.
Here's a look at the NASDAQ market site right now. Elon Musk poised to become the first trillionaire if SpaceX stock closes above 2% higher today after its IPO. Let's discuss with Bloomberg Businessweek columnist Max Chafkin. He's covered Elon Musk for years, and of course Ed Ludlow is still with us, host of Bloomberg Tech. Max, let me start with you. I'm tempted to ask, would becoming a trillionaire change Elon Musk in any way, or how would it change him? But in all seriousness, would he be satisfied then? Clearly pay is important to him. He's made it a serious part of board discussions.
I think that pay is important to him insofar as it's sort of a scoreboard of his achievement. As well, like, you know, he has big ambitions here. He's attempting to, you know, invest huge sums of money in the political system. There's big plans here with SpaceX. Of course, now the hope would be that, you know, the public is going to fund SpaceX plan rather than Elon Musk personally. But, you know, he is somebody who has cared about, he may not care about material wealth or his house, that's what he always says, but he is somebody who's been very, very focused on his personal wealth, his pay. We've seen these fights over pay packages for years. He even, in an exchange on X earlier this year, corrected someone, you know, insisted that he was a trillionaire, I guess a little prematurely. So this is, he has been focused on his net worth, even if he says he's not focused on material wealth.
Let me stick with focus, but in a different light here, and that is how he's going to be able to run this company when it goes public, when he has other things kind of drawing his attention. He is the techno king of Tesla. I believe that's the official term. It's in the prospectus that I mentioned earlier. Any concern among these legions of retail investors who are going to be backing him today about his capacity to do this and that simultaneously?
I don't think there's any concern among the legion of retail investors. That's what they're betting on. I think when you talk to institutional investors, maybe there are people who will quietly say that this is a concern, and we saw this risk factor come up with Tesla, that was the justification for paying him this latest huge pay package, that there was a risk that he would take his AI ball and play elsewhere. I think this is why so many people think that Tesla and SpaceX are eventually going to merge, that you have two companies run by the same person, they're both kind of doing the same thing, and you have shareholder bases that have essentially the same thesis, which is Elon Musk is great, we're going to follow him to the moon.
There's a massive distinction between economic ownership and voting power. And Musk is going to come out of this IPO, 84% voting power at SpaceX, which, when Max and I over the last 12 months were writing about Elon's world, and particularly the Tesla, the whole pay package point, he would argue, would he not, Max, it's about control. He can only execute the vision that he's outlining if he's not at risk from activist investors and so on.
Yeah, absolutely. And this setup at SpaceX is complete control. I mean, not just the 85% voting control, but also the fact that they've moved it from Delaware to Texas, where the courts are set up in a way that's much more favorable to management. You also have provisions in this IPO around arbitration for shareholder class actions. Basically, no one is going to be able to force Musk to do what he wants. The only thing that can force him is the stock market. Is the fact that if the stock market doesn't like this plan, doesn't believe in the idea of space data centers, which I think is very possible, especially as, depending on what happens with the AI market in general, then I think that could force changes.
So SpaceX is already a conglomerate, right? X was brought into XAI, and now they're all part of SpaceX. Is there a point at which Tesla becomes part of the conglomerate as well? Ed, let me ask you. And because in that situation, nobody could complain that he wasn't being able to give time to each company, because essentially he's giving time to their conglomerate.
The idea is out there in the market. We reported prior to the XAI and SpaceX merger that both boards had met and discussed the idea of a SpaceX and Tesla merger anyway, and that there was a large group of SpaceX investors that basically went to Elon and the rest of SpaceX management and were like, this makes much more sense to go with Tesla. In this IPO, yes, retail's massively oversubscribed. There are loads of Tesla shareholders that did not buy shares in the IPO or try to get an allocation because they think that's going to happen anyway. Why bother? You'll get your comp or your reward if the transaction were to happen.
It is also a way to kind of address some of the issues at Tesla. You remember, look at Tesla, and what you have is kind of a troubled car company and as the investors see it, a very promising AI thing. If Tesla is not able to kind of get its car business on the right track pretty quickly, either by, bringing lots more robo-taxis to the market. Right now, they just have a few dozen in a couple of cities that are, operating unsupervised. If they aren't able to sort of find some new gear in terms of automotive sales, this could be a way to say, okay, we don't need to worry about being a car company. Now we're just going to be part of this amazing vertically integrated AI rocket ship.
So watch the proceedings there at the NASDAQ trading floor. I just want to point that out. Yes, the head of the company. You mentioned the boards having talked to one another, and in the minute that we have left here, Ed, I'm curious about the power that this board will have, if any. You've talked about his capacity to pick who's going to be on that board and to relieve them if he wants. Notoriously, Elon Musk's boards don't have much power to push back on what he's doing.
Hopefully everyone else read the prospectus like you did, but basically, his comp for SpaceX is based on restricted shares that he has to hit market cap milestones to get, but also establish a permanent human colony on Mars. Yes, a permanent human colony on Mars in order to unlock his compensation. That's the board's control. They had it written into the doc that the board of SpaceX think about its composition. Sure.
I do my own research, Ed Ludlow. Thank you very much. You're going to stick with us. Max Chafkin, Bloomberg Businessweek columnist, host of Everybody's Business, with us here on set as well. And coming up, we're going to talk about the space economy with Interstellar Lab founder and CEO Barbara Belvisi. That's coming up on Bloomberg Open Interest on Bloomberg TV. Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Going to check the markets ahead of the opening bell. And again, this is a big day for SpaceX, of course. And I believe we see Elon Musk, the founder of SpaceX, on stage addressing an audience in Texas. This is going to be listed about the the NASDAQ here in New York and Texas as well. Fewer than 4 minutes to the opening bell. We begin the trading day with Seema Shah here in just a minute. But before we get there, just want to note what we're seeing in markets more broadly here. This is a story of hopes and dreams. I think definitely on the SpaceX side, investors buying into what Elon Musk is selling. We shall see how much they do that going forward. The other hopes and dreams have to do with this prospective deal with Iran and the U.S. Bloomberg reporting this morning there's progress on a memo of understanding that could end what we have seen over the last 100 days, conflict in the Middle East. Of course, the Strait of Hormuz being closed. S&P futures up slightly, about 0.33%, as we await the start of trade for SpaceX on the NASDAQ. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm David Gura, taking a look here at futures just seconds before the market opens today. And we see a lot of green on the screen, not by a huge magnitude here, but so much interest and yay enthusiasm for what SpaceX is going to do in just a few minutes' time. That is begin trading on the NASDAQ. Of course, we've seen a lot of stocks rise in concert with that, particularly the Magnificent Seven stocks, taking a lot of the draft that has been given them by SpaceX going forward here. Looking at the bell ringing today, a disparity, of course. One has to say that. Fifth Third Bank ringing the bell at the New York Stock Exchange. Yay for Fifth Third Bank, but of course our primary focus is on SpaceX and what's happening at the NASDAQ. Yes, in New York City, down in Times Square, but also in Texas, where Elon Musk is addressing his legions of fans and investors as well, ahead again of the start of trade here on Wall Street. Vonnie, over to you, as I know you have some stocks to watch on this Friday morning.
You were talking about the Mag 7, David Ben Emmons talking about the Orbital 7 today, right? And of course, they have overtaken all of the other 7s by a long shot just over the last few weeks alone, with several of them up several %100% over the last year. These particular stocks, though, are AI-related because, of course, the AI trade is back with the SpaceX debut. Shares popping earlier on the prospect of a US-Iran deal as well. Now, the gains have since subsided, except for Alphabet, which of course has a major stake in SpaceX and basically benefits if SpaceX does well. And even if it doesn't, Alphabet just stands to win either way, David.
Yeah, I want to point to some space-linked stocks ahead of that SpaceX debut, ahead of when SpaceX begins to trade. Market liquidity top of mind for investors as they free up capital from mega debuts from SpaceX, OpenAI, and Anthropic. Look at the top of the show, just about half an hour ago. It was a mixed picture. Now we see a lot of those stocks down. Again, I think there's just a level of, I don't want to call it anxiety, but a moment to wait and see sort of how this kicks off for SpaceX. But as we'll talk about over the course of the next hour and a half, Vonnie, really a lot of companies involved in this industry watching very closely as this debut happens on the NASDAQ.
And as you might imagine, he's actually live streaming this on X right now as well. There's going to be a lot of cross-platform advertising.
Cross-platform, exactly. All right, joining us now is Principal Asset Management Chief Global Strategist Seema Shah. She is here with us, along with Ed Ludlow, of course, the anchor of Bloomberg Tech, who remains with us here on set in New York as well. Seema, let me just start with a broad question just about how you're feeling about all of this. You can talk about SpaceX in specific if you'd like, but clearly there is so much optimism, hope. I said hopes and dreams just a moment ago. How are you thinking about this day in markets?
Yeah, hi. It's look, it's an interesting day. There's as you said, hopes and dreams, I think, is the right way of putting it. And actually, I've never felt more irrelevant as a macro strategist as I do today with given SpaceX. But overall, I think like the broad market sentiment is positive. It has had a very deserved pickup. We've seen the last couple of weeks amongst clients, you have had some pessimism really starting to creep in around the Iran war. So today, very good news on that front. And I think at least takes away some of the fears, even if it doesn't necessarily give the market a very significant boost at this stage.
Just on that point, Seema, it did seem to be a huge U-turn yesterday, just before the market closed, right, that the president came out and said he was calling off what would have been a third night of strikes. Why should we believe that we're any closer to the Strait reopening today than we were yesterday at this time?
No, absolutely. It's a great question. I think that's a question that everyone is asking themselves. I think one thing that we can say, though, is that just looking at the trend of the conversations is that you haven't seen a real escalation in tension. So even as you have a kind of a war of words, something happens, you don't really see an escalation in terms of the actual military actions. So I think that's giving us some confidence. But I think you're absolutely right that in terms of having a lot of confidence in how sustained this news is going to be is questionable. And it's one of the reasons why you continue to say from investors that they just want to have a big picture view of the economy, and it's certainly helped by the fact that the fundamental picture is still really supportive. So you can be risk on, maybe look away from the Iran war, look away from the headlines, and just stay invested through all of that.
Ed, I could use any number of superlatives to describe this IPO. I know you've had to do that over the course of this week and past weeks as well. But as we look at Elon Musk, they were surrounded by many hundreds of people. I saw a statistic that I think 4,000 SpaceX employees, past and present, are poised to become millionaires here as a result of this IPO. And I'm curious how you think about the ramifications of that going forward. Yes, there are going to be some very rich people who are calling up their brokers and looking for ever more expensive houses in San Francisco and the surrounding area. But what does it mean for the tech industry very broadly and for the space industry as well?
Yeah, I mean, maybe Seema sells herself short on, there is a macro level impact here. One thing I would say is that SpaceX employees over a number of years have had multiple liquidity opportunities because SpaceX does what's called a tender, offers the opportunity for insiders to sell shares to give them liquidity, but none of them left, they're still there. The thesis that's presented to me by the most loyal investors of SpaceX is that those millionaires don't sort of go to the beach for the rest of their lives. They don't ditch SpaceX when the lockup ends. They become venture capitalists or founders themselves. That story already exists in Southern California in particular, where around Hawthorne there is a great ripple effect and an ecosystem of startups literally born out of SpaceX. But yeah, like the macro level effect as well is like, if you could just do this for me, just ask Seema about it. The point is like, this is the biggest IPO in history. It's just the beginning of SpaceX tapping the capital markets in every guise, and not just SpaceX, everyone.
Yeah, I just want to mention that space-related stocks have taken a turn lower now, and you see the likes of Redwire and Lunar and SATS and so on down 4% and 5% apiece. Now, they did gain quite substantially yesterday, but if you look at Hyperliquid, we're also seeing that premium for SpaceX shares just come off a little bit. So we will be obviously monitoring the situation. It's going to be a volatile day, we know that. Seema, can I come back to you and ask you generally about IPOs? Do you tend to have clients enthusiastic about IPOs, or do you always want to wait until they're included in indexes and until maybe 6 months down the road when more capital raises or lockups have expired?
Look, I think it's a very, very mixed picture. I mean, with this one specifically, you can imagine that the clients are very, very split on how they feel about it. You've got some which are real believers and are willing to look away from some of the balance sheet numbers, which are concerning, and then you've got others who are really focused on that balance sheet and really don't want to have a look into it. I think the one general positive point, though, that we're getting from everyone is that this is really good news to see this wave of IPOs back into the market, and that just gives a lot of confidence once again to the public market, which I think to some extent had been waning in previous years.
Can I ask you lastly, just to kind of dovetail this with the inflation story, of course, a really big one over the course of this week, aside from the SpaceX story here, but getting that underwhelming read of inflation from the U.S. government, looking at what the ECB did earlier this week, raising rates, sort of help us understand the broader economic moment, the kind of cauldron in which this is happening.
Look, I think this is a really, really strong moment. There's a lot of volatility and there's a lot of risks. And as you said, specifically, the one thing that Evan's focused on from a macro side is about inflation and how central banks are going to be responding. We feel fairly confident, but again, so much of it really comes back down to the Strait. When is it going to reopen? How much are oil prices going to come down? And that's key. But the basic macro picture, with really driven by the AI capex wave, which is, we can't look away from that for any moment, as well as resilient consumer spending, is I think one of the things that keep investors in the market beyond the IPOs, beyond even the AI tech trade. It's a growth picture, and not just in the US, but of course in Asia too.
Ed, let me ask you, there will be an incentive for this to succeed today. I'm sure bankers will try and do what they can to make that happen. And of course, we've had massive institutional bids and so on. But what would be considered a fail?
Gosh, I mean, the dynamics of whatever hours of trading are left when trading does start are driven by lots of factors. The oversubscription on both the institutional retail side will be very severe. People will be desperate to get in on the IPO and face a decision if the shares that are available are those ones that are in the float. Like, if you're going to sell and buy at a certain point, buy and then sell at a certain point, that's up to you. I think the main takeaway from it is, they had preset a story out. Everyone has had time to digest the story, and however trading happens today, it's probably not reflective of whatever the roadshow entailed, right? it's a future where there are data centers in space, and SpaceX is an enterprise AI company. That hasn't changed since I went to bed last night and woke up this morning.
No, it has not. Our thanks to both of you. That is Principals Seema Shah joining us there, and of course Ed Ludlow, host of Bloomberg Tech. Let's get a check on the stock market right now, because we are seeing some of those gains continue and some of them just come off the boil a little bit. So we have 337 stocks higher in the S&P 500, just more than 100 of them lower. Some positive sentiment in this market for sure. It's not just about the SpaceX IPO. In fact, you could argue that it's more about geopolitical just de-escalation. We don't have an agreement yet. There's the G7 next week. It looks like there's an effort to have some kind of memorandum of understanding signed there. Though again, there are 14 points on the Tehran proposal that was sent out by MER, the state agency, and it's not clear that some of them won't be red lines for President Trump. So we'll see what happens over the weekend, but of course, this market has its eyes firmly on the SpaceX IPO, and if you take a look, the AI trade is pretty much back. We have the likes of AMD and NVIDIA leading things here, gains of 1% plus apiece. The memory chip makers, after that call yesterday, continue to gain, having gained spectacularly in yesterday's trade. I think SanDisk was up more than 15% yesterday. Alphabet is higher, although if you notice, it is actually erasing some of those gains. And the interesting thing about it is that some stocks related to space and the space trade are seeing massive declines right now. So Redwire, for example, is down almost 10%, and we have Lunar Labs, SATS, and so on. Several of those companies are lower. Perhaps it's money being taken off the table so it can go into the SpaceX IPO when it does actually start trading. Perhaps it's a sell the news event. Perhaps it's just that the space trade is now fully priced according to people. But we'll see how that progresses throughout the day. So if you look at the sectors in the S&P 500, a little bit like yesterday, you have energy, one of the laggards. This as oil declines on deal hopes, and then interest rate sensitive sectors like financials, real estate, utilities, and materials all gaining. Not a huge amount of actual news underpinning this, just a broad sentiment, I would say, today, David.
Yes, broad sentiment, I think, is the overarching story of the trade today. Vonnie, thank you very much. And coming up, we head to the NASDAQ, where SpaceX investors and executives are celebrating on this historic day. That's coming up next on Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's time now for our top calls. Some of the analyst action in focus this morning. First up, Barclays cutting travelers to a sell, saying profits are getting harder to find as pricing shows and margins are pressured. Next up, we have Adobe here. It's getting hit with multiple downgrades after the departure of its CFO. Stifel, Evercore ISI, Wolfe Research, all citing leadership uncertainty and a clouded growth outlook as reasons for caution. That stock down 8.5% now. And finally, Citi is upgrading AMD to buy, saying the company is becoming a stronger AI chip player and could win more business from Meta. David.
Bonnie, thank you very much. Let's get back to SpaceX on this Friday. The listing is a major win for the NASDAQ with more than $350 billion worth of total demand from investors. For more on that, let's head to the NASDAQ. Bloomberg's Yahaira Anand joins us now. Set the scene for us, if you would. We've been kind of going back between Texas and New York, looking at the goings-on there. We saw Elon Musk is in Texas. What is happening at Times Square, and what's the latest that we know of sort of when we might see this begin to trade?
Exactly. So while Elon Musk is at Starbase in Texas, there is plenty of celebration here at the NASDAQ. I am still seeing President Gwynne Shotwell behind me, along with CFO Brent Johnson, celebrating along with Adina Friedman. And outside, I can tell you, even from here at the booth in the NASDAQ, I look outside and there are huge crowds forming of people wanting to get a slice, wanting to get a glimpse of history unfolding, David. And I will say what we know from the NASDAQ is that SpaceX will be eligible for trading at 10 a.m. Eastern, though we will see if we get a first trade soon after then.
14 minutes from now, Bonnie.
Yeah, absolutely. Yeah. Yahaira, who is down at the NASDAQ and who's hanging out? Any SpaceX staffers? Apparently there are going to be a lot of parties tonight because one way or another, many of them are going to be quite rich.
Exactly. Many investors are going to make boatloads of money, and that is why it's all celebration here at the NASDAQ. And I will also say that even outside, this speaks to Elon Musk's legions of fans. There's a huge crowd outside. And, you know, what's also remarkable is just the amount of demand surrounding this offering. As we've been reporting, $350 billion in order. Retail investors reportedly placed more than $100 billion, while the deal itself was multiple times subscribed. That means a lot of investors who wanted shares may not get as many as they hoped, leaving traders watching closely to see whether that unmet demand then shows up in the market once trading begins. And once it does, I'll be right here.
Yes, you will. Yahaira, thank you so much. That is Bloomberg's Yahaira Anand down at the NASDAQ. Stay with us for final thoughts, because we are going to get some now from Bloomberg Tech co-host Ed Ludlow. Ed, as we get closer and closer to the first print, right, are we getting any more information about who is buying? We know institutional buyers put in orders for massive amounts, but that may not have been because they wanted massive amounts, right?
Everything that's happened to this point is exactly as was foretold and expected. So, like, a large amount of the institutional allocation went to long-only asset managers. We knew that would be the case. Our reporting was, why did they set $135 price prior to a roadshow and keep it? Because Musk and SpaceX management wanted to remove the leverage of the institutional market, where a range allows them to come in and say, look what I can do. Look at my economic power in this point. The retail point that Yahaira just made is super interesting, because management at SpaceX believe that the retail investor understands their story so much better than Wall Street does. Wall Street, I know you're watching, sorry, that's the state of play. And it's highly analogous with Tesla. They believe that the retail investor would hold the shares for the long term, right? Just as Tesla retail shareholders have done. 20% might be lower than people maybe thought. There was reports of 30%. That hasn't happened in the end. How they play the open market, very interesting.
You stared down the barrel and talked to Wall Street directly. Talked to Sand Hill Road as well. Andreessen Horowitz, Sequoia, Founders Fund. All of these folks stand to make a lot of money here as well. How are they thinking about this day and what it means for VC investment going forward?
You know, for the LPs of those venture firms, funds, they'll be delighted. In Andreessen Horowitz's case, this will be the biggest return in the company's history. It's actually the second most capital they've deployed. They put more into Databricks. Founders Fund is going to come up with like 50 billion stake. What's interesting is those venture firms, you assume that when they are excluded from lockup restrictions, that they sell, they liquidate. Doesn't necessarily work like that. Like, they'll have a thesis of where they think the true value of the company should be, and whether the public equity matches that value, they'll find out like everyone else.
And thank you very much. Ed Ludlow, co-anchor of Bloomberg Tech, of course, following this very closely when that trading begins. I know he'll join us again to get us up to speed on what's happening on the NASDAQ. And coming up here, leveraged ETFs are on the horizon for retail investors getting risky with SpaceX. We're going to dig into that next on Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm
Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We have SpaceX shares indicated to open 29% above the IPO price of $135 in their trading debut. We're expecting them to start trading, in fact, in just under 8 minutes. NASDAQ has indicated that they would be available for trading at 10 a.m. Eastern. A little unusual for IPOs, which typically take a few hours for the markets to get made and for the first trade to happen. That usually happens in the 12 o'clock or 1 o'clock hour, but that's what we're seeing right now, that SpaceX shares are indicated to open 29% above their IPO price of $135. I do want to mention, though, that President Trump has been making comments and that this is also impacting market sentiment. He posted on Truth Social that the attack, apparently a drone attack on an Indian caller ship in the Strait of Hormuz last night, was unacceptable. He said that Iran would need to get its act together, and this is causing oil to spike, with Brent very close to $90 once again. We have yields at their highs of the day, the two-year yield at 409. The VIX is trading back above 19, and stocks are at their lows of the session. The S&P 500 reversing those gains, down about 0.25% now. A wave of leveraged ETFs tied to SpaceX are set to launch shortly after today's IPO. Let's discuss with Bloomberg Intelligence ETF analyst James Seyffert.
More of these bullish and bearish, double and triple leveraged ETFs, James. How come they're getting to market so quickly after the IPO?
Yeah, I mean, we actually had an example with the Cerberus IPO where, as you were just talking about, that actually started trading in that 12 to 1 o'clock hour. And we had ETFs launched the next day with the market that were 2x long. So basically, this is just a race for these issuers to get out as quickly as possible because being first matters, right? And these things are big business. These things tend to charge more than a 1% management fee. When you compare that to a typical S&P 500 type ETF charging 0.03%, like you're talking a lot of money that can be made on these assets. So these are big business. There's at least 14 different issuers that have filed for these things, and there's about a dozen specifically that are 2x long or 2x short that are likely going to launch on Monday.
As we look at more than 20 of these being filed for, I wonder sort of how emblematic that is of what we're seeing in ETFs broadly. Of course, there's such wide enthusiasm for them, wide adoption of them. As we kind of focus on the uniqueness of the SpaceX story, the uniqueness of the SpaceX IPO, how unique is this, the way that it's playing out in ETFs?
Yeah, so I would say the ETF industry is a huge tent, right? Like most of the money is still going to those cheap beta, passive, or long-term buy and hold type ETFs. These ETFs are what we would refer to as trading tools. They're virtually power tools for investors to use, so you got to know what you're doing when you use them. And it's a vibrant part of the ETF ecosystem, and it's growing quickly. So our expectation is like this is going to be the standard going forward for these big IPOs, whether it's OpenAI or Anthropic next. And it's not unheard of. If you look at Tesla, there are over 20 single stock specific Tesla related ETFs, whether that's covered call to generate income or these leveraged products that are doing 2x long or 2x down. We even have some 3x filings. Our personal view is these things aren't going to launch. The SEC will not allow them to launch, but it hasn't stopped issuers from trying.
Briefly, James, do all of these at some point go to zero?
It's certainly possible they could go to zero or near zero. You got to remember these things are very path dependent because of the way that they're set up to operate. They go up, they give you a return on a daily basis, and then they reset every day. So they are very risky. I wouldn't say they're necessarily going to go completely to zero, but they can go move a lot if the underlying stock moves a lot.
James, thank you very much. Rockets go up and down, as we know there. So maybe to these ETFs as well. Bloomberg Intelligence ETF analyst James Seifert joining us here on this Friday. And tune in to ETF IQ on Mondays at 12 p.m. New York time. Coming up in the next hour, Joanne Shu on the latest University of Michigan consumer sentiment read, and Katie Kaminsky on market volatility. And we're going to talk about the space economy more broadly with Interstellar Labs CEO Barbara Bell VC. A lot of companies, aside from SpaceX, watching the beginning of trading in SpaceX today, wondering what it might mean for them, for their companies going forward. As we continue to wait for SpaceX to begin to trade on the NASDAQ, you see their NASDAQ on Times Square. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Preston. Shares of SpaceX now for sale on the NASDAQ.
The company's controversial chief executive, Elon Musk, watched the ringing of the opening bell at the NASDAQ exchange from SpaceX headquarters in South Texas, saying he originally didn't give the company much of a chance.
I told people this. I said, look, we're probably going to fail, but, we should give it a try, because if there's not a new company that enters space, we will never be a truly spacefaring civilization.
In its stock market debut, SpaceX was offering 555 million shares at $135 apiece. Jim Ryan, ABC News.
The IPO raising about $75 billion, putting Musk on track to become the first trillionaire ever. Wall Street rebounding Thursday after President Trump said a deal with Iran was imminent. He is still saying that today, even though Iran has not confirmed anything. The legal fight over the Kennedy Center isn't over as the Trump administration appeals the ruling ordering his name be removed by the end of the day. Here's ABC national correspondent Stephen Portnoy.
The 11th hour filing urges a federal judge to set aside his own decision as the case proceeds on appeal. The Justice Department says taking Donald Trump's name off the Kennedy Center now would harm its fundraising efforts, be wasteful for the institution, and confuse the public should the administration ultimately prevail in court. Judge Christopher Cooper ruled last month that Congress named the center for John F. Kennedy, and only Congress can change it. But the administration now argues the president's hand-picked board members should be able to add a secondary name.
They're putting the finishing touches on the massive arena that's being built on the White House lawn. 4,000 spectators expected to watch the arena on Sunday, President Trump's 80th birthday. Expect tight sports security this weekend. We've got the NBA Finals, the Stanley Cup Final, the World Cup, and that UFC fight all happening. Long night of violent storms in the Midwest. Today it's all about the Northeast and all about the wind, which could be bad. You're listening to ABC News. Florida man is suing several law enforcement agencies, alleging their use of AI facial recognition led to his wrongful arrest. Robert Dillon was accused of trying to lure a young child into a restaurant in Jacksonville Beach, Florida, 300 miles from where he lives in Lee County, Florida.
It's horrible that this AI is put in the hands of people that aren't qualified to use it and can ruin people's lives the way that they ruin mine.
A surveillance photo submitted to an AI tool came back with a 93% match to Dillon. It was not him, though. A new warning from police to parents about a growing trend of criminals recruiting teenagers online to carry out violent crimes, including bombings and abductions, even murder.
Annalie Berg's 16-year-old son Rio was a victim.
Still hard to believe.
In 2025, he was on his way home when a hooded stranger came up from behind, pulled a gun, and opened fire, killing young Rio, who was not the intended target. Police say the gunman was no professional assassin, but a fellow teen recruited for the job online by a gang.
The kids do the dirty work for them, and then they just throw them away.
The 16-year-old hitman in this case was immediately caught, convicted, and sent to prison, so it's 2 young lives wasted. Police say this online recruitment trend is spreading and should be a wake-up call for parents.
ABC senior investigative correspondent Aaron Katursky. Pope Francis in the Canary Islands speaking to migrant aid organizations, saying human smugglers will face the wrath of God. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live at Bloomberg.com, as well as Scarlett Fu. It's Paul Sweeney. It is a Bloomberg Intelligence program. A lot going on. Anne-Marie Hordern is down in Houston. She's at the Bloomberg Energy Security Executive Briefing, so she's going to be chatting with some pretty important people down there in the world of energy.
Especially as the president says that there might be some kind of peace deal announced this weekend. So that would have huge implications for the price of oil and all those energy companies.
Yeah, we'll check in with Chris Wright, Energy Secretary, and Anne-Marie, and then at 11 o'clock hour, Mike Wirth, the CEO of Chevron. So a lot of cool energy discussion coming up here with oil off a little bit here, right around $86 a barrel WTI crude here. Yahara Anand, she is Bloomberg TV reporter. She is at the NASDAQ, and she'll give us the latest reporting on the SpaceX IPO. Pricing right at the 135 number, indicating higher. We'll get the latest reporting there. Joanne Shu, University of Michigan Surveys Consumer Director. We did get the UMich data. We'll break that down. Ross Hamilton, Chief Operating Officer at Space Network. He'll give us some thoughts on the SpaceX IPO. So a lot coming up in the next couple of hours. Let's kick it off with the Bloomberg Business Flash with Matt Piper.
Hey there, this Bloomberg Business Flash is brought to you by IBKR, Trade, Election, Climate, and Economic Outcomes with IBKR Prediction Markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Well, welcome to SpaceX Day. Today's trading will be a critical test for the $1.8 trillion rocket, satellite, and AI company and Elon Musk, its founder. The trading will determine whether Musk becomes the world's first trillionaire and will also affect the prospects for initial public offerings from SpaceX's AI rivals, Anthropic and OpenAI. We have that moving the markets this morning, as well as this deal, no deal, that could reopen the Strait of Hormuz, potentially around next week's G7 meeting. Let's see how the markets are reacting. The S&P right now is up 0.2%. The Dow is up 0.3 or 190 points. The NASDAQ right now is down ever so slightly by about 15 points. The Bloomberg Dollar Spot Index is flat at 1206.71. The 2-year yield is up 3 basis points. The 10-year up 3 as well. Oil, Brent at $89 a barrel. WTI at $86 a barrel. So what are you buying when you actually buy into SpaceX? Here's Stephen Alf with Federated.
The data centers in space are not that far off. I mean, the biggest problem they've got to solve is the water, the cooling problem. But they've got ideas of how to do that. The cost of data centers is enormous right now, the energy flow, et cetera. If you can eliminate that, you change everything. So that's just one application, but could be pretty significant here.
And a question now. Are you getting enough vitamin C? That is the question. It's a key to strong brain in older age. A study of older adults in Japan found that lower blood vitamin C levels were linked to less brain tissue and weaker structural network patterns. Vitamin C was linked to all three clusters of the brain's default mode network, a system tied to memory, self-awareness, and cognitive functions. So use those drops, Scarlett and Paul, if you do not already.
I eat so many oranges, eat so many grapefruit. I think I'm good on vitamin C. Vitamin D, different story.
Okay. Very good.
Well, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that is a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt Piper, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. We've got, as Matt was just reporting, a little bit of, we've got red and green on the screen. Let's put it that way. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg News' Matt Griffin. Matt, what are you looking at today?
Well, of course, Paul, there's one stock that we're all thinking about, but it isn't trading yet. So another name I can offer you instead is Adobe, elsewhere in the tech complex. This stock down about 7.5% after the creative software company said its chief financial officer would depart on Monday. It's the second leadership departure at the company since the CEO announced his resignation earlier this year, so that their CFO, Dan Dern, is heading to Marvell, the chip maker, to take the same job. And, you know, Adobe gave good results and a good outlook. However, at the same time, investors want to see what their strategy is for the age of AI. Stock's been beaten up this year, and what Evercore says is there's just going to be an overhang here until there's new leadership and until they articulate a clear strategy. So now that stock down about 42% this year. That's ticker ADBE.
Sounds good. What else?
I've been looking at homebuilder Lennar. That stock down almost 3% after they forecast deliveries for the third quarter that missed estimates. It's the same story that's been going on with homebuilders for a while. Mortgage rates have climbed during the war in Iran. Consumers are under pressure. They don't want to make big purchases like homes. So that stock, ticker LEN, also extending a decline, down about 10% this year now.
All right, how about Adobe?
The third one we could look at.
CoreWeave. Okay, we did Adobe.
All good. CoreWeave, ticker CRWV. That is a stock you will be seeing more of because it is joining the NASDAQ 100 index prior to the open on June 22nd. Stock up about 3%. This inclusion in a major index like that brings in a lot of passive buying. It can lift a stock. We saw jumps earlier in Nebius, Astera Labs, Teradyne. Those are also names that are joining. One that isn't rallying is Rocket Lab. They're also joining the index. However, space stocks are plunging in advance of the SpaceX trading debut today. It's SpaceX's competitors or peers, I should say.
Okay, I guess that could be a trade there. Matt Griffin, thanks so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Right then, let's head down to Houston, Texas. U.S. Energy Secretary Chris Wright speaking with Bloomberg Television anchor Anne-Marie Hordern at the Bloomberg Energy Security Executive Briefing. Let's take a listen right now.
Blowing off nuclear bombs right now, let's just forget about it and move on. But he wasn't willing to do that. He said, we have to solve that problem. I'm not going to hand my successor a nuclear-armed Iran. And so there's dialogue back. Of course, they for 47 years, they are wedded to becoming nuclear-armed and for whatever crazy reason to export their Islamic revolution and change the whole world. Everyone converted or dead. It's an ideology that doesn't work well with other nations, with other people, and of course disastrous for the 90 million Iranians that live under that regime. So that's sort of the broader backdrop.
I guess it's just hard to understand is this a real inflection point, only because the president has said about 40 times since this conflict started that we were close to a peace deal, and then a peace deal never happened.
Iran says things that they'll agree to things that work for us, and then they don't. And of course, look, the regime is fragmented. There's different power sources there, so it's a complex situation. And he's a negotiator too, right? So you've got to understand the communications share information. They also share messaging. But the one piece of leverage, the only piece of meaningful leverage Iran has had, has been to interrupt the flows of energy flowing out of the Persian Gulf. right? We had 20 million barrels a day, round numbers, flowing out before the conflict started through the East-West pipeline and the UAE pipeline. Close to 5 million barrels of that has been diverted. We've got increased production. It was pretty easy to do a few other places. I think in round numbers, you had maybe a 14 million barrel a day flow gap, which is a big flow gap of oil going out of the Gulf at the start of this conflict, or early on in this conflict. We have a military effort that we've not talked a lot about that started more recently to get cargoes out. You know, because President Trump said at the beginning, they're not going to have a nuclear weapon and we'll restore energy flows in the United States with or without Iran. He always prefers the diplomatic arm, and he works tirelessly on that. But we also have the most powerful military in the world. We've destroyed most, but not all of their military capabilities, and we're just going to restore flows ourselves. And flows today approaching half of the gap, and they're rising. So ultimately, we will restore flows with or without them.
So 7 million barrels a day are getting out right now?
That's a rough estimate, a rough average of where we are right now, and it's rising.
So what kind, is this oil, is it products, fertilizer?
Mix of the two.
And it's being done with the U.S. military?
Correct.
So are ships turning off their transponders, or is the military escorting them? Is it by air? Is it by sea?
It's hard to transport crude by air.
Well, I mean protective.
But yes,
what is it
the military protection is there. It's actually going remarkably well. And of course, this is just a U.S. innovation, U.S. military power solving a problem. And we'll continue to solve that problem. So think of that impact that has on the dynamics. If I'm in Iran, and of course, they're not concerned about Iranian people, right? They're concerned about their regime and themselves personally. So they have a little bit of a narrower focus on what they care about. But they've thought they have this great leverage over the United States of America. Of course, it isn't really leverage over us. It's leverage over the world economy. But they're losing that leverage right now. They are rapidly and will continue to lose that leverage. So you would think that their urgency to do a deal is rising, and it is rising. They realize, you know, the jig is going to be up before too long. What can they get?
How much Iranian crude is getting out right now?
Zero.
No Iranian crude is able to escape?
No.
So if this deal were to happen, would the United States let Iranian crude go through the Strait of Hormuz?
Well, it depends on the deal, but of course that is a give we would certainly be willing to do. Absolutely, you know, if Iran gets rid of their nuclear program, achieves what we want us to do, yeah, their crude would be allowed to flow again. Absolutely.
So that would be lifting of sanctions, basically, on Iranian oil.
Their crude was flowing before, you know, during sanctions. Unfortunately, same thing in Venezuela. You know, the world puts sanctions on, and then the world doesn't enforce the sanctions because it's hard to enforce sanctions. But if you really believe in the sanctions, you need to enforce them. So you could see partial lifting of sanctions on Iran would likely be on the give side for the United States.
According to Iranian press, the deal says within 30 days, the strait would open, the blockade would be lifted. Is that your understanding? And if it is true, what does it look like then in 30 days if we're already getting 7 million barrels through? How much higher could you see the flow rate?
I mean, the flow rates would return to whatever's commercially, you know, makes sense there. So, but, you know, you're clearly going to see after this conflict people to say Iran can never play that card again. You'll probably see some new pipeline infrastructure built. You'll certainly see continued innovations in military technology from the United States to defang more easily and more quickly Iran's ability to interrupt the flows as they've done there. But yeah, certainly after an agreement is reached, you'll see free flow of traffic of all products out of the Gulf or whatever. You'll see that either way. If there is no deal with Iran, eventually we would restore that militarily full flow as well.
Prices have been relatively depressed given the intensity of the conflict. I believe we're down 20% on Brent since April. Prices this morning were in the 80s. What is the driving force behind this?
It's amazing the difference in attitude and positioning of a president. President Trump came into office and said, I want lower energy prices. I want more energy production. I want to embrace American allies around the world. And the Persian Gulf energy producers. I should never call it Persian Gulf, the Arabian Gulf. I slipped up there. But the Biden administration, scorned them, said we're going to end the hydrocarbon industry. Just that rhetoric, that chilling rhetoric, that shunning of our allies. When Russia invaded Ukraine, there was almost no interruption of flow of Russian crude. There was natural gas via pipeline into Europe, but there was not a meaningful reduction of Russian oil or oil product exports. And we had gasoline prices $1 a gallon higher then than we have today with this large interruption of flows. I think that's President Trump's leadership in saying we care about energizing the world and we're going to do whatever it takes to supply the world. Obviously we released, not just in the United States, but around the world, stocks from strategic petroleum reserves. We've had 2 extensions of the Jones Act waiver to allow crude supply from the Gulf Coast, where it's coming from here region.
Will you do another extension? Actually, that's an audience question.
We'll do whatever it takes to keep energy prices as low as possible for the American people. California has chosen to impose on their people wildly high gasoline, diesel, and electricity prices. Just crazy. And so a lot of people would say, well, we shouldn't care. That's a blue state. We're here for 340 million Americans in every state across the country. So the Jones Act waiver has been enormously helpful for California and the West Coast, the Northeast coast of the United States as well. So it's allowing the free flow of that traffic. We turned back on a platform producing 50,000 barrels a day offshore California. Wells are already there. Infrastructure is already there. It grew California oil production by 20%. That's a big deal. That's a meaningful amount of flows, and it sends a message that this administration is going to help the flow of energy around the world. People are surprised that oil prices throughout all this have not gone to the extreme levels many expected.
Isn't also because China is cutting some of their imports? Was there a conversation between the Chinese and the White House about this?
Yeah, there's a lot of conversations between the White House and the Chinese, and I won't talk about that. But you saw at the start of the conflict, China was they actually stepped up their purchases of crude oil. And as you see now, they're in a very different position where they've stopped building their SPR. They've turned down some refineries. China has been a meaningful part of the balancing force in this crisis.
There was a recent Washington Post article, actually it was yesterday, about oil executives telling the White House and warning them that potentially prices are going to go higher soon. Are we living on inventories? Where do you see the inventories right now? How low are we?
It's different in different places. It's different. Oil inventories in the last few weeks in Asia are rising. And so in the United States, we have stepped in to fill this void. We've seen incredible response from American oil and gas companies, not just raising production, but raising refinery throughput to a significant scale. In fact, if you look at the May data, the United States was by far the world's largest exporter of crude oil, 5.4 million barrels a day. Russia, a little over 4 million. Saudi Arabia, a little under 4 million. But United States producers have stepped up, and from our reserves and from other stores, to try to supply not just America, but the world. But we've also had the benefit of, average gasoline prices in the U.S. a little over $4 a gallon. It's a little under $10 a gallon in Europe and in Asia. So we have not been completely isolated from the impacts of this, but we have been much more isolated than everyone else. That's leaning in and being pro-energy. That's Trump administration energy policy.
Has there been an ask or pressure from the White House on the industry to produce more?
Pressure is the wrong word, but of course we dialogue with industry across all sectors in this economy. We're not there pursuing some crazy agenda, as unfortunately the Biden administration was. We're there to engage with American businesses and help them grow their businesses. Whether they're building artificial intelligence factories or new manufacturing plants or oil and gas or coal or electricity of any kinds. We want to see America thrive. We want to see energy production increase. We want to see prices to consumers go down. We want to see competitiveness to do business in the United States grow. Higher wages, lower costs.
But there is a concern that potentially if we're running low on inventories and say we don't get a peace deal this weekend and we're back to potentially strikes or this lingers, the president in a recent interview said it could be closed until September. Then what happens if we get higher gasoline prices in America, closer to $5 a gallon?
Look, we've done everything we can since the day it started to both fix the existential problem. A nuclear-armed Iran becomes a much larger threat to energy supplies, to peace, to commerce. That people just don't appreciate how critical that issue is. So to solve that fundamental problem, it's coming at disruptions, it's coming at some costs. I think the Trump administration has managed them fabulously well. I think we'll continue to do that. We may use different levers going forward, but we will do everything we can to get through, to achieve the fundamental objective that we will not fail on.
So what kind of levers? There were rumors months ago about an export ban. I know you said that's not happening. That will never happen?
No export bans. No export bans. I've got a couple of reasons. Number one, we produce more than we consume. So what are we going to do? Shut in our wells and reduce our production down? Number two is a large part of the Trump administration diplomacy is to make America an energy superpower, which means to be a reliable supplier to our friends and allies abroad of oil, of natural gas, of coal, of next-generation nuclear power plants, of fusion energy technology. We want to develop energy resources in this country to benefit Americans and to benefit our trade balance abroad and support our allies so they don't have to depend upon unstable, hostile suppliers.
Regimes. There was a recent Reuters poll that showed 80% of Americans say the current gas prices are straining their household budgets. Is the administration still pushing Congress to look at a gas tax holiday, especially over the summer?
Trade-offs in all of these issues, but the overriding objective is lower energy costs for Americans across the board.
So is that a yes? I mean, is it still one of the tools in the toolbox?
It's possible. It's possible.
Do you think Congress has the votes? You'd probably have to do it before the midterms.
Yeah, look, my bigger effort right now in Congress is permitting reform. You know, we want to leave behind as much permanent change as we can. So we won't go back to the energy foolishness we suffered under the Biden administration, and it began under the Obama administration. We just got to stop this mindset that somehow making energy expensive in the United States and exporting our industries is somehow going to save the world from climate change. I've been looking at data and studying climate change for 20 years. It's just amazing how that issue, a real issue, but sort of a slow-moving, actually not that big deal of a problem, has just become so politically dominant among the left in the United States and, of course, across the board in Europe. I think we are moving that tide back. We just got to get back to focusing on human beings.
It is shifting. You hear a lot of Democrats now, especially ahead of the midterms, especially ahead of 2028, saying we should focus energy more about using an all-of-energy approach because they want to talk about affordability, less so about climate change. When it comes, though, to policies that the United States could do, besides the Jones Waiver Act, anything else that you think could be pretty short-term on the horizon for this summer?
Things we're talking about, but not we look through ideas and decide if they're viable, and we'll come out and engage in that. But of course, it is a constant dialogue with energy producers here. How can we be helpful? Like the EPA, we changed the regulations for blending for gasoline this summer. That's going to meaningfully increase America's ability to produce gasoline with our existing refinery capacity. That's going to be helpful.
There's also the drawdown the SPR. Do you have plans to refill it?
Yeah, there's another, I would say, stark contrast. The previous administration sold 200 million barrels of oil without an interruption of flow around the world, trying to push down prices for a midterm election. We've not sold a single barrel of oil. Every barrel of oil we have released has been a trade. It's been an exchange for a barrel coming back. And the exchanges we completed so far, this is not the current ones that are going on right now. I don't have the data on them. But to date, every barrel we've released, We've gotten 1.28 barrels coming back. So that's 35 to 40 million barrels of additional crude that'll be in the SPR at no cost to American taxpayers.
Where do you think the SPR will be at the end of Trump's term?
Much fuller than it was before we arrived. I would like it to be completely full. That's what it's there for.
Is there a price level that you would want to go out and fill it up more?
If there was, I certainly wouldn't share it. But also, it's not as simple as that. You know, you've got to get money from Congress to fill the SPR, and that's very challenging. There's not a great political constituency that wants to spend money today, you know, to prepare us for a problem way down the road, which is exactly why no previous president would take Iran head on. Like in the short term, it's disruptive. Fixing long-term problems, that's tough to do in politics. That's a unique thing about President Trump. He has the courage to take on this Iranian issue where all the news is short-term. He's terrible, Iran's winning and all that. It's all wrong. It's all nonsense. We are living with higher energy prices. He takes all the negative, but people don't, certainly in the media in general, don't think about these long-term issues. He's engaging in a long-term strategic issue that's going to better not just the Middle East, but the world for generations to come. And he's taken whatever the heat comes, you know, through higher prices. But I think he's managed that quite well. So the impacts are real, but again, less impact on prices than just the foolish policies and rhetoric of the Biden administration.
Do you think the psychology has changed? It used to be that OPEC, Saudi Arabia, now the UAE has left, was the swing producer, the central bank of oil. Why wouldn't it be the United States?
Well, we produce far, far more than Saudi Arabia. In fact, you know, the way people report 100 million to 105 million barrels of demand, that's liquid fuels. Crude oil is the biggest component of that, but it's just one piece of that. If you look at total liquid fuels, the United States is 24 million barrels a day of production in a world of about 105, 106 million of demand. So yeah, we are the big dog in energy production. But it's all by businesses here. We don't decide at a government level our production levels, so we never play a role as a short-term swing producer. We do lean in as we are right now, but I think Saudi Arabia's role in the oil markets likely will continue as it has. They have been willing, and with a few partners, but mostly Saudi Arabia, they have played a sort of central bank role of oil. I think the net impact of that overall has been positive.
But do you think their hand has been weakened with the Emiratis leaving the group?
Sure. Less oil will be controlled in that OPEC fashion. UAE is a major oil producer, super successful economy in that country, and they're investing and growing their productive capacity. Kuwait is leaning in and growing their productive capacity. People are just getting out of this silly mindset. Like the goal was to hit peak demand for oil, right? And then we're all, that 7 billion people that don't live like us, sorry about them. You know, it's just crazy how far off a human-focused and a math-focused dialogue we're in. I'm thrilled that the world is swinging back to common sense. It's thinking long-term. We need massively more oil in the world, massively more natural gas, massively more energy to continue to grow our economy, to reindustrialize our industry, and to lift everyone's standard of living up around the world.
An audience question, also something I'm curious to get your take on, is American investment regarding Venezuela. I was there in Caracas. You were the first secretary to go to Venezuela since the capturing of Nicolas Maduro. What is the status now? When was the last time you spoke to Delcy Rodriguez? Do you expect more American companies to go produce there?
Lots of American companies going down there, a lot of business. We are working, my team, and including myself, is in regular communication with Delcy. 25 years go in the wrong direction. Venezuela is another case. Amazing how low it's sunk. 8 million people leaving, millions leaving Venezuela to go to poorer countries. So, is it Norway today? It's not Norway yet. But the pivot, the change in the improvement in the conditions in Venezuela is going quite well right now. A lot of work to be done there, but oil exports out of Venezuela have more than doubled since January 2nd of this year. So that's also helpful. And of course, when most of the American refineries were built in the 60s and 70s, Venezuela was the largest exporter of oil in the world. Third largest producer, biggest oil exporter. So a lot of our refineries were built to handle those lower cost, high viscosity crudes. So it's great news to see that production growing. I think you will see tremendous growth in Venezuelan production in the coming years.
Another question from the audience is about the surge in power demand for data centers. Why is the Trump administration not embracing all sources of power, including renewables?
Well, embrace, it depends how you view the word embrace. The wind subsidies went on for 34 years.
President Trump doesn't like windmills.
No, he doesn't like windmills. But he doesn't, like a lot of people don't like windmills. You know, the public pushback across the heartland of America and certainly in the coastline of America against wind power has been enormous. And the other thing, put in context, wind power, think of how much money has been spent on that. It's 1.5% of global energy. And everywhere it's got deep penetration, you know, Germany, Denmark, United Kingdom, most expensive electricity prices in the world. Does President Trump want to have the most expensive electricity prices in the world? Absolutely not. Absolutely not. And the people look at this stuff wrong. They think of electricity like gasoline or oil, where you can store it and sort of use it, because it doesn't work that way. So we look at the data. Oh my gosh, if you add up wind and solar last year, you know, they were 16 or 17% of electricity. They're meaningful for American electrons. Why don't we get more of those electrons on the grid? That's not the way to think about electricity. Electricity is all about what's the most efficient way to deliver at peak demand time. When we had that cold winter storm Fern that came down the end of January, probably the greatest test we've seen of the East Coast electricity grid. At peak demand time on January 27th in New England in the evening, 2% of New England's electricity came from wind, solar, and batteries combined. 3% of New England electricity came from burning trash and wood, right? That's, if you're there in the middle of the day when we don't really need you, all you're doing is saying some other producing some source, typically it's a natural gas power plant, has to turn down. You know, you're not adding to the capacity of the grid unless you're reliably there at peak demand time. And as Democrats have pushed a little bit more heating to electrification, which is a horribly bad idea, it's a guaranteed way to make heating much more expensive. And we can't put nearly as much energy through our electricity grid as we can through our natural gas pipeline network. But in any case, those policies are happening. So peak demand times are more and more going to the winter. You know, think of in New England and New York State. Solar is irrelevant in the winter. And when you get a large cold front that comes in, it's a high pressure air mass that just sits there. Well, wind goes away too. So all that stuff you built, all those associated transmission lines, they don't add anything to the productive capacity of the grid. They produce electricity some of the time, but that's not what matters. You have to be there at peak demand time. If we're going to put on new AI data centers and reshore manufacturing, we have to increase our capacity to reliably supply at peak demand time. We want to do that as economically efficiently and as quickly as we can. We're doing everything we can to get nuclear going. That's coming. We had reactors already go critical. But in the short term, in the next few years, it's going to be natural gas. It's going to be expansion of existing capacity. We're restarting 3 large nuclear power plants. We're uprating a number of power plants. We're changing some foolish regulations. The only reason we didn't have to close the schools in Florida during that cold front is we said all that massive amount of backup generators, turn them on. Don't wait till the lights go out and we have a blackout and then turn them on just for your store. Turn them on, and that's added capacity to the grid. So we're having to do some creative things so that we can enable reshoring of manufacturing here, meet this rising demand for AI, and ultimately just change the way decisions are made at FERC and hopefully ultimately across state utility commissions. We changed mandate from affordable, reliable electricity for Americans and American industry, and we just got off track, and the country just went crazy as Europe did, thinking somehow tweaking the American electricity grid was going to change global emissions. Just a colossal mistake.
This is a more sophisticated answer than the president saying the windmills are not good for the birds. So I appreciate that. Just my final question, because I think I was the first reporter to ask you if you were going to go to Venezuela, and you said yes, and then you went. Would you be the first secretary to maybe, I don't know, go to Oman and see vessels come through, or even maybe go to Iran at some point?
It's funny, early on in this crisis, the president, who has an underappreciated great sense of humor, we were at dinner, I don't remember where we were, and he said, "Have you told Liz you're going to Iran yet?"
Really?
He did say that. He did say that. So, who knows? Again, the goal is to drive progress. The goal is to drive improvement. If we get a reasonable resolution and we're implementing something, it's certainly a possibility.
Maybe I can come on that trip with you. Secretary Wright, thank you so much for joining us.
Thank you.
All right, that was Bloomberg Anne-Marie Hordern. They are speaking at the Bloomberg Energy Security Executive Briefing in Houston with Christopher White, Energy Secretary, about all things energy and energy policy from this administration going forward. And again, this administration leaning all in on some of the fossil fuels, and that's critical here for this transition to AI. I think what we've all learned is that electricity is critical for these data centers. All right, let's get a little bit of a reset here. We can do that with Matt Piper. Get a Bloomberg Business Flash, Matt.
Hey, from the Bloomberg Interactive Brokers Studio, I'm Matt Piper. SpaceX is ready for liftoff on Wall Street after raising $75 billion in the world's biggest ever IPO. Launch conditions are favorable. Let's see how Wall Street is reacting. The S&P down and NASDAQ all up right now. The S&P up 0.3%. The Dow up 0.5% or 264 points. The NASDAQ up 0.1%. Oil and gas prices are down on hopes that the U.S. and Iran are close to a peace deal to end a war that has roiled energy markets. It's not the first time markets have reacted with optimism to the prospect of an end to this conflict, only for hopes to be dashed by a failure to reach an agreement. Brent right now at $89 a barrel, WTI at $86. As for stocks we're watching, Adobe shares are down after the software maker said CFO Dan Durn would be departing the company next Monday. That news comes after the CEO announced he would resign earlier this year. Adobe right now down nearly 7%. Any DoorDashers here? DoorDash has introduced an in-app artificial intelligence chatbot to help you make restaurant and grocery orders, Charlotte. And recommendations.
The fees kill me.
Yeah, the fees, tell me about it. They're like $5, $6 every order. Recommendations are based on past purchase behavior as well as social media reviews and blog posts. It's called Ask DoorDash, so the kids will probably be using it whether you like it or not. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
It's all about reducing that friction
Yes.
so that it makes
Yes.
it easy for you to just press a button and buy it.
Yeah, no questions asked.
All right, Matt, thanks so much. Appreciate it. Matt Piper, again, here at Bloomberg Business Flash here. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers Studio, streaming live on YouTube here. Red headline crossing the Bloomberg terminal. SpaceX, this is according to SpaceX, SpaceX is indicated to open at $168.75. Remember that the IPO priced at $135, so we'll stay on top of that. I got my Bloomberg quote up for SpaceX, so we'll know what's going on there. Christina Hooper joins us here. She's a chief global market strategist for the Man Group. Christina, this SpaceX IPO certainly front and center for this marketplace here. Just put it in context before. You've been doing this a long time. You've seen a lot of big deals come along, a lot of market-defining IPOs. How do you view the SpaceX IPO?
I think this is absolutely a market-defining IPO. Paul, it is so unique in that it is a conglomerate IPO, which I think is pretty extraordinary. There are so many different facets to it. And of course, it has perhaps the most wonderful way to enter capital markets in that it is headed for index territory. And so that creates, built-in quite significant demand. So I think a very unusual one, but part of several different IPOs coming to market that are part of what I think is an incredibly important industrial revolution that we're experiencing. So this is a period where there's a lot of excitement about technology and innovation, and this is helping to define that.
Absolutely. We're going to see how this sets the tone for Anthropic and OpenAI's IPOs, and it's going to be this banner year of mega tech IPOs. Christina, I have to admit that I'm kind of tired and exhausted of the SpaceX hype machine. I kind of just want to get past this first day of trading and move forward, right? Get to 6 months in, 1 year later. What will matter in 6 months' time or 1 year's time when it comes to a company like SpaceX, which is full of promise, full of ambition, full of superlatives, but at the end of the day, this is not a free cash flow positive story either, and it's not making money.
Well, this is not just SpaceX. This is a lot of technology companies that have very stretched valuations. And so much will be dictated by the monetary policy environment, the overarching capacity for investors to tolerate high valuations if we're to see yields go up on the long end. We know that historically, higher yields have exerted downward pressure on equities, particularly long duration assets like tech stocks. And so it is something to keep in the back of our minds. There is a lot of exuberance now. Some might argue there's a bit of irrational exuberance in here. And we just have to recognize that the macro environment may dictate the fortunes of these stocks come 6 months, 12 months from now, especially if we have a Fed that is more aggressive in tightening than is expected.
So, Christine, if we can step back from the SpaceX deal, what's kind of your broader market call here when you think about global allocations?
So let me start by saying geopolitics doesn't matter to markets until it's all that matters to markets. And I think we're in the stage right now where it really doesn't matter. And for the most part, markets are naively optimistic. If we hear that we're close to a deal between the U.S. and Iran, markets believe it and move up. And I think there is a willful ignoring of some of the great risks that the economy, the global economy, and the U.S. economy are facing right now, in terms of the potential for significantly higher energy prices, gas prices in particular, that are going to be very problematic for consumers. We've heard oil execs warn about that very recently. And it's not just oil and natural gas. We have to worry about a number of other commodities that are impacted by the conflict in the Middle East, including helium. I think not enough attention is being given to this, but about a third of the global supply of helium comes from Qatar. And we've seen facilities hit in Iran strikes in mid-March. So even if the Strait of Hormuz were to open up tomorrow, we would not be back to anytime soon. It would take probably more than a year to rebuild. We would not be back to capacity on helium. And that is critical and not substitutable in the semiconductor manufacturing process. All of this is to say that I think there's some very real vulnerabilities as we look at assets across the globe. And what I would say is it's very important to be diversified in this environment. And it's also important to be thinking about those downside risks, having exposure to areas like European equities that don't have much exposure to tech.
All right, good stuff. Christina Hooper, Chief Global Market Strategist from Man Group, joining us from Connecticut. Thank you so much. Great speaking with you, and have a fantastic weekend. We go back to SpaceX. I know I just said that I'm a little tired of waiting for this to begin trading, but we are still waiting. And the NASDAQ has told us about a half hour ago that it anticipates the IPO to open for trading shortly. That is yet to happen. So we're going to check in right now with Yahira Anand. She is our Bloomberg Television reporter, joining us right now from the NASDAQ. Yahira, tell us a little bit more about what the anticipation is like there at the NASDAQ, and the pricing of the IPO and how it's likely to open.
Hi, Scarlett. Well, there was a lot of fanfare this morning. The president of SpaceX was here, along with Adina Friedman of the NASDAQ and the CFO of SpaceX, while Elon Musk was over in Texas. But they were enthusiastic here. They had Rocket Man playing in the background. I will say things have quieted down. There are still crowds outside, but there is still major anticipation of this across Wall Street. And we've gotten several indications throughout the morning of what this will open at. The latest points to an opening of $168.75 a share, down from earlier indications near 175, but at 168.75, that's still roughly 25% above the IPO price, and would give SpaceX a valuation of $2.2 trillion. That would make it more valuable than the likes of Meta, Saudi Aramco, and even Tesla itself. As I said, we are still waiting for the first trade. I will say I'm seeing some movement in the background, so maybe it could happen soon.
So it's interesting here. We know IPO market's really heating up, and it's really heating up between the New York Stock Exchange and NASDAQ for some of these listings. What are the folks at NASDAQ saying? Because this will be the biggest IPO of all time. That's quite a feather in the cap for NASDAQ.
Exactly, and it's the first one to come out of the gate, out of the three big ones that we've been anticipating: SpaceX, OpenAI, and Anthropic. And what NASDAQ has really been doing is aggressively courting these mega IPOs. They want to get them here. And earlier this year, NASDAQ, we know, did change its rules to create a fast track path for the path into the NASDAQ 100, allowing a newly public company like SpaceX to join the index potentially in 15 days. So we could see those passive flows in that time frame, and it is something that will impact the market. It's 4 weeks to come, not just today, but obviously all the enthusiasm is today since it is launch day.
Okay, so Yahira, how are people talking about the lockup period expiration? Because you've got the fact that there's not a big float in this IPO, but this listing is going to make a lot of people a lot of money once they can get out of the stock.
Exactly, and I will say that is why there was so much excitement here at the NASDAQ, because you had all these investors standing behind the president, Gwynne Shotwell, and the CFO. And these are the people who have been with SpaceX from the start, when it was, it's still an unprofitable company, but when it was a tiny company with a big vision and a big leader, and a big leader. So there was a lot of excitement because of that. We know these folks are going to make a lot of money. I'm not saying that Peter Thiel was here, but we know that his fund could make tens of billions of dollars. So that is where the enthusiasm is coming from.
Right.
All that liquidity will now flow back to venture capital, back to the private market. So it's an exciting day for those who bet on Elon Musk at the start.
All right, Yahira, thank you so much. We really appreciate it. Yahira Anand, she is a TV reporter for Bloomberg News. She is at the NASDAQ here, where we await the opening of this IPO. Again, $135 was the IPO price, indicating higher. Listen.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. SpaceX still waiting for that to open, but let's continue to talk about space. Why not? Ross Hamilton, Chief Operating Officer for Space Network, joins us here in our studio. Ross, one of the things that I think got investors' attention on this roadshow as I try to think about the opportunities for SpaceX and for the industry is the company and Elon identifying a $29 trillion total addressable market. Do we have any idea where that number really comes from?
Well, thanks for having me on again. It's a huge number, it really is. I don't know if AM could really add up the numbers. I'm not quite sure exactly where that comes from, but I think the thesis is what SpaceX is eventually going to become. It really wants to be the infrastructure that's running all industry, all markets. So if you think about, the internet in the 90s, they're really trying to create the backbone for AI infrastructure, compute infrastructure for this century. So what they're looking to do is put a lot of AI infrastructure in place, lots of chips, lots of robotics, not just for their own use for SpaceX and not just for Tesla, but they're looking to do that for all industries. So if you have a long-term view on AI, chips, and infrastructure and compute, then the argument is that all industries would benefit from that.
Of course, SpaceX has become a government contractor. It's done a lot of the work that NASA used to do. So one of the addressable markets is the U.S. government, and that's a big customer. How can we quantify just how big of an opportunity that would be going forward?
So I think it is pretty big. I mean, if you think about the relationship with NASA as well, NASA's focus is shifting to more exploration, but from a government standpoint, it's definitely be more on the kind of national defense, Golden Dome type strategy. As long as the U.S. particularly wants to be the dominant force and has recognized through Space Force that much of the military will be guided through satellites and that technology, I think it's it's basically our prime for the U.S. government.
So how do you guys think about, how does this relate to your company and kind of what you guys are doing?
Yeah, so we're really focused on the private sector. So we're helping space tech companies who are not yet public commercialize, so raise capital, find customers, focus on revenue. And the thing that's really important there is with what the SpaceX is doing is it is going to generate a lot of liquidity in the marketplace. So as people spin out from SpaceX, go and do their own thing, it's drawing attention from private equity and venture capital into the market. That's going to draw a lot of capital in. So from our standpoint, it's going to increase this focus on the opportunity. But our argument is, though, that it has to be on the basis that there's real customers for those space technologies. And our thesis is that aside from governments, and NASA who are doing space exploration, that's actually in non-space industries. So financial markets and global logistics, agriculture, pharmaceutical, that's the market there. And that remains an opportunity for a lot of these innovative companies. I think SpaceX is more of an infrastructure play for those other markets.
It's an infrastructure play for now. It could also become an electric vehicle company soon as well, or that'll be kind of brought into its orbit, because there's a lot of talk about how Elon Musk might combine SpaceX with Tesla. That just becomes another kind of company then, and not really comparable to what you do.
Yes. I think there's a couple of things there. From SpaceX and Tesla relationship, one of the ideas originally that he wanted to get into EVs is ultimately he wants to be able to have vehicles up in Mars. For that you need electric vehicles and power. So that's part of his broad, interplanetary, species strategy there, right? But when it comes back to what's back on Earth, it really is about building infrastructure and providing things that are used or created for space, but used back down on Earth. And I think there's enough of an alternate market to SpaceX to allow those things to happen. So an example would be the International Space Station is coming down in a couple of years, and there's going to be new commercial space stations going up, which is going to allow drug research and other types of research and in-orbit manufacturing to happen. That is going to be core in other parts of the infrastructure that the SpaceX will not serve.
How's the capital raising out there other than SpaceX for companies that want to do space-based businesses?
It's actually been very healthy over the last number of years. I mean, you could argue it's been quite healthy over the last 15 years, but the last couple of years, there's definitely been an inflow of private capital. It's not, for things that are like rockets and hardware and satellites, it's traditionally not been a venture model.
Right.
But I think they're starting to realize that this is a play towards more venture-like businesses that can run on that infrastructure.
You talked about how this will create a liquidity event, this IPO.
Yeah.
It's going to make a lot of people rich. We talk a lot about the SpaceX current employees and former employees. If they do become very wealthy and decide to step away and stop working, they may go off and start their own company as well.
Yeah.
This creates this large ecosystem. Do you have any sense of timing around how this plays out?
That's a hard one because I'm sure there's going to be a lot of lockups in there and a lot of people looking to fulfill the SpaceX mission. But I think certainly over the next couple of years, you're going to see a lot of that activity happening.
Absolutely. All right, Ross, thanks for joining us. Ross Hamilton, Chief Operating Officer of Space Network. Red headline crossing the terminal. That is moving the markets. Iran's Arachi says U.S.-Iran MOU, quote, has never been closer. We've got the S&P lifting higher on that. We've got oil trading lower, so we'll keep an eye on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. Thank you, Ross.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Matt Piper. We've got a lot to cover today. Of course, we're waiting for the opening trade of SpaceX. The ticker is SPCX. That has not yet begun, but as you know, it IPO'd yesterday at $135 and is indicated to open at $162. So that would be a substantial increase. We will, of course, update you when that happens. We're also going to check in at the Bloomberg Energy Security Executive Briefing. Anne-Marie Hordern is there, and she will be speaking with the CEO of Chevron. Later on, we've got Munis in focus, and we're going to check in with Aaron Hudson of our Muni bond team to talk a little bit about the AI funding boom reaching the Muni market as well. Seema Shah, Vice President of Research and Insights at Sensor Tower, will weigh in on the SpaceX IPO. Hopefully, the shares will begin trading soon, and we can get you up to date on that. And, of course, we're going to check in with Anurag Rana on some other big tech news, including Adobe's CFO departing, while the company is also searching for a new CEO. So lots of personnel changes there at that company. First, let's head over to Matt Piper with a Bloomberg Business Flash. Matt.
Hey there, thanks. SpaceX's historic IPO is shaping up to be a major test of whether the AI-driven U.S. stock rally is nearing its peak or still has room to run. So far, the evidence points to the latter, especially with OpenAI and Anthropic not far behind. Well, it helps that a U.S.-Iran possible truce has restored a more constructive backdrop for markets just before Elon Musk's big moment. To the big board we go. Everything is up. The S&P up 0.6% or 43 points. The Dow is up above 1%, 520 points. The Nasdaq is up 0.3%. The Bloomberg Dollar Spot Index down fractionally at 1206.41. The 2-year yield is up about 1 basis point. The 10-year yield is up 1 point as well. Oil prices are at their lowest since the early days of the Iran war on hopes of this peace deal. Brent down $89 a barrel, WTI at $84. Back to SpaceX, of course, this question: will OpenAI and Anthropic have a similar type of welcoming to the public world? Justice Parmar is with Fortuna Investments.
I think it's going to be an interesting, experiment of sorts. Never been done before. You want to be out early. I think Elon's done a great job of really pushing his team and his crew to get this stock out early because you're cleaning a lot of money out of the market. And so as the IPOs continue to stack on, you start to inherently develop risk because if one of them starts to trade underwater, it's going to have a follow-over effect on the one preceding that one.
Well, have you questioned just how rich a trillionaire is? Over a 100-year lifetime, guys, it would equal spending $27,000 a day. That's a lot on DoorDash or something like that.
Oh boy.
As for Elon Musk, with the money, he could fund 68 U.S. election cycles or buy every car maker in Europe, Japan, and the U.S. It's a lot of money.
Yep.
For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt, thanks so much. Appreciate that. Matt Piper. Stocks definitely turning higher, as Matt was reporting on the back of that Iranian news, saying that a deal is pretty darn close. Let's see where some individual stocks are on the move today. We can do that. We are joined by Bloomberg's Avalon Purnell. She's an equity reporter for Bloomberg News. Avalon, what are you looking at today?
We have to start off with Adobe. That's currently falling about 6.7% now to hit its lowest intraday level since 2018. That's ticker ADBE. And that's after the company announced a departure of its CFO just months after the CEO also announced plans to step aside. The news also comes as Adobe reported a second quarter beat, but gave a full year forecast that fell a little short of expectations. And as you can imagine, the update led to a slew of downgrades and price target cuts as Wall Street analysts really questioned the path forward amid this transition. Evercore writing that the sentiment is unlikely to turn positive until a new management team is in place.
Oh boy, so we could be waiting for a while there. Okay, next up.
Lennar, that's ticker LEN, currently dipping about 3.7%. That's after the home builders delivery forecast for the third quarter fell short of expectations. Management again calling out to continuing pressure from high interest rates and geopolitical uncertainty, which is obviously spurring some customers to hold back on purchases. Truist also writing that while the results were fairly disappointing, it was somewhat encouraging that the results did not include a margin breakdown. Also worth noting that their peer, KB Home, called out to similar concerns last quarter, and they will be reporting June 23rd.
I mean, interest rates higher. The 30-year mortgage, that can't be helping. 6.5% for 30-year mortgage?
Exactly.
All right, so there you go. I'm not refinancing the mortgage on the Jersey Shore compound yet. Give us one more here.
Medline, MDLN, currently slipping about 2.3%. That's after the medical supplier suffered another setback from a fire at a distribution facility. Leerink expecting some short-term financial impacts since, at a minimum, this is going to be taking a distribution facility offline. But that's not the only hardship that Medline has faced recently. Just last week, the FDA sent them a warning letter for several contamination incidents at a manufacturing facility. And now that company's stock is down about 12% since its debut as last year's biggest IPO.
Oh, I like the way that you ended that. It comes full circle, right? I was just going to say, this was a big IPO when it came out. And that's a reminder that, at least in the first year, a lot of the IPOs don't pan out the way you expect.
Yep. That's a big risk as we look to float, a gajillion dollars worth of SpaceX here. Avalon Purnell, thanks so much. We appreciate that. Avalon is a equities reporter for Bloomberg News. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen here. I'm looking at my SpaceX quote here. I'm using the BQ function, the Bloomberg quote. That gives you tons of information, including where this thing is indicated pre-market. I ain't got nothing here. So
I know, it says IPO positioning window started.
Yes, exactly. So there was some reporting I saw on a Bloomberg News that 162 would be the initial indication or the latest indication here. Let's go to George Ferguson here. He's been tasked to lead the research efforts here involving lots of the analysts at Bloomberg Intelligence because this is a technology play. It's an AI play. It's a rocket ship play. You got to have some experts. And fortunately, Bloomberg does for all of those businesses. George, what do you think the buyer of a SpaceX, what do you think the buyer of a SpaceX share, what is he or she thinking here when they place that order?
Yeah, I mean, I honestly think most of them are believers in Elon Musk, believers in his vision of the future and his ability to get things done, because I think you got to be a big believer to buy in it at these valuations. So that's why I think you saw so much of the IPO get shunted into the retail side of the world, and because I think that's where you'll see a lot of support and buy into that vision.
It feels like the SpaceX IPO is a real beast. I mean, you look at the superlatives surrounding it. It's the biggest IPO ever. It'll be the first company to move people to Mars. It's going to mint the world's first trillionaire. I almost said billionaire, and I had to correct myself.
Yeah, I know. We have to.
and this is kind of the point, right, George? I mean, this is the Elon Musk formula. Create an entirely new category and then, claim leadership and set the standard and, make everyone follow in your footsteps. If that's the case, how does someone analyze a company like this? Because whatever you do, he's going to come back with, well, it's never been done before, so you can't, compare it to anything.
Yeah, I mean, that's why it's extremely hard. But I think when you look at it, I think we do understand pretty well the launch business as it stands today. We understand the connectivity business, the satellite business pretty well. And I think the big variable here again is that AI business, and it's a variable out there for a number of other companies. But look, I think launch, we saw some 76% of the launches were primarily for Starlink. So when we think about the demand for launch in the future, look, I think there'll be more constellations that go up. But I don't think there's going to be more than 5 or 6 LEO constellations in the next couple decades, and they're the ones that use a lot of satellites. They're the sort of 10,000 plus kind of constellations. And I think of those 5 or 6, I think you're going to see 2 US are kind of, Starlink, and they're probably Amazon LEO. I think Europe might want one of their own. I'm sure the Chinese want a couple of their own. Maybe India gets in this game. I don't think anybody else's constellation is going to get launched on SpaceX launches, right? So I think it's going to be, even I think Amazon LEO is going to be launched largely on Blue Origin rockets as they get that going. So I think we're kind of looking at space kind of a flattish, maybe a slow growth kind of business as they do government work and things like that. And the connectivity business, that's all about, that's data, broadband data, that's direct to cell communications. We kind of understand that too. We have terrestrial providers. If you're in a big population center, they're going to do it better than SpaceX is going to do, given latency of going to a satellite, problems of being in buildings. But they're very important areas of the world that need that connectivity to a satellite to stay on the, on the web and connected. And that will get better over time. But I think that's, maybe it's we're seeing sort of 20-ish% growth in the last couple of years, but some of the metrics are coming down on the amount each subscriber spends. It's decently profitable. It's not wildly profitable. So to me, everything shifts to AI, right? It's a big bet on data centers, putting them into the sky, putting them into orbit. Where you'd probably be able to do it cheaper, cool it cheaper, powered easier, and then we'll stream data up to satellites, and Grok will help us figure out what to do in the future, and that's kind of to me the big vision.
Yeah, I'm looking at just kind of where the revenue comes from, George, just on a trailing 12-month basis. Round numbers, $11 billion from the connectivity business, $4 billion from the space business, and then at the bottom is AI at $3 billion of revenue. But when you think about a company that's going to be valued at least 95 times revenue, it seems like the buyer today is saying, I'm putting my money on this AI thing because I think that's going to be something just astronomical. I guess it's the AI play that kind of gets you to where you need to go for if you're a long-term investor.
Yeah, I think if you look at some of the recent deals cut with Anthropic, right? So that's $1.25 billion a month. I guess as long as they keep signing that agreement, you're going to see that AI revenue jump up pretty dramatically here over the next year and years, right? So I think when we look at sort of what we think is going to be at the end of 2026, we think it's going to be a $14 billion connectivity business and a $14 billion rev AI business. And I think one of the interesting things we saw is SpaceX built Colossus 1 and Colossus 2, the 2 big data centers down Memphis, Tennessee area. They did it in existing buildings so they could get it up and running very quickly. It's sort of in typical Elon Musk way. He's looking to drive down the cost quickly. It's just, that's smart for any business person, put a lot of capacity online. Now he has the opportunity to sell some of that to Anthropic. I think Google's in there too. So you're going to see that AI, revenue line drive up, but they spend a lot of money to keep that going, right? I think they're going to consume even more than the revenue they bring in. And there's like $4, $5, $6 billion deficits in that operating profit for that business. So you've got to find a way to power all that investment you need. This IPO is about, we're going to invest a lot of that money into data centers, and we'll invest some of it into Starship because we think long-term it's going to be easier to make those data centers in space. It'll be cheaper. And so that's where a lot of this money goes. That's the bet.
Okay, so there's a lot of need for capital, and we know that's the case, and this IPO gets them there. I guess the big question is how many more times they'll tap the public markets, whether it's for equity or for debt. George, thank you so much. George Ferguson, our senior aerospace analyst here at Bloomberg Intelligence. We're going to head over now, back over to Houston, because our Anne-Marie Hordern, Bloomberg Television anchor, is sitting down right now with the CEO of Chevron, Mike Wirth. Let's listen in.
Seemed kind of crazy that you were even headquartered there at one point.
Well, I don't think in the beginning it made a lot of sense. I mean, we made the first commercial discovery in California in Pico Canyon in 1879, and we built our first refinery there in Northern California. Second refinery was built. The refinery is called El Segundo. It was the second refinery. There's now a city that's named after our refinery. So the state grew up around us more than us going to the state, and so we are part of the state's history. And for an awful long time, California was a big producer. It was one of the biggest producers in the world at one point, and we're an integral part of the economic story in California. Things have evolved, obviously, but it made sense for a long time. It doesn't make sense today.
Okay, so we're going to start with more so the news of the day and what's going on in Washington. I know you've been keeping up with the headlines from the president. Secretary Wright said 7 million barrels a day are getting out of the Strait of Hormuz, which would be a pretty big deal. How do you view the market dynamics right now? What actually is coming out of the Gulf?
Yeah, our view would be it's probably not quite that much. There are ships that have been transiting out, typically with transponders off, typically at night, and with some support from the U.S. military, and that has helped ease fundamentals in physical markets, and so we've seen price action that has been a little bit, I think, different than people expected. But what has been true through it all, and we can talk about it a little bit more if you'd like, is the market's been pretty incredible in terms of how it's adjusted, both on the supply and the demand side, to buy time and kind of address the risks that exist.
What is the driving force behind that? Because most people thought we'd be higher than $150 a barrel.
Yeah, well, early on, you saw, the paper markets trade on expectations and narratives. And early on, there was a lot of fear that prices were going to go that high. So you saw paper markets really take off. Physical markets followed. And then things have reversed. As the narrative has been, we're closer to the end than the beginning. There's a peace deal that's just around the corner. And physical markets obviously have had to deal with the realities of supply constraints. Early on, demand was strong, and in fact, you saw people buy further out, particularly Asian refiners that typically might buy a couple months in advance, covered themselves further. And so you actually had demand pulled forward at the same time as supply was shut off. And so that's where you saw differentials get very wide. But subsequently, you've got supply from SPRs, you've had supply from ships on the water that were sanctioned and were then allowed to unload. You've seen commercial inventories drawn down. You're seeing turnarounds and maintenance activities deferred in facilities that allow supply to keep flowing. Some movements now through the Straits. So there's been a supply response, as you would expect, and there's been a demand response. China had been buying a lot of oil for their SPR. That has come down. You've seen certain measures, primarily in Asian economies, to reduce energy intensity of their activities. You've seen some substitution into coal and other things that have taken some pressure off of markets. And so both supply and demand have responded, and I think the market has bought time. Now, the reality is inventories are a lot lower today. other than in China, where there still are very healthy inventories. Whether you look at products or you look at crude oil, we've moved from comfortable inventories under normal times to what would be, soon to be uncomfortable. And I think that's the real question: is how much longer can these measures kind of ameliorate the risk? And at some point, they may not be able to.
How much longer does Chevron think? Is it a July, August story? Or?
It's probably in that time frame. And that's a little later than I would have said if you asked me 4 or 6 weeks ago. And so particularly the reduced buying out of China is something that we didn't anticipate at the degree that we've seen now. And so I think that, along with now the fact that we are seeing some of these flows out through the Strait, probably have pushed that timeline out a little bit more. So I heard your earlier comment about the president's remarks about Labor Day, or kind of towards the end of the summer. The market may be able to kind of hold things together out into that time frame, but not forever.
How confident could an executive be that we are close to an agreement if the president has said it dozens of times since the conflict began at the end of February?
Yeah, I mean, I think the evidence would say you shouldn't fully believe that until you see the agreement signed and you see the actions begin to come into effect. Iran has a long history of being a kind of a patient and immovable negotiating force, and so this has been hard to call. And markets are hard to predict, wars are hard to predict. I think negotiations with adversaries like that or counterparties like that are also hard to predict. And so, and the market seems to be somewhat discounting these things. I mean, you mentioned yesterday, I think you used the term whiplash. The Karg Island statement didn't seem to send the market up the way it might have a month ago, and the we're close to a deal didn't seem to send the market down. I mean, softened maybe a little bit, but I think the reactions to these things are less and less the more it gets repeated.
You had mentioned to me, John and Lisa, a few weeks ago when you joined the show, that there are more clashes happening that not being reported. Are you still seeing that?
Yeah, I mean, there was, the U.S. hit a couple of ships just yesterday. That was not in the media initially. It's now out there. There were actually 3 fatalities on one of the vessels. And so there has been activity in both directions, and it usually gets out eventually. We tend to have sources that we see things pretty quickly, but yeah, there's been during the ceasefire where the president said we're shooting at each other less, or I forget the exact term that he used, but it's not a true ceasefire the way I think most people would think of a ceasefire. It's just less shooting.
Right.
Not zero.
I did ask someone about this though, and they said it is pretty good in terms of ceasefire for the region, for the neighborhood. I guess, do you expect then, if the Strait of Hormuz was to open, that the U.S. Navy would stay there for a longer period of time?
Yeah, I can't speak on behalf of what their strategy would be. I think that's obviously based on the context of how they assess the risk, how they believe the Iranians are behaving in a manner that's consistent with whatever the agreement would call for. And the administration has used our forces around the world. We've seen it in a number of different places to enforce sanctions, to interdict ships at sea that are alleged to be in violation of sanctions. And so, I wouldn't be surprised to see a military presence there for some time.
JP Morgan said that 5 million barrels a day is coming out. The secretary says 7. You think maybe it's more like 3. When do we get back to 20?
I think it's going to take time. You've got ships that are out of position. You've got production that's shut in. You've got, normally we've got a very efficient global energy system. It's massive, but it's also highly efficient. It has been put into a state of a different kind of an equilibrium right now. And for that to truly return, you've got to get inventories rebuilt in the Gulf and around the world. You've got to get production reestablished. You've got to get ships repositioned. And that is weeks and months, not days.
What are to be the lingering effects of this crisis on the industry?
Yeah, I think, an event like this typically creates some longer lasting effects. And I think it's a little early to know exactly what those will be. But typically, you see a lot of people concerned about energy security, resilience for their economy. You already see infrastructure projects underway in the UAE. I think you're likely to see other projects like that to build infrastructure to create optionality for logistics. I think you're likely to see countries establish reserves where they might not have before, and maybe higher levels of reserves for countries that have had them. Will it diversify sources? I think this is a place where the U.S. and the Americas are very well set up with strong energy resources, a lot of access to blue water ports, and not the dependence on choke points that you see in some other parts of the world. I do think some of the things Secretary Wright talked about in terms of, and it's the U.S., but it's Canada, it's Latin America. We're blessed with an abundance of resources in this hemisphere, and I do think you'll see this country and this hemisphere become a more important part of the global energy system.
Do you see that right now happening with LNG, given how much Qatar has been taken offline?
Certainly the U.S. is in the midst of, it's already the biggest LNG producer in the world, and there are any number of projects that are advancing here along the Gulf Coast. If we can deliver those projects, deliver the supply, avoid some of the things that, again, Secretary Wright mentioned, that an export ban would send a bad signal, because if we want to be a reliable supplier, you don't want to put that question in people's minds. So I think we're blessed with a lot of gas in this country that will underpin not only our economy, but the global economy for decades and decades to come.
Given the things you mentioned, other countries looking at pipelines, finding ways to mitigate being reliant on the Middle East, do you think in the future we could see the Strait of Hormuz being something that's nice to have, not need to have for the global energy landscape?
There's a lot of assumptions you would make to get there. I mean, the Middle East is... the Strait of Hormuz, you can think of it as the central artery in the global energy system right now, and it's been cut off. So almost from a health standpoint, it's like having a heart attack. So finding a way to be healthier, have a system that's not as reliant on that, I think is important. I think you'll see steps taken to achieve that. I still think you'll see ships flowing through there. It'll be an economic way. The routes are, getting oil on ships and to destinations is a very efficient way to do that. And so, but I think you'll see optionality and alternatives that emerge in the system, so there's not as much single point, risk concentrated in the strait.
Has Chevron thought about rethinking the presence that you have in the Middle East because of this?
We have less exposure than some of our large peers. We produce oil in an area called the Partition Zone that is shared by Kuwait and Saudi Arabia, petrochemicals in Saudi and Qatar, natural gas in Israel. But it's 5% of our production. Others in our industry are 20% exposed. So we actually are looking at some opportunities to go into the Middle East. The risks are very clear, and there's some risks that I think people would view differently today. But the terms are also better than they've historically been. The Middle East has been a tough place to get a good return on your investment. And countries there have been willing to engage in negotiations that offer what we view as a fairer balance of returns for investors. And so we've made some deals there over the last year or two and are in discussions with others. And so we may actually, over time, have a little more Middle East exposure in our portfolio.
Interesting. You're also expanding potentially when it comes to power and data centers in the United States. This is an audience question about Chevron has been talking about powering data centers. Why are you venturing out of your core business? But I guess for the future, it potentially could be a core business. How much are you working with the technology space as we see this build out of AI data centers?
Yeah, so we've been explicit that we were not going to go in the power business as a merchant generator of power to sell power into the grid or to get into power distribution. There are good companies that do that, some of them in this room. And it's a different set of technical, commercial, operating, regulatory issues that you deal with in that business. That said, we generate 5 gigawatts of power every day for our own use around the world in places where we don't have access to a grid and where we have to have highly reliable, large-scale power available to run LNG facilities, large, complex upstream operations. So we've got a lot of experience doing that. As the demand in the U.S. became very, very clear, and as we have relationships with a number of the different hyperscalers, it became evident that a model that would look a lot like what we do today, which is isolated from the grid power generation, high reliability, large scale is what data centers are actually looking for. It allows you to avoid the issues of raising electricity rates for ratepayers because you're not going through the grid, and we've done that. And so, particularly here in Texas, where we're advancing our first project, there's enough gas to supply large-scale power generation for multiple data centers for a long time to come. It's a business opportunity we'll look at, and it's a bit analogous, actually, Anne-Marie, to LNG. You've got in West Texas, we've got stranded gas. The price is negative sometimes because there's not enough capacity to get it to market. There's a lot of gas there that hasn't even. We've only been drilling primarily for oil, and the gas comes along for the ride. There's a lot of gas that you can drill that doesn't have much oil with it, too. So large gas resource, if you can create demand for it closer to the resource and create a different business model, kind of like what LNG was a few decades back, that may be a business that we should be in. So we're going to explore it. We're going to see. We're encouraged by some of the early discussions right now. It'll have to compete for capital with the other uses of capital in our company and deliver strong returns. But we think we've got some projects that can do that.
So the final few minutes, I just want to talk about the politics of your job now. You've almost become, I think, like the chief business diplomat in Trump 2, because many issues. Well, the first really being Venezuela. I mean, there's no way the U.S. government could deal with Venezuela without having Chevron almost on its side. It's the only U.S. company that's operating there. On top of that, tons of stories come out about how the White House is always calling the industry. There's one yesterday about how to think about oil and gas prices. I asked you a few weeks ago if you spend more time in Washington than the Permian. You said you spend more time in Washington. So what advice are you giving this White House right now in this critical moment?
Well, you heard Secretary Wright, who, by the way, is the best Secretary of Energy we've had in this country, at least in the time that I've been dealing with the department. And so the administration reaches out and asks for input. They may not always agree. They might not always, they've got other considerations that they have to take into account. But unlike the prior administration, who really didn't have much dialogue with our industry, this administration does. It's not just Secretary Wright, it's Secretary Berg, it's Secretary Bessent, it's Secretary Rubio. Across the board, we've got a very good relationship with open channels of communication, and they understand the role that American companies play not only in the economy here in the U.S., but around the world. And they want to be sure that they're getting good input as they formulate their policy, actions. So I provide advice that represents what we see around the world in our business, and how we think they could factor that into their policy decisions ultimately, which are their call. And so I don't want to get too deep into specifics, but we give them a factual based set of inputs. We try to be as candid about, here's the opportunities, here's the risks, pros and cons on these issues, and hope that they can then make decisions with better information.
It's clear the president is definitely very sensitive to energy prices. Every time you ask him about this, he says the oil prices will drop like a rock the second there's a deal. Do you think that is why they're pushing so hard for a deal? Are they concerned about $5 a gallon gasoline?
Well, gasoline prices in this country are politically sensitive. I think we have not reached a point where it's as urgent as it could have become had prices gone higher, or as urgent.
Do you think this summer we could reach that?
We could. As I said, the markets have responded to buy time and mitigate risk here a little bit longer than a lot of people thought that they would. I don't think that can go forever, as we see the way inventories are being drawn down and with the risks that still exist in the Middle East. I think there is a motivator there to resume more normal energy flows out of that part of the world, and so that's clearly part of the consideration. The nuclear capabilities of Iran are a big part of the consideration as well, and so we'll continue to work with the administration to try to support a good resolution of this and stabilize energy markets.
Other parts of Washington are calling for a windfall tax. Are you expecting that from this Congress?
Not much seems to get done through Congress these days.
So you're not worried?
Well, look, we've seen it in the past. It's an action that has been taken under other administrations. It's the wrong action. When you want more supply, typically taxes create less supply of something. And so creating taxes that discourage investment, that might push investment elsewhere, I don't think would serve our economy well. I don't think it'd serve our consumers well. If you go back and study what actually happened when we did this in the 70s and in the 80s, the revenue that was generated was a fraction of what had been advertised. The investment in production went down, and there's a very clear case study. You can look at the UK, which is doing it right now to this industry, and they're seeing the very same thing. And so I think there's good evidence out there that this is not a policy that achieves the desired outcomes. You can't always predict what politicians are going to do.
Are you seeing a shift in Democratic politics, though? I mean, there's Gavin Newsom, who consistently goes after Chevron specifically, even telling constituents not to show up at your gas stations. At the same time, the Democratic candidate now for governor is an individual who is quite pragmatic in terms of what he wants to see in the oil industry in California, even talking about having drilling once again. And I believe Chevron donated to him. Do you see a shift in Democratic politics on how they speak about oil and gas?
Well, I think they're speaking about energy more broadly, differently. They're talking about affordability. They're talking about energy reliability. Those used to be the messages that we would encourage, but didn't hear much because we heard a lot about climate and the environment. And I think everybody has been reminded in the United States, but around the world, that affordable and reliable energy is essential for the functioning of the economy. And we all want to mitigate impacts on the environment as well. But if you don't have affordable and reliable energy, you have a real problem. People vote with the lights on. And if they're hungry, if they're feeling constrained economically, and they're concerned about energy supplies, they're not happy. And so I think it's important that people from both sides of the aisle recognize that affordable, reliable energy are fundamental to our economy and to all the people in the country. And we need policies that encourage investment in all types of energy to continue to provide affordable, reliable energy to the world.
Mike Wirth, thank you so much for your time today, the CEO of Chevron.
Yeah, we have Chevron CEO Mike Wirth speaking with Bloomberg Television anchor Anne-Marie Horton at the Bloomberg Energy Security Executive Briefing down in Houston, Texas. Looking at WTI crude oil, it's off $3.15 right here, about $84.50.
And of course, we're keeping track on the SpaceX IPO. It priced yesterday at $135, and the latest headline is that it's indicated to open at about $150. It had been indicated to open at $175, Paul, so that is a steady decline in that opening bid price.
Yep, so what the stabilization agent, in this case Morgan Stanley, is trying to do is match up the buyers, the sellers, and try to find where they've got a market. Right now, let's get a little bit of a reset in the market. We can do that with Matt Piper. Matt, what are you looking at here?
Well, from the Bloomberg Interactive Brokers Studio, I'm Matt Piper. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. They get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. All eyes to the skies. We're talking SpaceX. Shares are expected to jump about 11% from the offering price of $135 to about $150 when they start trading on NASDAQ under the ticker SPCX. When that happens, not sure, but soon is what we're told. It has markets looking good. Let's take a look at the numbers. The S&P right now is up 51 points or 0.7%. The Dow is up about 1% or 485 points. The NASDAQ is up 0.6. Oil prices are sliding amid word of a deal that's, quote, never been closer, according to Iran. Brent, $87 a barrel. WTI at $84.50 a barrel. Well, Knicks in 5 is crashing weddings this weekend in New York City. June is the busiest month to wed. Couples who picked their date more than a year ago are now scrambling to decide whether to shell out more money to incorporate the matchup into their already expensive party or risk guests disappearing into their phones to catch all the action tomorrow night. People are spending thousands adding TVs, orange and blue decorations, and even moving up the time to accommodate tip-off for their guests.
Oh my gosh. Can you just imagine having to figure that out in the last couple of days?
Deal breaker.
Yeah, I've never seen an orange wedding dress. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Munis in Focus. Today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM matured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. It is Friday. That means we talk muni bonds. You're darn right we do. Aaron Hudson joins us, Bloomberg Municipal Bond Reporter. I knew this story was coming. I knew it was coming. AI funding boom reaches muni market, this time with a Google tied.
It's kind of inevitable given that the kind of fundraising we've seen from these hyperscalers.
Aaron, talk to us about this Google deal. Describe what's going on here.
Yeah, so Google's parent Alphabet has shown up in Muniland in a fast-growing sector called the prepaid energy bond sector.
Okay.
And these are complicated transactions, much more complicated than your typical muni bond, because they're used by utilities to lock in a cheap source of energy. But what is special about these deals is they require a financial middleman, and that role is typically played by, it's historically been banks, but increasingly we see different types of companies stepping in to fulfill that role, and Alphabet is the latest one. And this has been much anticipated by the market.
Much anticipated. So does that mean there's a lot of demand for it right now? I mean, how do we gauge that level of demand for this kind of product?
Yeah, so we immediately saw it in just the trading volumes after the deal was priced. We saw huge trading volumes, and spreads actually tightened, which is a really strong sign of demand. And there's just been increasing new entrants playing this middleman role in these types of transactions. So the market as a whole has really wanted to diversify their portfolios. So from their perspective, the number of new entrants is viewed as a really positive thing for this fast-growing sector. So there's been, who could be next? There's sort of a sense of like, who's next? And as the AI boom, so many tech companies have been tapping virtually every other credit market. There's been a lot of questions in the muni market. How will the build out of AI infrastructure, when and if will it come to the muni market? So this major tech company popping up in the prepaid space is sort of really viewed as a big moment.
I've never even heard about this kind of prepaid deals. Where have we seen it? Have we seen it before?
So they have been around before. They've been around for roughly 20-ish years.
Okay.
But they've really gained prominence and begun issuing record levels since 2022. And a huge part of that is really driven by the rising energy costs.
Okay.
And the idea that for utilities, ultimately they're the ones who are locking in these discounted prices for gas or electricity. And as rising energy costs are going up related to the AI boom, it's more and more interesting for these utilities to do the very significant amount of paperwork to get educated on how they could be part of this. And the transactions, they're super complicated, so everyone involved really has to do a lot of legwork to put this together.
It feels like this opens the door to other hyperscalers to do something similar. Alphabet kind of paves the way, and then we know all these other hyperscalers need to raise a lot of money as well. They need capital to build out the AI infrastructure. Could this overwhelm the muni market? Because the muni market is different than the public credit market, which is a lot deeper, a lot bigger.
Totally. I mean, the muni market is only a $4 trillion market compared. So it's, the scale of deals that have come in other credit markets have set records there. So that has been a concern that some investors have spoken about, is this idea that will there be enough demand to absorb this possible supply?
This is when you know that this sector is going to get hot. You have another story out with Amanda Albright. J.P. Morgan Chase Public Finance Department hired Goldman Sachs banker to specialize in prepaid energy deals, marking a major hire. So that's when they start poaching talent. That's when the banks are saying, "Oh, we might have."
It has shades of like 2007 when everyone decided to get into subprime mortgages because it was the great thing to do.
Great, exactly.
I mean, and it was for a while until it wasn't.
I know, very good. All right, Aaron, thanks so much for joining us. Aaron Hudson, Bloomberg Municipal Bond Reporter, giving us the latest on the bond market, the muni bond market, opening its arms to some of this AI build here. Speaking of the AI build, SpaceX, we're still waiting for that thing to open. Indications of interest around $150. Remember, this thing priced at $135. Let's check in with Seema Shah. She's a vice president of research and insights at Sensor Tower. Seema, I guess one of my challenges is how do you position this company? It's a rocket company. It's got some AI in there. It's got some connectivity, I think they call it, some of the broadband. How do you think?
I mean, by and large, 75% of their revenue is coming from connectivity, aka Starlink. So that really is the bulk of the business. AI, it's about 800 million, so significantly smaller.
But it's going to eat up a lot of the capital.
Yes, but it's not where the majority, it's the non-sexy business that's actually,
Contributing.
growing, or the greatest revenue contributor. So I think at this point, I think it's still really more in that connectivity space, but obviously you have the option on the AI portion of the business, right? So.
What worries you the most as you look through the numbers here, the contributions from these different lines of businesses, and then compare that with the pricing of the IPO and some of the promises that they're making?
Yes. So objectively, I can't say too much about the pricing, but I will say at $4.5 billion in revenue for the whole thing, the valuation is very high compared to, say, like Walmart, for example, that might make $4.5 billion in a couple of days. So that is one perspective that I'm coming from, but I guess like the AI space, which is really the option, the growth driver, is increasingly becoming very competitive. And while ChatGPT is still the largest, hit 1 billion MAUs, Claude is also growing rapidly. And Claude seems to be pivoting more to enterprise with Claude for Work. So they have many more of their users on desktop than on mobile, relatively speaking. And Grok is not in that top 3. It's in the top 8 in terms of size. It only has 52 million active users globally. So that's 1 billion for ChatGPT, 400 million for Gemini, then 52 for Grok, and then 37 for Claude. But Claude's growth rate is accelerating. A lot of it was due to what happened in March when Anthropic pulled back from the Department of War, and then they got a huge surge. Claude went to #1 on the App Store charts and has maintained that elevated positioning since then. Yeah.
I saw in the prospectus something I hadn't seen since the days I was writing prospectuses back in the late 90s, total addressable market. And
I know, we can't talk enough about this because it's so mind-blowing, the numbers.
$28 trillion. Do we have any idea? I watched the video. I didn't see any breakdown really too much.
Nah.
Do we know what that is?
I don't, but as you were saying, it reminds me of 2007. It reminds me of 2000, 1999, where everybody's TAM was like, if I got this many eyeballs, it would be that. So more of a skeptic about this. Yeah, but it doesn't make sense how it could be that big, and none of your other competitors in any of these sectors have ever hit or mentioned a TAM of that magnitude.
Yeah, I mean, the way we did it back in the day was, hey, here's the global pet food market. We think the internet's going to take 30% of that.
Exactly.
And we think that company X is going to take 10% of the market share. That implies revenue of blank. There you go.
Right.
Yes, but that's hedging. This is just.
Yep.
Here's my narrative.
Yes.
And then I'm going to present it to you.
And you have a CEO or a top leader who's very well known and has a lot of followers. So that makes the whole IPO and everything just much more exciting than it might be otherwise if you're like, this is a connectivity company and a rocket ship company.
Right. So it's a connectivity company and a rocket ship company and increasingly an AI company.
Yes.
Will it become an EV company as well? Because there's a lot of talk that Elon Musk is going to combine Tesla with SpaceX.
I mean, I can't say for sure, but historically it's had a tendency to merge his companies together, especially because one, it might be more profitable than the other. And
do you see any complementary operational, not synergies, but do these businesses complement one another?
I mean, maybe the space business in terms of anything that's reusable or EV, energy efficient. AI, maybe you can add that into elements of selling a Tesla or maybe within the car itself. So I could probably see that in the future, and the connectivity, but it's really more like add-ons than I would imagine the production of a car and a production of a rocket. There's probably systems and parts of it or energy and batteries that you could share.
SpaceX opens at $150 a share. There you go. IPO price $135.
It's happened.
It is open and it is trading. We've got 61 million. They opened this thing on about a 60 million share block. So that's pretty sizable. But it kind of goes to the issue here now that we got the stock open. They're going to need capital going forward. Do we know it sounds like their capital needs are going to be, even though they just raised $75 billion, which is a huge war chest.
Yeah.
Some of the CapEx numbers I see out there for this company, are they going to do more equity? Are they going to do debt? Do we know what they want to do?
I don't know. I don't imagine he'd want to be diluted any further. So I feel like debt might be more attractive. But again,
but credit investors will look at these numbers in a whole different way than equity investors.
The EBITDA numbers might not be where they want them to be for the credit. So I guess we'll see. I mean, like, he has a lot of contacts, and you said, like, if he brings in Tesla, like, what does that mean? Right? But there's a lot of legal ramifications. Tesla's board and investors may not be so keen on that. So I think we'll have to wait and see what happens. But specifically from the data we see, it's very competitive in the AI space and the connectivity space. They've really ramped up their advertising for Grok, and X's revenue is still down by our numbers, 60% from the time previous to him acquiring the company to now. So I still think there's a lot of moving parts. And
I feel like you need to download the Grok app on your phone.
I've got it.
Your little,
I've got it.
Do it?
Yes.
Okay, all right.
Yes.
Because
So, I'm
Paul's
trying
been
them all
making
out.
sure. Yeah, he is exposed to all the different apps out there, the AI apps.
Trusting them all out, trying to get up to speed with the kids. Seema, thank you so much for joining us. We appreciate it. Seema Shah, she's Vice President of Research and Insights at Sensor Towers. We got this thing trading. It's now trading. It priced at 135, opened at 150. Here we're at 156. Anthony Hughes, Bloomberg U.S. Equity Capital Markets reporter. What do you think here, Anthony?
Well, I think 11% gain on the first trade is probably a number that would, for most IPOs, would be considered, what you would hope to achieve. But in the sense that this IPO, there's a lot of hype and enthusiasm and a lot of people involved in this deal. I think maybe people were hoping for a bigger number.
I really like the fact that you started there because the headlines were crossing as of the first 30 minutes of trade, and the initial headline was that it was indicated to open at $175 a piece, and it's been steadily going down. We've gotten headlines about, now it's 174, now it's 172, now it's 170, all the way down to 150. Is that a bad sign?
Yeah, well, just to understand the process a bit better, I mean, Morgan Stanley is a stabilization agent for the IPO, and they also have the role of opening the IPO. But basically, that process involves bringing together all these buyers and sellers for this opening print, and you want to make sure that the opening print is sort of ideally as fair a price as you can get. And generally speaking, from what I'm told, that banks like to have about 500. So you can see. The number there was around 60 million shares, and the IPO was 500. So it was about 10% of the stock basically went through in the opening print. That's about standard, right? But that allows the banks to be sort of confident, I guess, that taking the buyers and the sellers together, the price that you're opening the stock at is the price that the market wants to pay. And then looking at the success of this first day trading, one measure of it will be like where the stock closed. And you want the stock to close near to or ideally above where it opens. You don't want it to you don't want to open the stock really high and then it end the day lower, because that would mean that a lot of people lost money. So that's the art of opening an IPO. But this is just all 1 day's trading, and it's many days ahead.
Yeah, exactly right. We got close to 100 million shares trading hands here. Again, about $159, $160 a share. Opened at 150 after pricing at 135 here. How long typically will we see, I guess, higher than usual volume when a company goes public? Does that all get kind of exercised the first day? Does it last a few days?
Yeah, I think from my experience, the first day will be the heaviest day for a while. I mean, the first few days will also be relatively heavy. I mean, SpaceX, the interesting thing with IPOs is that, the art of executing IPOs is to try and place the stock with as many long-term investors as you can, and investors that won't sell. But there's always a portion of the stock you want to get to people who are traders, because obviously we want some stock to be in the market for people to buy and sell, and not to sort of overly exaggerate the price if there's a real supply and demand imbalance. But I think they from the institutional book, they allocated like 70, I think it was 70% of the deal to what they call long-only investors, or people who are not traders, but you are going to have an element of the, as you know from your experience, you're going to have an element of the book that's got to go to people who are a bit more short term. But the first day will probably be the biggest day of trading. I mean, it may be different from SpaceX, but I mean, when you go and see SpaceX do maybe they'll do another stock sale in the future, or some sort of corporate event, there might be a day when it's higher, but this could be, it could be the highest day of trading for the stock.
It's interesting. I'm just looking at the Rich Go function on the Bloomberg terminal. Had Elon's stake in SpaceX valued at $135 a share, which placed him, again, farther away, the #1 richest person on the planet with a net worth of $970 billion. Now with the rise in the price, he's well over a trillionaire. So there you go. That's also kind of an interesting event there in the world's history, I guess.
Yeah, on paper, of course.
On paper, of course, exactly right. This has to be, I'm going to call, let's just, we kind of trade like this today, you call this a successful IPO and a successful historic IPO for many reasons, not the least of which is the dollars involved. That bodes well, I would think, for the Anthropics of the world, the OpenAIs of the world, which have also filed registration statements to go public. This has got to be a good sign.
Well, I think we'll see how the stock trades today. I mean, to be honest, coming out 11% out of the gate, you probably might be a little worried that it could drift back and maybe end not as well. But I think the banks have put a lot of work into this, so maybe they know that they can get it to finish around where it's opened here, or maybe there's some more enthusiasm from the rest of the day. But I think it shows you that 75 billion is. I mean, we've reported this as a huge number. It's a record deal, but I think even the senior person there at Goldman Sachs today, I saw them note, and something I've been thinking a lot about is that the numbers we talk about these days are so much larger than even a few years ago. We talk about trillions just offhand, and the amount of volume you see in the IPO market, we're talking I think we're thinking globally maybe 300 billion, something like that, if all these deals happen, and like that's a lot of money to raise, and their market cap's obviously much bigger, the trillions, but the amount of money that they're sucking out of the market is a relatively small amount of well below 1%. It's like I think the number was something like 20 basis points or something. It's not that much money these days.
What do we know about the lockup period here? Typically, an IPO lockup is 180 days, 6 months. Before the insiders can sell their shares. What do we know about this transaction?
Yeah, so it's a bit of a long answer to that question. It is a non-traditional lockup. Normally, you have a 6-month lockup and everyone comes out and can trade at 6 months and the stock falls as a result. But here, you've got to take into account this is a 24-year-old company. So, it's not like it's not like it had already had a very fairly developed shareholder base, so there's a logical argument that you can maybe not have the standard lockup, but they still have put some standards around it by making sure that the company's going to have to report its first set of earnings before people start to get out. But even then, there'll be a small proportion of people who'll be able to sell, and then a little bit later, a bit more. But the whole lockup sort of basically comes off over a 1-year period, and Elon Musk himself is locked up for a year or so, and he probably wouldn't be selling, I don't think, in any substantial size in any case. But the point is, I guess, that he's got a lot of pre-IPO investors alongside him there, and there are definitely some of those investors who aren't investing in the IPO and do want to get out because they only invest in private companies. There are other investors who are continuing, so that there's all different types of investors involved in an IPO like this, and some of them are going to want to sell, and some of them are going to hang on, and it's just going to be a bit different. But the lockup structure is quite complex. It stretches over a year. There are multiple. I think it's 8 to 10, might even be more periods when a little bit of stock comes out, like 7% here, 8% here, and it's all outlined in the prospectus, but it's quite lengthy and well considered.
So how about the retail component? Do we know generally how much kind of went to the retail slice?
Yeah, so I think if we look at the IPO as like 75 plus the green shoe, which will be exercised because the stock's traded up, will likely be exercised. I think our understanding was that 20% of the deal went to retail, so that would be a little bit less than $20 billion. The demand was more than 100 billion, and
wow.
You have to, when you talk about retail, there's different types of retail. There's the rich high net worth customers of the banks, and then there's the Robin Hood. There's the whole spectrum. There's the Robin Hood customers. I mean, if you talk about the Robin Hood customers, from all the what people have said this morning, it sounds like all hundreds of thousands of Robin Hood customers got at least a share, and that was the case probably with some of the other digital platforms as well. But a lot of people are disappointed because they only got one share. But maybe now they look at and see 10% gain, maybe they're not so disappointed. I don't know.
Looking at just Tesla, stock's down 2% here today. down 13% for the year, up 22% for a trailing 12-month basis here. And of course, one of the storylines out there, Anthony, is that Elon's just for no other reason, just for keeping everything neat and tidy, just kind of have SpaceX acquire or roll up Tesla into SpaceX. I know that was discussed out there in the marketplace. Do we expect to hear anything from the company on that?
Well, it's unclear. I think it's something that people are expecting to happen. It might have some industrial logic, I think, particularly because there's different things that pretty big ambitions that Tesla has around robotics, which might make more sense in a business like SpaceX, with a business like SpaceX, where there's so many of these big projects and ambitions that they're trying to pursue, and maybe robotics and space together makes a lot of sense, and but I think it might be a while before we hear about that. I mean, I think people do expect that to happen, but it has to make sense for based on how these how these stocks are trading and whatever. But I think the main argument perhaps for that happening from I guess from a more cynical perspective is that it would allow Elon Musk to to potentially take control of this bigger entity, because Tesla doesn't have the dual class structure and SpaceX does. But I think a deal like that would take a while. I think the other extraordinary thing about SpaceX, though, is that we've really seen that Elon Musk gets stuff done quickly and quicker than everyone else. I mean, even the press releases, the filings, the road show, the way the S1 was drafted and filed, everything happened a lot quicker than the average company, that's for sure.
Yeah, he said basically, this is what we're going to do, people. We're going to do 559 million shares at $135 a share. You want in, here you go.
He did not muck around.
Here's your opportunity. Anthony, thank you so much for all your reporting on this deal. I know we're going to be talking to you a lot going forward, because we have more of these mega deals coming down the pipe. So that is good there. Anthony Hughes with Bloomberg News. Right now, the stock at SpaceX is trading about $165 a share. Again, IPO'd at $135. The stock opened at 160. Looking at the market broadly here, we got the S&P up 4 points, the Dow up 242 points, and the NASDAQ down 83 points. The news today was Iran saying we are as close as we've ever been to a deal with the U.S., and so that is kind of taking the narrative here going forward. So we've got equity markets mixed, a little bit higher. We've got oil trading down. We've got oil down to $3, right around $84. All right, right now it is time for Balance of Power at the top of the hour. Balance of Power with Kaylee Lyons coming up right now.
All right, Paul Sweeney, thank you very much. I'm Kaylee Lyons in Washington, but clearly all eyes are on New York today as SpaceX launches into public markets. A record-setting IPO of $75 billion priced at $135 a share. The stock opens on the NASDAQ 11% higher than that at $150. And as we speak, the shares are trading at $162 and change, up more than 20% in this public trading debut. This is now a more than $2 trillion company. And Elon Musk, at least on paper, is the world's first ever trillionaire. This is financial market history that we all have a front row seat to today. And of course, the markets are trying to digest this, along with the news that the U.S. and Iran may be close to inking a memorandum of understanding to prolong their ceasefire and reopen the Strait of Hormuz. It is a lot for markets to digest today, so let's get a check on them right now as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, recapping, resetting. You heard it live right here on Bloomberg. Liftoff for SpaceX, 11:47 a.m. Wall Street time. Right now, first day of trading, we got SpaceX shares up 21%. SpaceX at 163.03. First day of trading after the company made history with that $75 billion IPO. Stock sold for $150 in its opening trade on NASDAQ, 11% above its $135 offering price. At that level, the stock turned Elon Musk into the world's first trillionaire. Right now, we have got the Dow, the S&P higher, NASDAQ in the red, though, right to the numbers, with the S&P 500 index up 11 at 74.05. That is a gain of 0.1%. The Dow up 253 now, up by 0.5%. The NASDAQ 100 index holding on to a gain up under 0.1%. All of this with the VIX below 19, and the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by about 0.9%. Spot gold flat on the day, 42.10 the ounce, while West Texas Intermediate crude now retreating by 3.4%, 84.70 for a barrel of WTI, barrel of Brent 87.07, Brent crude down by 3.6%. Again, recapping here, S&P 500 index higher by 8, SpaceX, the big story of the day, right now at $160 a share, SpaceX up by 17.8%. I'm Charlie Pellet, Kaylee Lines. Our coverage continues. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much indeed. $160 stock right now, more than $2 trillion in market cap, meaning SpaceX, after already setting the record for the largest initial public offering of all time, is entering public markets as one of the largest stocks trading in public markets right now. And of course, as Charlie mentioned, Elon Musk on paper is the world's first ever trillionaire, already the world's richest man. He's getting significantly richer in terms of his wealth today with this debut that by all accounts, at least right now, seems to be going fairly smoothly. We had questions about whether or not the plumbing was going to run into any clogs or issues here, but right now it does seem that this debut has been relatively smooth. Again, SpaceX trading at right around $158 a share right now, up about 17.7% from that $135 IPO price. So let's get more on this now as we turn to Anthony Hughes up in New York. He's Bloomberg News equity capital markets reporter and is with us now. So Anthony, obviously we had some question as to how exactly this was going to go, given how unusually this pricing process was conducted. Elon Musk just said, the price is $135. There wasn't that typical price discovery process you would see in the IPO usually. So what does the trading debut now, with it significantly above that IPO price, tell us about how accurate this was?
Yes, well, I think the fact that the stock has gone up 11% initially and then it's up around 20% now is, suggests that it's been a fairly smooth process in the sense that the banks like to, manage the IPO in a way that delivers investors a return, and obviously there's a balancing act between, giving all these investors, an acceptable return, but then also not giving away the stock, and it's a difficult balance sometimes, and it's one that can cause a lot of complaints that either the stock traded badly or it did too well. But 20% is a level which is usually indicative of a fairly smooth IPO. I mean, the difference here, though, is that this is such a large offering that there is a bigger risk that the amount of stock that was issued could, overshadow the amount of demand out there. But there was a lot of demand for the IPO, and maybe people are disappointed that they didn't get a lot of stock because there were some significant cutbacks. But I think this performance we're seeing so far suggests that it's a fairly balanced outcome.
Well, and to your point, obviously, this was an incredible amount of shares that were issued, $555 million. As we consider the demand picture, talk to us about the breakdown between retail and institutional investors here, at least in the IPO.
Yeah, there's a few different numbers floating around, but I think initially during this process, people were thinking that about 30% of the IPO might get allocated to retail. In the end, I think the number was more around 20%, and that's much higher than for a normal IPO, when maybe only 5-10% of the IPO would go to retail, and really the bulk of the shares would go to institutional investors. So, the art of an IPO is probably making sure that, that you get the stock into the hands of people who are long-term investors to a large degree. And obviously there's also a portion of the stock which is being traded here early on, which reflects it will be churned. It'll be the same stock being bought and sold, but that's sort of making a mark on the stock and helping to establish what the banks are hoping is a fair price. But really the idea with an IPO is to try and get the stock as much as possible into the hands of people who are long-term investors who'll support the company long-term. And in this case, SpaceX was pretty keen to get the shares in the hands of retail investors, and particularly small investors who have seen what Tesla has done over the long term, and in many cases would be quite keen to hold the stock long term. And maybe that some of those people were expecting an even bigger gain on the first day today, but for those people who are long term believers in Elon Musk, the first day's trading is not that important.
All right, Anthony Hughes covering ECM for us at Bloomberg. Thank you so much. And I want to bring into the conversation now Sana Pashankar, who covers space for us here at Bloomberg. So Sana, as we're looking here at SpaceX now trading just around $160 a share. As I've mentioned, this is a $2 trillion stock. Talk to us about what's behind that market capitalization. How much of this is space versus Elon's pitch on AI and compute power?
Yes. So a lot of this is, both AI and space. SpaceX's biggest, gamble and what's really underpinning that valuation is orbital data centers, which are space-based data centers. And so Elon has really, pitched investors on the need for space-based data centers given the constraints on energy and resources on Earth. And so that's, it's a combination of both space and AI, but they're really projecting that 90% of, the potential future revenue of the company is based on AI computing and, doing that in space rather than here on Earth, which is, different than what SpaceX made its name for itself, which was by launching rockets and its Starlink service.
Well, and as you talk about the company's revenue, obviously there was a lot of hay made going into this IPO about how this looked like it was going to price at 100 times revenue, and this obviously is not a profitable company as it comes to public markets. Sana, just walk us through those figures and where they're projected to reach.
Yeah, so they are really pitching. It's a wild valuation for a company that, in 2025, it raked in about $19 billion in revenue. That's close to what Dollar Tree brings in, what Royal Caribbean Cruises brings in. But the reason that they're targeting such a high valuation is because of the projected future value of the company. Musk is saying that this is going to be such a valuable company because it's going to transform the future of AI. The rockets, SpaceX has contracts with NASA to send humans to the moon. The company is trying to also still send humans to Mars. So the valuation is not based on the current financial status of the company. It's the value that it can bring to humanity going forward.
All right, Sana Pashankar, Bloomberg News space reporter with us from New York. Thank you so much. And also in New York, but down at the NASDAQ where this trading got underway, we find Bloomberg's Yahaira Anand, who we'll check in with in just a moment as we consider SpaceX now trading at $162, almost $163 a share. We're up more than 20% from that IPO price of $135 a share. Remembering it raised $75 billion in that initial offering, valuing the company at just about $1.8 trillion. That valuation, that market cap, obviously significantly higher with the gain we are seeing today, north of $2 trillion. So let's go to Yahaira now at the NASDAQ for more. So Yahaira, obviously, we're setting records here. What is the vibe like at the NASDAQ right now? It seems everything in this process has gone pretty smoothly.
Yeah, pretty smoothly for the biggest IPO we've ever seen. And I will say the excitement, especially in the last hour as we were getting closer to trading, was palpable. You felt it here at the NASDAQ. They were all scrambling, making sure it all went off without a hitch. And then outside, you have all the Musk fans gathering, hoping to get a glimpse of him. But as you and I know, he was over in Texas. But as you said, SpaceX has officially begun trading, and with the stock opening at $150 a share above its $135 IPO price. And that gave investors an immediate gain of roughly 11%, but now you said it is trading above that. But this values a company at approximately just under $2 trillion, as you said, Kaylee, but it instantly puts SpaceX among the most valuable companies in the world, more valuable than Tesla itself, of course, another Elon Musk-owned company, Meta, and even Saudi Aramco.
It's just incredible to consider. And of course, the paper wealth gains here for Elon Musk, even more incredible. A trillionaire, that's a lot of zeros behind his net worth on the Bloomberg Billionaires Index. Yahaira, obviously, we still have just about 4 hours left in the trading day to go here. We know what happened when Meta debuted years ago. We saw a 20% prop like this, and we ended the day with not much to show for it. What will you be watching for over the course of the next few hours?
Well, yeah, as you said, the market has delivered its first verdict on SpaceX, but the trading day still we still have 4 more hours, as you said. So the focus will now shift to whether those gains can hold as this trading is underway and investors digest this historic public debut on Wall Street. We know that retail investors have been a huge part of this, so we'll see if they stick with Elon Musk throughout all of this.
All right, Bloomberg's Yahira Anand live at the NASDAQ as SpaceX debuts. Thank you so much. Again, this is a stock now trading at just about $164 a share, up 21.5% from its IPO, now valued at more than $2 trillion, a valuation that many have cast doubt on, including Jim Chanos, who has called this a valuation based on hopes and dreams. And the president and founder of Chanos and Company is in conversation right now with Bloomberg's Scarlett Fu and Tom Keene. Let's listen in.
The Enron time frame. How's that? In that I've always said that Wall Street has a printing press too, just like the Fed. It just takes a while to get going. And one of the things that I think SpaceX is ushering in 2026 is massive equity issuance. And historically, without a doubt, in the 20th and 21st century, anytime you have seen massive IPOs and secondaries relative to the size of the market or the economy, investors generally have been advised to be a little more cautious or reduce their risk. So the 1999, 2000, 2021, for the first half of that year, during the meme stock and SPAC craze, we are now going to break records in 2026 for IPOs and secondaries. And SpaceX, of course, is the granddaddy kicking it all off in a big way. But we're going to see OpenAI and Anthropic and probably some others. So we're going to shatter records. And so it's telling you that right now supply is meeting demand, which we haven't seen, by the way, in 23, 24, and 25. But we're seeing it now in 26.
I look, Jim Chanos, at this, and we've had a wonderful amount of time here with Mr. Chanos. So much to talk about. Scarlett's got some themes. I have some themes as well. Ed Ludlow fronted me. Did you see how he did that?
Yeah.
Ed Ludlow just stole my thunder.
He needed to do it.
Chanos is thinking about the Neo Cloud. This is the team here. The New York Times article of a day or so ago. Is SpaceX worth $1.8 gazillion? XAI seems to be suddenly changing its business model from developing models like Grok to basically becoming an Ed Ludlow neocloud. The entire valuation rests on XAI's progress. The neocloud strategy is a commodity business that is valued far lower on the public markets. Jim Chanos to Isaac and the crew over at the New York Times. They're talking innovation, but you're predicting they'll go safe?
Well, what's really interesting, Tom, is that about a week, 10 days ago, the vast driver for the SpaceX TAM in their prospectus was the enterprise solutions for XAI, basically Grok, what the models produce, right, the software. And instead, they basically did a 180 pivot and said, we are going to lease out our capacity to Anthropic and Google. And that's the neocloud model, right? That's you're an equipment lessor. And that is a much lower valued business in the marketplace than being a model company or a hyperscaler. And we've been following data centers for a long, long time. And basically, it's a finance business, right? You're buying the chips from NVIDIA or somebody else, and then you're leasing them out to Anthropic or whatever. It's a rate of return business. It's not a super high-tech business. Yet 22+ trillion of the 29.5 trillion of SpaceX TAM in their prospectus was based on that business. And it just struck me as very, very odd that right before the IPO, they would pivot to a much lower margin and lower valuation business than the hopes and dreams, which you guys have mentioned, I've mentioned, based on producing these wonderful AI agentic software products from Grok. And it's one of many head scratchers about this deal.
At what point does financial reality, the kinds of things you were just talking about, breaking down the numbers, become more important and matter more than the storytelling, the hopes and dreams part of it? Because that's what Elon Musk excels at, and that's what people are buying in on.
So the question is does the Elon premium, is it Elon premium times 2 or Elon premium divided by 2?
I think that's really the question here, because there are people who believe in Elon and have bid up Tesla accordingly to well beyond where I think most fundamental analysts think it's worth because of Optimus robots and autonomous driving and all that good stuff. And now you have another Elon hopes and dreams company with an even bigger valuation. And so does that double the value, or does it basically say, okay, well, I'm going to pick one? Because neither of them, let's face it, are being valued on their operations. SpaceX is, I believe, depending on what I heard in the green room, is probably now at about 110 times revenues. And just history tells us you just never really make much money buying equities at over 100 times revenues.
Yeah. Well, you, as we know, are inherently skeptical. Your company name's Kynikos, skeptic. You're not being a bull on SpaceX or Tesla or Elon Musk completely tracks. Is there anything in the SpaceX financials or Musk's management of the company that does impress you that you can say good job on?
Look, I think Starlink's a real business. We can look at their businesses. Again, we have to go on what's in the prospectus. Starlink's a real business. It's growing. It will probably continue to grow, although its growth is slowing. The launch business is still losing money after 22 years. And I'd be remiss from my fellow glass half empty participants if I didn't point out that the rocket that all of this depends upon, Starship, still has not achieved Earth orbit in 12 missions, right? And half of those ended up with some sort of mishap. So there's a lot riding on all of that. I think Starlink is a real business. It's worth a couple $100 billion. But the real hopes and dreams here is on XAI, which is, by the way, a company they bought in February for $250 billion in stock, that the market is now valuing it probably well over $1.5 trillion.
On Bloomberg Television, on Bloomberg Radio, worldwide with us, Jim Chanos, thrilled he could join us today in this historic moment for his Wall Street and all of us around the world. So the short crew is at Tesla, somewhat like SpaceX, and I'm enjoying a 53% per year return since sort of the beginning of COVID, back 6 years or so. So, again, Tesla's done better than good, and there's a modeled negative free cash flow right now. How long can the optimists of SpaceX keep this going without delivering a more conventional income statement?
Well, I think you answered the question, right? In years, if possible. But Tesla is trading at about 14 times revenues, right? It does have $100 billion in revenues, and it ramped revenues pretty quickly in 2019 and 2020. So there is a real business there in terms of large amounts of revenues and some cash flow. It's not trading at 110 times revenues. And that's a magnitude of difference, I think, that's really important for your viewers.
I've got, just for the first time, Scar, I've ever looked, the famed BQ function.
Yes.
On the Bloomberg. And of course, Chanos nails the price to sales because he studied Tom Galvin years ago. I've got right now I've got a number of 27 times revenue on the BQ screen. It may be a little higher than that. I've never seen a stock like that.
So I'm glad you guys bring up Tesla, because there's this expectation that Tesla and SpaceX will somehow merge or will be combined in the same way that XAI and SpaceX got combined and merged. How are you thinking through that? What does that mean for investors who believe in the Tesla business but are maybe skeptical of SpaceX?
Well, again, if it happens, and I have no idea if it will happen or not.
Does Elon need to make it happen?
No, he doesn't need to make it happen. He can keep them separate if he wants. It's solely up to him. We all know that. But it would be an equity for equity deal. And so I don't know, how much value that would add in terms of cutting overhead is not the story here, right? It's really what these companies will produce in the next 5-10 years.
I look at this, Jim Chanos, as an historic moment. And the answer is to the cycles. And I opened up talking about Enron and all that. I want you to talk about the short business right now is a hugely important part of financial society in this great bull market we're in right now. There's a lot of scars out there. How do you keep that going when you see SpaceX right now? How do you keep a short model going with bull sectors and a bull trend in the broader market?
So through 2023, we were running outside money. Now we run our own money. We've been hedged in the short world since 1996. Basically, our view has been we don't know where the market's going, and nor does anybody else. So we'd rather be long the market and short our collection of radioactive companies, if you will. And that's been a very profitable business. And it's been a very profitable business for the last few years, too, despite the market hitting new highs, because there's been a lot of stocks, as you guys know, that have lagged dramatically. So our view is always be long the market and be short some percentage of companies with bad businesses. And I think that's nothing I would recommend your viewers to do at home, all right? I don't recommend short selling for most people. It's really for the pros for lots of reasons, things like getting an interest rebate on your shorts and a variety of other things. But I will say that one of the things right now that is very apparent is that insurance is cheap. And it's cheap for all the reasons.
I don't want to interrupt because Scarlett wants to get 4 more questions in. Is SpaceX radioactive?
We'll have to see where it settles out. You can't short it right now anyway, so it's a moot question. I mean, I think that anything trading over 100 times revenues is of our interest. Historically, returns have been awful at those valuations.
You mentioned earlier the dot-com bubble. Are we doing dot-com bubble 2.0 right now?
Oh, this is much bigger. The AI build-out relative to the TMT build-out of 99, 2000 is multiples, even as a percent of the economy, GDP. And an important thing to point out is that when you get these CapEx booms in technology, they're tremendously accretive to earnings. And there's a simple accounting reason why. That is, when Tom buys chips for his data center from NVIDIA, NVIDIA recognizes that as revenue and profit. Tom capitalizes those expenses and writes them off over 5 to 10 years. And so you have a mismatch where the same dollar in a CapEx boom is recognized as profits by one entity and deferred by the same people expending the dollar. And that happened in 90, 98, 99, 2000. From the middle of 98, S&P operating earnings rose 30% to the middle of 2000 over the 2 years. From the middle of 2000 to the middle of 2001, when order books got pulled, S&P earnings dropped 40%.
Was that too much accounting for a Friday? I think so.
I'll leave it. I'll stop at that.
Jim, let me ask you one last question before we let you go, because this is Bloomberg Money after all. How do you approach your own financial planning? How does it compare with how you advise or manage money for others?
Well, it's mostly in my business and in ancillary things since I'm semi-retired right now, and I'm advising people, not directly running their money. So it's pretty conservative, but
so you set and forget, or you do make a lot of changes?
It's mostly passive. Again, for most people, I think that's the way to go.
Jim, we got our merch over here. Scarlett's got her Knicks jacket here, ready to go.
Let's go Knicks, Knicks in 5.
She and Anne-Marie Horton are going to San Antonio. Why aren't we seeing you in the front row quickly here?
Well, first of all, I live in Bucks County, Tom, so I'm outside of Philly.
So you're doing a 76ers?
Secondarily, my sons who were born in Manhattan are diehard Knicks fans, but I'm a Milwaukee Bucks fan. I'm a cheesehead.
I knew I was going to hear that. We just had to get that for the record as well.
Jim, thank you so much for joining us today.
Guys, thank you so much for having me.
Jim Chanos, founder and president of Chanos & Company. Coming up on
Chanos in conversation with Scarlett Fu and Tom Keene on this debut of trading day for SpaceX. Of course, a $135 a share IPO price, valuing the company at $1.8 trillion. We are well north of those figures now. SpaceX trading at just about $165 a share, up 22% from the price of that initial offering. And that is really the big news of the day on Wall Street. But we're also following news here in Washington. I want to mention briefly as we track progress toward a memorandum of understanding between the U.S. and Iran. We're now getting confirmation from Pakistan, which is serving as the mediator between these two, that a final agreed upon text of a peace deal has been reached. This according to the Pakistani Prime Minister, Shehbaz Sharif. saying that they are fully aware of incessant misinformation being waged by those who want to sabotage this peace deal. But again, he says, setting aside the noise, we can confirm that a final agreed-upon text of the peace deal has been reached, and Pakistan is now working closely with both sides to finalize the next steps. He ends his post on X with, peace has never been this close as it is now. So how is the hope of peace, and of course the hopes and dreams of SpaceX and a trillion-dollar company landing in financial markets today? Let's get a check on where we're trading now as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. The number you want to know, SpaceX right now surging by 21.5%, up and running now for roughly 40 minutes. Stock sold for $150 in its opening trade on NASDAQ at 11:46 a.m. Right now, we do have SpaceX trading at 164.83, again up by 22.3%. Our coverage will continue. The jump in the stock turned Elon Musk into the world's first trillionaire, also sent SpaceX's market cap above $2 trillion. Equity markets higher right now. Oil selling off. We've got the S&P 500 index at 74.21, higher by 27 points now. That is a gain of 0.4%. The Dow up 305, up 0.6%. NASDAQ Composite Index up 38 for NASDAQ. That is a gain of 0.1%. Our Mag 7 Index trading lower, down 0.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up 1.6% now. The VIX below 19, a 10-year at 4.47%. The 2-year, 4.07%. The 30-year, 4.97%. Gold up 0.1%, 42.17. Crude trading lower. West Texas Intermediate crude down now by 3.3%, 84.79 a barrel on WTI. And again, repeating the headlines out of Pakistan. Pakistan's Prime Minister says an agreed-upon text of a U.S.-Iran peace deal has been reached. His remarks came in a post on X. Recapping, stocks higher. S&P up 0.3%. SpaceX now up 22.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Kaylee Lyons. That is a Bloomberg Business Flash.
All right, Charlie Pellet, watching Wall Street. Thank you so much. And here in Washington, we're watching Wall Street too. And that just doesn't mean us here on Bloomberg paying attention to the SpaceX IPO, but they're watching on Capitol Hill as well, including Democratic Senator Elizabeth Warren of Massachusetts, who notes on X just a few moments ago, Elon Musk just became the world's first trillionaire. The typical American household would have to work more than 11 million years to make Elon Musk's level of wealth. She ends this post by saying, we need a wealth tax. Because yes, it is the case that Elon Musk on paper right now is a trillionaire thanks to this debut of SpaceX, his space rocket, satellite, internet, artificial intelligence company, juggernaut of a company that's now valued at more than $2 trillion as it trades right now at about $165 a share after that initial $135 IPO. So let's get more on this as we turn to Craig Trudell, our managing editor of Global Business Americas here at Bloomberg. And Craig, obviously, while you hold that title now, you also led for a long time Bloomberg's autos coverage. You are very familiar with Elon Musk as the CEO of Tesla, which obviously, while being an auto company first and foremost, also in financial markets and public markets, was the way to bet on Elon Musk. We now have a second channel for those bets in SpaceX. Whether or not these two get rolled together at some point, I'm not sure. But your reaction, please, to the appetite we are seeing for SpaceX as it debuts today.
Yeah, I think it's fascinating to see, yes, a strong debut for SpaceX, a rotation maybe a little bit out of Tesla, which is something that we were really braced for, but not anything disastrous. I mean, we've seen, on an intraday basis, the stock, fall about 3%. But as of this moment, it's a little less than that, about 2.8. This is a company that, has been quite volatile over the years in its own right. And if, that track record applies to SpaceX, then we should be sort of in for a bumpy ride here.
Well, certainly so. It's still Elon Musk that we're talking about, a visionary maybe, but a lot of volatility we know can come with that. Walk us through the unique nature of the way this IPO happened, the idea that this price was set. It wasn't your typical price discovery. Musk said the price is $135 of a share. He got that, and obviously investors are buying this stock for more than that. As as trading gets going here. But how should we consider the way in which the valuation for this company was set? We were just listening to Jim Chanos talking about how skeptical he is of valuing a market cap at something 110 times revenue for a company that isn't profitable.
Yeah, I think it's fascinating in that, you know, this is also a company that, you know, put out incredible numbers in their S1 about, you know, total addressable markets and talking about space-based economy. You know, to hear Musk talk about the potential for this company and to hear people like Jared Isaacman, you know, the head of NASA, you know, he gave an interview very recently about this notion that the space economy has been something that's been sort of highly speculated about, hyped up as something massive, and yet the follow-through has been very minimal. I will say in defense of Musk and SpaceX, with the exception of Starlink, there's been very little in the way of progress toward making any money in space. We have seen SpaceX make progress where others haven't, but I think where you really run into trouble looking at this company is actually the AI portion, and the fact that that was just such a very recent addition to the SpaceX story maybe makes things kind of muddy and more complicated than they might have otherwise been had this just been a space company with a solid satellite business.
Well, a late addition, yes, but one that already does have some commitments tied to it. It seems we all saw the news of Google's contract with SpaceX that's going to be, what, nearly $1 billion per month, assuming that SpaceX can actually deliver on the computing power that has been promised. How far do we have to go to SpaceX actually realizing these capabilities, actually having them to offer customers, not just like Google, but Anthropic is a big customer too, right?
Yeah, the two of them in sort of rapid-fire fashion, you know, reached these deals in the lead up to the IPO, and surely that's helping sort of buoy sentiment. But if we think about, you know, Musk's ambitions to not just be a sort of infrastructure partner to the likes of Google and Anthropic, and actually getting in the game itself and you know, building a competitive chatbot and AI capabilities that can be monetized, that's where we've seen, you know, real failures on Musk's part. And he's been pretty open about that actually on X, this notion that they sort of started XAI all wrong and are kind of starting over. It was, you know, really unusual and very like him that he would be so sort of candid about that. And yet maybe raises some questions about, you know, just how quickly this will be a company that's a major player and actually, you know, things beyond partnering with companies that have had success like Anthropic.
Well, and you've just made the point, Craig, about XAI getting rolled in to SpaceX. So would you be surprised if we see Tesla rolled in to this larger company too?
You know, just going off the trend that we've seen this rolling up of Musk's companies, it does feel like that's also something that people quite close to Musk have not shied away about, you know, speaking to this notion that, you know, that would be, you know, not even just a sort of open secret, but just something that people are very comfortable, you know, theorizing about, tells me that that it does feel like it's likely. I also think it's interesting in that we've heard Musk say, you know, over and over again that he wishes he had more control over Tesla. One of the ways to sort of address the fact that he's not particularly comfortable with his command of that company would be to combine these, because that is an aspect of SpaceX's structure that is quite different, where he has a special class of stock that Tesla didn't have when it went public. If they were to combine, they would sort of, you know, rationalize that and give him the ability of you know, stock that protects him from any activism or challenges to his sort of rule of the company.
All right, Bloomberg's Craig Trudell, thank you so much. SpaceX right now trading at $164 a share. We're up nearly 22% from that $135 IPO price. Quite the debut we are seeing for one of the world's largest companies by market cap at this point after a record-setting $75 billion IPO. And of course, that is some of the big news of the moment, but I also want to return to the breaking news we brought you just moments ago pertaining to a potential memorandum of understanding between the U.S. and Iran, as Pakistan, the mediator between these two parties, says that an agreed-upon text of a peace deal has indeed been reached. So for more, we turn to Bloomberg Washington correspondent Tyler Kendall, who is here with me in our DC studio. So Tyler, throughout this conflict and its attempt to find resolution, we consistently do not hear the same things from all of the parties. The U.S. and President Trump will say one thing, Iran says something different. In this instance, do we actually get the sense that everyone might be on the same page this time?
It depends which parts we're talking about. This is positive momentum in the right direction because now we actually have all three sides saying that progress has been made. You have Pakistan coming out saying that a final agreed upon text has been reached. You had Iran's foreign minister here saying that they've never been closer towards peace. And then, of course, you have the White House, which has long maintained that they are getting closer to a deal. The issue is we're getting conflicting reports about what's actually in the Memorandum of Understanding. A senior administration official earlier today confirmed to us that there are at least 5 points that we know of. The first is the reopening of the Strait of Hormuz, which both sides have said that they are working towards. The question here becomes, though, is that Iranian state media earlier today did report that it would reopen, but said that would only happen after the U.S. lifts its naval blockade. We know that the U.S. would like to keep that leverage in place until the Strait of Hormuz reopens. And Iran also seemed to suggest that they would like to maintain some degree of control over the strait, which would not probably meet the U.S.'s definition of freedom of navigation. So that's perhaps one of the biggest sticking points in front of us. The others come from the senior administration official saying that maybe we could get some announcement around what potential curbs on Iran's nuclear program would actually look like, including the of Iran's stockpile of highly enriched uranium, and that Iran would dismantle, was the word, its nuclear program. What does that really look like in practice? Our understanding has been that those firmer details would come at a later date, that this would be a phased proposal. So there's going to be maybe some questions there. There's so much more that we could go through here, but financial relief, Iran has said financial relief needs to come first. Senior administration official telling us today financial relief is only coming after Iran meets its targets for the deal. That includes unfreezing the assets, at least half of them, oil sanctions. That's another disconnect. And then lastly, the U.S. says that Iran will end its support of proxy militia groups. Iranian state media today said the ceasefire needs to extend to Lebanon, which would seem to infer that they are still backing, of course, the Iranian-backed militant group Hezbollah and Israel's front against them.
All right, Bloomberg's Tyler Kendall, great reporting. Thank you so much. And of course, this is all coloring the G7 summit to be held in France next week. President Trump is planning to attend. Tyler will also be there covering it for us here on Bloomberg, and we're looking forward to that coverage very much. Of course, Tyler owns Washington coverage. Ed Ludlow owns tech and space coverage as the co-host of Bloomberg Tech, and he's here with us now on this debut day for SpaceX. Ed, I feel like this is your Super Bowl. It probably is most people in financial markets Super Bowl, as we're setting records here, not just in terms of IPO, but in the size of this debut. Talk to me about the demand here, as we had questions as to whether or not this price was set correctly, given the unusual lack of price discovery that happened, whether or not 555 million shares being issued was going to be met with adequate demand. Are we seeing evidence that perhaps the appetite was even more robust than initially thought?
Well, it was massively oversubscribed on the institutional side, which accounted for 80% of the offering, and on the retail side as well, which was about 20%. And we can get into like more of the specifics of how that sliced and diced. It's trading right now 167.50, 24% above the IPO price of 135. What we reported over the last 5 days is that it has been Elon Musk himself, along with Brett Johnson, the CFO, and Gwynne Shotwell, the president, that really controlled and dictated the terms, literally, as opposed to like the bankers. Bankers have a lot of influence in IPO processes, but this time, part of the rationale, as it was explained to me, is that if you set it early, ahead of a roadshow without a range, it is atypical and unusual, but you basically remove the leverage of the long-only asset managers, the big institutions that would account for most of the order book anyway. It just made things on their terms. There are big questions about valuation long-term, right? It's come to IPO at 92 times or something like that sales, but that was how it was done. And so, there are lots of retail investors that did get an allocation, some evidence that they are people that are also Tesla retail shareholders, anecdotal evidence, I'd say. But now there are lots of people that are reluctantly, and I guess not reluctantly is not the right word. They don't want to be buying in the open market, but they are. They kind of have to be.
Yeah, perhaps some nose holding going on here. To your point,
Yes,
Ed,
that's
about
a way,
valuation, walk us through what the thesis is here in terms of the total addressable market that SpaceX is saying that it can reach, and what tangibly the company is now going to need to be able to accomplish from a technology standpoint to be able to deliver on that, deliver what it's promised to customers like Anthropic and Google.
So like right now on a fully diluted basis, this is a company that has a value of more than $2 trillion. And they are pitching a story about a future where they are many things, a diversified business, which most of is selling AI software, right? They say there's a $28.5 trillion addressable market, and 26.5 of that is what they are calling in an umbrella or bucket of enterprise AI. But in the near term, all of that is predicated on them being able to get Starship, which is on paper the most powerful rocket and launch system humankind's ever developed, to work regularly and reusably. They have done 12 test flights. They are closer, in the coming weeks to doing a 13th test flight, but they've never landed or both parts of it, the booster and the spacecraft on top, back on Earth. They have to do that if they are able to put into orbit satellites that are data centers. And that is kind of the middle step that gets them to that distant future where humans are living on Mars, and they're able to generate most of their revenues and income from AI. It's not straightforward. And that has been a part of like how much you place a value of 2030 to 2050, not right now on historic IPO Friday.
Well, and it's also just so interesting to consider the circular nature of this, if you will, because we're talking about what SpaceX will need to do to deliver for customers like Anthropic, which at least in some parts of the wider SpaceX business here, if you're considering Grok, which obviously is no Claude, there is still competition there.
Yes.
Just speak to that, Ed, and how all of this is setting the stage for Anthropic and also OpenAI's ultimate public debuts that we're expecting later this year.
So state of play is that Anthropic has filed confidentially with the SEC for IPO, and so has OpenAI. SpaceX, through its xAI arm, SpaceX owns xAI, it's a subsidiary, a wholly owned subsidiary of SpaceX, did a deal with Anthropic where Anthropic pays SpaceX more than $1 billion a month to rent compute capacity from a data center, a specific data center that it built in Tennessee. On paper, if you read the prospectus and the vision that we just outlined where SpaceX makes most of its money from selling AI software, that would make them on paper a complete rival and competitor to Anthropic. But this is what's so interesting. A lot of phone calls in the last 5 days from existing SpaceX investors saying it's so important to talk about how they've done this. They have data center capacity that was available. xAI and SpaceX, the parent, are very good at building data centers quickly and running them, operating them efficiently on a very competitive dollar per token basis. So why not rent it out and make money? And that's the near-term story that will dictate right now the stock performance and the valuation, because the rest of it is so far away in another galaxy, etc.
Excellent pun. And that's, of course, as we consider the performance as a public company. But Ed, you were just talking about speaking to existing SpaceX investors. This is obviously not a new company. It's more than 2 decades old. It's existed in private markets for some time. And there was a long time in which Elon Musk was saying we can just stay reliant on private capital. Walk us through that evolution and whether or not this is going to be a new model going forward as we consider more robust private markets.
Yeah, I think 2002 SpaceX was seeded of about $27 million, and the goal was to make a rocket booster land back on Earth and be reusable. And now clearly, as we've just discussed, the story's really changed. In 2010, when Tesla went public, the public company that Elon Musk is also CEO of, SpaceX had $1 billion valuation, and rapidly, kind of 2023 to 2025 in the private markets, its valuation kept growing because it just dominated this business of launching payload to orbit. And then Starlink, which is a internet service, but it's powered by a constellation of satellites around planet Earth, has very quickly become cash flow positive, a cash generator. So like you'll see all the Bloomberg stories and read the prospectus and say like how unprofitable SpaceX is and how distant it is. But in its connectivity business, actually it's a cash generating part of the business. And so, you know, it's just a crazy story. We don't have, you could do an entire 24 hours on Bloomberg Television and Radio to explain the history of it. But again, the point of the rocket business is that next gen rocket, it needs to work for all that other intergalactic out of this world stuff to come true.
Well, I feel like Ed probably is going to end up spending 24 hours on Bloomberg Television and radio today. You're working hard. Thank you so much, Bloomberg Tech co-host Ed Ludlow. We appreciate it. I would just point out, as we consider the demand for SpaceX shares that appears to be out there, Robinhood says it saw record-breaking traffic today, blaming that for some latency and intermittent issues customers were experiencing, though they said the systems have recovered and their teams are monitoring it closely. But clearly, retail is a massive factor in this debut. And of course, this debut is now a massive factor in financial markets. So let's get a check on where we're trading overall as SpaceX trades at just about $168 a share. Charlie Pellet is keeping watch from New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Indeed, SpaceX right now up by 24.3%. We've got two major stories that we're following for you, the SpaceX IPO, and of course, diplomatic efforts in the Middle East. Hopes for a breakthrough are lifting stocks as well today. Earlier this hour, we had Pakistan's Prime Minister saying an agreed-upon text of a U.S.-Iran peace deal has been reached. Prime Minister's comments coming in a post on X. He says, quote, peace has never been this close as it is now. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all very much in the green. S&P up 26 to 74.21, up 0.4%. Dow Industrials up 312, up 0.6%. NASDAQ up 45, up by 0.2%, while the NASDAQ 100 index up by 0.5%. Small cap shares outperforming. The Russell 2000 index of small cap shares up now by 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index up by 2%. The VIX just below 19 with a 10-year 4.48%. Spot gold flat on the day, 42.13 the ounce, while West Texas Intermediate crude down now by 3.7%, 84.50 the barrel. Brent 86.97 down by 3.8%. SpaceX surging first day out, up now by 24.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Kaylee Lines. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. As Charlie just mentioned, SpaceX now up nearly about 25% from its $135 IPO price. Right now, shares trading north of $168 a share, $169. We are at session highs. Again, a 25% gain from that IPO price. This is now a more than $2 trillion company. And as we were just discussing with Ed Ludlow, as we consider the valuation thesis here, there are many parts to this business. Yes, there is the AI story that SpaceX seems to be relying on, the idea of bringing computing power to space and space-based data centers. There's also Starlink and the satellite internet business. And there are the rockets themselves that Elon Musk still eventually wants to take people to Mars. And he spoke about that space ambition in particular from Houston earlier today ahead of this debut.
Not just a few astronauts, I mean you, literally you. If you're watching, whoever you are watching this, SpaceX wants to be able to take you to the moon, take you to Mars, and ultimately beyond. And I'm confident at this point that with the incredible team that we have here at SpaceX, that we will do that for you.
So let's get the take from someone who has actually been to space and can speak on this with a great deal of insight. Commander Leroy Chiao is with us on Balance of Power, a former NASA astronaut and commander of the International Space Station. He's also founder of the space training company One Orbit and author of a new book that comes out on June 16th, Dinner with an Astronaut, Serving Space Stories Past, Present, and Future. Commander Chiao, it's the lunch hour, so I guess a lot of people get to listen to an astronaut as they have lunch today. Walk us through what you see in terms of demand for the space economy and whether, therefore, a stock that can debut in public markets at a $2 trillion market valuation is justified in your mind.
Sure, it's of course that everybody is touting the space economy and how huge it is and how much huger it's going to get. But I would caution, of course, you have to be careful where you invest. You know, obviously, satellites are very much have been for many decades been money makers. Rocket launchers, people like SpaceX have dominated the launch industry, bringing prices down. And SpaceX, of course, is getting closer to having an operational Starship, right? So Starship is the largest rocket ever launched. They've actually caught that booster 3 times. They've demonstrated now that they've got their heat shield problem pretty much figured out. Starship last time came back and hovered over the ocean before, flopping into it and demonstrating that it too can do that burn maneuver to be captured softly and reused. So, they're making good progress. There's a lot of news out there that says that they're not, but they actually really are. And it's astounding. And, SpaceX, of course, pioneered catching first stage boosters of the Falcon 9. And those of us in the business were really skeptical, said, well, that's not easy to do. You got to carry extra fuel. How are you going to economically refurbish and reuse them? But that's exactly what they've done, bringing launch costs down from what used to be $150 to $200 million to launch a satellite down to around 35 or so, right? So my point is, don't count Elon Musk out. He's tried all these things that the experts, whether it be in space or in electric vehicles, said would never work, and he's pulled it off. So I think Starship will become operational. It's going to be key, as you guys have been saying, in launching and delivering all those Starlink and data center satellites to orbit, but I think it's going to happen.
Well, and commanders, I have this conversation with you from Washington. How much of the thesis here is predicated on SpaceX maintaining a strong relationship on a contractual basis with the U.S. government, with NASA? Or I guess to ask it another way, does NASA need SpaceX? Is this relationship now too intrinsically tied together?
I think they absolutely need SpaceX because, NASA people, engineers quietly on the side have just been blown away by Starship and the progress that has been made by Starship. And, I think that's going to be so much less of an expensive rocket once it becomes operational than the current SLS rocket that is a more traditional throwaway rocket. I think Starship is going to be disruptive. It's going to dramatically further bring down cost of launching things into space. And so, yes, I think that they are intrinsically tied together. It's going to be part of the future exploration program for sure, building a moon base. And of course, Elon Musk said he started SpaceX back in 2002 because he wants to build these Mars colonies, and I'm not sure why he wants to. I mean, he talks about being a multiplanetary species for survival, but I'm glad he does. I'm glad he does want to.
Well, Commander, in our final minute here, Elon Musk has also obviously not been shy of failure when it comes to SpaceX. They celebrate sometimes rockets blowing up, and I wonder if you think failure is going to be more difficult in terms of being part of the process, yes, but how it will be taken now that this is a public company and investors are watching.
Sure. So if you've developed a new rocket or any kind of high performance vehicle, you know that the fastest way to develop it is also the most expensive way to develop it. That is, you test, break it, fix it, test, break, fix, and you just iterate around that. And that's the fastest way you're going to get a new vehicle, also the most expensive. Now, NASA takes the opposite approach, because that's why it took so long to get SLS and Orion flying, literally a couple of decades. Is because they couldn't afford to have a failure. Because if they had a failure, their program could easily get canceled by the Congress, right? So
different scenarios.
Yeah.
Yeah, Commander, we have to leave it there. Thank you so much for joining us. Commander Leroy Chiao, author of the new book, Dinner with an Astronaut, Serving Space Stories, Past, Present, and Future. The future is now. SpaceX is trading $172 a share, up 27% from the IPO price.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
We have liftoff for the SpaceX IPO. History being made on Wall Street. Shares of SpaceX, yes, indeed, began trading at $150 a share to a crowd at the NASDAQ market site in Times Square. Tim, the stock now up about 28%, raised $75 billion, and it made Elon Musk a pretty rich dude.
Yeah, the first trillionaire in history gives this company now a market cap of about $2.27 trillion, making it one of the biggest companies out there. It is Bloomberg Business Week Daily, a special edition. I'm Tim Stenivek, along with Carol Masser, coming to you live from Bloomberg World Headquarters in New York. And Carol, we've got a great group with us for the next 4 hours.
An amazing team has been tracking all of the ticks and all of the stories leading up to this massive historical IPO. We're talking about Bloomberg Tech host Ed Ludlow here in studio with us. So too is Bailey Lipschultz, his Bloomberg News IPO reporter. And then Bloomberg News TV reporter Yahira Anand. She is out there at the NASDAQ market site. So as we said, we've got full team coverage. We're going to be leaning on all of the expertise of Bloomberg News across our newsroom to really look at what is a very complicated company. There are a lot of moving parts when it comes to this, Tim.
Yeah, I think it's fair to say a lot of questions about what the company would do on its first day of trading. The idea of a close to $30 trillion total addressable market, Carol, that was the story that was sold ahead of this IPO, and it looks like investors today are buying it.
We're going to go to Yahira in just a moment, but I want to just really quickly bring in Bailey and Ed just for a quick comment. I mean, it's about an IPO. It's about a specific company, lots of moving parts, and an individual that has really captivated and dominated our world for over a decade. He's now really, really rich by a lot in terms of billionaires, trillionaires, the first one. Ed, top of mind for you right here.
Yeah, as unprecedented as it is, the biggest IPO in history, the volume of cash raised. What is remarkable is how foretold this all was. It all happened exactly as we reported and described, and it is super interesting that the stock is at $172.50 right now. You know, on a fully diluted basis, you're kind of heading toward $2.4 trillion, but there's nothing crazy here. It's taking time, and it will take a lot of time for people to really digest the future this company's presented in terms of its valuation and trading.
What did I hear? Well, you know, people talk about valuations. It's trading, SpaceX is trading on Cosmos or a Cosmos valuation of some sort.
Price to Cosmos ratio.
Thank you.
Better than community adjusted EBITDA throwback from many years ago. Bailey Lipschultz, along with Ed Ludlow, you've covered your fair share of IPOs. Today's first day of trading, kind of best case scenario for how things are going. Seems to be going off without a hitch.
No, everything's going off without a hitch. I was talking to folks on the buy side who were kind of penciling in, 10% would be a good open. We opened at 11% right now. As you guys have mentioned, near 30% up. There has been, as far as I know, other than a little bit of Robinhood snags, no real breakage as it relates to the plumbing, no issues with opening the stock similar to what we saw with Facebook. Again, 300 million shares trading right now. The float, 555 million. Keeping an eye on that just typically because with these massive IPOs with retail allocation, we expect to see, quote unquote, the full float trading in day one.
All right, guys, sit tight. We're going to continue this. Of course, SpaceX IPO. Thousands of SpaceX employees helped ring in the company's public debut in both Texas and New York. It is the first time a company has done a dual opening bell ceremony for an IPO, according to a spokesperson for the NASDAQ. And that's exactly where we find Bloomberg News, Yahira Anand. She is at the NASDAQ market site in Times Square. Walk us through the open and what you've been hearing and seeing.
Well, the excitement and relief here at the NASDAQ is palpable because, as Bailey was saying, this has gone off without a hitch with SpaceX opening just over 2 hours after the opening bell. And now we are seeing a company that is public at around $2.2 trillion. That is more than the likes of, that is more valuable than the likes of Meta, Tesla, and even Saudi Aramco. And the strong debut, of course, isn't entirely surprising given the enormous demand we we saw ahead of the offering from both the retail and institutional side, with the deal heavily oversubscribed. And speaking of retail investors, speaking of Elon fans, it was funny to see the crowds gathering outside, the paparazzi gathering outside, waiting to maybe catch a glimpse of Elon Musk. But as you said, he was not here. He was over at Starbase in Texas. So that was quite funny to see. But you could see the excitement here, especially from the investors who have been with this company from the start, or the president, the CFO of SpaceX, who were here on the floor, excited to get this thing going.
All right, Yahira, thank you so much. Yahira Anand there at the NASDAQ market site, tracking the stock. SpaceX again, 174.69. It's moving fast, up almost up almost 30% here in the trade. Hey, one thing we wanted to point out, and we want to continue with our all-team coverage here, Elon Musk earlier this morning in a live stream on another one of his platforms and companies, we are talking about X. Here's what he had to say.
There are always problems on Earth. There are always problems on Earth. There are always things that we wish to be better, that we want to solve here on Earth, and we should solve them. But there also have to be things that get you excited about the future, that make you glad to wake up in the morning because you can't wait to see what happens next. And that's the future that SpaceX wants to bring to you.
All right, that, of course, was Elon Musk on a live stream on X this morning. Felt kind of spacey there, Tim Stenovic.
It did. It also felt very familiar if you've read the S1 for SpaceX. It felt like I was, reading that all over again. This is the messaging that Elon and company want to get across, that waking up in the morning, you can't wait to see what happens next, the future that SpaceX wants to bring to you.
All right, guys, so let's bring back Bailey Lipschultz and Ed Ludlow, of course, Bloomberg News IPO reporter Bailey Lipschultz and host of Bloomberg Tech on Bloomberg Television, Ed Ludlow. I mean, is this all about the future, Ed? The valuation of this. We have talked so much about the valuation of the SpaceX company now, and is it all about future expectations, which is often what you do when you kind of buy into Elon and his story and his companies?
Yeah, what investors have had to understand is an already quite diverse business that has lots of different arms, and then over a very distant timeline, things happening in a different order. So SpaceX still has a sort of guiding mission of making humankind a multi-planetary species. One thing I would note, and again, all we can do is go back and read the documents. It's stated in black and white. But part of Mr. Musk's compensation package is literally tied to the goal of establishing a human colony on Mars. And so he doesn't really fully realize his stock-based comp without achieving that goal. Let's for a second give some sympathy to the Business Week listeners somewhere around the world that is hearing that for the first time.
Yeah.
The problem is that, okay, so SpaceX wants to put humankind on Mars and actually in the interim on the moon. It's all laid out for investors, but the business in the future has nothing to do with that.
Well, what I want to ask you, and Bailey, come on in on this when we go to valuation. Let's say Elon doesn't do that, but is SpaceX really largely an AI company going forward? And is it about what he does with data centers and space and so on and so forth when it comes to the valuation and kind of growing into it?
Well, I think Ed and I were one of the first, if not the first, to really call out the fact that SpaceX pitched the $26.5 trillion AI story. So that's terrestrial data centers, that's orbital data centers, that's potentially making Grok a real rival to Claude and ChatGPT. Pretty pie-in-the-sky ambitions. Again, it's really, when I talk to some critics, they say, well, you can't disprove a $26.5 trillion TAM because, I don't know, you say it's real, everyone else kind of buys into it. But that's the vision. I think when you talk to investors and people who are Musk believers, Mars, this idea that they're going to be the Union Pacific of space and comparing Mars to California is a big part of that pitch, but the actual dollars and cents in the interim will come from the ability to provide compute via these orbital data centers.
One thing I like about California is you can just go outside and enjoy it without wearing a spacesuit, but that's neither here nor there. Ed, I'm going to go back to this over and over again, which is what we know about 2025 revenue from SpaceX, the segments, the reporting segments. Yeah. This is what we're going to be watching in the future. And remind everybody, space, about 22% of 2025 revenue. Connectivity, which of course includes Starlink, about 61%, and then 17% is AI. In terms of the growth opportunities in those three segments, which is the one that investors are most bullish on?
Yeah, in the immediate term, they are most bullish on something that's quite recent, which is SpaceX AI. Remember, SpaceX owns xAI.
As of early 2026.
Very quickly pivoting itself to be a neo cloud. In other words, renting the compute capacity on Earth, a data center that's terrestrial in nature, to Anthropic and Google. Anthropic agreed to pay $1.25 billion per month.
That's a lot of money.
Google more than $900 million per month. Musk has made a big deal on the socials about these being short term. They can pull the plug after 90 days. But, you know, the investors are like, wow, that's so smart.
And it's also real money in the very near future.
You make
It's
a really...
real accounts receiveables, right?
Again, this is so difficult. I think that, you know, the shares now are at a 30% gain. I don't have the ticker in front of me.
Yeah, 30% higher.
You know, people say, okay, right, so you guys are telling us that in the future you're going to make all this money from data centers in space. And what that means in practice is a very, very big satellite where the solar arrays are just ginormous. But actually, in the 2025 financials is buried some of the answer. Connectivity, which is the bucket for Starlink, is basically cash flow positive. It's a cash generating business. SpaceX has thousands of Starlink satellites in deployment around the Earth. And so what the existing investors do is extrapolate out and say, I can see them doing that with data centers.
I think it's also something that's really tangible for a lot of people who've experienced SpaceX. I mean, I've noticed advertising on United flights, United regional jets now having Starlink. They're trying to roll it out across the entire fleet. It's a pretty incredible product that a lot of people have had access to, unlike something like actually experiencing a launch.
Yeah, I mean, I don't own a rocket yet, but
you do have Starlink.
But I do have Starlink, and it is a pretty incredible product. And we increasingly see it. If you jump on an airplane, you're increasingly seeing it kind of spread out in terms of kind of more normal, should I say, usage. You know, what's interesting is Tom Keene and Scarlet Food just had Jim Chanos, noted bear, noted skeptic, talking about among the Elon universe, because he's pretty skeptical about most of it, it sounds like, but he talked about Starlink being a real business worth a couple of hundreds of billions of dollars. So, you know, so the bet today is on that, or like what?
So just really quick, and I'll keep it really short. You know, it's interesting that Chanos acknowledges the merits of that business. The issue is that in this IPO process is that the prospectus set out a total addressable market of 28.5 trillion, and Starlink and the launch business combined was only 2 trillion of that.
And even, Ed, when we look through the notes from the sell-side analysts, again, not publicly published for the most part, circulated with investors, the pitch is the fact that they're going to throw off hundreds of billions of dollars in revenue from AI. The ability potentially to hit $1 trillion in sales, according to Evercore ISI, at just after the end of the decade, is predicated on artificial intelligence. And when you think about it, Starlink is a terrific business. It's a great business. But the multiples, if you looked at a Verizon or an AT&T or a true competitor, are not what the AI vision would be.
What are they making off of xAI right now?
Well, there is a big disconnect here, which I'm staring at my screen. I might be able to answer at some point in the next 4 hours. But if xAI is going to sell all of this AI software to other companies on planet Earth, why would they rent out all the compute capacity that they built to Anthropic and Google? Why aren't they using that capacity to train more of their own models? Or is it a signal that people aren't using the models? They're not being run on the inference side. We don't really have an answer from that, but that is what the bear would say. They would interpret that signal as, yes, okay, that's a pretty profitable business potentially on paper, but what does it tell us about how much progress xAI is making with selling its software?
That's a good question, right?
That's a very near-term headache that people go back and forth on.
Bailey, over the next few months, we're going to be sort of glued to different analysts who come out and say that they've initiated coverage and what their coverage looks like. Just in terms of chatter on the street among analysts, is there a general consensus, a general view? And again, every bank pretty much was involved in this, so there's sort of a challenge in dissecting what the banks who were involved with versus what their analysts are saying. But is there any consensus there?
We'll get initiations from the banks that underwrote this deal in 25 calendar days. So that's when we'll get the view. When you look at Oppenheimer initiating, I think they had a $190 price target. Again, that's 12 months from now, and we're currently trading at 171, so take that with a grain of salt. I think the big debate when you just look at the analyst community is Tesla is the most hotly debated stock from the sell side. 30 buys, 24 holds. A hold is essentially a sell.
Yeah.
Let's call it what it is. And 9 sell ratings, which is telling clients actively short this stock. So when you're looking at an investment community that hasn't bought into the Tesla vision, and the parallels are pretty darn stark in that it's bet on Elon and it's bet on futuristic technologies toward the end of the decade, if not a decade out, it's going to be fascinating to see what the reception is on that perspective.
And maybe it gets us to a discussion point, and we'll be revisiting this in the next few hours with you, about a potential Tesla tie-up with SpaceX. Yeah. This has been bandied about for months at this point.
So the idea that SpaceX would merge with Tesla has been around for some time. People still believe that that will be the case to different degrees. Some see it as being completely imminent. Others see it as being something that might happen in 2027, 2028. Tesla and SpaceX have never said anything publicly about it, right? This is all based on the thesis of some investors that have spoken publicly, but also when SpaceX merged with xAI, the Friday before that was confirmed, we had reported that it looked like SpaceX was going to merge with xAI, but they had looked at multiple options, and one was a discussion between SpaceX and Tesla, company to company, about what that merger would look like, and also in that some detail that some SpaceX investors basically went to Elon, those that had access to him, and said, wouldn't it be a better idea for SpaceX to merge with Tesla rather than xAI? xAI had a lot of debt, it was burning cash. Tesla and SpaceX are hardware companies, they're more analogous on vertical integration. In the end, it's academic. You know, SpaceX merged with xAI and then it went public, and the biggest IPO in history. But it won't go away, that idea. The thing is, we just don't know.
Well, I do want to call out that in an earlier interview on CBC, Gwen Shotwell did say that it would make Elon's life easier, just reading from the transcript, saying, quote, there's no question that there's synergies between Tesla and SpaceX in our futures. Definitely, there's a convergence of kind of what we're all trying to accomplish in the future. That's an acknowledgement that it is a possibility and that it does make sense.
It does also exist with Terafab, which we can get to later in the hours we have together, but yeah.
Synergies, but it's also you've got companies that are buying stuff from each other and creates kind of a demand automatically for various Elon products.
Well, even when you think about the fact that a big part of the pitch, Ed, correct me if I'm wrong, for Tesla is Optimus, and when you talk to people who are buying into the 2040, 2045 vision, why wouldn't you use robots on Mars to build out the infrastructure?
One more immediate answer, rather than getting to Mars, is that those satellites in orbit that are data centers, you know, they have GPUs on board. When you're running inference, you're running the models, excuse me, at the edge. Actually, Optimus and the robotaxi business of Tesla, there is localized compute in the brain, so to speak, of the humanoid robot. There's a chip. But there is still some element of cloud computing that's needed when you run an AI model at that scale. That would be a good first customer for Starlink. For SpaceX to have.
But I'm glad you brought up Starlink, because how are these entities all going to communicate with one another?
Right.
Well,
connectivity.
Exactly. And also 1 million robots on Mars. Is that hitting the goal of 1 million people on Mars?
Carol, you're opening up a real can of worms.
I am.
They are not people.
Yet.
Right.
Score. Hey, listen, folks, if you're just joining us, I'm Carol Master along with Tim Stanovec, Ed Ludlow, Bailey Lipschultz. We are talking on a historic market day, no doubt about it. Shares of SpaceX climbing in the first day of trading, company making history with a $75 billion IPO, sold for $150 in its opening trade. Right now, the stock, it's gone up as much as 30% in this first day of trading. Right now, we're looking at a share price of $173.97 a share. That means good for a gain of just shy of 29%. And Elon, go buy dinner for your family, because you're a trillionaire now. I'm just going to put it out. We continue with all hands on deck. Carol Master, Tim Stanovec, Ed Ludlow, Bailey Lipschultz, and this is Bloomberg Business Week Daily, a special edition, the SpaceX IPO.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on SpaceX, just about at 28% higher after its IPO this morning. 172.37 where we stand. We had liftoff at roughly 11:47 this morning. SpaceX surging in its first day out after Elon Musk's company made history with that $75 billion IPO that instantly turned it into one of the world's biggest companies. Right now, again, we've got SpaceX surging, SpaceX up by 27%. The U.S. stock market pushing higher with the Dow, the S&P, and NASDAQ all advancing. Hopes for a diplomatic breakthrough lifting stocks. S&P up 44 to 74.38. That is a gain now of 0.6%. Dow Industrials up 431, up by about 0.8%. NASDAQ up 128, now up by 0.5%. The NASDAQ 100 index up 0.9%. Small cap shares doing even better. The Russell 2000 index up by 1.2%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index up 2.5%. The VIX right around 18 now, and the 10-year 4.47%. The 2-year 4.07%. The 30-year 4.96%. Gold up 0.2%, 42.22 the ounce, while West Texas Intermediate crude below 85 a barrel, down 3.3%. Brent 87.31, down by 3.4%. The big story we continue to cover, the SpaceX IPO. SpaceX up now by 27.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Carol Master, along with Tim Stanovic, and of course, Bloomberg tech host Ed Ludlow. You got to love it on a day when you look at the most read stories on the Bloomberg terminal in the past 8 hours, and 6 of 10 somehow are either about SpaceX or related to SpaceX. There's also a story about Nixon 5 crashing New York City weddings this weekend. So I'm just giving you an idea of what everybody's reading on the Bloomberg this Friday.
Well, I think I'm guilty as charged for reading a lot about SpaceX today. Shares, as we heard from Charlie just now, up 28%. They were up as much as 30, let's say go ahead and call it 30.8% earlier in the session. They did open today 11% higher than that IPO price yesterday. Looking at volume, it is a lot of shares are trading hands, about 336 million, according to the latest instant count on the Bloomberg terminal.
Yeah, it's pretty historic and fun to watch, but it feels like very orderly and kind of mellow, we were just saying. Hey, we want to get to a trusted and thoughtful voice on all things Elon Musk and his universe. Max Chapkin is with us. He's Bloomberg Business Week columnist. He's host of Everybody's Business podcast here at Bloomberg, author of The Contrarian, Peter Thiel, and The Rise of the Silicon Valley Oligarchs. He's here in studio along with me and Tim, and of course, the host of Bloomberg Tech, Ed Ludlow. Max.
Hey.
Hey. So how are you thinking about this? You wrote a story back in April, and I think the headline on it was that SpaceX's IPO is Elon Musk's most audacious product launch yet.
Yeah, I mean, I've been spending some of today thinking about the last Elon Musk IPO back in 2010, and you think about then, it was at not a super high valuation. The economy was not great. There were relatively, I'd say, low expectations around that company, and also Elon Musk was incredibly popular, right? He didn't have this kind of political thing where you have a lot of people who are suddenly really mad at him, really mad at his companies, mad at data centers and so on. So I think in a lot of ways, SpaceX is going into this market that while it's very inflated, it's hard to see how much room there is to grow.
But it does seem like, Max, that in recent weeks and months, the chatter around Elon's political actions over the last couple of years, his relationship with the president, that has not really been the focus of the way that people are thinking about this IPO. And in fact, it doesn't seem like it's come up much in the coverage. Certainly there were some protests outside the NASDAQ today, or I should say some signage outside the NASDAQ today. but I don't know how else to describe it.
Yeah, okay.
How would you describe it?
It was an effigy, maybe?
The effigy, okay.
Is that the word? I think he is still very much involved, in our politics. He's when you look at the lists of donors for 2026, he's pretty high up there. He and Trump, of course, are back together. Their friendship is back on. SpaceX just won a couple of big contracts related to the Golden Dome. I think what's happened is that the AI story has basically swamped everything else. And that's especially true when we're talking about the sort of financial side and Wall Street and everything. I mean, the bankers who have been pushing this are certainly not pitching Elon Musk's connection to the Trump administration, at least I wouldn't think explicitly.
It wasn't in the S1, was it?
The AI story is
risk factors, right? Political.
Well,
Sorry.
Well, no. I mean, the main issue in the risk factors, right? I'm just recounting is that it also spells out as clear as day that the entire success of the plan is dependent on Elon Musk leading it. Right, that it says if he were to go away, that would be it, and that in the last, Max and I have just sort of been.
That's a big risk.
It's so weird. I'm like thinking back. Was it even 2024 that we wrote it, or was 2025?
24, I believe.
Everyone's just trying to make sense of like, okay, what was it that Elon Musk was trying to achieve by aligning himself in that political bucket, even outside of the president. People ask me all the time at the moment, I mean, literally this week, is there anything about SpaceX going public in the President Trump's term? Don't know the answer.
I think I asked you, would we be having a SpaceX IPO if President Trump...
Not at $2 trillion. I mean, I think so much of the run-up in the AI market has to do with the White House's, for better or worse, the White House's policy on AI, which has essentially been let them cook. Let's rip out all the regulations. Let's get data centers going as quickly as we can, and so on. And so much of that is kind of baked in to the SpaceX pitch. I also think, as I said, the S1 says that U.S. federal contracts are about 20% of SpaceX's revenue. That's down. It's falling.
Yeah.
But that's still a significant amount of money. And as I said, they are getting more contracts. As much as this is kind of a sideline for SpaceX at this point, because the future is Starlink, the future is data centers in space and Grok and all that stuff. The present very much is government contracts, and they have done well during this period. I think we're talking about Elon Musk being a trillionaire. I'm not sure that he's a trillionaire if he doesn't have that political adventure that he had, in 2024 and 2025.
The one thing I would observe, right, is that we keep forgetting about what is SpaceX on the hook for. SpaceX and Starship are a massive part of America's ambition to get back to the moon. In fact, they are literally now on the hook to make Starship work in a certain time frame, where they're required to demo that this year. And that's so fascinating because that isn't codified in the prospectus. It's not even discussed.
How are they doing with respect to Starship?
Well, they've just done the 12th test flight and the 12th sort of mission, I suppose, where it carried no payload of any significance. It was a dummy, but it was with a brand new architecture. Basically, top to tail, they re-engineered it. And I think what Gwynne Shotwell, the president and COO, has been saying this morning is that in the coming weeks, they'll do 13 and 14. The whole point of it is the economics work because it's reusable. So it's very big, can carry a lot of stuff into space. But they've never actually successfully landed both parts, the booster and the spacecraft back on Earth. And that, if it's going to carry human beings, is a test that they should get to soon.
And they haven't taken anything to orbit yet. I mean, and that for that's going to be
data center
that's going to be an important milestone. I mean, it's important to say, Ed's right. Like the Artemis mission is kind of in a bind if Starship doesn't come through, but all of SpaceX is in a bind if Starship doesn't come through.
Can I say one thing real quick? I'm just recounting what's happened, but in the 12th test flight, they deployed dummy Starlink satellites. It's like a Pez for fans of the Pez candy. You had that in America, right? Yeah, obviously. Duh. But like,
It's been around for a while, Ed.
So the Starship spacecraft.
For my time, even.
I'm sorry.
You can go to the Pez Museum in Connecticut while you're here.
Okay, dear America, I'm sorry.
There is probably an Elon Pez. I don't know that
There
for
was
a fact.
definitely a
but-
serious point to this. That basically, how the Starlink satellites deploy out of Starship, there's a slot. They come out the side, kind of like, and they get pushed down and down and down like a Pez. But they did demo the ability to do it, but the payload wasn't real. They were dummies. So I'm just stating that for the record.
Does Elon have to be worried? I mean, Jeff Bezos has become rather chummy with the administration, and do we have to ever worry about Blue Origin and his rockets being able to do some of what Elon
But they're
does?
also an integral part of the Artemis missions moving forward.
Absolutely worried. Although Blue Origin had a huge setback recently, and that is why because Blue Origin and SpaceX are competing for this lunar lander part of the mission, and of course. Blue Origin say they're going to rebuild and everything, but everyone I've talked to in this world says that it's a huge setback.
We're speaking with Max Chafkin, a Bloomberg Businessweek columnist, the host of the Everybody's Business podcast here at Bloomberg. He's author of The Contrarian. Max, Carol mentioned Jeff Bezos. We're going to talk about Blue Origin a little later in the program. Before we do that, you've spent a lot of years covering Tesla and the way that Elon Musk has led Tesla as a public company and his relationship with investors. How should investors right now look at that over the last decade or so as an idea for how he'll run this company and maybe even divide his time? It's kind of different when they're both public.
That I'm not sure how helpful the early years of Tesla are to understanding this. I think SpaceX really looks very similar to the Tesla of the last couple of years. The post AI pivot. And where you have this very good business that is kind of being pushed to the side for reasons that either have to do with Musk's vision of the future. Business. Yeah, in the case of Tesla, it's the autos business, which is this very, very successful, good business. It's the thing that everyone talks about. Elon Musk popularized electric cars, in the United States. But for 2 years or so, it's been de-emphasized. And you look at it, sales have not been growing. I mean, it is in certain ways a challenged business. And then you have this kind of futuristic robots, self-driving cars piece of the business. Same thing with SpaceX. But the one thing I'll say is I think the legacy part of SpaceX is actually a better business than the EV business. I mean, the EV business, as dominant as it was, never reached any kind of like monopoly status. Whereas SpaceX's launch business, kind of is that. There are competitors. There are parts of the business where they have more competition than others. But as we're saying, if SpaceX has a huge problem, NASA has a huge problem. A bunch of satellite makers have a huge problem. They really have the market more or less cornered in that piece. And then you have this futuristic stuff that, even Starlink to some extent is futuristic, but of course the data center thing, which is just like pure science fiction. So Starlink is like the robotaxi, data centers are like the humanoid robots.
Not everybody thinks it's science fiction.
Well, just very quick, all the SpaceX investors that phoned me over the last week, thanks for phoning me. Interesting that SpaceX aren't encouraging you to come on Bloomberg television and radio, but they also would make the case that it's not analogous to Tesla, but they would also say that SpaceX should get credit right now for being a much more diversified business than we talk about. It is more than rockets, and they have a good interim before orbital data center.
Ed Ludlow staying with us, host of Bloomberg Tech. Max Chafkin, thank you so much. Bloomberg Businessweek columnist, host of Everybody's Business podcast. Check it out on the weekend. Shares of SpaceX, first day of trading as a publicly held company. Stock right now, $171.31 a share. That stock is up about 27%. Tim and I continuing right here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil lower, stocks higher, and SpaceX surging in its first day out. Right now, we got SpaceX up by 26.1%. S&P 500 extending this week's advance. On the week, up 0.6%. That after last week's 2.6% swoon. Elon Musk's space company soaring after a record-breaking IPO. Again, we do have shares of SpaceX up by 26%, now at $170. Our coverage will continue right here on Bloomberg. S&P up 33, hopes for peace sending stocks higher. Oil lower, the S&P up 0.4%. Right now it's 74.27. Dow Industrial is up 355, up 0.7%. While NASDAQ is up 79, up 0.3%. The NASDAQ 100 index up 0.7%. The Russell 2000 index of small cap shares outperforming, up by 1.1%. The VIX just above 18 with the SOX, the Philadelphia Semiconductor Stock Index up 2.3%. The 10-year 4.47%, the 2-year 4.07%, and the 30-year remaining below 5%, 4.96%. Spot gold at 42.18 the ounce, up 0.1%. A retreat for crude, 84.71 a barrel, down 3.4%. Brent, 87.18, drop there of 3.5%. Again, first day out for SpaceX. Right now, we got SpaceX up by 27.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Yeah, certainly we're focusing on SpaceX. We were quickly talking before we got going, and you take a look at what's going on with Tesla. We've seen it up as much as 1.5% today. It's been down 3% in today's session. Right now, Tim, just a gain of about 0.5 percentage point.
All right, that's Tesla, but SpaceX certainly only moving in one direction, opening 11% higher than that IPO price yesterday. Up as much as 30.8%. Right now, up about 27.3%. So far, this looks like a pretty successful first day of trading, I think it's fair to say. 355 million shares as we speak have traded hands.
Feels pretty calm. Carol Masser, Tim Stanovac, also Ed Ludlow, host of Bloomberg Tech, of course, on Bloomberg Television, Monday through Friday at 11 a.m., who has been all things. How long do you feel like you've been talking about this IPO?
Yeah, I mean, it goes back to when we broke the story even the end of last year, that the whole point of the IPO was, they needed lots of money to buy chips to put in space. And as I told you a few times this month, people laughed at that report at the time, like that's not why they would IPO. And then the prospectus hit, and here we are.
They need money.
Yeah. They need GPUs in space, but yeah, they need money for that, yeah.
Yeah, I want to bring in Anthony Hughes, Bloomberg News, U.S. Equity Capital Markets reporter. He joins us from the Bloomberg News Bureau here in New York, just steps away from us. Anthony, pretty successful out of the gate, I think it's fair to say. NASDAQ should be patting itself on the back right now?
Yes, Tim. I think for a IPO of this size, a 20%, 30% gain is a pretty balanced outcome, from the bank's perspective. Obviously you never want to see the stock go down, but you don't want to see the stock necessarily go through the roof either. So, 20, 30% for a high growth company too. I mean, you want to see a decent return. So, I think people will go away and think this is a relatively balanced outcome compared to a lot of IPOs we've seen in the past.
Yeah, it's interesting. We've been talking with you as well to the lead up, Anthony. I don't know, what's top of mind? What have you been thinking about as you watch the trade today, and what's important here?
Yeah, well, I think we've been looking at the level of volume, and certainly out of the gate, they got about 10% of the stock paired up, and at the opening print there. So that's sort of something you'd like to see to make sure it's an orderly outcome. I think the main thing, it can be a little bit of an anticlimax in some ways, the first day of trading for a stock, because we've said a lot already about this company. We're just seeing basically the results today. But, it's a fairly orderly first day of trading. Started up 11%. Funnily enough, if you go back to Facebook in 2012, it actually went up 11% on the opening print too, but then finished flat. So it doesn't look like this is going to happen here for SpaceX. But, sometimes, these early gains can evaporate as the day goes on. But, it's just one day of trading, and there's many days ahead. And anyone who's been a long-term shareholder of Tesla knows that there's some tough days and some great days. But longer term, Tesla did very well, and I guess a lot of people are hoping to see something similar here. Yeah. But on a larger scale, and this company's got such a big market cap, it's obviously hard to expect that SpaceX will do something like Tesla in terms of a relative gain. But you know, obviously SpaceX got big dreams and sort of unlimited hopes about what they can do in space.
I want to. I'm glad you brought up Facebook. We were talking about that just a few minutes as we came live to you before. SpaceX up 28%. Ed Ludlow, we're going to get to Nick Colas in just a second, but before we do, just remind us today who can actually sell the shares. This is a really important point because there's been a lot of discussion about, okay, who are the new centimillionaires? Who are the new millionaires, and who are the venture capitalists who have made billions on this?
Just a few rapid fire things. There's a big difference between economic ownership of this stock and voting power. So Elon Musk has 84% voting power, right? And so he's locked up for 366 days, but you know, he's going to be a big seller, and he also has a big options packet that he can exercise. And then everyone else is kind of tiered. So after the Q4 26 earnings release, 20% of the existing shares are free of a lockup. Who can sell today is basically anyone that participated in the offering, the 75 billion. And what was so interesting to hear from the buy side today is like begrudgingly their participation in the open market as buyers, you know, because loads of people didn't get allocations. You know, we have so much time, we can talk about the venture funds later, but, you know, even those that are subject to lockups, the venture funds will distribute the shares back to their LPs, which are endowments, pension funds. They don't just give them cash.
Yeah.
But those, they won't sell the stock. You know, that at least that's what people keep telling me.
Yeah, it's longer term, right? They're going to stay with it. Hey, we're talking, of course, with Ed Ludlow, host of Bloomberg Tech. We've also got with us Anthony Hughes, Bloomberg News, ECM reporter, joining us here as well. And then let's roll into the mix. Nick Colas, just joining us here on set, co-founder of Data Trek Research. Good to have you here. You're an independent financial advisory firm. Would you be advising institutional investors, retail investors to own this one?
Well, what we do is we try to give people a framing to understand their decision. And by that count, the simple math obviously doesn't add up. This is a very expensive stock relative to any rational measure of value. But we're talking about Elon Musk, who has a tremendous track record of not just success, but convincing people that success is durable. So it's not a calculus based on valuation, it's a calculus based on faith. And plenty of people have a ton of faith and have made billions of dollars with Elon Musk in the past, and they're willing to give him a pass on this one because they think it can happen again.
Well, I want to talk connectivity a little bit with you and the focus on really telecom Starlink when it comes to this IPO. In 2025, it was 61% of the revenue. As I was mentioning earlier, I think for a lot of people who, you know, haven't been to a rocket launch or actually, you know, are big users of the AI tech that SpaceX has, maybe Starlink is the most tangible part of this business that they've interacted with. In your view, that's a pretty good business, right?
It is a phenomenal business. It is a truly.
I mean, there were so many years when we were talking about, and Ed was reporting on it, the possibility of perhaps that being spun off as its own independent, publicly traded company.
And there are prediction market contracts on that right now, oddly enough. It is a truly disruptive business in the classic Clayton Christensen sense of the word. It's a new technology that offers a product to an underserved community and then builds up from there. So how Amazon started with books and then blew up to everything. Starlink started with rural customers and has blown up to everything. It's exactly the playbook investors want to see. And Elon, as usual, has played it perfectly.
I just recap the numbers. You know, I find that so interesting that you're saying you can't do the math. You kind of can, you know, and what a lot of the existing cap table told me for months and months was, how do I start to model for the orbital data center business? And what they would say is 2025, not the revenues from Starlink, but connectivity operating income, 4 billion, and the scale of deployment and rate of deployment, literally the operation of putting it into orbit. They just extrapolate out to space-based data center. Can you use faith or hope and do the same on behalf of clients?
Unfortunately, you have to.
Yeah.
There is no other option. There are no orbital data centers in space right now, right? So you are betting on a brand new technology, and what you're betting is the guy who brought you the past couple of interesting technologies can bring you the next one. But it is a faith-based process. It is not based in any math you can rationally model. And I was a sell-side analyst for a decade. I covered the autos. I know how to do a financial model.
Oh, goodness.
You know, to a very strong degree, and this is not one of those analyses. So people can do whatever math they want to do. The stock's going to trade where it wants to trade, and the two may coalesce, that they may not.
But
they're
real quick, without betraying confidence, do you have faith? In other words, did you tell clients, like, look, this is a trade based on faith. We have faith, make the trade.
Yeah.
What I've told clients is, if you want to put in for the stock, I gave you a range. And I'll run through the numbers. The average IPO since 1980 up 19% on day one. So that's the bogey. 161 for SpaceX is an average IPO one-day pop. If you want to look at 2025, it was a 29% pop. So 174, which is right around where I think we're trading now.
173 and change. Nice.
So boom, 29% is the average IPO pop from last year. If you want to look at 1999, just to go bananas, that was a 71% one-day pop.
I remember
so
that.
So that was, we all, yes, I certainly do as well. I was working for Steve Cohen at the time, and that was an amazing year. That would be a 231 close.
Would Steve Cohen be buying this?
Steve Cohen would have gotten an allocation and probably have sold half of it on the open and be trading the other half very intelligently, because that's what he does.
That's really interesting. Hey, Nick Colas is with us, co-founder of Data Trek Research. Ed Ludlow's with us. Anthony Hughes, you've been sitting by patiently here at Bloomberg News. You mentioned, though, Nick mentioned SpaceX. The stock right now is up almost 28% here, 172 and change in its first day of trading. Anthony Hughes, you've been thinking about the valuation, writing about it. Got a question for Nick for us.
Yeah, well, I think one of the interesting questions, Nick, is, we do see it with a lot of these hot IPOs that they come pretty, they can come, it can rise pretty sharply out of the gate and then fall off pretty quickly in the weeks and months afterwards. I just wondered, do you think there's an argument with SpaceX that, perhaps it could do something a little bit differently just because there's such a need for people to buy the stock, the index inclusion and stuff like that? Do you think that could be a factor here in helping to sort of put a bit more of a floor onto the stock?
I think that it is a factor for the next couple of weeks because we have the Q entry, I think, on July 5th, if I recall correctly, 15 days after pricing. So you're going to see some offset of people who are owning the stock right now selling it to the Qs when it gets included in the 100. Past that, there seems to be a fairly even match, and they actually did earlier lockup expirations for employees and insiders than usual. So you actually can pair the additional add of stock to the Qs to the unleashing of stock from the individual owners that have it right now. So it should balance out, but I will make one broad macro point. It's very important. Most IPOs don't work. Most IPOs underperform in year one. And so to beat those odds is relatively hard. Stocks take time to season, managements take time to season. This is not a company that has a lot of prior public market experience.
But the executives have a lot of prior public market experience. Elon Musk, for example, Gwen Shotwell for years, the CEO, has been not talked about as much anymore, but being like the adult in the room.
Yes, and she is.
At SpaceX. So I think people could push back on the experience part of this a little bit.
That is fair. The Elon thing cuts both ways.
Okay.
Look at the 5-year chart on Tesla and tell me that thing's been a value creator for the last 3 years. It just hasn't. So there is...
Is Tesla the model we should be looking at, Nick, in terms of for SpaceX, or that's not fair?
I think it's entirely fair because both are basically on a Musk premium and a massive one. Tesla's going to earn maybe $2 a share this year. Stock trades, 200 times that? So you're talking about big valuations in both names. And I thought it was interesting, looking at Tesla at 1.5 trillion and this at, call it 1.92. You're talking about, two very large companies based on one person's vision, but not a lot of cash flow. That's the common factor. And you can be a seasoned management team, but I don't know any other seasoned management team that can hold those together besides Elon's teams.
Yeah. Ed, I want you, do you have a question for Nick? Because I know Nick's going to leave us after this segment. So
the
I'll let
lockups
you.
are so interesting, and we remind ourselves the oversubscription. Actually, what's crazy? 4x to 5x oversubscription doesn't even seem that wild to me. Look at what's happening in China market for IPOs, 20x sometimes. I digress. There's a lot of evidence that SpaceX employees wanted to buy more shares. And the unusual difference with SpaceX is the secondaries market. They've had regular liquidity windows. Might that be a difference this time?
It certainly could be, but everything's a function of price, right? If this thing goes to 400, even the most ardent insider might be tempted to sell. So it's a function of price.
All I'm going to say, if the stock tanks a little bit, it makes it cheaper for SpaceX to buy it and merge the companies.
Very, very quick. Many times, SpaceX was the leader of the secondaries. They bought back shares from employees, and we never really reported on it, and that was true at the time. So Yep.
Yeah, I just think there's just like so many moving aspects of this. Nicholas, thanks for jumping in here. We really appreciate it. The perspective and data was really helpful. Co-founder, Data Trek Research, of course, joining us here in studio. We're going to continue with Ed Ludlow, host of Bloomberg Tech. Our thanks to Anthony Hughes. Be sure to check out all of his reporting on the Bloomberg and at Bloomberg.com, a member of our trusted Bloomberg News team.
I've got some great news for the folks getting in touch with me on the Bloomberg terminal right now saying we need more SpaceX coverage today. Because we have more SpaceX coverage today. Not just next on the special edition of Bloomberg Business Week Daily, but also kicking off at the 2 p.m. hour as well.
SpaceX, for those listening on radio, the stock's still up 28%, 173.12 cents a share.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, how about almost $2.3 trillion for a stock That's its market cap on its first day of trading. Carol Massar, Tim Stanovec, along with our Ed Ludlow here at Bloomberg headquarters in New York City. We've got SpaceX. It's now a publicly held company.
Yeah, it's up 28.3%. It was up just over 30%, a little bit just about last hour. 367 million shares have traded hands. If I look at most on the Bloomberg terminal in terms of volume, by a long shot, it is the most actively traded stock today. Not a very big surprise.
You know, and I want to bring in Ed right now. I mean, this is just kind of interesting. We've been talking about how it feels kind of calm. You were there, though, when the stock opened. How did it feel? Like when it just, you know, we were watching kind of the indications come down, but nonetheless, the stock began opening. I think it was $150 a share that it came out of the gate. I don't know. You went through an hour on Bloomberg Tech. What was kind of some of the folks saying?
Yeah, it certainly seemed calm, but with the added context that this has almost been premeditated. It was unusual how SpaceX conducted the days that came before its trading debut, setting a price of $135 a share before a roadshow had even kicked off, raising the question, well, what's the point of even doing a roadshow? And as we reported at Bloomberg, this was Elon Musk and the other SpaceX execs having control over a process, but also the banks, you know, being left to market a price. It gave some certainty. So like there wasn't this kind of crazy volatility. Isabel Lee, who you guys know well, wrote the most important story ahead of trading debut, which was how were the technologies and mechanics behind financial markets going to transact that volume of orders and messages. Because remember, that's how markets work. It's a communication between real humans, AI aside. So like the NASDAQ seemed in that moment to have full control over it. You know, but it was on the live pictures you saw from inside the room. The NASDAQ gathered everyone. There was a clap. And then it hit, you know, about 45 past the hour. I think I'm right in saying, right? So
yeah,
it's interesting. So now, like, we're at 172 on a fully diluted basis, $2.37 trillion value, you know.
I think what was also so interesting about this, and I was tuning into Bloomberg Surveillance earlier today, we also had a view from the gray market, which is really interesting, hyper liquid. Yeah. And, you know, we saw then that shares were anticipated to pop 30%. As a result of trading there.
Somebody's going to have to write a textbook or a history book about that. You know, when we say gray markets, we another word for it is shadow markets, but they are essentially financial instruments that in some ways work as a proxy before the equities trades in the US exchanges. But there's also this dance that happens, right? What we call indications of opening.
Yeah.
They went up and up and up, and then they came down and down and down. And in the end, it's academic because once it starts trading, it's trading. Yeah.
175, 174, 172, 170, all the way down to 150.
Yeah.
Right? And we saw that happening. All right, guys, we're going to continue full team coverage here on Bloomberg Business Week Daily, a special edition, an extended version, I should say. Carol Massar, Tim Stanovec, along with Ed Ludlow, of course. Right now, though, we do want to get a check on trading as we continue to track it. A look at the overall market on this last trading day of the week. Tossing it over to you, Charlie Brown.
Thank you very much indeed. We are looking at an up week here for the S&P 500 index, significant after last week's swoon, but do want to continue with our coverage of the SpaceX IPO because you have got courtside seats into what's happening with history right now. Biggest IPO ever, and right now we do have SpaceX lifting off up by 28% right now, 172.42 where we stand, so shares up 27%. Did get as high as 176.52. That was a gain of 31%. Our coverage will continue right here on Bloomberg Business Week Daily. Rest of the market higher. Right now, the Dow, the S&P, NASDAQ all advancing. NASDAQ 100 index up 0.7%. Stocks are climbing on U.S.-Iran optimism. The S&P up 30, 74.24, up now by about 0.4%. Dow Industrials up 360 on the Dow. Gain there of 0.7%. NASDAQ up 0.2%, and repeating on NASDAQ 100 up 0.6%. Interestingly, small caps outperforming. Russell 2000 index of small cap shares up now by 1.1%. All of this with the stocks up by 2%. The VIX just above 18 and a 10-year at 4.47%. Spot gold up $8 the ounce, 42.20 up by 0.2%. And West Texas intermediate crude at $85 a barrel. WTI down 3.1%. Brent at 87.44, drop there of of just about 3.3%. So again, first day out for SpaceX, shares up now by 28%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there. Carol Massar, Tim Stanovic, along with Ed Ludlow. I'm just looking at X here, and Elon Musk, I think it was about 37 minutes ago, saying, I love the incredible people of SpaceX beyond words.
It's nice to be able to use your own product to send that out on the day when the project's included in one of the companies that, you know.
Increasingly becoming those a conglomerate of, you know, a future version or a current version.
He's always loved the idea of a super app.
Yeah, right? And these pieces. Hey, folks, we do want to get another check on the trading session. Yahira Anand has been tracking it here at Bloomberg News. She's at the NASDAQ market site in Times Square. Take it away.
Well, I want to echo what Ed said, because one of the most surprising aspects of today is just how smoothly this IPO has gone. So there is definitely an enormous feeling of relief here at the NASDAQ, because from the moment I got here, you felt the gravity of the moment, of the biggest IPO we've ever seen. SpaceX President Gwynne Shotwell, CFO Brett Johnson were here at the NASDAQ. Elon Musk joined, of course, remotely from Texas, and you had crowds of fans outside hoping to catch a glimpse of him, but of course he was not here. So there was just a lot of excitement, but also pressure for it to go off without a hitch. And obviously it has so far. The stock opened just over 2 hours after the opening bell, and we've seen it continue to hold this substantial premium to its IPO price, and pretty stable, I will also add. And according to one wealth manager I spoke with this afternoon, many investors didn't receive all the shares they requested in the offering. His firm, for example, received only about 17% of the shares it requested. And so if that experience was widespread, it suggests there are still investors who wanted exposure to SpaceX and didn't get it. So helping to explain why demand has remained so strong.
Yahira Anand, holding on the fort at the NASDAQ. Appreciate it, Yahira. I want to bring it back, Ed Ludlow, the host of Bloomberg Tech. He's here with us in our Bloomberg Business Week studio for the next hour and hopefully a little more. We're going to get to Ross Gerber in just a second. Before we do, though, bring us up to speed on the lockup period. You can sell. And who sold the shares yesterday in that?
Right. So the reason it's important is you asked me who can sell shares today, and that is partly answered in what is an unusual or not typical lockup. So typically, you allow in an IPO insiders to sell shares after 6 months. In this case, Elon Musk's entire stake of 6.4 billion shares is locked up for a full year, and then everyone else is staggered. Apart from if you were in that bucket of employees, friends, and family, 5% of the float allocated on the directed share program, if you participated in that, you are, per the proxy, allowed to sell those Class A shares today. It's a small amount, but there was a little discrepancy between our reporting where we said retail got 20% allocation, so about $15 billion. Gwynne Shotwell, the president and COO of SpaceX, in an interview on another network said outside of institutional investors, it was 33%, but I think she's mathing that directed share program and maybe other sort of entities that are more directly related to the company,
So in terms of trading, it may take a while to see what kind of real big movement we get in terms of some insiders who had positions.
But again, even prior to the offering, there's so much evidence that SpaceX employees used the opportunities of the last calendar year to buy more stock if they could, hold on to the stock, and, you know, 4,000 or plus millionaires have been minted inside that company, talking about SpaceX staff. That the hypothesis that people present to me every hour at the moment is that don't think they're all going to retire or go and just do something frivolous. They'll either stay at SpaceX or they'll start their own companies. And, you know, it's kind of interesting.
What about the 400 who have $100 million in net worth as a result of this, at least according to that New York Times article?
Congratulations to them.
You can have it, you can quit any day. Like, it's pretty cool. Ed staying with us, of course. Let's get to someone who we talk to a lot when it comes to all things Elon. He's owned and sold shares of Tesla. He owns several Teslas, including the Cybertruck. He's been a fan and a critic of Elon the person. Back with us. So great to have here on this day. Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Management, Investment Management, joining us here in studio. Hey, Ross, Are you
I'm a SpaceX owner too. You didn't mention that.
Well, that's
explain.
So explain away.
Well, explain away. I got involved with this wonderful deal that was presented to me 4 years ago to invest in Twitter. And boy, oh boy, did we do great with that, huh? So I had written down that stake in Twitter to about 25% of its original investment. And then somehow XAI came and bought Twitter. And then somehow SpaceX bought XAI. And now today, I've now made like over 3 times my money investing in Twitter. So, there is a thing called luck in the world, and I'm lucky.
So you've tripled your money from 4 years ago in investing in the take private of what is now X and owned by XAI, which is part of SpaceX, of course. What do you do with that part of ownership? Do you hold on to it or do you sell it when you can?
Well, I'm building a new pool, but that has nothing to do with my SpaceX. I want to continue to employ lots of people because it's fun. But no, I'm holding my SpaceX.
No, an actual pool. I was thinking.
Yeah, I'm building an actual physical pool. Like in the AI era, I'm taking my AI profits and doing something really worthwhile, employing people to dig holes. But that said, SpaceX is one of the most interesting companies I've ever seen, and we have such a unique viewpoint of SpaceX because we work with so many SpaceX clients, and we're getting more all the time. And we've really been focusing on helping SpaceX employees because it's down the street from us here in Los Angeles is kind of one of their main hubs. And so, I've met some incredible people over the last several months doing incredible things. These are the highest caliber engineers in the world that have made our space program, because it's really the United States space program, just so amazingly unique and successful. So what we have in store for us over the next decade is really exciting.
Hey, so Ross, just want to ask you, so you own the stock, you're happy about that. Will you continue owning it? Or do you think the valuation?
That's what I'm saying. I'm not selling it. I got my 10-year-old kid sitting here because he's out of school. And when I start thinking about what his life is going to be like when he's only 20, like 10 years from now, like space is just going to be something that's like, I keep making this joke. It's like easier to go to space than New Jersey, And so, the truth is, I think it's harder to go from New York to New Jersey than it will be in space to go to space in 10 years.
And Ross, to be clear, this is you, Ross Gerber, personally, as opposed to Gerber Kawasaki.
That's correct. I personally own the shares, and my firm, in our own firm account, owns shares, because when the Twitter deal came by, Elon really didn't want to do the deal. So we didn't actually sell the deal to our clients because I was like, I can't sell this. The guy doesn't want to do it. And so they basically called us the last night and was like, do you still want to invest? Because we're actually doing this. And so I just wrote a check because it was Elon, But none of our clients have been able to participate in this. Fortunately and unfortunately, because remember, it started off pretty bad.
You didn't get an allocation or submit a bid for an allocation in the IPO or go into the open market today. I'm being mechanical, but I'm just...
No, we haven't done open market purchases of SpaceX today because our firm does not buy IPOs for very good reasons, which I'm happy to talk about.
Well,
and then
well, can I ask you?
And secondly, we did request IPO allocations for clients of ours that are at Fidelity and Schwab because we work with both of them, and they did provide. So some of our clients did get small allocations of SpaceX stock today as well.
So the hypothesis,
but those were unsolicited. The
Understood.
clients really wanted it. Yeah.
The reason that's insightful is there are people listening to Bloomberg Business Week or watching Bloomberg Business Week that are in the same boat, right? And they're just thinking what did I do here? But the hypothesis presented to me by loads of people is they didn't sell their Tesla shares to get some liquidity to participate, in part because they just see the Tesla SpaceX merger happening imminently. And so what would be the point? May I ask where you stand on that idea today?
Well, I tweeted again this morning. I mean, I know you did. How long does this take till they put these companies together? And then even Gwen Shotwell today didn't, poo-poo the idea when it was brought to her and actually said that it makes sense. So, we know this is going to happen at some point. And I think a lot of that has to do with what valuations SpaceX and Tesla really are to make this combination work for both sets of shareholders so that it doesn't create a lot of, lawsuits and other, issues. So I think it's definitely a foregone conclusion. Now, I do agree with you that props up Tesla stock because, people are like, well,
I didn't say that.
Well, okay. My feeling is it props up Tesla stock because people don't want to sell their Tesla if it's just going to get bought out by SpaceX anyways, And so I do think that helps Tesla, that the perception is that they will be acquired by SpaceX or merge.
So Ross, maybe in your view it works for investors, but does it work from an actual operations perspective?
Oh, does it 100%. Why? In fact, well, I would argue that this is really unfair to Tesla, and it's one of the real gripes I've had over the last several years is the way they took, Tesla's chips and Tesla's engineers and built XAI, which was the brains of Tesla's, Optimus robot and full self-driving. And then Elon goes on TV and says, this is the entire value of the company is based off if we can succeed with full self-driving. But yet the brains of full self-driving isn't owned by Tesla. Like, that's super wrong. It just doesn't make any sense that I have a bunch of robots and cars that will not work without another company's technology. So Tesla, in my mind, is worthless if it doesn't merge because it doesn't own the IP to the brains to their own products. Like it just makes no sense.
All right. Speaking of the brains behind anything with Elon's universe is obviously Elon Musk. And we talk a lot about risk to the company. We talk about governance, but we also just talk about, how much what he does, his brain, his oddness, if you will, some might say, is what makes this company tick. You're much better. On this and on the governance and stock structure, Nell Minow, Value Edge Advisors Vice Chairman, joined the closed team yesterday on Bloomberg Television. Let's all listen up to what Neil had to say.
All of those protections that you talked about, the ability to vote proxies, the ability to sell the stock, the ability to sue, all of those are there to reassure investors. Having independent directors on the board, all of those are there to reassure investors that their money is being taken care of in a principled way for their benefit, not for the benefit of the insiders. And all of those have been obliterated by this offering. Elon Musk has appointed himself CEO for life. He's the only one who can remove himself. Not even his board of directors can remove him. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
Nell Minow, Value Edge Advisors Vice Chairman on Bloomberg Television yesterday. Ross, my understanding that you were kind of laughing as you were listening to that.
Well, there's no companies that have ever been run like Tesla and SpaceX in the history of public companies. And so I find her outrage to be humorous because that's basically how it's worked for Tesla for the last 15 years. And, the board is not independent. They do whatever Elon says. The pay packages are approved because index funds just push yes to whatever management puts forth. So Elon's taken advantage of a system where 20% of his company is owned by robots that don't make any decisions. There's nothing worse than Vanguard for shareholder rights. So if she wants to complain, she should be complaining about Vanguard, not Tesla, and the fact that Elon takes advantage of the fact that, there's basically going to be nobody but, somebody like me who goes out on TV. But as far as trying to vote change into Tesla or SpaceX, never going to happen. So does he take care of shareholders? Yeah, they've made a lot of money. So that's taking care of shareholders. Any way you do the math, whether I vote proxies or not, what matters is whether I'm making money. And I've made over 100 times my money investing in Tesla. And so I just think, when you invest with Elon, you have no rights. You get on the bus. You don't like the bus, get off the bus. But if you want to be on that bus, he has rewarded people who has done that. And that's why people are giving him such a ridiculously high valuation, is because he has rewarded shareholders in the past and in a way that very few CEOs have. So, I get the outrage and all that, then don't buy the stock.
Ross, may I just...
it was very clear in the S1,
Exactly. And I'm just relying on recounting what was in the S1, right? The restriction that's placed on Musk's comp, I'm just going to read it out because, it's the only way the audience will come to have a sense of it. He has a $1 billion restricted Class B shares award that's contingent, A, on market cap milestones. So if he achieves the market cap milestones, the shareholders get rewarded, you say. But Musk's compensation package is tied to establishing a permanent human colony on Mars with at least 1 million inhabitants. I don't want to give a long-winded question, but you explained to the audience how you came to be a SpaceX investor and shareholder. That goal, what does it mean to you?
It means I might have a chance of not having to pay him the billion shares, you know? So I kind of like that, you know? I don't think we're going to have 1 million people living on Mars. So, you know, that's good news if you're a SpaceX shareholder. And I can give you a lot of reasons that Elon might want to argue with me about, and I'm a more practical person, but I don't think you could talk 1 million people into going to Mars, you know? Like, unless Mars looks a lot like Hawaii, I don't think people want to go there. And Mars doesn't look like Hawaii. So I don't know. I don't know who's moving to Mars.
We're speaking with
And
Ross
it's far
Gerber.
away, by the way. It's far away and there's no air.
Ross
So
Gerber,
I'm
President and CEO of Gerber Kawasaki Wealth and Investment Management. I did make that point earlier in our last hour about when people compared Mars to potentially being the next California. I pushed back a little bit there. Yeah,
I'm not moving from here for anything.
Yeah, you like
Even
Santa
if they
Monica.
put socialists here, I'm not moving.
I still think he's going to put Optimus robots on and 1 million. Maybe
That's what I think. That's what I think.
just
I
saying.
think the robots are the ones doing the work in space and going to Mars.
So Ross, I want to put aside the question of sort of governance right now and these pay packages and just get back to your view of SpaceX shares right now. You said Gerber Kawasaki does not buy on the first day of IPOs. What restrictions do you have or have you put out? It's sort of a rules-based buying when it comes to IPOs. And when would you start getting your clients in, even if they're not, you know, asking for it?
No, they're asking for it.
Some of them, we've talked to a lot of wealth managers lately who have said some people want it badly, some people want nothing to do with it. Like we've had three examples of that recently this week on air.
Yeah, you know, and that's, we have so many clients, we have all those examples, right? What I think, because the way my firm works, you know, we don't tell people no. You know, like if a client's like, I really want to do this, we don't say no. You know, it's our job to advise our clients. So we advise them of the risks of it, and then we'll execute the transactions as unsolicited if they really want to do that. And we've, you know, would do that. Now, I haven't done that today for anybody because I've talked them out of it, you know, because they listen to my advice, which is IPOs are really difficult. Okay, and I've been trading for 32 years, and I did .com, and I trade billions of dollars. So just from my experience, it's really, really hard to make binary decisions like I'm putting $100,000 of my retirement money into SpaceX today, and that's it, and I will never look at it for 10 years, because that's just not what investors do. So if you were able to do that, I would say, okay, you know, buy the IPO, pay up for it, but in 10 years you'll be happy. But nobody actually does that. What happens is they look at their account in 6 months and it's down 30%, and then they panic and they sell it right before it goes back up. And so investor psychology and behavior makes IPOs extremely difficult because of the volatility. So I don't know what the market's going to do over the next 12 months, let's say. And, you know, and then you've got a very high priced IPO that has no PE ratio, and then maybe markets go down for some reason. Well, SpaceX is going to go down more than the market. And if the market stays the same or goes up, there's the potential that SpaceX stays the same or also goes up. But what I say is, how much upside can you get if you buy the stock today until this company actually produces earnings, which might be 3 to 5 years from now? So you've got plenty of time to get into SpaceX. So if you really, really want it, what I tell people is buy 20% of what you want to buy today. If it's $10,000 in SpaceX, you buy $2,000 today, and then you wait a month and you buy another $2,000, and you wait another month and you get in over the next 5 months. But what I would really say is wait till the lockups expire. Wait, there's a lot of liquidity, and a lot of people want to get this liquidity. They've worked at SpaceX for a very long time, and they're not going to be quitting, and they're not this and that, but they want to buy a house in LA. And a house in LA costs $2 to $3 million just to get in. And these people are living in apartments. You see what I'm saying? So they're going to sell some of their stock to buy a house. And they're going to sell some of their stock so that they have some financial security, which is what we're advising them. But many of the employees at SpaceX are not selling their stock. And I just want to make it very clear. Many of them, these are the people who believe in their mission, and they're working extremely hard. And after meeting many of these people, I believe in their mission. And Elon gets too much credit. I just want to say this. It's not Elon Musk that's made SpaceX successful. It's the people there. Elon Musk is a visionary, and he guides the company. But the truth of the matter is he does not really run SpaceX. The people running SpaceX are excellent.
Ross, 30 seconds left, though. We do think about succession. So does it become even more important on this day where we continue to see the Elon universe get bigger and bigger, that there is a succession plan in place? Is there one that you know of? Just quickly.
See, at SpaceX, yes. I think if Elon died tomorrow, SpaceX would be fine, actually. SpaceX has great management, and they've been very independent for a long time. And many of the employees, and I'm not going to, say where they were, divisions they were, they don't like Elon either. Okay, they having a mission like going to Mars or going to the moon or building a starship is what motivates people. A lot of what Elon does hurts SpaceX and hurts the company. So SpaceX has a much better management team than Tesla when it comes to succession, and I'm much more confident about its success, even if Elon isn't involved.
Well, some great color and context on all things SpaceX and Elon, as he always does. Ross, have a great weekend. Thank you so much. Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, joining us from Los Angeles. Let's get another check on the trade. Back to Charlie Pellet we go.
Hi, thank you very much, Carol Master. Indeed, let's recap reset on SpaceX. The big story of the day, we got you covered here at Bloomberg. SpaceX shares right now, they are up 25%. First day out, 169.49 where we stand on SpaceX. We do have SpaceX shares again up by 25.5%. The rest of the stock market pushing higher. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all gaining. Stocks are climbing on U.S.-Iran optimism. S&P up 0.3%, on track for a winning week after last week's sell-off. We've got the Dow higher now by 357 points, up 0.7. NASDAQ up 0.1%. The NASDAQ 100 index, full of those big tech names, up 0.5%. Russell 2000 index outperforming, up 0.9%. The SOX up 1.8%. The VIX holding just above 18 with a 10-year 4.47%. Gold up $13 the ounce, 42.25, up 0.3%. And West Texas Intermediate crude slumping 3.3%, just below $85 a barrel. Brent crude 87.30, lower now by 3.4%. Again, SpaceX shares up 25.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Our special edition, our extended edition of Bloomberg Business Week Daily, covering the SpaceX IPO. Tim Stenovec, Carol Massar here, and of course, Bloomberg Tech host Ed Ludlow. Hey, we want to bring into the conversation Cam Harvey, professor of finance at the Fuqua School of Business at Duke University, joining us from Durham, North Carolina. Cam, great to have you here. Tim, I think, did you hear him earlier this morning?
Yeah, I loved your analysis on surveillance earlier this morning, Cam. I want to bring you right in. Again, we are joined by Ed Ludlow, too, of our Bloomberg Tech team. Ed standing by with us here in New York, a special visit from San Francisco. So, Cam, I'm just curious about valuation here, because you work at a business school. It's where you teach, corporate finance, maybe DCF analysis to really value a stock. How do you value SpaceX?
Yeah, so there's certain fundamental things that we can learn from history and try to apply them in terms of what we see. So the first thing is that when we look at IPOs in general, there's usually a gap between the allotment price, the 135, and what happens on the first day. So the IPO is priced lower and the price pops. Most investors don't get the allotment. I applied for 10 shares through my online broker. I got one. So 90% of my order was unfilled, and I need to buy at the inflated price of, let's say, $170. So the first thing is expected that it's underpriced to make sure all the shares go out. The second is that over the longer term, let's say 3 years, IPOs don't really outperform a passive investment like the S&P 500. Even if you match the large ones like SpaceX, the performance is modest or negative. And what is the reason for that? The reason is that the price is fully priced, that the explosive upside has already been realized before the IPO. The investors that were accredited or qualified, the ones that bought at $10 or $20, they reap this huge upside. By the time it gets to IPO, by the time that the average investor gets to buy this stock, it is expensive. And when you're buying high, the expected returns are low. So investors need to be aware of this. They're not buying at $10, they're buying at $170.
All right, on that, we're talking with Cam Harvey, professor of finance at the Fuqua School of Business. You know, we kind of want to roll into this conversation. Jim Chanos was on earlier on Bloomberg Television with Tom Keene and Scarlett Fu. Of course, he is the founder and president of Jim Chanos, and of course, he's a noted bear, but he's also a noted skeptic, as we like to say. Chanos and Company, of course, is his company. And he talked about the company and the IPO. Let's listen in, everybody.
It just struck me as very, very odd that right before the IPO, they would pivot to a much lower margin and lower valuation business than the hopes and dreams, which you guys have mentioned, I've mentioned, based on producing these wonderful AI agentic software products from Grok. And it's one of many head scratchers about this deal.
And that, of course, is Chanos and Company founder and president Jim Chanos on the SpaceX IPO. I mean, it is kind of interesting, you know, the steps to the IPO. You do wonder about kind of the valuations and the businesses and what this company is really, what it is right now, and the bet on XAI, correct?
Right. Yeah, I think, you know, my question for Professor Harvey would be how extraordinary in the history of public market debuts it was for SpaceX to do a regulatory filing and say, oh, by the way, we've kind of pivoted our entire business by renting out compute capacity to Anthropic, one of our biggest rivals. Oh, and also Google, one of our biggest investors and potential rivals. You know, it was done by the book, Professor, but to me, I was like, wow, I didn't have it on the bingo card, you know?
Yeah, so this is obviously very unusual. There's so many aspects of today that make it quite extraordinary, including the size. So think of this IPO as the sum of all the IPOs over the last 4 years. So this is a very notable event. However, I do want to comment on this particular point about pivoting. And I think it's really important. Indeed, I draw a distinction between today and, let's say, 1999, before the tech bubble burst. And one thing that is different is that the leaders today, the tech leaders today, have no problem with pivoting and switching in the face of a new vision. That's exactly what didn't happen in 1999, that they were set in one particular direction, and when the data went the other way, they just continued in that direction, and a lot of value was destroyed. Whereas today, the tech firms are more than willing to self-disrupt, and they believe that this is an important aspect of their strategy to survive, to grow, and to innovate.
So in other words, Professor Harvey, what I'm hearing you say is this time is different.
Every time is different. And I do believe that 1999 and 2000 is within our memory. So in 1999, people didn't really, they weren't around for what happened in 1929. But many remember the tech bubble and learned from it. And that's why today is different. Yes, there are some stocks that are extremely highly valued, And you could argue that some of these stocks have like a lottery-like characteristic, that people are buying them knowing that the expected return might be modest, but there is a small probability of explosive upside.
So at 168, roughly where SpaceX is right now, in your view, is that fairly valued?
Oh, so I'm definitely not going to give you my valuation of the stock.
That's too
I
bad.
knew you were going to ask that, but I'm not going there. So what I am saying is if you look at the historical evidence on IPOs, the evidence suggests that the return over and above a benchmark like the S&P 500 is modest or zero.
Okay.
Which means that these are fully valued. So if you expect to get the same sort of return that the insiders and the accredited investors got in the past, I think that's naive. The retail investor, the average investor, is forced effectively to diversify their portfolio, and they are faced with a price that is expensive. I can say that the price is expensive, and given historical experience, the expected returns are modest.
Professor Cam Harvey over at the School of Business at Duke University, really, thank you so much for your time. Carol, maybe he didn't want to give us the SpaceX valuation because that's the final exam question on next year's final for those incoming MBA students who start in the fall.
All things Elon. Is he a class yet? I don't even know.
Oh, he was many case studies.
I'm sure he's many case
12
studies.
years ago. There's a great Harvard case study on Tesla.
I'm sure, but
that we did in strategy 10 years ago.
You could spend a whole semester on it. All right, we're going to stick on the SpaceX IPO as that stock continues to trade up about 28%. Oh, right now actually up about 24% in today's session. We're going to come back, and we have been focusing a lot, certainly on SpaceX today. There is another major story, though, of course, pushing stocks higher, and we need to also keep our eyes on it. The U.S. and Iran moving closer to an interim peace agreement meant to reopen the Strait of Hormuz, and it helped end that war that has damaged the global economy and caused chaos in the Middle East. But conflicting messages, really from both sides going back and forth, have caused lingering uncertainty. Now, this is coming as U.S. Energy Secretary Chris Wright said the U.S. will fully reopen the waterway with or without Iran's assistance.
Yeah, Chris Wright spoke to at the Bloomberg Energy Security Executive Briefing in Houston on Friday.
And we're just going to restore flows ourselves. And flows today close approaching half of the gap, and they're rising. So ultimately, we will restore flows with or without them.
So 7 million barrels a day are getting out right now?
That's a rough estimate, a rough average of where we are right now, and it's rising.
All right, that, of course, is U.S. Energy Secretary Chris Wright in a moderated panel by our own Anne-Marie Hordern. He did speak earlier, of course, during the Bloomberg Energy Security Executive Briefing in Houston. Anne-Marie joining us right now. She is co-host of Bloomberg Surveillance. And Anne-Marie, interesting conversation, timely conversations with the Energy Secretary. You also caught up with the Chevron CEO, Mike Wirth. As you've been in and around talking with individuals, what seems to be the mood, the tone, the narrative?
Well, definitely this is the first time we've heard from the White House give a specific number and figure about how much oil and oil products they think are actually getting out of the Strait of Hormuz right now, whether that means that they're helping them through escorts or potentially of vessels taking their transponders offline to get energy through. So the Energy Secretary is saying that number's at 7 million barrels a day, much higher than many estimates. Vortexa says it's about 1.8 million barrels a day. JP Morgan put out a note this morning saying it's 5 million barrels a day. So this is a high number, especially given the fact that the Energy Secretary says that it's about 14 million barrels a day that have been taken offline with the Strait of Hormuz closure. Remember, pre-crisis, it's about 20 million barrels a day that go through the waterway. So if they're looking at 14 million barrels a day as the gap, they're starting to narrow that gap by half. And of course, this comes at a time when everyone is focused on whether or not there's going to be a deal or not. And this White House is signaling once again that they are very close to having this deal with Tehran. I would note, though, that, and you mentioned I also caught up with the Chevron CEO, Mike Wirth. He thinks that the number might be a little bit smaller, maybe closer to 3 million barrels a day that's getting out of the Strait of Hormuz. But I think it's important to remember that Iran is still in control of the Strait. The U.S. has a blockade. So in terms of global energy markets, just hearing that more energy is starting to trickle out is a pretty big and important development.
All right, good stuff. Anne-Marie, thank you so much. Anne-Marie Hordern, co-host of Bloomberg Surveillance from the Bloomberg News Houston Bureau. Be sure to check out her interviews with the Energy Secretary, Chris Wright, also Chevron CEO Mike Wirth. You can find them on the Bloomberg and at Bloomberg.com.
We've been speaking a lot about SpaceX today. We should note that WTI down about 3.5%, Brent down about 3.5% as well. Still, Brent $87 a barrel, WTI about $85 a barrel.
All right, back to the trade we go and to Charlie Pallett. Charlie, over to you.
Hi, thank you very much indeed. SpaceX, the big story. We got you covered with SpaceX right now up 25.7% at 169.67. Shares surging in their first day of trading following a $75 billion IPO that smashed records. Again, SpaceX up by 25.7%. The rest of the stock market pushing higher, on track for a winning week after last week's decline. S&P right now up 36 at 74.30. That is a gain of 0.5%. Dow Industrials up 425 points now, up by about 0.8%. The Nasdaq Composite Index up 80 for Nasdaq, a gain of 0.3%. The Nasdaq 100 Index up 0.8%. Russell 2000 Index of small cap shares outperforming, up now by 1%. Hopes for a diplomatic breakthrough to end the war in Iran, sending oil prices lower and stocks higher. Right now, we have got the stocks. The Philadelphia Stock Exchange's Semiconductor Stock Index up 2.2%, with the VIX holding just above 18. 10-year at 4.47%, with the 2-year 4.07%, and the 30-year 4.96%. Spot gold up $14 the ounce to $42.26, up 0.3%. I mentioned the sell-off in crude. WTI now at $84.49 a barrel, down 3.7%. Barrel of Brent 87 even now, down by 3.7%. But again, the day's big story, the SpaceX IPO. Our coverage continues. Right now, SpaceX up by 25.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Carol and Tim, that's a Bloomberg Business Flash.
Yeah, a little market cap of about $2.2 trillion. Not too shabby.
No, you type in most go on the Bloomberg terminal. It's a nice check of just volume and what's being actively traded. SpaceX by far the most actively traded stock. 405 million shares have traded hands. The next most actively traded stock, interestingly enough, is Virgin Galactic. It's down more than 30%, and that's only at 360,000 shares trading hands today.
Wow,
yeah,
that's interesting.
Sorry, that one I should note is that's sort of news volume too. But yeah, that is volume. Yeah, excuse me, 133 million shares have traded hands.
Okay, that makes more sense.
133 million. There we go.
You're sorry. That would have been a bummer.
Yeah.
All right, folks, we're going to continue. There's a lot coming at us, and we are watching a lot of different screens to kind of feel the context of what is certainly a historical day in the markets, the largest IPO ever. We do assume when we go rich go at the end of today that you will have now minted the first trillionaire on Earth, meaning Elon Musk. So there's a lot coming at us. It does feel very calm. It does feel very orderly, though, at this point. So we are continuing with our extended special edition of Bloomberg Business Week Daily, all in on SpaceX, the IPO, the first day of trading. I'm Carol Master along with Tim Stenovic. God bless Ed Ludlow, host of Bloomberg Tech, has been with us. He's had a long day, a long lead up to this. And also, we kind of grabbed her as well, brought her to the East Coast.
From Texas.
Lauren Grush is with us, Bloomberg News global space reporter. I got to say, she covers all things space. She was a senior science reporter for the tech news website, The Verge. I didn't know you hosted the online show Spacecraft. So you were going around the country exploring what it takes to actually train to go into space. So you're also author of The Six, The Untold Story of America's First Women Astronauts. So you know this world, you know this area. I don't know, what is top of mind for you as you've seen this roll out?
You know, it's actually been a pretty surreal day, especially for a space reporter. I mean, I've been covering SpaceX for a decade now.
Yeah.
You know, I actually heard about this company, many years ago when it was kind of like catching some steam back with, my parents worked for NASA. And even back then, before they retired, we're kind of picking up on this company, So it's kind of been in my life for some time. And, I never thought that I would see them IPO in this way, because the messaging has always been, we will not IPO until we are regularly flying people to Mars. Obviously, that is not happening. But, you know, maybe you could go back and look at the statements that they have made, that you could subjectively kind of change them to say, okay, you know, they're flying Starship regularly, so, you know, maybe that counts. But I didn't have this on my bingo card. I certainly didn't have the AI element of it on my bingo card as well.
Well,
so.
I'm glad you brought that up, and I want to go into some numbers that SpaceX highlighted in its S1. 650 total launches, 85% of missions flown with one or more reused boosters. In terms of global mass to orbit last year, it was responsible for 80+% of that. It's flown 78 crew members. Yet, as we've gone back to throughout the last 2 hours, space isn't even the biggest portion of the company in terms of revenue. The name is still SpaceX, but it's also got xAI and a host of other companies. In your view, is it still as committed to space as it was back in 2002?
Oh, absolutely. I will admit, you know, when they filed their prospectus, it was an eye-poppingly low number, just how much revenue that the launch business was bringing in compared to Starlink and now this AI business that they newly acquired. I mean, they only brought in about $4 billion worth of revenue on the launch business last year, as compared to something like $11 billion on the connectivity side. And AI is rapidly, you know, matching that launch business revenue. But at the same time, and I did a story about this too, you know, obviously the future of SpaceX is an AI company, but that launch that they have established is by far their biggest asset. I mean, it's going to put them in a different category when it comes to this new market of putting AI data centers into orbit. Look at, you know, Amazon, right? Amazon has to go out and buy, you know, tons of rockets just to get their Starlink competitor into orbit. So that's an added expenditure that they have to have that SpaceX doesn't quite have to have. And they can tap their rockets whenever they want to. If they get Starship up and running, they could potentially do the same thing. But, you know, there's a lot of asterisks that go along with that as well.
Yeah, and the asterisks are codified in the prospectus, right? So, you know, if you haven't been paying attention and it's brand new information to you that there's a company called SpaceX that today did the biggest IPO in history, then let me tell you about Starship. You know, basically on paper, the most powerful rocket that humankind's developed, but on paper being the operative word. And so clear in the prospectus is that if they don't get Starship not only to work, but be reusable, they can't achieve the orbital data center goals that they have. Humankind won't go to Mars, and all of the economics in between are so tied to that. And it's a simple story, which is why Lauren's going to be so busy
exactly.
you know, covering each test flight that they do.
You mentioned orbital data centers almost in passing just now as sort of a foregone conclusion that they would actually not just be a pie in the sky idea, but actually be something that comes to fruition.
Yeah, I actually think the orbital data centers part of it is less of the issue for me than it is the Starship part of it. Because what we have seen with Starlink is that they can operate a massive constellation of satellites. Right now, they are the world's largest satellite operator with upwards of 10,000 satellites. You know, they're going to use the experience of developing those satellites to develop these orbital data centers. Now, granted, I do think there is going to be some engineering challenge involved, right? Those solar panels that they displayed on them are pretty massive, and they're pretty comparable to the solar panels that are on the International Space Station. But so imagine a million of those. But at the same time, you know, they have that experience. I think that gives them an advantage compared to their competitors. It's really the Starship aspect of it, because they are pursuing this holy grail of spaceflight, which is full reusability. It's never been done. They're still having issues with making sure that that actually happens. So I really can't put a timetable on when they're going to crack that code. Yeah. But I think what I would point out is that, you know, the numbers in their prospectus are obviously kind of odd to put to the public market, right? They're a losing company or a money-losing company. But I think what they're trying to say is take the success that we've had with, you know, bringing down launch costs, reusing rockets in the past, partially reusing. We're going to do that again. So they are confident that people will invest, thinking that they can replicate that success that they've had.
And to Lauren's point, the 10,000 satellites that are out there in orbit were all done by Falcon 9. So like the basics here, Starship isn't yet proven. one really fascinating bit is SpaceX is also on the hook for all these NASA missions to get America back to the moon.
Right.
So they have this like near-term pressure to start proving that the combined system, it's the shiny, pointy spacecraft on the top, the booster on the bottom. In aggregate, it's also called Starship. Get both pieces of it back landing on Earth and be reusable. And they've actually never done that, have both pieces. They've done one piece, but one's only half the job.
And I'll also add, it's even more difficult than that. So obviously, Starship you can pack a bunch of satellites in there and get them to Earth orbit, presumably easier than it would be to go to the moon or Mars, because in order to go to these deep space destinations like the moon, like Ed was talking about, they're going to have to refuel. And I think a lot of people don't quite understand